Welcome back. Tasty Live Network, Monday morning, June 21st. Taking a look at the Forex markets to start the week from your buddy Frank. I have not been around markets for 2 days. Was fly fishing up in Michigan. Caught a whopping 0 fish, which you might say, wow, that seems hard to do. Tough fishing conditions. I was told. I can't tell if the guy was. I went with a buddy of mine. We went with a guide, and yeah, he was very nice about it, and remarked many times that some of the worst conditions for fly fishing that he's seen this year. My friend caught about 5 fish. Which, if it was 1 or 2, would have made me feel a little bit better. But the fact that he beat me 5-zip made me feel like it was maybe a me problem. Either way, nice to be out in the Traverse City area. Beautiful up there. They love their cherries and everything else. But an unsuccessful trip away from the trading platform. And with that, let's get into the platform and take a look here at what's been moving. A couple of things in some different places than I remember. Let me start with euro dollar. That seems to always be the most popular place. This euro dollar market, when I left, was, seeing some high volatility around the 116 handle. Looks like close of the week, we got away from that price, moved up to 116.50, have flirted with some selling off of that price, and right now, as we speak, dollar giving ground. It appears like across the board. We'll take a look a little bit closer in a second, but the general trend the last week or so has been some dollar strength after a ton of dollar weakness. This is the hourly chart. I'll take a look at the daily chart. Here's all of that U.S. dollar weakness really since the start of the year. And now the last few weeks here, July has been essentially, we'll just say July has been a bullish month for USD. How we close that month will be of the most interest here. This week and next week, we actually do close July with a Fed meeting on Wednesday. So a lot to be looking at here in the next week. And let me actually pull up this economic calendar, not to look at the FOMC meeting that's coming up, but I believe there obviously it looks like there's nothing there. Was there a Japanese election? Frank's really good at his job, knows exactly what's going on across the globe that might be relevant to these FX markets. But you saw huge dollar sell-off on the open last night, some yen buying, and then they reversed that immediately throughout what would have been the start of the Asian session. And now you've seen that yen bounce or that dollar sell off. And this has also been an interesting one where the month of July has been very good to the dollar against the yen. As you can see, we've gone from below 143 all the way up to 149. And at certain moments looking like they wanted to hit 150, which has been historically the last couple of years, a pretty important price level. And also, if you look at the last several years, 150 is pretty rarefied air. And given the rhetoric around U.S. dollar here in 2025, which has been, dollar's getting crushed, Trump wants to depreciate the dollar for all these economic reasons, which you can agree with or disagree with. And he also wants interest rates lower and all these things that would potentially lead to a cheaper dollar. This is a hell of a bounce back, though, in this dollar against the yen. And the fact that we're still, a stone's throw, really 1 day's work away from 150, which if you count up all the weeks that we've been above 150, of course, there's a bunch of them in recent history, But if you count up all the weeks that we've been above 150 in this dollar yen market, going back the last 20 years plus, not a lot of data points. So that's probably what I'll be watching here. And let me get back to that hourly chart. And let me actually, we've never done this on the show. We have some nice research that we'll get to in a second. But why not? Let's just figure out what the heck happened. I think there was a Japanese election. Japan election, PM vows to stay on despite bruising election loss. Okay, here we go. Got the AI telling me what happened. And this is also, AI responses may include mistakes. This is all from Google's AI. I don't know if our compliance officer, how upset he might be about this on-the-fly research trying to figure out what the heck happened in Japan. In a significant parliamentary election held on Sunday, Japan's ruling Liberal Democratic Party suffered a major defeat, losing its majority in the upper house. This follows an earlier loss of its majority in the more powerful lower house. The ruling coalition loses control, so that's the Liberal Democratic Party. Factors in the defeat. Voters expressed discontent over rising prices, the threat of U.S. tariffs on Japanese products, and the increasing burden of supporting Japan's aging population. Wow. Okay. Seems like some young conservative types. The far right populist. I'm not going to say sensate. All right. I tried to. Never mind. Previously holding only one seat made significant gains, securing 14 seats. So I guess far right movement taken hold there in Japan. Democratic Party for the People also saw gains. Okay. So I don't know how that works. Gains on both sides. PM Ishiba, future uncertain. While Prime Minister Ishiba vowed to stay in office to handle pressing issues, including trade negotiations, the election setback has weakened his position. So I'm guessing, yeah, his party got weakened. He's still technically in power, but it looks like potentially some turmoil for Japan. The election represents a potential turning point in Japanese politics, with a rise in right-wing populism and increased pressure on the long-dominant LDP, which again is the Liberal Democratic Party. The coming months will likely see continued political maneuvering and potential shifts in Japan's policy. Okay, so it looks like they're looking for someone to come in and maybe be a little bit more tough on the trade war talk. Not happy with, I guess maybe it's been viewed in Japan that leadership is just doing whatever Trump says. Anyways, I guess what this might be here, this volatility that we saw last night in this market, is a little bit of course, it's what does this mean for the yen? The initial reaction there, which was yen upside and then quickly reversed, I would imagine was kind of like essentially the algos or whatever you would call it translated this more conservative party coming in as bullish for the yen and bearish for the dollar in this pairing, given how tough Japan might now be on tariff talks and some of these other things. And then they reverse that. I would imagine either some of the like polls or something were swaying back and forth, or the market was digesting it as, oh, but maybe this uncertainty in general is not good for the yen. So maybe that was like a little bit of a fear bid in US dollar, a little sell-off in yen. But now as we really also keep in mind, I believe Japan was closed here to start the week for this election or some holiday after the election or something. So this session is going to be a little bit lighter than you would hope for coming off of an election, because the Japanese market isn't in there. So you're likely to get some of these big swings. I bring this up because now Europe and the US, which are in session, are digesting this as bullish for the yen. and bearish for the US dollar. We'll continue to see where this leads. I mean, if you got short this dollar yen market here up around 149, this is a nice little move for you. If you were looking for this dollar yen market to continue through 150, this political stuff, maybe you have an opinion about how lasting it tends to be. Nice little down move if you wanted to get long that dollar yen, but thought that you missed it at 146, 147, 148 onto potentially 150, which has been the general trend here throughout July. So interesting piece there. Hope we all learned a lot on what the heck's going on in Japan. If you already knew that, sorry for the waste of time. A couple other things really quick. Let's see what else is moving. Man, yeah, dollar getting some pressure here. I don't like this. Dollar Swiss franc back below 80 cents. If you've been looking at this one, I know this has been an intriguing one to a lot of people in the Tasty universe who love the price extremes and also love the, I don't even know what you would call it, like the potential for like edge or like passive income or some kind of income with a trade, just given that the swap rates here have been in the U.S. dollar favor, given that Swiss interest rates are near zero and U.S. rates are still above 4%. Now, of course, there's a lot of price action risk with that. For example, if you got, 0.6 or close to a point of overnight funding in this pair, but then lost, 20 points here on the net change, obviously you're down money in that trade on a daily basis. But a lot of us have been looking at the fact that we're seeing quite historical extremes, this dollar very cheap relative to the Swiss franc amid a carry trade potential that is in the U.S. dollar's favor. Kind of a wonky thing. You don't see it very often. It's almost like like if a stock market was getting really beat up, but this actually kind of makes sense. If a stock was getting really beat up and like the puts were really expensive and you could sell the puts, or maybe it would be like if the calls were really expensive and you could put on a covered call, like the stock fell from like 100 to 50, but the call premium went from like the 30 delta call being priced at like $5 when the stock was at 100 to now being priced at like $10 when the stock is at 50. It'd be like, what? This is kind of weird. I can, get long this falling stock and have some good side income from selling the call. But keep in mind that stock can fall to 25, right? It can fall to 10. And so, yeah, a lot of people looking at this is the weekly chart, still right there around 80 cents, which has been pretty much the low for the last 10 years, going back to the crazy DPEG price action in 2015. And obviously we were there for not a lot of data points. And so this 80 cents is a crazy price extreme historically. We're still sitting right around there where we just again fell below it after 2 weeks of rallying to get back above it. The carry trade still in the U.S. dollar's favor, but of course you have to keep in mind that this thing can absolutely continue to fall. I mean, it's as recently as a couple of weeks ago, we were at below 79 cents for about 2 hours. So something to watch. We're getting, some dollar pressure here going into the U.S. session. That's not quite there. Anything else that Frank wants to cover? Anything in the crosses? Not so much significant stuff. Yen is beaten up on a couple of these non-dollar cross pairs here, but it looks like U.S. dollar is mainly the story. Yen making some nice gains, but also dollar starting to cough it up versus euro, pound, and Swiss franc going into that U.S. session. With that, let's jump over to the slides. Take a look at what we got. Mean reversion, profitability in non-dollar pairs. An exciting one. We're in a low vol environment, my friends. My good friend Glenn crunched a bunch of numbers for us. I'm going to try to figure out what it all means here on the fly with you all, which will be a fun exercise. But first things first, we're looking at non-US dollar pairs, okay? And so all that means is all the Forex pairs that you're looking at, whether it's Australian dollar versus US dollar, or US dollar versus Canadian dollar, Euro versus US dollar. We took the US dollar out of those and we paired up those currencies against each other. We got Aussie CAD in there, we got Aussie Yen, we got Aussie Kiwi, we got Euro Sterling, we got Euro Yen, we got Pound Yen, and we also have Kiwi CAD. You might notice a couple of things. Well, Frank, the Aussie, Canada, and Kiwi, I see a lot of those paired up against each other. And I see a lot of the Euro, Pound, and Yen paired up against each other. A couple of things. Those are pretty distinct among the major currencies. Those are pretty distinct subsectors, I guess I would say, of commodity currencies, which is Aussie, Canada, and Kiwi. And there are some other ones, but not in the major currency class. And you can go do research, and guess what? You can pair them up against almost anything. So take a look if you want. But among the major currencies, there's kind of that subsector, and then there's another subsector which there's not a cute name for, like commodity currencies, but I would just call those like kind of like the traditional or like established, or I don't know, like almost like the major currencies, which is going to be your Euro, your Pound, and your Yen. And so we tend to pair those things up against each other, but we will see some interesting stuff between like the Australian dollar and the Euro, or the Australian dollar and the Yen, or the Pound and the Canadian dollar. There's some cool stuff to be had. And guess what? Again, you can pair up any of these things. There's no wrong answers, really. But what you should monitor is what's the liquidity. If you pair up, you know, the Israeli shekel and the South African rand, it might cost a lot to get that trade off. And so be mindful of those things. That's why when we're talking about taking the US dollar out of the mix and pairing these against each other, these tend to be pretty high liquidity, pretty low cost to get that trade on. And with that, we're looking at some realized vol numbers, and holy smokes, there are some low numbers in here. We're in a pretty low vol environment, but keep in mind that if you think that like the make or break point for VIX, for example, is like 15%, and it's like, oh, higher than 15%, then it's kind of relatively high vol, or lower than 15% is lower than low vol. With currency trade, with Forex trading, that number is going to be more like half of that. Maybe like a 6, 7, 8% would be like normal vol. Higher than 8% would be like, okay, like we're seeing some high vol. Lower than like 4 or 5% would be like, okay, this is pretty low vol environment. But also an interesting thing when you take the dollar out of these pairs is you don't always get higher volatility. You might think that like, oh, the US dollar, that's the most stable currency. And I'm being not sarcastic or facetious, but I'm not saying that it is the most stable currency, but one might think US dollar paired against any of these currencies is the most stable setup. It is the lowest vol setup. And so if I take the US dollar out and I put Australian dollar against Canada, that thing is going to be flying around. Not exactly. You see that volatility there at 4.2%. Look at that Aussie versus New Zealand dollar there on the third row, 3% volatility. And the percentile of that volatility is actually in the 45th percentile. So that's saying 3% in that pair is actually relatively high volatility. It's in the middle of the distribution of volatility. And that's because those, like I said, those commodity currencies and those major currencies, they can be highly correlated to each other. And so again, it's not always that the US dollar version of any of these currency pairs is the lowest volatility. It's almost like Amazon. Let me think of a better example. Microsoft and Apple are both priced in US dollar when you trade them, right? And when you take that US dollar piece out and you price Apple in Microsoft price, you might think, oh, that pairing of this new price that I've created, that thing is going to be very volatile. It might actually not be as volatile. It might be very low volatility because those two stocks tend to move in the same direction. And so trading that pairing of those two stocks, taking the US dollar part out of it, might actually have smaller price swings. Anyways, I have digressed so freaking far away, but it's an interesting little thing. The last thing to note here is most of these non-dollar crosses are currently in low vol environments. The most interesting thing to me is that euro sterling, which is probably the most euro pound, there, the fourth row, and Australian dollar, Canadian dollar, Aussie CAD, the first row, are probably some of the most popular non-dollar crosses. And that euro sterling's in the 56th percentile volatility, relatively high vol environment for it right now. There's your context. Here's your study. We looked back at the last 5 years of data, measured the realized vol, which is on a 20 trade day rolling standard deviation, which is essentially pretty close to like a monthly standard deviation. And keep in mind, the VIX or implied volatility metrics are usually monthly measures that are annualized. So what Glenn tried to do here is pretty much mimic that calculation. And then we split the data into low vol and high vol subsets, looking at low vol being below the 30th percentile. I think that's pretty appropriate. Simulated trade performance using contrarian trade entry when prices touch the 2 standard deviation Bollinger Band. If you haven't looked, we did a study last week. It was great. What we're essentially looking at, a Bollinger Band is just a standard deviation that's updating live with the price. You can put it on the chart. And so it's just telling you what the standard deviation is. You can make it a 1 standard deviation Bollinger Band. You can make it 2 standard deviations. You can make it 3. You can make it 5. Whatever you want. The more standard deviations that you add to that Bollinger Band, the wider the band's going to get, the lower the amount of opportunities or occurrences you're going to see of the price going outside that band. Because keep in mind, 1 standard deviation, that's 68% of the prices, so only 32% of the time will the data get outside that band. 2 standard deviations, that's 95% of the prices, so only 5% you're going to get outside of that band. 3 standard deviations, that's 99% of the data. And so if you're like, well, I'm the smartest guy, I'm going to look for 4 standard deviation moves, you're not going to get them. You're going to get them maybe once a year. So 2 standard deviations, a little rare, a little conservative for my taste, but let's go with it. When the price went below the band, got long. When the price went above the band, got short. That's contrarian setup. Of course, a trend follower, when the price gets below the band, would probably sell into that move, or when it gets above the band, would buy into it. Calculated the win rate based on any positive P&L in a given time frame. I'm guessing he's going to look at a couple time frames, 1 to 10 days. Compared volatility environments as well. Let's get into some of the data. Mean reversion strategies generally favor low vol, though win rates are above 50% in both environments for most pairs, which is nice to see. But this is an interesting thing that we do see in options trading as well, which is if you're selling strangles or iron condors or what have you, you do tend to see, you have historically, that is, seen some higher success rates in lower volatility environments. You might see bigger profits in high vol because there's more expensive options. There's bigger price swings. Same here. You might see some greater profitability of your trading in high vol just because there's more back and forth, right? There's more price points. But really surprising, Australia, Canada, holy smokes. The last 5 years of contrarian trading which is, again, just setting up those Bollinger Bands and buying when it's below the band and selling when it's above. Those are some freaking high win rates. Holy smokes. This is a buying or selling trade, by the way. This is an optionality that gets you, some kind of higher probability of success or something like that. This is buying that Aussie CAD when it's below the Bollinger Band, selling when it's above. Even in high vol, 61.6%. Wow, wow, wow. Aussie yen, kind of a push there. Aussie Kiwi, good in low vol, kind of a push in high vol. Euro sterling, again, the future not indicative of these past performances. I'm happy though to see that the major non-dollar crosses, Aussie CAD, Euro sterling, some high contrarian setups here historically. Euro yen, also a pretty popular one in low vol environments. Nice contrarian trading. There at the bottom, pound yen, kind of a push in both, and Kiwi CAD. I'm pretty surprised that Aussie CAD is so high win rate and Kiwi CAD is so different. It's kind of crazy. While win rates primarily differ by pair, success peaks on day 6 for most pairs. This is also kind of surprising to me. That the win rates are pretty stable across the time frames. You see in some of these pairs waiting for that price reversion past a couple of days hasn't really worked. But yeah, if you're looking at those daily Bollinger Bands and you're entering into a trade, it looks like you can have relatively stable win rates across 2, 3, 4, 5, 6 days. Doesn't look like it's not completely linear up and to the right, which tells you you don't just continue to see more success as you hold it. You want to manage those winners. Optimal trade exit in high volatility is actually, this makes sense to me for sure. In high vol, holding on to a trade past a couple of days doesn't tend to do you any good. Something to be aware of. But that's a lot of good stats. Good job by Glenn. Non-US dollar pairs are generally more mean reverting in low volatility environments than high. Aussie CAD exhibits some crazy, that's 5 years of data. So pretty crazy mean reversion in the last 5 years. Reversion trade success when vol is low. You can hold for a couple of days, it seems like. In high vol, waiting past a couple of days, he says it does improve the win rate, but I don't know. It looks pretty flat. Also, just in high vol, I'm not trying to hold trades very long if volatility is up and just hoping for my trade to turn green or more green. I like this Aussie CAD and a couple of these kind of peaking around here and then sloping lower. I would probably stay in that 1 to 3 range, day range. But anyways, I've gone too long. Great study, Glenn. Everybody, thanks so much for watching. Tom, Tony, and Vanetta coming up next.
Global markets never sleep. Explore them with Forex. Now available on Tastytrade. Get in on over 80 Forex pairs. 24 hours a day, 5 days a week. With the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tastytrade.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. That's what I do.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Woo! Get tasty, pre-market. Come on, you know it, can you feel it? We got some things to talk about. Pre-market, it's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Monday to you both.
Ooh.
Hola.
Hola.
Side note, I hope you can top my weekend because I had a beautiful dinner with my friend, Mr. Scott Sheridan, his wife, my friend Slappy, and my friend Butchie. You were not there, which made it a wonderful dinner. I hope you can top my weekend.
Where did you guys go?
We went to EJ's, you know, the normal kind of place.
You love EJ's, yes.
That's correct. Very nice, very nice. You know, it was good.
No, thanks for the...
The waiter had dementia, but other than that, it was fine.
Thanks for the invite, though.
You were invited. You didn't want to go. I wouldn't go with you and the six and your wife for pay me. Or something like that.
No, that's pretty much exactly what I said.
But you love EJ's, Tom.
I know. But I've spent a lot of time recently with Scott, and we were out to dinner on Thursday night with Slappy, and then I played golf with him on Saturday morning. You know, we spent a lot of quality time together. We had a meeting starting at 7:00 in the morning on Saturday morning, and then we went all the way till a rain delay in our golf. We've been together enough. We're okay.
Where did you play on Saturday?
A friend's course, but we got rained out. And it's
a friend's course,
of course. Yes.
I'm sorry. Yes, Pat. Don't all of your friends own golf courses?
Yes, of course. Actually, I do have a friend who owns a golf course, a family member, no doubt.
Of course you do.
Yes, of course.
Of course you do. That's very.
But
normal.
it was we got rained out,
thing.
so, and I was playing good too. Too bad.
Couldn't he stop the rain from falling down on the course? It's his.
Oh, we would have played, but it was lightning.
Yeah, that was bad. No, you could not have played in that rain on Saturday. That rain was coming down like in buckets.
No, it was ugly. Yeah, it was ugly. And so, you know, we did what we do best. We ate.
Where did you go? Where did you eat? Or you just ate at the club?
Oh yeah, we were waiting for the rain delay. We were waiting for the rain to stop, and then it didn't stop. So then we left. Then that was it. So did
you bring a deck of cards with you, but play a little gin for old time's sake?
We would have, except that one of the hosts doesn't play gin.
Too sophisticated for him. I remember who we were playing with now. Sorry.
Yeah. No, way too complicated for him. He doesn't have the patience for gin.
He would never figure it out. It was a problem. I got it.
But it was fun. It was fun while it lasted. I had seen one of my friends I hadn't seen for a long time, so we had a good time. And then the rest of the weekend was kind of like, yesterday was a little bit quiet for me. I didn't really do anything. There was a festival on my block, and so I hung out there for a little bit, but that's it.
Isn't there always a festival on your block?
No, this time the whole Ravenswood corridor was shut down, and it was a music festival. It was good.
Sweet. And you were invited?
I wouldn't say
they need somebody to pay they needed somebody to pay the band. Why were you invited?
I wouldn't say I was invited.
Oh, okay, that's fine. That's better.
Were you dancing in the streets? Were you doing your Elaine dance?
Kind of.
Do you dance in public like that? Like,
what do you think?
I don't know. I think if you have like one cutwater that it's game over. You don't even know what that is, but I think that that's all it would take.
No, it takes him a little bit more than that to lose his inhibitions.
Yeah. Yeah. No, we didn't, wasn't dancing in the street, but there's a lot of breweries in that neighborhood, and so
And distilleries.
and distilleries. But Bad Coffee is next door to 2 breweries, so I become friends with the, not friends, but friendly with the owners. So,
Get off my lawn.
Yeah.
So you just found more people to give free products to for your business that doesn't make any money?
That's right. That's right.
Cool.
That's right.
I don't pay for stuff at Bad Coffee. I'm not mad about it.
Yeah, but anyway, it was fun. It was fun. It was a good neighborhood thing, and the city was kind of buzzing because the Red Sox were in town. So Wrigleyville was.
I literally had no idea. I think that's true. Maybe in your part of town. My part of town, not so much.
They didn't care.
There was a lot of. There was way more Red Sox fans in Wrigleyville than I wanted to see, but it was fun.
Did we win or lose?
We won 2 out of 3. We lost yesterday.
That's not bad.
The Red Sox have been hot lately too.
Yeah, the Red Sox have been good, but the Cubs crushed them on Friday and Saturday. Then they lost the 7th inning last night. Yeah, but whatever. It was good.
Can I say congratulations to the Chicago White Sox for sweeping the Pittsburgh Pirates and thereby becoming the last MLB team to have a sweep this season. But we got it done.
Yeah, they played good over the weekend. Now they're going to get rid of every single person on their team that's any good because it's the end of the trade deadline, so they'll trade everybody. But that's okay. They're getting better.
Well, that does not seem what? Why would we get rid of all the good people if it's working?
Because you're in last place, so you get rid of all your veterans because you get good young players for them.
Oh.
At least that's the plan.
Because next year you're not going to re-sign them, so
anyway.
you get something for them now. You send them to a playoff team. Like if you have somebody that somebody else needs, you send them to a playoff team, and then you get something in return.
Yeah, and you stack that playoff team.
Right.
So how do we get Kyle Schwarber
back?
No, to the White Sox. He was never a White Sox. White Sox.
You're not getting him back until he's at the end of his career. You're not getting.
All right. My peeps are writing inside. If you're completely wrong, we're not doing that. We already did that the last couple of seasons. We're not doing that this year.
Well, your peeps are idiots because they're going to get rid of every single person. So sorry to let your peeps down, but your peeps are idiots.
I hope who told me that hears that and does something horrible to Tom's camera. I mean, if it would just be a malfunction, it would just be a malfunction. Maybe zoom far away on him or something like that. I mean, come on, James.
Well, I didn't know your
just
peeps.
Just lay down there and take this, James.
I didn't know your
Do
peeps.
Something.
I didn't know your peeps were James because he just popped his head in.
There you go. Thank you, James.
Oh,
Take
I
him
like
off the
this
screen.
2-shot.
But
there you go.
Anybody that's worth anything on the White Sox is gone. If they have anybody that's worth anything, he's gone.
That's so funny.
Every single person.
Man, oh man. You can blur him out now, James, too, if you want to. Don't let this end. Trade the owners. Trade the owners, everybody's saying.
Well, we would love to trade the owner. I mean, we'd love to.
There you go. Thank you, James. Real blurry. More than that. There you go. Perfect. Perfect. Just keep them like that. There you go.
Oh, I love this.
You want to say a little bit more? Want to say a little bit more about these idiots, Tom?
Now Tom looks like a confidential informant.
I kind of like that. I kind of like that. They already the White Sox Reinsdorf already sold the team. 7 years from now, but he already sold it.
Yeah, 7 years from now. Yeah.
Yeah.
You got to suffer.
It's gone. It's over. He's not. You're not changing owners for 7 years. It's done.
Enough about that owner. Let's talk about you. You with that white shirt on. I have a feeling you have white pants on, like the Good Humor Man. Would I be correct?
Nope.
Stand up. Let me see.
Nope.
Are you all in white like the Good Humor Man?
We're going to have to blur out his lower half again.
Nope.
Blur it out.
Come on, let me see.
Except I'm going to tell you, there's a lot of kids out there today that don't know what a Good Humor truck is.
No doubt. Not kids, Tom. There's a lot of people, period. Young adults. I don't think my kid knows what one is, for sure. Now I'm talking about Nick.
Yeah.
Yeah, because when did they stop? 62.
No, we
like-
still got one in my neighborhood, but I have an idyllic neighborhood. One where people run in the streets and people are nice to each other and stuff. It's called the suburbs.
We have the ice cream man. He comes in our truck. He comes up and down
selling
our
crack
block.
and stuff like that. Yeah, sure.
Wow. Okay. Wildly racist. That's cool. Cool. Thanks. No, but we have ice cream trucks here that sell ice creams and elotes. We have an elotes man, which is actually, I would argue, even better. Ice cream or elotes.
I go with the elotes myself.
I love a little elote.
Who doesn't like Mexican street corn?
Last time I had street corn was with Tom in New York City. That was the last time I had street corn together. It was a great time.
What?
You don't remember we were in New York together?
No.
We were in New York together. We were walking to the venue and we passed by a guy selling corn on the street.
And then you both started eating it from the ends.
And then some music played in the background. And then
I think you're dreaming. I don't remember this at all.
Does your house have a gas leak?
Seriously, I don't remember you and I stopping for street corn.
In New York, yeah.
When were we in New York together?
But it was years ago, but I mean, that's probably before COVID.
Oh, for like, that's what she said?
Something like that, yeah.
The tour, one of the tours?
You sure
I'm
it
not
was
lying. It was true.
You sure it was me? You and I stopped for street corn?
Yeah, because you and I were the only ones spending the night in that hotel together.
Wow.
Everybody else was in the other hotel.
I don't even know what you're talking about.
Are you sure you're not just reading from some fan fiction?
Man, you'd be a great witness. You'd be a great witness. If you don't want to talk about it, I
don't remember. I don't remember.
Check out this angle, everybody. Check out this angle. This is an angle that Vanetta has in the office. There we go. There's Tom.
I actually don't have that angle. Why are you coming for me this morning?
There's Tom, the good humor man. Look at you, Tom. Yeah. Unbelievable. You never do white on white. What's wrong with you?
I mean,
what if I didn't have any pants on? What if I wasn't wearing pants?
Then you'd see this angle. James, show them this one.
What is happening today?
There we go. We're off the rails. It's early in the morning.
I mean, Tom always skips leg day.
No doubt.
Well, I went on an adventure yesterday. You guys don't care at all, but I got a sports massage yesterday.
A what? A what?
A sports massage.
What's
like
that?
A deep tissue.
That's
like
without the happy ending.
Well, like a deep tissue massage, but it's like at one of those places where it's got like the rails on the ceiling and the lady walks on your back. Yeah.
Yeah. That's not the only massages they do then. Sure.
Yeah, it's a nice place. They had like couples massages and they do other stuff. And for extra, they'll rub you with like CBD oil. And if you want a gummy, they'll give you a gummy. Yeah, you don't have that in the suburbs.
No, we do not.
But it's like really nice. And she'll stretch. She'll like stretch your legs and your arms and stuff. Like it was really nice, but I'm a little sore today. When's the last time you guys had a massage?
A sports massage.
Or deep tissue, Swedish, shiatsu.
I've never had one. I don't like massages.
It's been a while since I've had a little self-care.
What? I don't like them.
He can't.
How do you know? If you've never had one, how do you know?
Because I don't really like them.
That doesn't make any sense. But if you've never had a professional massage, then how do you know that you wouldn't like it?
I don't know that, but I feel good where I am right now.
Yeah, but you can't even walk upright.
I'm perfect.
All right. Well,
and I think my golf swing is back.
Yeah, he played 6 holes. He thinks he was hitting the ball really good for the 6 holes. He told me it was.
I think my golf swing is back. I think I figured out what was wrong.
Oh, you just jinxed yourself. Anyway,
100%.
hey, we got a great show. It's amazing.
Hold on. Wait. I got it. Nikki shot an 80.
That's pretty good. Good
81,
job, Nikki.
sorry, 81. Yeah.
Breaking 90 is impressive. Can I go over the show schedule, or you want to talk about your kids some more?
I was out with my grandson yesterday. Went down the slide together. It was a lot of fun.
Okay, cool. Can I go over the show schedule?
I guess. Go ahead.
All right. We got a great schedule.
Shark shot an 85. He just told me. Okay, go ahead, Vanessa. Sorry.
We got a great show for you today on this magnificent Monday. At the top of the 8 o'clock hour, we have an options jive. Research Corner. Kai is going to be in with his outlook for the week. Then at 8:40, Dr. Jim in the house, the skinny on options abstract application, taking advantage of volatility decay. That is going to be at 8:40 with Dr. Jim. Then 9 o'clock, our market measures. Equity-like bonds. What's the deals? Who writes these? I think it's supposed to say what's the deal. I don't know. It's poorly worded, but
what's the dealio?
It's something. And then at 9:30, live from the trade desk, big boy Scott Sheridan counting down all the top trending tickers over at Tastytrade. That is your run of show for today. But hey, in the meantime, in between time, do you want your daily dose?
Sure.
Yeah, hit me with my theme music. Let's go.
Our leading story. Breaking news.
Across the wire. Leading story.
Top story. Jump in.
In today's headline. This just in.
Breaking news.
All right, everybody. Today is a magnificent Monday. It's July the 21st. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Ready for the news.
So a couple of things on the radar for this week. Earnings season is shifting into higher gear. You got Google and Tesla set to report earnings on Wednesday. They are the first among the so-called Mag 7 to report. Of the 59 S&P 500 companies that have already reported earnings, 86% have beaten consensus. That's pretty exciting. Also today, I think you have Verizon, Cleveland Cliffs, and Domino's Pizza for Monday.
Yes,
are you excited?
For the morning, yeah.
Are you excited for Google and Tesla?
Sosnoff, she's asking you the question.
Hello?
For Google, not really, because I don't think there's enough juice in there. For Tesla, maybe, because at least they have... Last cycle, I believe it was a $14 expected move. This time it's like 20. So I think there's a little more juice pumped into Tesla. So I think Tesla might be okay, but Google is like an implied move of like 4%. I don't like it.
Okay. All right. I'll just leave that there. Hey, earnings misses are going to get punished more than usual as earnings week is in full swing. It reinforced that growing thesis. Big banks ended the week, with muted gains, and Netflix, which currently trades at 40 times forward earnings, kind of got beat up too. What are your thoughts on how Wall Street is processing this slate of earnings results?
Well, I mean, let's be fair. Netflix was inside the expected move. So, I mean...
I thought it had accelerated outside of its expected move. Oh, okay. My bad.
That was about an $80 expected move. It was down around 60-something.
Yeah.
Oh, okay.
So it was inside the expected move, and the stock's up, a billion points. I mean... I'm not so sure
this year, not this morning. This morning it's up to $1.
Yeah, but I'm just saying I'm not so sure.
Are you finding things hard to trade though because of the low volatility, or is volatility crept up enough now that things are getting better?
No, volatility is not crept up, but there was some decent volatility in Netflix. I mean, Netflix was a nice winner for us on Friday, so I'm not complaining. Even though we sold puts, the stock was inside the expected.
Even though you were dead ass wrong.
Again.
Well, when you make money, you're not wrong.
That's true.
Good point.
That's true. There you go.
It's way better to
it's like if they're in your hands, they're real.
It's way better to be wrong and make money than to be right and lose money. Way, way better.
You should put that on a fortune cookie. The yen firmed on Monday after Japan's ruling coalition lost its majority in the upper house as investors braced for a period of policy paralysis. The Japanese markets are closed for the day. Let's just talk currencies.
Well, the yen is our only long, so we're never getting out of our long yen. So that's all I can say.
Okay.
We've been long yen.
Well, the market's closed
we
today,
can't afford to.
We've been long yen every single day this year, and we're still long yen. And all we do is sell puts, and it's worked the entire year, and I'm not changing. So even though I think the U.S. dollar is a little oversold, when it comes to the yen, I'm just staying long yen no matter what. So today,
well, the yen hasn't done anything. It is up almost 1% today, but it hasn't done anything over the last.
Today,
2 weeks.
Today, it's our best performing underlying. No, bonds are our best performing pre-market, but the yen's our second best performing underlying today.
Okay. Anything else you want to touch on in like the euro or pound or nothing?
I mean, we're long dollars here, so we're betting that the euro is going to go a little bit lower. Not much though. We're tiny bets. The pound, we're long pound, and everything else we're out of because there's no vol anywhere.
This is a funny story. A lot of companies that are not in the banking business are suddenly applying for new U.S. banking charters, from automakers GM and Stellantis to cryptocurrency firms like Circle and Ripple. Banks are not happy about this. Their fear is that many of these new entrants are seeking novel, lighter touch charters that would let them offer banking services while bypassing some of the regulatory obligations that traditionally come with the business. Are you on the side of the banks, or you say, hey, innovation is for everyone?
Well, first of all, what GM's trying to do and what other places like that would like to do, it's not necessarily innovation. What they want to do is cut out the middleman, which I understand. You know, banks do something that they have a business that nobody else has. They have essentially a risk-free arb. They don't have to do anything except not blow it. That was the amazing thing about all these banks blowing up, is like you have to be so freaking stupid to be a successful bank and then blow it just because you're going for higher returns, so you extend your duration too long. Like, the banks have a risk-free arb. You know what? People put in money, you pay them X, you use the money and you get X plus some number. It's not hard. So I don't blame people like GM that essentially offer banking services and other places like that, that cutting out the middleman makes a lot of sense for them. So I think you're going to see that trend continue. And as long as the regulatory environment for banks continues to get less and less and less, there's fewer and fewer regulations every single month now. So the banks have kind of a free pass. I don't blame companies like, challenger banks and GM for wanting to offer banking services. Why do you want the bank to rake in all that money, take all that money off the top of what you want to do? Just do it yourself.
Sure. Yeah. All right. I was just curious. I was like, I don't, have a dog in this fight, but
no, we don't either. We don't either.
This is interesting. SPACs are back. From 2020 to early 21, SPACs exploded into the spotlight. Hundreds launched, raising over $160 billion. They were being touted as a faster, more flexible alternative to IPOs. But then with the great boom come all the great busts. By late 2022, the SPAC bubble had burst, and SPACs that once traded at premiums dropped below that $10 level. Goldman Sachs reported that 77% of post-merger SPACs traded below their issue price within a year. Yikes. But it seems that SPACs are back. They're creeping up again, and promoters are talking about next-gen structures. Should we be worried?
No. I mean, I think we learned our lesson.
Did you not hear the number that I just read, that 77% of them were at that below a $10 level a year later?
Preach, Vanetta, preach.
Don't you think that all the institutional firms that invest in those SPACs will never touch those same SPACs again. I mean, that's a no-brainer. So what they're doing now and changing the way the SPACs are, delivered to the market and everything else, I think it's probably pretty smart.
Okay. So SPACs aren't whack.
I don't know. I don't know all the rule changes, but they were messed up before, and they're not going to raise. It's not that easy to raise money now. Like just because you have a SPAC doesn't mean people are going to throw money at it. So I wouldn't.
That's true.
I'm not that concerned, personally.
All right. Hey, let's talk about the crypto sector. Crypto sector as a whole hit $4 trillion. The crypto sector market value hit $4 trillion on Friday, according to CoinGecko. What does this mean?
It means we lighten up a little bit on crypto.
It means you lighten up a little bit on crypto, exactly.
That seems like a lot. Like $4 trillion, that's a sizable matzo ball.
Well, it's the same size as NVIDIA.
That is true. That does put it into perspective.
Ethereum for a moment there was slightly over its yearly high. It's come back off a little bit now. It's up $50, but it was up, man. It traded up to 41.68. It's 38.12 right now. So
but actually, let's go to the next story. Ether sees record $2.18 billion weekly inflow as ETH rallies during crypto week. Bat just ran down all those numbers. Tom, what are you doing in ETH?
I sold some last night and I sold some more this morning. It's too much front and center in the news, so we're just lighting up our position here. The first two sales.
It's too trendy now.
It is. It's the first two sales we made so far, so got more to sell. I'm just piecing it out.
Prudent.
In other crypto news, a company called Bullish, a cryptocurrency exchange that counts Peter Thiel as an investor, says they're going public under the ticker symbol BLSH. I kind of like that. It's been a big year for new crypto offerings. The IPO filing says the total trading volume on Bullish has exceeded $1.25 trillion. I've never heard of this company, but you can't trade Bullish, but you can trade Coinbase. What's Coinbase doing this morning?
Tomas, have you looked at Coinbase this morning? Because Coinbase is trading at...
it's up $8.
Yeah, 428.
Okay, well, this would be a direct competitor to Coinbase, another publicly traded crypto exchange.
No idea. I couldn't care less. Anything Peter Thiel touches, I want to run.
Okay, nope, wait, hey.
I want to run away from it so fast. I have no interest. I won't even look at it.
We're going to just run away from that. Perplexity CEO lays out a near future where entire white-collar roles are automated by a new generation of AI browsers. He says AI will replace recruiters and assistants within 6 months. Well, that's certainly fast there, little doggy.
That is fast.
Do you agree with this accelerated timeline?
The answer is in certain.
So all a recruiter does is just like sourcing and reaching out to people, and he's like, you can write a prompt that can do that, and he's like, boom, I just automated it.
Yeah, I know what he's saying. It's not nearly that easy. There's still a lot of personal parts to this business. AI will replace the process of going through, all the resumes and that kind of stuff. But
it's
AI,
it'll streamline it, make it faster for the recruiter to get to the best candidate for their.
You're never gonna eliminate recruiter. It's such a stupid headline. No, it's not gonna eliminate recruiters.
There's my Tom.
Oh man. Okay, that was funny. That was worth it there. Well, how about this? Eric Schmidt says that he doesn't think AI is a bubble right now. I asked you last week to compare and contrast the current time we're in right now to the .com bubble. And Eric Schmidt says he doesn't think of it as a bubble. He thinks of it as a new industrial structure, sort of reframing it just like it's not a fad. It's really a tire shift in so many systems that it's foundational now, and that because of that, it's gotten bigger than a bubble. Is that true?
Well, if you remember what we said last week was exactly the same thing. We said that AI.
He was really eloquent about this, though. Like, this was just.
He's a smart guy, but we essentially said the same thing. We said that in 2000, whole .com was a bubble. We didn't say AI is definitely. It's not the same kind. AI is frothy. It's price frothy, but this is not a bubble. It's very different. These are real companies.
Yeah. So yeah, I just thought it was interesting to compare and contrast. Hey, Microsoft is going to stop using engineers in China for tech support of the U.S. military. I don't know. Seems like a good idea.
Seems like a good idea if you can get it.
Yeah. Yeah, I didn't know that this was even a thing, but Microsoft is a major contractor to the U.S. government, and they've had their systems breached by both Chinese and Russian hackers. And so they're like, yeah, we probably shouldn't use people from those countries for our military stuff. Seems SMRT. What are you doing, Microsoft?
Nothing.
Okay.
Mr. Softy has an IV rank of 23. It hasn't had a downtick, what seems like forever, although it is down around $3 this morning to 506, 507, close at 510.
Meta says it will not be signing the EU's AI Code of Practice because it is a governmental overreach that will stunt growth. Meta says Europe is heading down the wrong path on AI. The EU guidelines are aimed to help companies comply with the AI Act enacted last year, which attempts to improve transparency and safety. I'm not sure then what this means. I don't know if Meta will just have to pay a fine or if they're just banned from all of Europe. Stay tuned. What are you doing in Meta?
I want to get shorted, but I don't have a position in there right now.
Meta IV rank of 29, earnings coming July 30th, hanging out at around 707 and change, which brings it up $3 and flirting with highs. I mean, the highs are closer to 740 or so, but 707.
Something moving around pre-market social media is Pinterest. I don't know why, but pins.
Let's take a look at that. I did not see it, to be quite honest with you. Is trading $39, up about $2.
Yeah.
Did you watch any of the British Open yesterday?
Can I have it for, if you give me 5 minutes, I will get to it. Can you wait 5 minutes?
He's always premature like this.
Can you wait 5 minutes?
We have a little bit more foreplay here, Sadnov, then we'll get to the Open.
Can you wait 5 minutes?
Sure.
I guess he's going to have to now.
Okay, you can't wait 5 minutes. All right. Keeping it moving here. The UK signals a retreat in an Apple iCloud backdoor dispute after intense U.S. pressure. The UK government is reportedly seeking to de-escalate its high-stakes clash with Apple over encryption. British officials revealed that the government is likely to back down from their controversial demand for a backdoor into iCloud services. Of course, this is not something any technology company wants to provide, because it just leaves you open for all sorts of shenanigans. But after, again, intense pressure, it looks like the UK is backing down from this. What are you doing in Apple to Apple?
Oh, boy. I think we're a couple deltas long, but yeah, it's very small. A few deltas long.
It's up about $1.50, $2, trading to just under 213.
Okay.
Apple has not participated with the rest of the market.
Or Apple. It's
For
trying.
Apple has earnings July 31st.
Hey, this is crazy. QuantumScape stock skyrockets 52% week over week as the company hit a new production milestone that bolstered its outlook. QuantumScape surged by 51.68% in just a week's worth of trading, extending its rally to a 9th consecutive day on Friday as investors appeared overly optimistic about its new production milestone, QS.
We have not traded that in over a year.
Well, you're missing out on the rally, girl.
Yeah. you are missing out on the rally for sure. I mean, this stock was $5. I'm talking about early in June. It's $14 now. Seems to go up every day.
Yeah, but it was 120 once also. Let's not forget that.
Let's not ruin a good story.
That's neither here nor there. That's neither here nor there.
That's right. It's Monday.
What's the IV in there?
I'm taking a look at the markets. The IV is great. I mean, great. It's 106. It's never been higher. Markets are pretty good. I guess I mean, some of the markets are okay. You may have did something for Tuesday. Maybe QS is something I can do for option trades today every Tuesday and Thursday.
Haha. Yeah. All right.
Yeah,
See,
get it.
That's a good job out of me. Hey, the private equity giant Blackstone has withdrawn from a consortium, I like that word, seeking to invest in TikTok's U.S. operations. The latest change came as uncertainty has mounted, and there have been several delays in the TikTok deal. Tom, I don't know. It's not looking too good here.
Well,
because you need someone with like Blackstone type money.
No, you don't. No, you don't.
Yes, you do. Yes, you do.
There's plenty of people with Blackstone type money. I wouldn't worry about it.
Okay, well, can you introduce those people to me? Tesla is launching a blitz sale to revive sales ahead of an EV tax break cliff. The car maker is rolling out aggressive new incentives to boost demand before the clock runs out on a crucial $7,500 tax break, which I think goes into effect, I think, in September. Tesla is offering, yes, it expires September 30th. So on a newly updated section of its website titled Current Offers, the company lays out a bunch of very aggressive sales. What are we doing in Tesla?
It's up $6 this morning at 335 and change. Even the S&P's up 14.5, holding steady.
They also made like one of their guys, one of like their IT guys, they just promoted him to the head of sales, and he's never worked in sales in his life. I'm sure it's going to be fine. I'm sure it's going to be okay. Tom, what are you doing in Tesla?
No position.
Okay.
Well, I pumped gas before I became a runner on the CBOE. Look at me. I became a market maker.
Yeah, there you go. There you go. A relentless Scotty Scheffler sealed his first British Open triumph by 4 shots as he turned the final day of the tournament into his coronation. The 29-year-old American world's #1 started out with a 4-stroke lead, and apart from one blip, it never looked like he was going to relinquish the crown. Also, I did not know he was only 29 years old. Let me drop my skincare routine, Scotty. Did you know he was 29?
Yes.
He does not look 29 years old. He looks older than that.
No, he doesn't. But he looks like a champion. He looks like nobody's going to catch him either.
Yeah. And what did you want to say about the British Open now?
2 things. First of all, everybody's using kind of this same putter now. I don't know if you noticed that, Tony, but it's this new putter. And Scotty Scheffler makes every single putt from inside of like 30 feet. It's unbelievable. He's so damn good. But
yeah.
He's unbelievably good. But what I wanted to say was Mark Zuckerberg reminds me of Rory McIlroy.
Oh, that's not fair to Rory.
I feel like
Scotty Scheffler uses the TaylorMade Spider Tour X L neck mallet putter.
Yeah, they all use these brand new kind of mallets. They're all different. They used to use like blades. Now they all use mallets, and the mallets are kind of this weird setup. I'm not sure. Somebody designed it. I don't know who had the patent for it, but everybody uses them now. It's pretty interesting. Every single person. It's unbelievable, and they putt so incredible. But
well, maybe you should use one.
So
you can use a new putter.
So I was listening to this guy. They were interviewing this one guy, and he said, they said, on the last day of the British Open, how many strokes would a normal like hacker, like let's just say like a 15, 18 handicap, not like somebody that's at 32 handicap, but like a 15 or 18 handicap, how many strokes would you have to give him to hold the lead on the last day of the British Open or any major championship? They were asking the
15.
pros. 15?
I don't know. Just teasing. I'm teasing.
Sold. You can have 15 strokes and go out there. You'll be done by the third hole. They all, like every single person said
500
between 40 and 50, and they might still not win.
Right. Yeah, it's brutal.
Yeah.
Breaking news. A shark also uses a mallet for a putter.
Nice.
Okay, this is what is my job? Hey, this is a crazy story. A sports memorabilia dealer was found dead after admitting to $350 million fraud and forgery scheme. This took place in Westfield, Indiana, and they discovered that a body had been found at one of his memorabilia locations. His name was Brett Lemieux, and he admitted to forging millions of athlete autographs and holograms over the past 20 years under the company name Mr. Man Cave.
Wow.
Well, that shows you from buying anything from a Mr. Man Cave.
Yeah, they sold over 4 million items, surpassing $350 million in sales.
With authentication? With authentication?
Well, that's what
Well, it's his own authentication. Like,
Yeah.
you know,
I know.
There are,
I know. That sucks, man. That sucks.
yeah. Yeah, so
Don't
we
you
could
have
make
a-
a Tom Sadnoff, you could be one too. We get a hologram and everything is good, and then you do it. But there are agencies like Beckett and others that are more reputable.
Yeah.
But Tom, don't you have a story about Michael Jordan was in someone's house? He's like, I signed that, I didn't sign that, I signed that, I didn't sign that.
Yeah. So first of all, in that picture of Michael on the bottom thing, Jules and I, you can see Jules and I if you had close up in there, because we're sitting like 15 rows up.
If you had really good eagle eyes and you magnified it 50 times, you'd be able to see Tom and Jules. Believe me, when you find them, you'll know who they are. Large and in charge.
It's a true story. One of our friends, not going to mention names, but one of our friends, we were playing poker one night with Michael at his house, and he was collecting all this Bulls memorabilia.
At our friend's house, not
at our
Michael's
friend's house.
Yeah.
And he had all this Bulls memorabilia, and he'd been buying it for all throughout the 90s, late 80s and 90s.
This is way before it got very popular to do. I mean, this was in its infancy.
It was still popular,
it was
but
eBay stuff.
Yeah. And he had an entire room full of stuff. And Michael went in there and he goes, I signed this. I didn't sign this. I would never sign this. I didn't sign this. I never signed this. I signed
He's
this.
like a Wilson Ball. I would never sign a Wilson Ball.
That's right. He knew.
That's so interesting. But you never know.
He knew every single thing that he signed and did based on who the manufacturer was and kind of the way he just knew. And my friend, our friend, he's both our friends, and he was so depressed. He's like, can't believe I bought half of the stuff he had bought wasn't real.
The next day, all of it was on eBay. Everything that Michael talked about.
But all of his real stuff he kept.
Yes.
So he knowingly sold.
Allegedly knowingly.
No. He just got rid of it.
Yeah, he got rid of it. He burnt it.
Selling it.
He burnt it.
Fraudulently. Yeah, that's counterfeit goods. All right. Finally today for my viral video of the day, because you guys have been so good today, here's a cat video. You're welcome. Cats are ungovernable. I love this so much.
Cats suck.
Cats are great.
Man.
You can leave a cat alone. Watch this, though.
Don't do it. No. No.
Just jump on the thing? Oh my God. I made it.
Don't do it.
Sadnoff, you could do that.
Oh, yeah. I do it all the time.
Nah, that's fine. Hey, look at me. Right on time. Right on the dot. Bat, what's coming up next?
We're going to take a quick 90-second break and come back. We got more Tasty Live after this with Confirm and Send. We'll be back in 90 seconds. Tasty Live.
You can get up to $4,000 when you open and fund a new account with Tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tastytrade. Make your move.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tastytrade. Download today.
Tastytrade has crypto, and you can trade with 0 commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
That's right, Thomas. That noise can mean only one thing. It's time for confirm and send. But before we do, let's take a quick look at the market. Even the S&Ps, after opening lower by a skosh last night and then rallying for most of the night, are up 12 or so, and you can see them around 7 handles off of their high. Still a relatively tight range of around 25 handles top to bottom. NASDAQ up 42, Russell up 15, and the Dow up 97. All 4 indices up around the same. The Russell on a percentage basis is the strongest of the group. Volatility in by 15 cents. First time we've seen it under 19 sounding off in a while. 1894 after trading down to 1880. Bonds sounding off. Bring out your bond hats. 113, 113.15, catching a little bit of a rally here. I know it made you happy. You've lightened up. You did some of your most bond trading you've done overnight last night, lightening up some of your positions. Same thing with notes, trading over 111 and change, making a nice rally too. Bitcoin making a nice rally too. 119 and change doesn't give you the whole story. Trade over 120, 127. It's flirting with 119 right now. Ethereum was your real big mover. 41, let's round up, 41.70 as the high side. Enough. It's 38.18, still up $50. Huge move in Ethereum. Oil basically unchanged, down a couple of pennies. Gold up $36. That's a 1% move, almost 37. There you go. Silver moving 1% also to the upside. Buy everything, Sadnoff. Everything is up except net gas, which is down 12 cents.
Everything's up except, yeah, that's right, net gas.
Net gas was down 20 cents. It was a pretty big move.
Yeah, I rolled up some. Hold it. Did I
complete your sentences?
Oh, I thought I got filled in that. Canceled. I rolled up some.
I'm dying to hear what it is.
I rolled up some positions this morning. A couple of couple gold rolls and a few other things. Did take some bond profits today. Took some ETH profits. What else did we do this morning? That's about
the ETH. You did a little bit in silver.
Rolled up some puts in silver. Silver's had a good move this morning too.
Yeah, you made 10 or 11 trades. I mean, you're pretty active for overnight.
Yeah, I didn't do anything last night, but if you missed first call last night, it was a good one. It was Chris Vecchio and myself, and we talked about lots of different markets. There's one topic that I was going to talk more about today that I promised somebody we would, which is just the expected move in Google and Tesla, and talking about how, the implied volatility in Tesla is a lot richer than the implied volatility in Google. And sometimes you have to kind of look at, how much juice.
Where your best opportunities might be if there's plenty of bid-ask differential. If the bid-ask differential is tight, you got to figure out where your opportunity is.
Well, I mean, the expected move in Google, I want to say the implied move's like, almost 6%, and in Google it's closer to 4%. And I think that
Google, you've got a $10 expected move for the next 4 days. That seems quite low. And then Tesla, you've got about just $23 or so.
Yeah, I think it's close to 6 and 4 kind of thing, or 6 and 4.5. It's just reflects the implied volatility. I just think there's a little more juice in Tesla. It's more interesting to me. Anyway, I'm Tom Sosnoff. He's Tony Batista. This is Tasty Live. Thanks for spending the week with us. The Bat and I will be here Monday, Tuesday, Wednesday, and Thursday morning. Thursday afternoon, we'll be on an airplane going out to Denver. If you haven't signed up yet for Denver, tastylive.com/events. We'll see everybody at the Summit Theater in Denver on Friday morning. We're doing a live trading show. Who's doing the show Friday morning from here, Tony? Do you know?
I believe our boys.
Mike and Nick.
Yep. So Mikey and Nikki are doing the show Friday morning from Chicago. And Tony and I will be in Denver, Colorado at the Summit Theater. Looking forward to it. And then we'll see you back on Sunday night for first call. Anyway, so a full week. It's going to be a good one.
Nice.
It's a 4-week expiration cycle, 28 days to go. This Friday will be 21 DTE. So we got to deal with that as well. We got a lot of stuff going on.
We do have a lot of stuff going on, Thomas.
And let's see what we got. Confirm and send emails that came into us over the weekend. It is Monday, July 21st. I can't believe it already. It's almost winter. I'm depressed.
Almost time to roll those futures.
It's almost winter. Almost time to get my heat fixed again. Let's do it. I understand the preference for managing the daily P&L swings being personal. Is this a function of account size? I have a $50,000 account and typically am okay with 0.1 to 1% daily swings. So in a $50,000 account, okay, 1% would be $500, right?
Mm-hmm.
Yeah, 1% would be $500.
Yeah, $500.
And 0.1 would be $50. So that's what he's comfortable with. If I manage too aggressively, I feel like I'm micromanaging a position that would have worked out anyway. As an account gets larger, is this something which becomes more relevant? Let me just give you a little context here, Tony. The reason he's saying this is because I said I aggressively manage my positions, and because I want to reduce my P&L swings. And so he's asking if it's a function of account size, because he's comfortable with a $50 to $500 daily swing.
Yeah, I don't know if you can look at it just like this. I mean, you got to tell me how much risk you're taking. You can have a $50,000 stock with a lot of covered call type strategies or iron condor type strategies, and maybe these daily swings are in line for the amount of risk you're taking. You could have a $50,000 stock with a lot of naked options, and this swing would probably be a little bit low for the type of risk that you're taking. I don't think I can answer I don't feel like I can answer the question by just knowing this. I'd have to know how much real risk you have.
Okay.
And now if you knew your theta decay, like if you told me your theta decay, like if your theta decay was, let's say in a $50,000 account was $50 range, then I would say, yeah, you're about right. 2 times, you're about right. I think you're okay.
Here's my take on this. Whether you manage aggressively or you manage closer to a little more passively, It's the
You're all
kind
going
of
to get to the same spot.
you are going to end up in the same spot. This is the crazy thing about trading. If you manage super aggressively, what you're doing is you're reducing your P&L swings, but in the end, you're going to end up very similar P&L wise to the person that doesn't manage aggressively and manages more passively their active positions. So the end result is going to be very similar. The difference is the person that manages more passively is going to have bigger P&L swings, and the person that manages more aggressively is going to have tighter P&L swings. In the end, you're going to end up with the same amount of money. Close enough. That's what all our research has shown. So I like the aggressive approach because I like the smaller P&L swings. In a $50,000 account, this person's fine with the $50 to $500 P&L swings. I totally understand that. So I don't think it's actually a large account, small account thing. I just think it's a function of, how you want to do your investing. But that's how it works out.
Yep.
I'm cool either way. I'm not going to change my approach, but I'm cool either way. Let's go next slide. I've been selling ES 0 DT spreads to get around the pattern day trading rules. There are no pattern day trading rules in futures or futures options. If I let them expire in the money, the position will the position effectively settle to cash? Also, is it 3 p.m. or 4 p.m. Central Time that they expire? I don't want to end up with an ES future in my small account.
Yeah. So no, they're not going. ES is not going to aspire to cash. It's going to expire to the future. So you're going to have to do something. If they're out of the money, you don't have to do anything. But if they're in the money, you're going to have to do something. You will have a future, and it's 3 p.m. Central Standard Time.
Listen, this is a question that we get all the time, and I completely understand. Trading ES options to get around pattern day trading rules. It makes a ton of sense. And if you close before the opening, there's nothing you have to worry about. If both sides expire in the money, there's nothing you have to worry about. But the product does not settle to cash. The product settles to futures. So if you're straddled, meaning one side's in the money, one side's out of the money, you are going to end up with a future that you're going to have to get out of. So in a small account, you don't want to do that. So yes, you have to close your positions prior to the close, or unless both sides are deep in the money or both sides are way out of the money. But be careful. Now, everything's decided at 3 p.m. Central Time. So you don't have to worry about something moving after the market because that won't affect you. So that's how you don't end up with a future in a small account. Let's go to the next slide.
You definitely got to be a lot more manageable than an SPX. SPX, you could actually close your computer and not have to worry about a thing because it's all cash settled.
Yes, exactly. Let's go to the next slide. What percentage of an account would you allocate to crypto, and would you use the cash product, futures, or an ETF?
We'd use all or any of the products depending on your account size. The futures are quite big, so I think that throws them out for most people. And I'm going to say, I'm going to go real wide, 1 to 10%. At this level, I would probably be closer to 1, 2, or 3%. So 1 to 10% would be my wide range.
Somebody, I think it was Vecchio, said the other day that he read a new study that suggested up to 4%. We've done a bunch of research on this ourselves even when Bitcoin was significantly lower and digital assets were much cheaper. And we came up with, 1 to 2 or 1 to 3%. I mean, obviously, because there hasn't been a downtick in the last 10 years, there's no number that would have been, 50% would have been a good number. But the reality is
100% would have been even better.
Yeah. The reality is based on risk and based on everything else right now, I think 1, 2, or 3% is fine. And we would use the cash. We currently use the cash product. But we would not use the futures. We're comfortable with an ETF, but I prefer the cash product for now.
Yep.
Let's go to the next slide.
There are other products like BITO you could trade also and do covered calls on. I mean, there's a plethora of things to do.
On Friday, you answered a question about early management of trades that quickly come in. You said you take profits if the position comes in quickly. But I'm wondering if implied volatility rank factors into this decision at all. For example, if IVR is still high, would you then consider taking profits and wait? Would you reconsider taking profits and wait? Sorry.
I mean, if IVR here, cash is king. So I mean, if it's a winning position and then I've gotten somewhat near my goal for that trade, I'm taking it off. And if IVR is high, I might look for another trade with a higher probability of success, maybe a little bit different in nature than the directional or non-directional bias that I had in the first one. I'm going to look at the position when it gets to a profit target that I like, especially a quick one like this. So if IVR is high, I'm more inclined to stay in it. I'm definitely more inclined to open up another trade if I close the one that I have now.
We always default. This is a simple answer for us. We always default to quickly managing trades. Now, that doesn't mean that 100% of all our trades we will take off, but we do default to, if a trade comes in, we default to quickly managing it. If we really like the position, we'll hold on a little bit. I mean, but normally we don't really it's just a trade for us. Like, we don't fall in love with a lot of this stuff. So sure. If there's a position we really, really like, sure, we'll hold it. But for most of them, our default is to take it off. IVR factors in much more on the losing side. So IVR factors into our decision whether or not we're going to close the loser. If IVR is super high and we're up money, we may take a position off and then put another position on. Like if we had a covered call, we may sell a put. If we had, if we were just naked short puts, we may sell a further out of the money put. Who knows? But when we have a losing trade on, if IVR stays high, we'll continue to roll. If IVR drops, we will reconsider and
maybe even take it off and take the loss, right?
Yep. Mm-hmm. Mm-hmm. Let's go to the next slide. By all accounts, Netflix turned in a great quarter, yet the stock was down 5% on Friday. Do you pay attention to this and think it could be a theme for how stocks will react and therefore begin trading with a bearish bias? Or do you just ignore it and call Netflix a one-off?
I mean, I don't look at it from a high macro view that all of the earnings are going to be like this, whether they hit their numbers or not, and they're going to be weak, and the market's going to be a little bit weak. No, I mean, I look at it as each individual stock. Now, I will, in my mind, think there's some opportunity there if all the earnings are inside the expected move, or the first couple of ones are inside the expected move, that maybe all the rest of them are going to be inside the expected move too, but not for the overall market's direction.
I don't think you can look at Netflix and make any kind of an overall market statement. It is very typical for a stock to run up in anticipation of killer earnings. And then when the earnings come out, they say one thing like, oh, we don't, looking forward 2 quarters and maybe it doesn't look, who knows? So the fact that the stock was down 5% was probably just more of an interpretation of what the go forward statement was. I don't pay any attention to that. I mean, I pay attention to the move itself, but no, there's no way that we're going to look at Netflix and think that means anything. It's going to impact the way we trade Tesla and Google. Not one bit, not even for 1 second. I mean, if Netflix was down 3 times the expected move, it was down 250 points, then maybe we'd say, wow, there's some downside risk, in this market. But Netflix was inside the expected move. It's been up 1 billion points this year. No, we just ignore it.
Yep.
Let's go last slide, John. Is there a minimum number of underlyings someone can trade and still be successful? I have a regular job and it's hard to track a bunch of underlyings during the day. So I'm wondering if I could just trade a few and still be okay. Yeah.
Listen, you have to be, you have to be comfortable and confident with your position. So if you too many of them is too much for you to watch, then you're not going to be confident and in your positions, and you're not going to make intelligent right moves. So for me, I would say sure, you can do this. I would probably challenge you to be a little bit more into some of the ETFs like SPY and Q, so you get a little bit more of a market overview of what you think is gonna happen in the overall market. And IWM you can throw in there too, and then a handful of widely traded tight market stocks that have a decent IVR. Yeah, I think you're okay. Sure, you got to do what's comfortable. You got to be comfortable so you can be confident, so you can be profitable.
For a number of years, like 20, I traded one underlying. I know everybody did, kind of in the professionals. So for me, yeah, I mean, and I've seen a number of really successful people trade just one underlying, like SPX or, basically usually, S&P 500 or whatever, NASDAQ or something like that. I don't like it as much because I think it's limiting. And I think when IVR is low, it really reduces, your kind of overall vision, and it reduces your opportunity. So I don't think it's the best way to trade, but you can certainly cut down your universe to just a handful of stuff. Listen, you got to do what's best for you. You have a regular job. It's hard to track a bunch of underlyings. I understand that. So you cut your universe down to a couple of liquid underlyings, and you just trade a few. Of course. Anything you do or trade, it's great. So yeah, of course. And you're still going to be okay. I mean, you might miss a few opportunities here and there, but who cares? Yeah, you're going to be fine.
Very good, my friend. You know what? We're going to be fine too, because we're going to take a quick 90-second break and come back and get an option jive next. Let's Tasty Live.
You can get up to $4,000 when you open and fund a new account with Tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tastytrade. Make your move.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Look who's back testing. Tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tastytrade.
Welcome to the most dangerous show on the Tasty Lab Network. It's Engineering the Trade. I'm your host, Jamal Chandler.
I was a chemist and engineer for over 10 years and conducted experiments and research of all kinds. However, for the past 15 years, I've been an options trader, and I've traded strategies of all kinds. While the concepts may be different, there are certain similarities between these disciplines.
My favorite strategy really has become selling put spreads. Now that works in a market where we're continually going up, of course, but I love trading everything. And that's sort of a result of trading at a prop firm. We looked at the entire universe, as we say. So no, I love to trade it all.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tastytrade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tastytrade. So spread the word and earn rewards. Terms and conditions apply.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tastytrade. Genius loves company.
It's options. Jive. It is an options jive. Starting off with my man Kai. Kai, how are you, brother?
I'm doing great. How are you?
Doing well. Thank you for asking. Even the S&Ps are up 7, Nasdaq's up 9, Russell's up 12, but all that means nothing when you've got Kai in the house. Kai, what's up?
Not much. Just try to watch the market to see when it's going to break through and reach a new high again.
Well, it looks like it's onward and upward right now. But what do you got for us?
All right, so let's take a look at what happened last week. The first summary, definitely, again, not the big news anymore because the S&P 500 and NASDAQ hit the new highs again, probably 3 days out of 5 in the past week. Can we go to the first slide?
Sure.
Yeah. And the next one is Bitcoin reached the all-time high again. But the highest point is actually happened on the Monday morning while we were talking, right? I think it's 123,000 something. And then start to swing in a very tight range. And also last week is the first earnings week, kind of formal with the meaningful banks earnings coming out. Mostly these banks had a positive earnings report, and the trading revenues are extremely good for most of these banks. Goldman Sachs, Citigroup, JP Morgan, and Morgan Stanley. Their trading revenue up a lot, taking a big portion of their revenue.
Nice.
And also so from the macroeconomic and political side, most of the economic news data beats expectation, like the CPI, PPI is kind of either match or beat expectation. But the markets were more sensitive to the political and trade policies, political news and trade policies. So last week we had some intraday move, but anytime those big swings start to happen, some news, either Trump talking about the firing the Powell or some trade policy numbers changed or something.
True, but it's been onward and upward, right? I mean, the market seems to be unfazed by it. Yes, there's been some opportunity, but volatility really has not crept up at all in any kind of news.
Yeah. So that means actually overall the implied volatility was low.
Yeah.
It's not elevated at all. And the upcoming week, next slide. Not too many exciting news, but this is one of the most important earnings week. This week, including next 2 weeks. So these 3 weeks, we had the most earnings coming out. So this week, we're going to have more than 100 S&P 500 companies have earnings announcement, and the Magnificent Seven started with the Google and Tesla.
We're ready. I can't wait. I hope it brings some volatility to the market.
Yep. So last week, still a quiet week, relatively. So the market was up. So the S&P was up only 0.6%, Nasdaq a little bit more because of the NVIDIA, all these crazy chip news, 1.3%. Russell and Dow barely moved. So nothing too excited in the indices in last week.
All quiet on the Western Front.
So for expect move, last week, definitely within the range again. Expected was 1.2% last week. Realized was 0.6%. And because the implied volatility didn't even change, the expected move this week is almost same as last week's, 1.1%. Let's see what's going to happen. I don't know why even the VIX is the same. The expected move in the dollar terms is slightly lower than last week. Probably
yeah, 67 points is not an exciting. It's not exciting. Doesn't get traders all fired up a whole week for 67 points.
It's pretty tight.
That's got that lying around on his couch. Yeah.
Yep. Okay, next one, IVR change is kind of mixed, but most underlying or most major assets implied volatility didn't even change, right? S&P, Bitcoin, and some of the other, like the gold, the implied volatility actually barely changed. I think the biggest change is Euro and bond. They increased a lot because of volatility. Bond was going down. Going up. The dollar was weakening, so the euro, yen, all these currencies increased, and the crude oil implied volatility dropped. I think these three saw some big moves. Any comments?
Any questions? Any concerns?
Not really. I mean, the richest thing on the board makes sense at natural gas. Everything else.
Euro's actually pretty rich.
Yeah,
40,
it's all right,
45,
but it's
43.
When you talk about the euro, you're talking about something that still has 6% implied volatility. It's not there. There's nothing there.
Yeah. I remember you said the low implied volatility facing the earnings season is the worst, right?
Yeah. Well, so far it's been a non-event, pretty much. We haven't lost anything, so it's good.
Okay. Cool. So some big movers from last week. The first one is the S&P. We don't have to emphasize it, but can we see the next slide?
Sure.
So it's actually Bitcoin. Bitcoin's $123,615. This is an intraday high from Monday. Let's see how high the Bitcoin can go. Nothing exciting. Just putting some stats there. And next one is the dollar was weakening last week. So I put the euro against dollar and the dollar against Japanese yen. So yen actually rebound much faster than the rest of the currencies. And it actually increased from 148. It depends. So U.S. dollars versus Japanese yen decreased from 140, almost 149 to 143. This is a pretty big jump in the past 6 months. We had this is like a less than 3 weeks data from the lowest point, not from the same week, but this is a pretty big jump in the past 2 or 3 weeks.
Yeah,
Tom hopes it continues.
Yeah, it's our biggest long currency. It's a good one today. Where is it? 68. Yeah. Yep. Yeah.
It dropped to 67.6 last week.
Got it.
All right. Yeah. So top 5 and bottom 5 performers in the S&P 500. Top performer: First Solar, AMD, Oracle, Citi, and Coin. They're up somewhere between 7 to 9%. Nothing too special. For the bottom performers, mostly from healthcare, I already took off some of the worst 4 performers. They're all healthcare companies. So I put the ELV, which is not that liquid. Just try to give a snapshot about what happened last week. So Ford, UNH, they're all down 6 to 6%. ABT and EMPH.
Stocks we can look at possibly today, Tom, if you're looking for something that's I know you have a UNH position already, but maybe EMPH. I don't think you have an.
I do have an ENPH. I have a UNH and an ENPH position.
Oh, you do.
Both of those I'm long. I have nothing in Ford and ABT. On the call side, I'm looking to get short Coinbase, and that's really the only one of those stocks.
Got it.
Okay. So when's Coinbase earnings? Is it?
Coinbase has earnings coming soon, I believe, in the beginning of August.
Early August, right?
I'll take a look right now for you. July 31st. Sorry, the end of July.
Oh, so it's next week, the end of next week. Cool.
Imminent.
It's imminent.
All right, earnings review. Earnings review from last week. We didn't see any company has more than a double-digit move, post-earnings move. So I just picked two that has kind of a 7 to 8% move, ASML, and also the Abbott. They both down like 8 to 9%. The rest of the earnings, they have relatively small movement the next day, roughly somewhere between 1 to 3%. That's the largest move.
Okay.
Yeah, that's why you had a good earnings season, pretty much unched for most of the banks.
Yeah, they've all been inside the expected move. This has been a theme all week long so far.
Yeah, we haven't traded. We haven't done much in the banks. Yeah.
Okay, so even though the major banks had positive earnings results, but let's take a look at the overall stats. It's still very close to 50-50. So the winner is actually smaller than 50%, even though we'll feel the market was positive. So it's 49% of the companies has positive move the day after, and the overall return is a negative 0.4%. So it's slightly different from what we trade from those very liquid underlines. So in general, from those 150 roughly companies, roughly 51%.
Okay, that's good. Good stat.
Yep. This upcoming week, we have a lot of earnings. I just read the news this morning. I believe the Verizon, Domino, CLF, they all have either positive results or positive outlook. So that pushed the market up a little bit. And this week, we definitely have some important companies, Tesla and Google, IBM, Chipotle, all announced on Wednesday, and QS on Wednesday. Thursday, we have Southwest, American Airlines. Tuesday, we have Coca-Cola. And also, you're the one you hate the most, the ENPH.
Tony, ENPH is after the close tomorrow, right?
Yep.
ENPH is after the close tomorrow. We'll take a look at that on Tuesday.
Yeah,
not today.
But GM's before the opening tomorrow.
Yes.
No, before the opening on Tuesday. Yes, you are correct. Then I didn't. Let's see, GM the 22nd. Yes, Kai is correct. I'm sorry, I missed that. Coke is another one. I think I mentioned it. I don't know if KO is up there too. Coke is also on the 22nd. So yeah, GM. You are right. GM and Coke.
Well,
yeah, Coca-Cola. There you go. You got it.
Do you trade LMT most recently? I remember you used to trade that.
We don't really trade that.
Oh, okay.
The only one up,
the
only one up there.
GM position, Tom.
No, I know. The only one up there I think that we might trade is GM.
Ivy rank of 30, and there's not bad. I mean, you're looking at $2.70 expected move on a 50 some odd dollar stock.
Yeah. Got it. Okay.
Oh, we also have Intel on Thursday after close.
Yeah, that could be interesting. Thursday after the close.
That's it.
Very good, my friend. Good job out of you. Don't worry about it. You finished right on time. We're going to take a quick 90-second break and come back. We got more Tasty Live. E-mini S&P's up 8, NASDAQ up 20, Russell up 12, and the Dow up 63. We'll take a quick 90-second break and come back. We got more Tasty Live after this with the opening bell.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tastytrade, named best online broker for options trading. Genius loves company.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Global markets never sleep. Explore them with Forex, now available on Tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tastytrade.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here. And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast. Option Trades Today. You listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bat.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Tastytrade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Tomas, we are back, my friend. You know what that means? The opening bell is imminent. Even the S&P is still up 9, NASDAQ up 27, Russell up 11, Dow up 81 as we climb the wall of worry. South volatility in by 14 cents, under 19 to 1894. Bonds catching a rally. They're up 103, 113.17, which is just about the high for the day, which is 113.18. Notes are also up good on the same type of move that the bonds have had. Not quite as much, but still up 13 and a half ticks. Bitcoin up 800 and change over 119, 119.2 after the futures traded up to 127 last night. That's 120,700. Ethereum up 235. That's a big move in Ethereum, trading near its highs of 38.83, 38.29. You can see it's a 6.5% move. Oil down 24 cents. Gold up $37. Also a big move of 1% or more. Same thing with silver, up 51 cents. Big move there. Net gas down significantly too, down 18 cents. That's a 5% move to the downside, Thomas. Big move in net gas. That's all I got. You got about less than a minute before the market opens here, Sadnov.
Yeah,
what do you think?
There's a bunch of stuff I think. I thought that after the markup on Friday, it kind of a mixed close, but a little bit of a markup. That today I was looking for higher prices early, and then I think they give them up like Tuesday and Wednesday. I think there could be a little sell-off this week. I'm looking to get short Coinbase, which I'm not short right now, but I'm looking to get short Coinbase. If it's up big, RBLX, if it's up on the day, Hood, I think that's probably the most overpriced stock that I can find. RBLX and Hood are the two stocks that I want to be short for this week. Coinbase as well. On the long side, you know, I mean, earnings plays will play them as pretty neutral, and then on the long side, don't have a hell of a lot. I mean, we're playing end phase a little bit to the upside, and there's a few like that, but you know, obviously still long bonds and things like that. But let's see.
Whoa, what's that?
I don't know.
Oh, that's your hood. You sold it 109.75.
Wow. Okay, I didn't think I was going to get filled.
You put your money where your mouth is.
Well, it's 110.25, so I think I should be filled.
Yes, you are filled. Absolutely.
Let's see what we can do here.
Hood opened 109.03. Sosnoff, you got filled at 75.
Yeah. And RBLX, I'm offering some of that. I'm not filled with any of that yet. Well, it's just time. You got to put your money where your mouth is. Coinbase opened up a little. I'm just taking a quick look at some of the stocks that we have.
Let's see what's moving around to the upside. You got Tesla up 7 and change. Thomas, IB rank is only 17. It has earnings coming on the 23rd after the market closes. MSTR up 6 and change, has earnings at the end of the month. Meta is up $5. It too has earnings at the end of the month. Coin, you were just mentioned a moment ago, is up $4. It too has earnings at the end of the month. ARM up another $3. It too has earnings at the end of the month. UNH up about $3 too. Google up around $3 also. Some of the buckers to the downside, Thomas, Netflix down almost $6 to $7. Microsoft down $3.50. Marvell down $2.
I mean,
Circle
I will say
down
that
$1, not too much.
UNH is one of the stocks that we're really hoping got a little bit of a bounce here. We got stuck a little bit long it. I think you did too. I'm not sure, but I clearly am. Let's take a look. And oh, by the way, Hood, which we did sell
109 and change and 110 and change, is trading under 108. 108.03.
Yeah, and I sold some more at over 110. So we're gonna take a nice little profit here.
Yeah, you covered it all. Good scalp. You covered it just under 108 and just over 108. Let's just call it 108. Sold it around 110.
Yeah,
Good
made
job.
2 points right while we're talking. Good little
Roblox,
scalp.
you got a partial fill.
Good little scalp, as they say. We got some challenges in the Goog.
In the Goog, what's going on in the Goog?
I don't know.
L.
This is one of these stocks that always kind of messes me up. You know, it's like every time I adjust the Goog, I pay for it.
We've been trading it from the long side. I mean, it was one of those stocks that
been trying to.
Yeah.
Been trying to for sure. But I don't want to roll it out in time. I just want to kind of like, you know, neutralize.
You're staying
a
in
bit.
August?
Well, this particular stock has been super strong. Yeah, I'm going to stay in
earnings
August.
coming July 23rd, Thomas. That's just in 2 days. So
I know. Stock's been super strong. I don't really have an axe to grind in Google. I'm just going to widen my strikes out so I don't have too many long deltas in there. Looking at our stocks, the only thing we're really losing on today is the SPYs. Roblox, another stock that I really wanted to be short. How many shares? We only got a partial this morning.
You got a partial. You didn't get filled.
Oh, bummer. Okay. Well, anyway, the stock just dropped $2. So I had the right idea, Tony, on the.
You did, but you were a penny off, just 1 penny off, because you sold the high of the day only on a partial.
Yeah, bummer. Okay. Well, how would you know? All right, let's see what else.
You don't.
Yeah, let's see what else we got here. Yeah. Robinhood's down to 107.5, so that was definitely the right call there. They gave you one. They gave you one little quick second. You can't mess around and wait on these things. Now, Coinbase.
No, you can't.
Coinbase, I missed because that was my third short, and I missed it. and it's down on the day. Actually, it opened pre-market. It was up like $6, and now it's unchanged. Let's see what else do we got here.
It most certainly is.
Taking a quick look.
Taking a quick look. See.
I don't know. What do you see? Anything?
Oh man, it's tough. I mean, this is just like the yesterday, which was just like the day before, which is just like the day before. I mean, climbing the wall of worry here, Thomas. I don't see anything. Volatility basically unchanged, down 12 cents. Bonds were your best play again. I didn't participate in it, but it certainly was the best play on the board.
Yeah, that was the best play, and it's worked out nicely, and I'm not complaining at all. So don't get me wrong. Don't at me.
I'm not trying to.
Taking a look here to see if there's any other stocks that are in a trouble zone. Maybe I got to roll up some putties in Apple. I don't know. Apple's
putty.
Yeah, Apple's one of those stocks that.
Man, if you had any short delta anywhere and you didn't adjust fast on a timely basis, you really basically hitting bids. You didn't have too much opportunity here on most stocks to do anything.
No, I agree. You basically had to bang the opening, and that is not an easy thing to do.
No, it isn't. It's not fun either.
ETHA, that is a tough one. The good kids are getting challenged in there.
Yes, we are.
Definitely has not been an easy one. What are S&P? S&P's up 16. What do you think here today? This is kind of exactly what I thought. I thought we'd be a little stronger this morning, and maybe they give them up this week. What do you think?
I mean, we've got a little bit of news coming out on Thursday with jobless claims. I would love to see volatility uptick a little bit. I would love to see a little two-sided action in the market. I have not seen any of it, Thomas. It's not encouraging for two-sided action. Keep your powder dry is all I'm going to say. They're kind of lulling us to sleep here.
Well, to be honest with you, we have more dry powder than we need. We're a little overstocked. So we need.
I hear you there.
We need a little more. We need something else to kick in here.
Sure. Sure. I hear you.
Taking a quick look at my screen, just look at my watch list. Silver's popped up a little bit. Actually, Tesla's sold off. Nvidia's sold off. Meta has been bought. Mm-hmm. It's kind of just I talked about this a bunch. This is a stock pickers. This is all stock pickers.
Yeah, sure is. Yeah, sure is.
Yeah, I mean,
you've got to be selective.
Yeah. This is just stock pickers left and right.
This is summer, Sosnoff. This is summer. This is what's happening here.
Yeah. Yep, you're right.
This is summer. Summer trading always kind of makes you feel, we kind of grind, and you feel like every downtick you miss the top, and then we end up, kind of catching a breath and going the other direction.
Can I also say that this
I can't stop you.
ETHA, this ETF for trading, it sucks.
Tough to get a fill in the option world.
Sucks.
Yeah,
it sucks.
Mm-hmm.
Probably not worth trading in the future.
Got it.
All right, I'm good.
Beautiful. I'm good too. Let's take. Well, you know what, Sosnoff? I got a special treat for you today. You kind of dissed country music last week a little bit, and we had a viewer who wrote you a little song. I haven't heard it in its entirety.
I woke up to it this morning. It was the first email I responded to. He did an incredible job. All I'm going to say is
let's play this song right now. Does it have a name?
Tom wakes up with markets in his eyes, charts and deltas reaching for the skies, options spread like eggplants on a plate, Tastytrade's the rhythm, he won't hesitate. He's got no time for banjos or cowboy crews. Give him Wall Street ticks and earnings tunes. Eggplant Parmesan is power fuel. Trading like a rebel, breaking every rule. Baseball nights under Wrigley's lights.
Good job.
He's hedging trades while watching fights. Calls and puts, the thrill never dies.
Now you gotta play
But if you
Sazloff in that
play
country music dance that he did with Katie after this.
That's only part
Good
of
job
it.
out of you, Saz.
That's a big
Good
shout
job out of
out.
that gentleman. You want to give me?
That's a big shout out to Brian.
Brian, good work, my friend. Nice job out of you.
Brian,
all kidding aside.
Brian in Texas, and
Brian in Texas, good work, good work.
Yeah,
nice job out of you.
We met him last year in Dallas, and super nice guy. Didn't know he was a country singer, but
he's got some talent.
He sent me 2 versions. Was
the other one the explicit version?
I was very moved and humbled, and now I have to be very kind to country music. Yes.
You have to be. We'll be back in 90 seconds. We got more Tasty Live after this.
You can get up to $4,000 when you open and fund a new account with Tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tastytrade. Make your move. The market doesn't stop, so why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tastytrade. Download today.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
So what are some things that we know? We know that time will pass. We know that the hourglass will empty. We know that the calendar will march forward. So what do? We sell premium. We generate positive theta. We take the short side of the options contract. Before you ever think about generating returns, you need to control that risk. The returns will come. You need to make sure your risk is mitigated in the most efficient way possible. Now, the fun stuff. Let's talk about managing those winners, right? You have a long put spread on and the stock goes down. That's going to work out pretty well. You have a long call spread on and the stock goes up. That's also going to work out pretty well. You set your profit target at 50% of max profit. When it gets there, you take it off, you move on, you find another opportunity.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tastytrade. So spread the word and earn rewards. Terms and conditions apply.
So you're an active trader, looking to increase your return, decrease your risk, or quite possibly both. Sure, you've heard of the Greeks. You know, your deltas, your thetas, your vegas, your charms, your vamas, etc. And you're wondering, hey, how do I use these guys to improve my risk-return relationship? Well, join me for a 10-episode crash course, and I'll show you exactly how to do it with all the gimmies and gotchas, one Greek at a time. We'll see you there.
Tastytrade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Tomas, we are back, my friend. You know what that means? That's right, the man with the last word, Dr. Jim. How are you, my friend?
The man with the last word. I didn't know that. That's a new one.
The last word before we came on the show. You got a nice little zinger in there. It was a good one. It was a good one.
Oh, thank you. Well, I'll tell you what though. Speaking of zingers, man, we got to get Brian from Texas.
Speaking of Monday,
we got to get Brian from Texas a record deal. Like, can we start pulling some strings that we have to get my man? I mean, that was really solid.
Tom,
like,
we should play
solid.
that in Denver. We should play that in Denver. Like, it should be a walk-up music or something like that, or playing in the background while we're waiting for the viewers to come in.
Just so you guys know, we don't have a lot of connections for record deals.
You got to have somebody. I mean, all I know is this. All I know is that when I was remodeling my kitchen, right, and I needed a drywall guy, I called Tony Batista, and he had a drywall guy. When I needed a terrazzo guy, I called Tony Batista, and he had a terrazzo guy. Like, he gave it to me within 10 minutes. He's got to have a record deal guy. You got to have somebody, right?
I do have a record deal guy, so I don't know if you want to hook him up. Let's do it.
My experience with Tony Batista is not nearly as
illustrious.
My experience with Tony Batista's guys is not nearly as rich as yours is, Jim. My experience
and the name of that song was "No Country for Tom," by the way, by Brian. Okay. Very good job.
But no, Brian did a great job. But Jim. Yeah, Tony's guys. You'll learn from experience. They make a very strong first impression, then they fall off a cliff. Then they literally fall off a cliff.
Well, you got to pay them, Thomas. You got to pay them. If you pay them, they come back.
Yeah. Well, speaking of falling off a cliff, come back. Hey, how about our Cubs, man? Like, look, that Boston Red Sox team, they came in, they were scalding hot, and our Cubs just shut them down. Obviously, Garrett Crochet was too much. But, I mean, our boys, dude, Pete Crow Armstrong, Justin Tucker. You got who? Reese McGuire, former Red Sox. You know, Drew Pomeranz, former Red Sox. I mean, man, we just shut them down. It's good stuff.
You shut them down for 2 innings.
No, we shut them down as the Cubs. We're on the same side here.
Oh, you're talking about
I've been Cubs from day one. I've been Cubs from day one. You can check the tapes. I used to work out at Quad's gym, which was 2 blocks away from Wrigley Field. It was amazing. I was there every morning.
Yeah. There's a wanted sign for you outside there now. No, I will tell you one thing.
I don't think I'm allowed back in that gym. I think they do have a sign of me in Quads and say
there was way too many Red Sox fans walking around my neighborhood.
I know, man. No, we travel well. We travel very well.
I mean, so do Cubs fans, though. To be fair, if you saw Yankee Stadium last weekend, there was a lot of Cubs fans there.
Yeah. I'll tell you what, man. Red Sox Cubs World Series, man, that would be pretty cool. Like, that would be historic. That would be because I mean, Fenway, Wrigley. You know, I made it out to Fenway last week, which was amazing. I saw a Garrett Crochet complete game shutout against the Rays. And so
proud Chicago White Sox.
Proud Chicago White. Oh, yeah. Of course. Yeah, we poach all the pitchers from the White Sox. We got Sale, we got Crochet. I mean, Crochet's a beast, though, man. I mean, y'all felt it yesterday. Crochet's an absolute beast.
He's a beast. Yeah, he is.
No, he's a total beast. I would say, I mean, he's got a legitimate shot to win the Cy Young. So
No, he doesn't.
I mean, Tariq Skubal is obviously.
He doesn't have any
also,
shot to win the Cy Young.
Who doesn't?
Crochet.
Are you kidding me right now? He's leading the American League, I think, in innings pitched, strikeouts, wins, ERA. Like, what more do you want from him?
Scobal's going to win in a landslide.
This sounds okay. This sounds like okay. This sounds like this needs to have a 20 spot behind it because this is ridiculous. Like, I can't deal with this morning.
Fine.
And so we've already got.
You want to go?
Hold on. Let's recap real quick. I got $20 cash on hand. Let's make sure we understand this from the Eagles Super Bowl. So I've got $20 cash on hand. We've got $20 on the Red Sox over 84.5 wins. We've got $20 on Red Sox Cubs better record, which that's seen better days. But I kind of think now, I'm kind of thinking, $20, on Crochet versus Skubal. And if a third guy wins, then
I'll do that. Just say done. Just say done.
Done. Okay. And obviously, if a third guy wins, it's a scratch.
Fine.
Okay. Done. All right. Beautiful.
You want to sell any Bears at 8.5?
I don't know, man. Are you excited with Ben Johnson and Caleb Williams?
Yes. I'm 8.5 bid.
Okay. All right. Yeah. I don't know. I would probably sell that, but I'm going to pass. I can't have too much cash outstanding. Autumn will get upset with me. So I think is it just you and me this morning?
Is Autumn your auditor?
Autumn wears a lot of hats. And so auditor does happen to be one of them. And so, yes. And so I need to be checking in with Cash App, screenshots, Venmo account balances. Like there's a regular kind of checking up process.
Got it.
So I think it's just you and me. Tony Batista. I mean, I think he probably got in touch with his record deal guy.
Tony does not like when you talk bad about Garrett Crochet. So he just gets so upset that he just.
Well, that's good. That's good. Yeah, that's good. I think he's trying to make his way back in. But do you want to do some finance this morning? Because I think, Tom, this morning segment, we're going to learn some things together.
Let's do it.
Man, let's go. All right, John, cue us up here on the first slide. So Mr. Tom, we are going to take advantage of volatility decay this morning. We take advantage of time decay all the time. But what about volatility decay? Tom, have you ever stopped and realized that volatility, or I should maybe better say, some components of volatility actually also decay, and we can take advantage of that?
I'm not exactly sure where you're going with this volatility decay.
And that's why I'm here this morning. That's why you have me. Tom, can you even imagine? Oh, he's back. Is Tony Batista making an appearance? Oh, he's back. Tony
Batista.
I'm
back. Woof, what happened to you guys? Where'd you guys go?
Man. So just to make sure we have a third party in the room, we've got another 20 on Garrett Crochet and Tariq Skubal for the Cy Young, just so you're aware of this.
Oh, you guys you think you're lucky you want to bet a bunch here. This is good. This is good. For a guy who doesn't gamble, I'm going to say you're really taking to this.
Yeah, this is not gambling. This is safer than a UST bill. Okay. I would not call this gambling at all. This is basically lock, stock, and barrel. So, Tony, we're going to take advantage of volatility decay. Are you ready to help us out this morning?
I am ready. Go for it.
Man, let's go. All right, John, cue us up on the intro slide. Okay. As premium sellers, our goal with each position is to essentially sell high on entry and buy low on exit. So essentially the opposite of what you always hear in the stock market, buying low and selling high. So with falling prices as our objective, any volatility contraction that might materialize works in our favor. However, gentlemen, not only might volatility itself contract over the life of an option, but the option's sensitivity to volatility also falls over the life of an option. And so we need to be aware that because of the dynamic nature of volatility, of Vega, of the different metrics in the marketplace, that our sensitivity to changing volatility, it's very different in the first half of the cycle relative to the second half of the cycle. And so, John, hit us here on the next slide. So the easiest way to see this is actually with a calendar spread.
So a calendar spread. I know Liz and Jenny love calendar spreads. Liz and Jenny make a ton of money on calendar spreads. When's the last time you guys have traded a calendar spread? Has it been a minute?
Can't make a dime with calendar spreads. I've actually
I kind of agree.
make even less with diagonal spreads.
Tom, when's the last time you traded a calendar spread?
Well, I had one on last week, but I took it off. But it didn't. I'm trying to remember what stock I was in.
It's the right environment for it. I mean, kidding aside,
I do okay. I don't trade a lot of them. I do okay with them. I feel like I make small or lose small. I don't think there's I don't take a lot of risk with them. I think I traded more calendar spreads earlier in my career, mostly as a floor trader. I think I trade a lot of calendar spreads because it was the only way I could spread off, trades that I made. I think as a retail trader, I just don't love them because they're too slow moving for me.
Tony, so what would you say as far as a calendar spread?
I'm going to echo what Tom said. They're slower moving trades. I mean, they use less capital. Smaller sized accounts typically gravitate towards them, maybe even diagonalizing them a little bit too, taking a little bit of delta risk, which is the embedded short call or short put spread in there. They're slow movers. It's the right environment for it now, but it's a hard place to be, in my opinion.
They're very slow moving. So yes, so you guys really hit the nail on the head when it comes to like speed and it comes to like efficiency and things like that. Just be ready for people out there that might be brand new, just getting started, whatever. Calendar spreads can be great strategies, but just understand it is going to be incredibly slow, even slower than something like a strangle, of course, that is also neutral, but it moves much, much more quickly than something like a calendar spread. And, my suggestion with calendar spreads would always be to choose higher priced products because you want to have a little bang for the buck and you're kind of managing them, kind of quickly. But anyway, the calendar spread is actually the perfect illustration, though, for the point that I want to make. And then we're going to show this in an altogether different context. So when you have a calendar spread, of course, the typical setup for a calendar spread, you're buying the back month, you're selling the front month. So maybe in this case, I'm buying like 58 days to go. I'm selling like 30 days to go. This is the basic setup with a calendar spread. You have the same strike, obviously, in the same stock. Everything about the options is the same. The only thing that's different is you're buying a back month and selling a front month. And you're doing that for a very specific purpose. You want to take advantage of the Vega differential between those two options. You want to buy the higher Vega and sell the lower Vega because you want to have sensitivity to volatility changing, especially volatility expanding and moving higher, because this is a long volatility play. And so this is the basic illustration of a Vega differential between kind of a front month and a back month. And this is the reason why a lot of people would do calendar spreads. Would you guys agree?
We would agree.
Yeah.
Tom, you on board here?
Yeah.
All right, beautiful. Okay, here's what I want to focus on. Even if you're not doing calendar spreads, this same relationship is actually critically important within a given cycle. And so, John, go ahead and hit us on the next slide. So if we look at essentially any trade, any short premium trade, obviously if it's undefined risk, it's going to be a lot cleaner and a lot easier to see. But essentially any time you're selling premium, you're going to have this general relationship that transpires over time within a given expiration cycle. In the beginning, when you sell an option or sell a spread or a position at 45 days to go, the Vega is going to be higher, just like it was when you bought the back month with a calendar spread. And so what does that mean in practical terms? That means you have a lot of sensitivity to volatility changing. That means if you're selling high IVR and volatility does contract, you can get paid for that. Like you're going to get rewarded for that. Okay, but here's what happens. As time goes by and as you get closer and closer to expiration, once you get to 21 days, once you get inside of 21 days, once you're right on the doorstep of the position expiring, the Vega is actually drying up. The Vega is naturally contracting itself within a given position. So this is like the front month in the calendar spread in a way. And so what's happening, again, in practical terms, is you're losing that sensitivity to volatility. You're losing that exposure to contracting volatility. So even if volatility contracts, but you've only got 14 days left in the position, you might not really get paid. Like you might not really make any money because the sensitivity has dried up because the Vega has moved lower. And so I think this is something that, when people think about calendar spreads, it's a little bit clearer to see. But man, if we look at this within a given position, volatility is decaying in a way because our sensitivity is moving so much lower. Tom, are you amazed by this? Similar to Garrett Crochet's start yesterday.
No, but
he's amazed and also a little confused.
I think it's a good. I think if you had talked about sensitivity to volatility rather than decay, I think the title would have made more sense, because I think that's true. I think everything you said is true, but I think it's not really decay. It's really just sensitivity.
Well, yeah, but it's got to be It's got to be a catchy jingle, Tom. We got to get the clicks, man. How are we going to get people to watch the show? It ain't going to be because of you. It ain't going to be because of me. It might be because of Tony Batista, but we need a little jingle in there. We got to get some people to watch, man.
You make an excellent point, Dr. Jim.
I would imagine the mullets are bringing in some of our viewership, but I'm not exactly sure that's the viewer that we want. Like, I'm not sure if that's the demographic that we're going after,
He makes a good point, Tom. You got to give him that.
There you go. Okay, so next slide, John. So the coup de grace, right? So the crescendo here this morning. So, when we start thinking about a given position in an expiration cycle, how do we put all this together? Well, in my opinion, with Vega at its highest point early in the cycle with longer durations, it makes sense to enter positions around 45 days ago. But here's the real kicker. I think this is part of the reason why we continue to see, the results in the first half of an expiration cycle be so powerful relative to the second half of an expiration cycle. Like, we all know that getting in at 45 and out at 21, I mean, that's the bread and butter, man. That's the oatmeal and peanut butter. Like, that's the thing that's going to be the foundation. All the other things around the edges, zero DTEs, scalps, I mean, whatever else you're doing is fine. Earnings, whatever. But that's around the edges. It's on the periphery for a reason. The 45 to 21 is so powerful. I think this is one of the reasons why. I think that this is actually sneakily one of the supporting points for that 45 to 21 power that we see over and over and over again that we've shown for many, many years now. And so I think that, when you start thinking about selling premium, when you start thinking about doing what we do, I mean, this is one of the legs that we're standing on when it comes to, getting into 45 and out of 21. It's the volatility decay, Tom. It's not sensitivity. It's a little bit of sensitivity, but it's the volatility decay. For the jingle peeps that might be watching the show.
Okay. I mean, you can call it that if you want.
Yeah. Okay. Beautiful. You got it.
I've never seen
man, don't ever forget. Hey.
I mean, I don't want to argue over. I don't want to argue over the word decay.
Yeah. No. Please don't, because you're going to lose. And here's why. Because when I was in Boston last weekend, which was amazing, by the way, it was incredible. I'm very excited to go to Detroit in October. It's going to be terrific. But while I was on stage, I made sure that we were all reminded of the simple fact that before I showed up 10 years ago now, it's almost 10 years. Can you believe that? I mean, that was a one delta trade if I've ever seen one. But before I showed up, you had never heard the term kurtosis, and now you can't go a day without using it. Before I showed up, you had never heard the term moneyness, and now you can't envision your life without the term moneyness. And so when I want to weave in a little volatility decay, you just got to embrace it, man, because before you know it, you're going to be saying the same thing.
If your timing's right, when you hit Detroit, you might get there in time for the World Series.
No, man, it's going to be Red Sox Cubs. I'm excited. Or it could be Red Sox Phillies. We might have a preview of it tonight, actually, with the Red Sox going to Philadelphia, which is, I'm not super excited about that. All right, let's get him a few takeaways. Tom's speechless. Let's go. All right. On the Tasty Network, the variable that we focus on more than any other variable is volatility. And while volatility commonly contracts over time as the market drifts higher, a position's sensitivity to volatility also drops over time as the DTE on the trade slowly fall closer to expiration. It couldn't be more practical this morning, gentlemen. It couldn't be more practical. We've done 7-layer dips. We've done thermodynamics. We've done some crazy stuff on this show. This couldn't be more practical. Tom, this is going to help you make some money today.
It's a good piece. I'll give you that. It's a good piece.
There you go.
Good job out of you. He said it's a good piece. I would leave right there. Leave that right where it is and run with it, Dr. Jim. Run with it. Appreciate your time. We're going to take a quick 90-second break and come back. I do have you down twice now for this bet. I have it documented. We're going to take a quick 90-second break and come back. We got more Tasty Live after this. Sound off. What comes up next? That's right, a market measure for the last 14 years. That's correct. We'll be back in 90 seconds, top of the hour market measure. Thanks, Dr. Jim.
Yep.
You can get up to $4,000 when you open and fund a new account with Tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tastytrade. Make your move.
I distinctly remember getting an email from Tasty that Lookback had just been released, and I was doing the most laborious back test on the face of the earth before that. And I did 2 or 3, and I saw how quick it was, and I saw how quick the data was. And basically, instantaneously, like, I was hooked. I'd always seen all the stuff on Tasty Live with all the data and all the value I thought that bring. And then it was all of a sudden I could control that and basically make my own segment for myself of what fit. And that democratization technology, I think, drastically changed not only the landscape of what's out there, but drastically changed my ability to learn at such an insane rate. And that's kind of when I developed a little bit more of my own path. I was like, this is the type of trade I exactly want to see, or I'd get some type of inspiration from Tasty Live to look at that. And that's when my consistency went from like 1 to 30, and I haven't had an unprofitable quarter since.
Wolf! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Nikki Batt, University of Kansas. Number 20, because that's how many underlyings are in my portfolio.
Rick Welch, Illinois Institute of Technology. Number 23, because I'm trading 23 hours a day.
Dr. Data, Louisiana State University. Number, square root of 1/365, because that's the square root of time for 1 day, which is multiplied times the stock price, multiplied times the implied volatility, which gets you the projected stock price for 1 day.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tastytrade.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tastytrade. Genius loves company.
I had to rewatch that market measures from this morning, Bodacia. Our raid really distracted me. I was like, get away from me, uncontrollable fire.
I told you, Tasty Cracks, you can't plunder with headphones on. Light pillaging, maybe.
Sometimes I'll hide in a gross peat bog in the middle of a raid, just so I don't miss market measures.
I'm only recently comfortable admitting this, but I think I trust market measures more than I trust my savage hellhorse, Arbitrageur.
God, I forgot to tell you guys that I slaughtered a horde of conformerons this morning. Did the whole terrifying row of severed heads on pikes as a warning thing, but you never know with those idiots.
Okay, thanks for the heads up.
Ha ha ha! Goblets of hot blood for everyone.
Nice.
Thanks, you guys.
Normally I hate puns, but that one was okay.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's market measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tastytrade and Tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Zach, South Carolina, how are you, my friend?
Hey, I'm good, guys. I just wanted to let you guys know and Tasty Nation know that I've been following you guys for 3 years. Where else can you call two real traders? They pick up the phone and answer your question. There's so many so-called traders out there that give you vague strategies and want you to buy their course to learn more, but you guys at Tasty put all your info out for free, and all you ask in return is for us to use your platform. Thanks as always for what you guys do.
Love it, man. Thanks.
Thank you, man. Thank you. I really appreciate it. Very kind word. Tomas, we are back, my friend. And you know what that means? Time for a little bit more Tasty Live. That's right, Sosnoff with a market measure. Even the S&P is up 30 without a downtick. Sosnoff, what do you think now?
Yeah, I know. What I think now is I wish I had taken my profits in RBLX because now it's up $2. So I didn't do a good job there. Everything else, I've been okay. I'm Tom Sosnoff. He's Tony Batista. This is Tasty Live. Thanks for spending your morning with us. Country music and all. I just got an email from the author of this song.
What did he say?
Oh no, I'll read it afterwards since I can't.
Okay.
But you know, it's kind of funny. It's just another day in paradise. S&P is up 30.
Another day in paradise. Just sell puts.
Yeah, at 30, at 63, 60, whatever. Now this is kind of what I thought they rallied. I didn't think they'd be up this much. But now I'm thinking, okay, now we're frothy.
You said this 2 days ago. You said this 2 days prior.
Yeah, but I didn't get short. I haven't
had a downtick. You got to miss the first day or two, Sosnoff.
Yeah,
you haven't had a downtick.
So just to be fair, I haven't sold a one lot yet.
You haven't, and you have a positive P&L today with the bonds helping you out in your account. Not like you're doing bad. I'm just saying
No,
it's just.
I'm hanging in there. The bond trade, I stonewalled that. Just waited it out. It worked. Now I'm gonna try to do the same for getting short some stocks here, but so far no bueno. But I think today's the day. You gotta do something here, Mr. Batista. You're gonna have to take a little bit of you're gonna have to take a little bit of a walk on the wild side. You got NASDAQ up a gazillion. I did cover some NASDAQ trades last week.
NASDAQ up 170 and change. New leader in the clubhouse.
Yeah.
Another new high.
Another noonan.
Volatility in by 36 cents. It hasn't uptick. Sadnov, you gotta chillax a little bit. Lay back and enjoy it. Make like you've been there before. Come on.
I bought a call spread in the NASDAQ. I covered one early this week at $1.12, and now it's trading for $1.80, $1.81. Let's say. I'm gonna lay it back out. I don't think it's $1.81. I think it's $1.80. I'm gonna lay it back out, and I'm gonna let you
be in awe.
I'm gonna let you be in awe of that leg. Take a fill. Right back out at 181. Okay.
If it's take a fill, Phil, one of our viewers wrote in, it's take a partial Marshall.
I don't like that as much. Take a partial Marshall.
I like it.
Take a partial Marshall.
Take a partial Marshall.
Take a fill. It's kind of, a play on a movie script. Take a partial Marshall. I don't know. I have to think about that. Okay. I did like, like every other person, I did like Forgetting Sarah Marshall.
I guess so. Okay.
Did you ever see that movie?
No, I have a penis.
Oh my God. I guarantee your little penis would like that movie too. Okay.
Omaha.
I can't believe you've never seen Forgetting Sarah Marshall. You've never seen it? It's great.
I don't think so.
I strongly recommend it. John, you've seen it, right?
Yes, I have.
It's a good movie, right? Tony would like it.
Yeah, it's entertaining. And you're single, right, John?
Thanks, Tony.
It would fit right in your wheelhouse, Tony. It's your wheelhouse.
And you wonder why. Mm-hmm. Got it.
It's your very sophisticated wheelhouse, yes. Don't you worry about it. But strongly recommend Forgetting Sarah Marshall if nobody's ever seen it. It's a
beautiful. Let's do it.
It's a good rom-com. Anyway, it's 9:17 in the morning. We're Chicago-based. It's the middle of the summer. We're going to be in Denver this week. John, throw it up on the screen real quick, just because this is our last couple of days to pitch. Tony and I will be in Denver this Thursday. Thursday night, we'll be in Denver. We can't wait for our burritos at Casa Bonita. Yes, we're very excited about our.
I heard I have to do a lot of drinking. That's what I heard.
Yeah, you drink first, then you eat your burrito, then you drink, and then you go home.
Oh, like every other night.
Yeah, exactly. Anyway, we'll be at the summit in Denver, Colorado, Friday morning on July 25th. That's this Friday. The doors open at 8 a.m. and the show starts promptly at 9. We do not wait. It's an hour and a half long. We'll be done at 10:30. You can hang around for a little bit if you want, or you can be at work by 11 if you want.
Got it.
And
beautiful. Perfect.
We are super excited, and we haven't been in Denver in feels like a while, so let's do it. This is a live trading event, and it's all real, and we're going to see how much money we can make or lose. I don't know. So far,
we'll see.
So far,
come out and find out.
So far, we've done pretty good. So we will see. But if you haven't signed up yet, tastylive.com/events. tastylive.com/events. Dr. Jim's events are on there coming up later this year. I think he's got an event in Tampa, an event in Detroit. Mike, Nick, and Katie have a bunch of events. Yeah, they're going to be in Seattle, Washington, Dallas, Texas, and San Diego, California, and then you can sign up for the events with the Bat and I. We'll be in Denver, Chicago, San Francisco, New York, LA, Charlotte, and Austin, Texas. So you can sign up. I don't know if you can sign up usually 60 days in advance. But perfect. Denver, Colorado this week, and we can't wait. tastylive.com/events. All right, let's do it. This is a market measure the team put together today. It's on selling premium in the bonds. John, throw up the first slide, please. It's called equity-like bonds. What's the deal? Instead of using the futures, we use TLT here because it'll apply for more people. Personally, before we get into this piece, TLT is fine. I even made a TLT trade already this morning.
Smaller product, right?
Yeah, TLT is like it's a long-term. It's a basket of bonds, 20 to 30 years, 20 to 30 years in duration. It acts like ZB. It's about 1/10 to 1/12 the size of a ZB contract. So if ZB is too big for you, it's about 1/10 to 1/12 the size. It's a little less liquid. For sure, it's less liquid, believe it or not. But the other side of it is if you want something that's very, very liquid, that's half the size of the bonds, there's the 10-year note, which is /ZN. I trade way more ZN and ZB than I trade TLT, but I do trade them all. Let's do this piece. I'm only putting that out there just because you don't have to trade TLT on this piece. You can use ZB or ZN. And they trade...
Sure, get as big or as small as you want.
Yeah, they trade 24 hours a day, 5 days a week, starting on Sunday night all the way to Friday night. So, and again, ZN is half the size of ZB. Contract size is the same. The tick size is half, and it moves half as much. Like today, ZN's up like a half a point, and bonds are up over a full point. So it's a very different animal. With traders increasingly focused on tariffs and their implications, bonds have become a hot topic. What key characteristics of bonds should we understand, and what opportunities might they present? I mean, if you've been watching this show, we've been talking about buying bonds for the last month and a half, and they haven't gone anywhere to the upside. They've basically been selling off for the last month. And we just kind of like, this is a total, hey, we're just hanging in there. We're just holding the position, and eventually you get paid. And today, hey, you know what? You got paid. We're not playing it as a tariff play. We're not playing it as a geopolitical play. We're just playing it based on price. And the bonds, in my opinion, have been cheap. They got some upside. We'll see what happens. Bonds have experienced one of their highest periods of implied volatility in their history, with the IB ranks and performance mimicking equities this year. Usually bonds trade maybe a half to 3/4 the volatility of equities. This year they've been kind of on a par. How is selling premium in the bonds fared historically, and especially since 2025? What's interesting about bonds, and we hope to prove in this segment here today, is that if you want to trade bonds, even though you say, I don't really know what those do, I don't understand them, I don't this or that, it's no different than trading Tesla. It's no different than trading Microsoft. It's no different than trading any other instrument. They're all the freaking same. I mean, they have a different, there might be a different reason for wanting to be, you might have a different reason or a different assumption for wanting to be long or short them or how you want to trade them. But there's no difference in how they perform and how they trade from if you wanted to trade S&Ps or if you want to trade bonds. If you want to trade bonds or you wanted to trade IBM. Okay, there's really no difference. We're going to prove that to you. Let's go to the next slide. So we did a study. We looked at TLT, so everybody can look at it, from 2015 for 10 years. We looked at 10 years, 5 years, and 1 year. Sold 25 Delta Strangles, 45 days, managed at 21 days. Compared the results since 2015, since 2021, and for the last year. Looked at the average P&L, the win rates, the average credit, the worst loss, the average return on capital, and CAGR. What does that stand for again? Help me here. CAGR. Well, I'll tell you in 2 seconds because I don't want to mess this up. Cumulative average growth return, something like that. Well, I'll look. We have it in the study. I just forgot what the acronym stands for. Let's go to the next slide.
Not 100% sure.
It's
growth rate. What's the difference between the growth rate?
Yeah, we'll show you in a second.
Compound annual growth rate.
That's what it is. Compound annual growth rate. Economists, we are not.
No.
Hardcore traders, yes. Economists, no. The shape of the distribution of P&L since 2015 looks bell-shaped with downside skew. All the other short strangle distributions look similar, regardless of the underlying. So basically suggesting that before you go off and think, oh, the bonds have had this crazy move or this or that, you know what? They're really no different than anything else that's been out there. Nothing, no difference. Nothing, honey. This is 3 different periods: the 1 year, the 5 year, and the 10 year. Let's go to the next slide. Okay, this is where things start to balance out. So looking at the results in detail, the key is to see that not only the win rates remain the same, but also the average credit divided by buying power, the average P&L, the average return per trade also remain very close to the same, regardless of the time frame. So again, the bar on the left is 10 years. The bar in the center is 5 years. And the bar on the right of each of these graphs is the last year. When you start to look at it, you realize, you know what? It really is just a game of IVR. When the IVR is high, you put these positions on because it's no different than trading anything else. And this is an incredibly liquid future. The 10-year notes are the most liquid future out there. Like when you think S&Ps are super liquid, they are, but the 10-year notes trade more than the S&Ps trade.
Yeah, which a lot of people don't realize. You're 100% correct.
Yeah, and the markets on the options are 1 tick wide. So they're literally 1 tick wide. Now, 1 tick in there is big. It's bigger than, but remember, it's 1/10. It's 10 times the size of TLT. Let's go to the next slide. So despite a slight variation in the worst loss, the compound annual growth rate, that's what I was looking for before, the CAGR, which measures an investment's average yearly growth over a given period, remains virtually the same as the win rate. That's interesting. It's also a good takeaway, because essentially you're not giving up anything to the field. That's the takeaway here. You don't have to look at something on a 10-year basis or a 5-year basis, even on a 1-year basis. Everything's solid in a tough year. Now, would we have done better this year if we traded bonds both ways? Yeah, for sure. But I've only traded them to the upside. So we've actually left some money on the table. What this study is saying is that if you'd done both sides, Tony, you would have done better.
Sure.
Of course, because they've been down most of the year and we left the call side off.
Right.
I mean, it's common sense, but I thought there could be a big rally in the bonds, and there just hasn't been yet. Maybe it'll start now. Let's go to the next slide. And there's no rhyme or reason also for knowing when this stuff starts. Like you could say, oh, you should have just waited till they were up. Well, if you waited till they were up today, you'd be buying them now. So it's tough. It's really tough. I mean, bonds traded 111.5 2 days ago. Now they're 113.5, and they're 2 points higher. That's $2,000 per bond.
Sure.
So despite abnormally large implied volatility and movement, short premium in the bonds has recently performed virtually the same as it has over 15 years on average. When looking at the win rate, the average credit, the average return per trade, the average P&L, and the CARG. Since short strangles share the same, that's a lot of S's. Since short strangles share the same characteristics throughout nearly all underlines, the results
followed by a C too. I mean, the whole sentence is really good there.
The results of a strategy in one liquid underlying generally can be used to estimate outcomes in another, essentially suggesting what I said to start off, that if it's a liquid underlying, okay, it doesn't really, that's the great thing about this business. As long as everything's liquid, you can pretty much pick your poison.
Very good, sir. Good job out of you. Good job out of the team. Good job out of the SIBO for allowing us to do this too. We're going to take a quick 90-second break, Sadnov, and come back because we got your friend and mine, my dinner partner, Mr. Scott Sheridan, coming up next from the Scott Sheridan Studios. We'll be back in 90 seconds. Let's take you live.
You can get up to $4,000 when you open and fund a new account with Tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tastytrade. Make your move.
I distinctly remember getting an email from Tasty that Lookback had just been released, and I was doing the most laborious back test on the face of the earth before that. And I did 2 or 3, and I saw how quick it was, and I saw how quick the data was, and basically instantaneously, like, I was hooked. I'd always seen all the stuff on tastylive with all the data and all the value I thought that bring, and then it was all of a sudden I could control that and basically make my own segment for myself of what fit. And that democratization technology, I think, drastically changed not only the landscape of what's out there, but drastically changed my ability to learn at such an insane rate. And that's kind of when I developed a little bit more of my own path. I was like, this is the type of trade I exactly want to see, or I'd get some type of inspiration from tastylive to look at that. And that's when my consistency went from like 1 to 30, and I haven't had an unprofitable quarter since.
If you missed the live show, here's our cherry on top weekly recap.
But I'm doing 2 talks in Mexico City, and then I'm doing 2 talks in Guadalajara.
I mean, all it's gonna take is for this administration to read just one of your past cherry bombs, and you're not coming back into this country.
I hope they don't subscribe to the cherry bomb. Oh no!
You better scrub your phone, honey.
Oh no!
You better wipe it clean.
This is the same kind of group. We've been friends for, I don't know, like 30, 40 years.
Yeah, that's a long time.
I know.
Because it takes work to maintain friendships, because life gets in the way.
Guys, with women it does.
Well,
it takes work.
Men don't ask questions. Men are the worst. You're like, oh man, my buddy's getting a divorce, and everyone's like, oh my God, why? What happened? You're like, I don't know, I didn't ask. And you're like, what is wrong?
If we have a friend and they're getting divorced, we already know why.
Oh, just pure chaos already this morning. They dress alike, they act alike, they talk alike.
Well, my producer said we all look like seamen, is what he said. Yes, the sailors of yesterday. It's lighter than it looks. I will give you that. I mean, it's...
So is Tom.
I just thought it was unusual that Tom would wear like a long sleeve hoodie in the middle of summer. Why don't you give away that hooded sweatshirt in the middle of summer? Why don't you give that away?
It's actually a summer outfit.
It's a summer outfit?
You would not know.
So I said, I have to see what this is like. And it is a boat-worthy apparel, so I'll ship it down to Florida. But I just wanted to be like my man Tom, see what it feels like to be a big shot and stuff like that.
Will you guys please wear them matching on the flight to Denver next Friday?
What's going on? What the hell am I looking at? What the hell's going on here? What is this?
I'm twinning.
Join us. You got to go white then. You got to get something. Yeah.
No, I don't want to mess this thing up. This is too perfect.
Be like Tom Day here at Tasty Live. That's right. You too could dress like an overlord or just look like one.
Get the full scoop by checking out the archives at tastylive.com.
You can get up to $4,000 when you open and fund a new account with Tastytrade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tastytrade. Make your move.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Global markets never sleep. Explore them with Forex, now available on Tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tastytrade.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tastytrade. Download today.
Tomas, we're back, my friend, and you know what that means.
God.
Enough out of you. That's right, Tastytrade World Headquarters, your friend of mine. Well, my dinner partner. That's right, Mr. Scott Sheridan from Scott Sheridan Studios. How are you, Mr. Sheridan?
I am excellent. How are you doing?
I'm doing great. Thank you so much for asking.
So here is my comment about EJs. Slight out trade with the waiter. Okay.
Hey, whoa. He forgot 50% of the meals. All right. He had 4 meals to bring. He forgot the other 2.
He owned up to it.
Johnny's been there for like 30 years. I mean,
30? I'm 50 bid for this guy.
No, I think he started in 98.
Well, he must have been retired from some other job. That guy's got to be solid mid-80s.
He probably is.
Okay,
yeah.
If you told me he was pushing 90, I would believe it. But when he came out,
in his country, he was a brain surgeon. But right now, he's just a waiter at EJ's.
When he came out with 2 of the 400s, he's like, "Oh yeah,
Wait, when did you 2 show up? I got 2 meals here. I got 4 people. What's going on?"
Oh my God, he didn't even try to cover it. Like, oh yeah, they're in the kitchen. I can go back and get them. He's like, I'll just bring them out when they're ready.
I forgot.
Now, having said that, it was excellent.
It was excellent. He made up for it quite well. He, brought him out pretty quickly. I mean, he did good.
Yeah.
And the meal was excellent. The company was excellent. I mean, nobody was a wet rag at the table. Everybody was happy.
And I have to say, it was my combo on Saturday because I got the pleasure of playing with Tom and Chucky and Teddy. Now, I don't know if you went through this. We got 6 holes in before.
He mentioned it early, but you can go over it. Yeah.
I don't want to say that he's the kiss of death for playing golf, but he really is the kiss of death, at least with me. It rains every single time. We got 6 holes in. Normally, Mother Nature gives us 9. We got 6. And, and Chucky, being Chucky's like, well, we can keep playing, but we have to send a caddy in because they're not allowed to still be out here once they set the alarm off. And I'm looking at him like, and why would we want to be out here?
You got to understand that cloud follows Sosnoff wherever he goes. That's the black cloud of Sosnoff.
I will say, it's the first time I've hit balls with him this year very nicely.
Yeah, how's his turn? I hear he's really turning very well these days.
No, I will say this. For somebody who really cannot turn, he hits the ball really, really well. He does.
He's just learned to maximize his limited ability is what he's done. So
it was pretty good.
If I played like every week like these losers do, I could easily get.
What would you be?
I'd be like I think I could get down to I think I could be under 10 handicap if I played a lot.
Okay, that's entirely possible. I do have to say, I don't want to call names, but Teddy claims he's he said he's a 10, right? Or he said he might be an 11 now.
I would play anybody against Teddy at an 11.
He was hitting the ball sideways. Okay.
No, here's my favorite thing.
Legit sideways, right?
Here's my favorite thing. This is when you know who you're playing with. So we get to the first tee and we're going to throw up balls. And Chucky goes, okay, what's your handicap? What's your handicap? I go, Chucky, we've all been playing together for 40 years. We're all even. He's like, oh my God, that's such an advantage. And I'm like, I've been taking money from you for 40 years. Okay. We'll all play even. It's okay. I feel confident. Like he thinks he has like a 4-stroke edge. I'm like, give me a break.
Now, the best part about it was by the third hole, I think it was the second hole, Teddy chipped the ball sideways from 15 feet off the green. He chipped the ball sideways 3 or 4 times, and Tom just said, pick it up. Then Tom and Teddy are partners. Then we're on the tee box waiting on the next hole, and Chucky is giving lessons to Teddy about how to chip. He's like, this pro at my club taught me how to do this. This is the greatest trick ever. Tom looks at me and he's like, I cannot believe what we are witnessing right now. It's unbelievable. And then Teddy, after he hits the ball sideways, 4 times, he comes over and Chucky, Big Chucky, said, hey, why aren't you guys rolling us? And Teddy's like, yeah, why aren't we rolling them? And I looked at Teddy, I said, I think you have to earn Tom's confidence. Like chipping the ball sideways 4 times on the hole before is not exuding like, I got this.
I would love to have been a fly on the wall there because you guys are priceless. You really are.
No. It was good. And Chucky, he can, as Tom would do,
I wish we could have finished. It was fun. I didn't want to go in.
What? We didn't have a choice.
No.
I mean,
when we left there, it came down sideways.
It rained really hard.
Yeah,
really
and
hard.
Somehow it's like 8 miles for me, and it was an hour to get home. I'm like, can you go anywhere in this city without traffic? No, that's the answer.
No. Come down to Florida. We fly around, no problem. 70s.
Yeah, sure. 70s. No speed limits, no stop signs, no red lights. Just go.
It's all good. It's all good, baby. Beep, beep.
Yeah, just go.
Fly around right into the canal. Right. Yep, you fly around.
Enough. Well, anyway, it was fun.
Where'd you guys go? Oh, you stayed at the club for lunch. You didn't eat anywhere.
That was actually pretty good until Chucky told me that my club stole his club chef. Then he got a little pissy.
Oh, no, dueling chefs now. That one bit tough white guy problems.
He got a little pissy, but that food was pretty good.
Nice. Very nice. Very nice.
What are you going to do? All right.
Did you have the Dover Sole there also?
Oh, we all had. We had 4 Dover Soles.
Wait a minute. Speaking of Dover Sole, when's your dinner? Is it tomorrow?
You mean for the duck? The duck.
Yeah.
Tomorrow.
Yeah. Okay. So stay away from the oysters. I don't know if you eat oysters.
I don't want
oysters. My friends who
I don't want oysters.
Good. My friends
we're
who went
there. We're going to get
the
Rocky Mountain oysters when we're in Denver.
I don't want oysters. What else?
Well, they were in bed for like 24 hours or 36 hours, violently ill. So stay away from the oysters. But I'm telling you, steak, I liked it. We split. But it's just you and the date, right? Yeah, so how much food can you order? It's already duck for 2. It's a big piece of duck. I mean, it's a lot. So for you, maybe a petite filet for the 2 of you to split.
Don't you worry, okay? We'll be just fine. We'll figure it out, okay? I don't need any help ordering from you, okay? I don't need. I'll be fine.
Okay, I want to report back.
I will
petite
report.
Filet, Saznoff, petite.
I'm not ordering a petite filet. I wouldn't order a petite filet if I hadn't eaten in a month. Okay.
I think you and Tooch. I think that's a good combo. Duck for 2 for 1.
We got duck for 2 for 1.
Oh, you go with Tucci. I'm not available. Thank you for asking, though. Appreciate it.
You know what? I mean, I'm just called to IC.
You can come. You want to come tomorrow? You can come.
No.
No, Tucci and I have our own lunch dates together. We're fine. We went out for lunch together ourselves. We don't need you. We had a very nice time.
Tony, you'd like this place.
I'm sure I would. I like a lot of places.
Go with the missus. It's a missus kind of place.
Okay.
Well, I'm kind of like the other,
You are the missus in the relationship.
I'm the work wife.
You're the Gumata for Tucci. You're my work wife. You and him, Sosnoff, are we gonna have like a in Denver? We're going to Denver this weekend.
There's new rules
Scott,
of engagement after last week. There's new rules of engagement for the Kumatas. Just so you know, there's no
So
new
that
rules.
guy resigned.
What?
That guy he resigned.
Yeah, he resigned.
Does she still have a job?
No, she's gone.
She's head of HR. Who could get rid of her? This is why we don't need HR anymore.
All I'm going to tell you is the next time they go to a Kiss Cam, you're going to see people go. You're going to see people just scatter.
Are we gonna have a Coldplay cam at our Denver events? I don't know if that's what I want to ask.
There's always Kiss Cam, like the Bulls game and all that stuff. All Kiss Cams now, people are going to be like looking down. Nobody. And the other funny thing about it is, you know, if they had done nothing, they just like stayed there.
You can't do that. Like, man, you know what? You're a one girl guy. Like, you know, like you just, you know, for 50 freaking years you've been hanging the same thing forever, whatever the case may be. You have no idea what's going on when you're in those fringes, okay? And you're not trying to be found or seen or anything else like that. And all of a sudden you're on a spotlight at a concert. The first thing you're gonna do is run. You ain't gonna go like this. Yeah, awesome. You ain't gonna do that.
Yeah.
All I'm saying is if he didn't try to duck, nobody would ever know.
Yeah, but that's the immediate response. Is you're going, oh my god. Now, if you're doing that,
it's like you, Sosnoff, when you don't last long enough. The first thing you do is, I don't know what happened. I mean, this is the first time. It's never happened before. I don't know. It's not you.
All right. Whoa.
I mean, you know, you're supposed to play it off like you do it.
Beth Summer right now is screaming Omaha. She doesn't even know why. Okay. Wow. Let's bring this back on this.
I'm just going to tell you, the entire Kiss Cam world has been.
Yeah.
So
have you seen them now at the baseball games? They like everybody makes fun of it. Everybody that gets on it, but you know, does the same thing, and then they hide. This poor bastard?
Do you think those guys
seen forever?
He did it.
Yeah. But do you think those guys went home that night and figured, nobody, you know, like you can't think that this thing is going to blow up the way it did.
No. Definitely not.
No.
So, yeah, no. His world just changed dramatically in a 30-second period. So,
but like I said, they did unite a nation for one night. We were all on the same page. We all felt the same for these people. It was the best. Wait a minute.
Explain to me. Let's just make sure that we agree with that. What did you feel for these people? Okay. You say we all felt the same for these people. What were you feeling for these people?
Sorry.
Oh my God. I'm sorry. If you put yourself in that position, you're asking for something like that to happen to you. Maybe not at 50 million, maybe not at 50 million and counting views.
You didn't think you were going to become a meme.
And that one.
Let me tell you something. That is way more than 50 million. Way
more. I mean, Tom, how many times have you watched it? 50.
I mean, it comes up. It's in everybody's TikTok rotation.
And there we go.
Oh.
All right. Should we get to some business?
Sure.
That's pretty good. All right. Top 20 symbols going through the system.
Hold on one second. So there was I got to tell you this one thing. So I'm listening to sports radio. I'm listening to sports radio yesterday. The guys are talking about this. And they had decide that if you're friends with him, right? What do you call him and what do you say?
If you're friends with him?
Yeah.
You effed up. Like, I don't know. I mean,
you're not going to say that to him. I mean, he knows that already. I mean,
what are you going to do? Good luck.
You say she should have got her roots done, is what you say. Say, I can't believe she didn't get her roots done.
If
she knew she was going to take a picture, she should have got her roots done.
If you're friends with him and you're friends with the wife, and the wife calls you, that's the harder question.
You say they've been to you say they've been at 2 other companies together prior to this, is what you say.
Right.
You say the first thing is, I had no idea.
Yeah, I was in the box, but I didn't know.
I didn't know.
I was watching this. I had no idea. Like, I can only imagine what that conversation was when he went home, assuming he went home.
Oh, he didn't. He didn't go home.
No.
Had to work late. Had to work late that night. Facts. Top 20 symbols going through the system. First 40 minutes today. No broad-based indices or futures. Time for you. Number 20, UNH at a 52. For everybody else, Tesla at a 17. Apple at a 25. Google with an L at a 39. GLD at a 27. NVIDIA at a minus 26. PLTR at a 40. Amazon at a 24. Meta at a 30. ETHA at a 77. XYZ at a 45, AMD at a 28, TLT at a 21, Hood at a 37, IBIT at a 31, Netflix at a 1, Coin at a 41, MSTR at a 9, TQQQ at an 18, Goog, Noel at a 39, and number 20 for Tom, UNH at a 52.
Sadnov, what do you have to say about that list?
Interesting.
Yeah, that's what I was expecting. When I woke up this morning, it was exactly the list I was expecting.
I mean,
he's nothing but consistent.
What do you want me to say?
he's such a good friend, isn't he?
Smooth at record highs. You can say that again.
Smooth at record highs. I just got a little more short. I haven't loaded the boat yet. I haven't loaded the truck up.
It's a flotola. Keep it. Bus, otherwise, people are gonna ask me what's the difference between a truck and a flotola.
It's a flotola. It's a truck when you start it. It turns into the flotola.
The flotola is. We're not even close to a flotola yet, but there's still plenty of
2 cents on that spread you sold, Sadnov.
There's plenty of seats on the bus right now. That's all I'll say. Plenty of seats on the bus.
Oh yeah.
Very nice. Good job out of you. Good job out of you.
So.
Yeah.
But I haven't decided yet. You know, I think
volatility hasn't had an uptick.
Nope. I think today is kind of the day.
This is it.
Nuts.
Well, I know we're going to be down big on Friday because every time Tony and I go on the road and Mike and Nick do the show, we're basically crashing.
It's over.
So Friday morning.
This is true, but
so Friday morning you can count on a mini crash.
And by the way, you said you're going for the weekend. Isn't this a 24-hour trip?
Yeah, we're not going for the weekend. We're just going for 24 hours.
Don't listen to what he says. Listen to what he's thinking.
Right, a 24-hour trip.
Yeah, 24 hours. Why?
Yeah, it's like going to Gilligan's Island.
Backpack only, or do you bring a carry-on? Nah, backpack. What do you need a carry-on for?
We're going for one night. Backpack only.
I'm putting a bag under, Tom.
I mean,
I'm not.
I don't have to carry it anyway. He's got to carry. I have the access.
The only way I can get his warm nuts is if I carry his bag.
So he has to be nice to me because
he sends them back.
I have access to the good lounge, and I can take one. I can take one loser guest. And,
that's not Brittany.
Oh no, it's Brittany. Right. I'll take her. Yeah. No, I can take 2 loser guests. I can take her and
Brittany
him.
already has her loser guest pass from Tom.
Yeah. So we get to go to the good lounge.
Earn mine.
They have the good lounge has the sushi and the good cheese.
It's not. You see, here's what they do. They put the cube cheese in Tom's area first. Then what they don't eat, they take that cube cheese down to the other lounge for the other people, where it turns a little gray.
When you're concierge level, you get to go to the lounge that serves the international lounge, which serves the good champagne.
No, you do not.
Yes, you do.
Yeah, he does.
You're not at that level.
Yeah, I am.
Yeah, he's got a trial period.
I got it.
For like
I got a
3
trial.
months or something.
For what? How'd you do that?
They gave it to me.
An American?
Yeah. Because
So
I
that's
crossed
the one. It's
crossed
one
the
key.
million miles, so they gave it to me.
No, that's not why they gave it to you, because I'm way over that. Okay, so no, and I don't have that. Now I'm upset. Now I got something to do today.
Oh, you can't call anybody. There's nothing you can do. There's nothing you can do
on this one in short order. How did you get? It's one. Isn't it one key? United is global services. American is one key. Isn't it?
No. United is
Global
your
services.
key. American is concierge, and you can't get it just for getting miles. You have to be asked.
Okay.
You're not going to get it.
Something happened. If this is factually correct, if you really do have this, something happened and they're trying to make up to you, and you just said, give me this for a month of.
No, I haven't.
Tony.
He knows.
DM.
He does.
Come on.
He does have it. He didn't buy it. I think it's because he's on the company card, and his name's probably on the company card, and it's the cumulative of all the company.
I will say the international, it's very nice, but they check you when you go in. You can't sneak in on that one.
Oh no! And if you try to sneak your loser friends in, you can't.
I got Dikembe.
He got Dikembe last time.
Oh yeah, for last time. How long do you had this?
Oh.
He's had like a month or so now.
He tried to. I mean, I was going to take him, but then he tried to get his whole family in there, like
Oof.
And a couple of cousins. We're going to take a quick 90-second break and come back. We got more Tasty Live and Liz and Jenny next. Peace.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tastytrade. Make your move.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tastytrade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tastytrade. So spread the word and earn rewards. Terms and conditions apply.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Look who's back testing. Tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tastytrade.
Tastytrade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tastylive.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tastytrade. Genius loves company.
Welcome to the Monday edition of the Liz and Jenny Show. My name is Liz Deerking. That beautiful brunette to the left of me is Miss Jenny Andrews. How you doing, Jenny?
Hi, Liz. Great. How are you? How was the weekend? Big wrap-up finale of your summer activities.
Yes. Grease Lightning went amazing, so it's over.
Go, Grease Lightning. Were you singing in the audience?
I couldn't stop. I have seen it so many times. If you need me to step in as a Grease character, Jenny, you let me know which one you need me to be.
All right.
I watched it about 10 times this weekend, maybe more. So yeah, it was awesome. Done and dusted. Plays in there. Yeah.
Congrats to Annabelle. She directs, produces, she does everything for this show, and I hear it was amazing.
I know, it was great to see Lily. I'm so mad there were so many people there because it was just chaos. I wanted to get a picture of Annabelle and Lily, but I couldn't get anywhere near anybody. So.
Well, I felt bad we all missed it because it was our high school girlfriends fun club weekend, and when we planned this, we didn't know that was the same weekend. So
oh, she didn't know when the date was going to be, so I had to back out of the girls' weekend. But you guys had a great time, and it was so fun, right?
Oh my gosh, if I could post, I'll post. I forgot to post for today. Maybe I'll post for tomorrow. So there's a comedian out there. We found her on TikTok. Her real name is Becky Robinson, but her character is the entitled housewife. That's she's hilarious. So if you haven't heard of the entitled housewife, go watch her on TikTok or search Becky Robinson. She is so funny. It was the funniest comedy show I've ever seen. She did the first half as herself, as a comedian herself, and then she did the second half as her character, the entitled housewife. But
did she really?
Yes, and it was, Liz, I don't think, we've been talking about too many other things. I have not talked to you about how great she was, how good her show was. It was so good, and I actually got some tips and tricks from watching her show for our Germany show. You guys ready for Germany?
Do you have a stage character 50% of the way through?
But we're going to be in Germany right before Oktoberfest. When I told our friends, they all wanted to come. They all wanted to come. We're going to be at the RMC, sponsored by the SIBO, this September. You can look it up, RMC. I don't know if we have an art card for it, but
no, we don't.
We you know what, we do somewhere. It came from the SIBO, and we should get it queued up. And I know I've seen it scroll through on Twitter in the past. But yeah, we're going to be live from the RMC.
Because it's a SIBO event. It's not a Tasty event, which I think is why they don't have it up there. No, but I can't, I love stand-up comedians. I would have loved to have been there.
Oh my gosh, Liz, I know you love stand-up comedians, and just everything, the production, the whole production of it was so good, from the videos that she played before she came out on stage, and then the way she broke up her piece, and she was just so good. And some of it reminded me a little of Tasty, how she loves the people who come, and she goes out with the people who come, and she will how many
with her afterwards?
Oh, that was our goal. So coming out, I don't know if you heard this, but coming out of the show, a man came up to me and he said, here are 4 VIP backstage passes. And he gave me 4. So I was like, shoot, because we had 7. So he gave me 4. So 4 of us got to go and meet her and take pictures. And our goal was to go out with her after, but then she had some other event. She had so much going on, and it's probably for the best that she didn't come out with us after.
Yeah, the stories that I heard, it is probably for the best that she did not come out with you guys afterwards. That's pretty funny.
So.
Who did you choose to go with?
So I didn't really. Like I said to some people, like, I've got these 4 VIP passes. I have to go to the bathroom because they were saying like VIP people, and said, I'm gonna go to the bathroom. I'll be right out. And when I came out of the bathroom, they had picked like, here we go, we're going in. And there were just 4 of us there. The other 3 went somewhere else.
Okay.
The other, because this whole event was in a casino, so the other 3 went to the casino. So
that's why Mandy wasn't in the pictures. Okay, that tracks.
and then our other friend wanted to go play blackjack. Sarah was dying to play blackjack. So it was that's how the 4 who went in were the 4 who didn't want to go gamble in the casino.
Okay, that's right. That's pretty funny. Well, that's good. I know. I'm sorry I missed it. I am sorry I missed it. But that being said, do you want to jump into the platform, Jenny? Spoos are up 33.
I know. I did the SPX, and I questioned it. I did the SPX Iron Condor this morning.
What time did you do it? Because it did not get. It wasn't up this high.
No, too early. I'm down. I did the $15 wide, and honestly, normally you could do 20. I don't want to say normally, but recently you can do 20 delta call, 20 delta put, make it $20 wide, and collect, closer to $4. Today I was collecting under 3. Where's VIX? Let's go to the platform.
Okay, so this morning I was looking at my phone, and I was looking at the phone has VX. Like when you just go to. It doesn't have VIX. It does. It has /VX on the home screen or whatever of the mobile platform. I'm sorry if I'm misspeaking in that. And so when I glanced at it and I saw 18, I was like, the VIX is at 18? I wasn't thinking. They are 2 different prices because the VIX is in a 16 handle.
And you could see when she did, so this is like spot VIX, cash VIX or whatever, however they want to call it. And when you look at /VX, it says VXQ. So if you go to just type in, when you went to it, it's VXQ. So if you just type in /ES.
I just type in VX.
I would type in /ES, just any other future where we could see the letters. So if you type in /ES and then open the trade page, you can see where Q is. Q is go down where you go, keep going. Where's Q?
There is no Q. It's a different system, Jenny.
It is a difference. I thought they were all the same. I
don't know, but you can see it's different.
Well, that's still odd. Where's Q? How far out do we go to get Q?
Hold on.
Well, I don't know. I'm just trying to see where Q fell.
I'm telling you, go all the way out this way and there's no Q. You got W.
VXQ.
So that's what I'm saying. That's something that you and I are not versed in.
Well, that's why I don't know. Here's what I don't understand. And go to the trade page. Is there a trade page here?
No, not for the futures. No, they don't have options on them. That's the reason.
I don't know why we can't see all the futures lined up.
I know, but that is the plight we live with. But anyway, VIX says, let's take a look.
To see how far out you can go to VIX and figure out and open up the trade page. And look at the further out in time where 1850 is at the monies.
So it's probably right. No, it's September. Yeah, right.
August. It's August.
Yeah.
August. So they're saying.
So what Jenny and I did, for those of you who are listening on the radio, when you open it up, the VIX, if you open the VIX up, you can see this, the at the money line is not the at the money line. You have to look to where the calls and the puts are trading the closest priced. And if you take a look down here, you can see that the 1850 put is 150 and the 19 call is 160. So I would argue it's trading, the future of this VIX is 1870.
And so then if you go out to September, so yeah, like, right. So wherever that /VXQ was, it seems like August. If you go out to September and you're looking for the at the monies are more like 20 and a half. So, so you see August 1850, Sep 2050, and you really see, and you could talk to TP about this. You're gonna have TP on this week. You really see that, that VIX future much higher than we are right now.
Yeah, you really do. I just wrote that down. I'm going to talk to TB about that. Because I don't know, the old noggin. It was a long weekend, and things are in one ear and out the other.
Oh my gosh. Speaking of in one ear and out the other, I know on Friday we had a tweet and we were like, this is a great question. We are going to go in depth on this on Monday. We're going to walk through all of this on Monday. And today, Liz and I, neither one of us could remember what it was. So we can take a walk down memory lane and go to Friday's tweets and see.
Who was the tweet?
Fabio. No. No.
Jenny, it's gone. So please send us a tweet.
Wait. Just, it was the end of the day on Friday. Can you just go back to
I can do. This is the end of the day on Friday. This is the end of it. Frank Walsh. 16 hours ago. Or Jackie. No. Can't trade much today. Those are July 18th. This is the last of it.
And then before Jackie, Carlos. Total premium collected, and before Carlos, Benny, and before Benny,
Mikey,
Fabio, Jordan, and then James.
Okay, so this is exhilarating. Please put the hashtag LIZJNY if you'd like to see it.
Hey, whatever it was that we said we were going to talk about today, tweet us and remind us, because neither of us remember. Oh, are you on newest? Someone says jump to newest. So
I'm on latest. Jenny, I'm on latest. So honestly, put it back in, hashtag LIZJNY if you want us to talk about anything. And then Sadie's having a rough day, which is sad. And then Jackie comes in, SPX call spread, 63.45 out successfully about 10 minutes after open. $187 in profit, or about 20% of the credit received, done for the day.
Jackie, I wish I was you. I wish I was you, because mine's losing. Mine's, I think, losing. Where are Spoos now? I'll tell you if I'm losing.
Spoos, do you want to see them? I will go back for you. Spoos are up 35. You're losing.
Ooh, I'm losing.
Spoos are up 35. You are losing. I know that. Where were they when you put it on? Probably up 17?
Yeah, right around up 17. Yeah. Right. So I'm down $338. My $15 wide iron condor is down $338 right now.
Yeah. That tracks with it up 35.
So because it was close. It was so close that I didn't have a lot of room. And that's why I felt like, ooh, VIX must be low. Like I didn't have a lot of room. I didn't get to collect that much. But today was Monday, double down Monday. So I thought, I'm doing it. I
know it is double down Monday. I did not do it today. I just did the put spread. And I'm out. Because the put spread works.
Okay, let's talk back on Twitter. You got one thing going for you this morning, Liz. I know you're tired. You had a rough day yesterday, but at least your put spread came off. You don't have to worry about that.
My put spread's gone. He gone. I can't remember anything from Friday, but it's fine. Look at this. I want to get to this hashtag because I love Jackie so much. Hashtag we love Liz and Jenny. I'm retweeting
this. Thank you, Jackie. Thank you.
Yes, for sure. And now take a look at this, because this is a big week in earnings.
Is it? I'm only here today and tomorrow, and then I'm on a jet plane to the Big Apple. What am I going to miss?
Oh, and Lily was saying she might meet her roommate when she goes out there.
Oh, is she? I haven't seen her since Thursday.
Oh, yeah. You might be going to New Jersey.
Oh, I haven't heard about this. Thanks for letting me know.
Yeah, you might be trekking to Jersey. So just a little FYI, I don't know if the Jersey girl's coming in or you're going to Jersey, but she's seeing a roommate while you're out there. The roommate from camp.
All right. I've never been to New Jersey, so. Wait, were we in New Jersey? Do you remember on our drive when we were driving with Dylan Radigan in that car and we had to stop for like crab cakes? We had to stop for crab cakes somewhere.
Yes, that was not Jersey.
No, did we go through Jersey? Like where were we when our driver was like, do you remember when we went into a restaurant and our driver was like, he asked for the craziest thing. It was like get me a grape soda and a yeah.
You're like, can I get you anything? And he's like, the request was so random.
Yes.
And you were just being nice. You're like, okay, now I got to go to the gas station to get whatever this guy needs. I do remember that.
Speaking of that, so I've got this group of landscapers here, but they just got here. And so I ran out to talk to them before the show, and I said, I got to get on a call from 10 to 11. I'll be back out at 11. And when I come out at 11, I'll bring you guys like snacks and waters. And this is what they said. We're going to be thirsty before 11. So I was like, okay, let me get you something right now. So I went running.
Are you kidding me?
No.
That's the price of being nice. You can't offer it. Didn't you bring it up there? How'd they not bring water? That's crazy. Okay, but that being said, let's take a look at these earnings today. It's just a lot. I'm going to go show more. I want to see the big names that are on here, and I appreciate this that Bob sends this to us. So you've got today Lockheed Martin, Coke, Philip Morris, DHI, GM, RTX, and DHR. And then it's going to get. Do we have any positions in any of these? Wednesday's the big one. Tesla, Google, IBM, Chipotle, American Airlines.
Dow. I have a Dow position, which so we've got, today we've got Lockheed Martin and Raytheon, two defense companies, and I don't know what to think of those or how much the vol is or how much premium you can get in puts in those. That would be the only thing I would look at on this list, maybe. Did any of the other defense companies have earnings yet?
Didn't like Northrop Grumman.
Oh, NOC. Check NOC. I think what's NOC? Yeah, the Northrop Grumman. Check that.
No, they have it July 22nd. You can see it right there.
Okay, and this has been that's high. They're all pretty high, I think. RTX. Let's look at Raytheon for our buddy. We got a viewer who works for Raytheon. RTX.
Sorry, RTX. Sorry, I went backwards. So here we go. They have earnings the 22nd.
They're on the list. Right? They're tomorrow morning.
So they're tomorrow morning.
So they're on today's list. Yeah, look at that. But good for him. I hope he has a lot of company stock.
Yeah, I hope he does too. But I don't know that I can do anything in Raytheon. Looking at $153 product, top of its range. And we should see those defense companies up.
And LMT, is the LMT just as high? No. Maybe we sell put spread.
Now that's interesting, right?
Yeah, let's sell put spread in LMT. We have to do a spread. It's $400.
We for sure do. And you can be as little or as big as you want. So here's $1 for a $5 ride. You can bring it in. Oh, look at that! You get less bringing it in. I'm going for $1.
Yeah,
I'm going
let's say $1 and the $5 wine.
Yeah, right. We'll see if we can get filled. I'm putting it in for 97. Okay, so that's in. Other than that, Coke had earnings too. Oh, I did want to show you that there's big moves today in two things. Bonds are having a big move. Look at this, up a full point. If it's not a tick, what is that? A full point. Now, big move in bonds. So that bond position that was a big loser, honestly, I'd get out of that because I know we're only up $31, but my put spread in bonds was like the 109. So I think us having the 112, 111, we got in way too early. I'd get out of that and wait for a drop and then get back in another time. We could. And I also want to show you this because I heard it hit activity. So today our GTC hit in TLT.
Yes, I took my TLT off this morning. Good, because TLT was 86.5 or 87. I don't know how high it got. I was going to call you last night, but I figured you'd be in bed. When I went to bed, Ethereum was skyrocketing.
Yeah, it's up 8% again today. Wait, that's just ETH. Hold on.
Yeah.
Yeah, it's up 8%.
So it was over 4,000. I heard Tom and Tony say it was over 4,000.
So I don't know when.
No, I didn't see that. I didn't see it up over 4,000, but it was getting close. 3907.
3907. Yeah, 3907 is the high.
I don't know why Tony said it was over 4,000.
I mean, it might have. I don't know when this stops, right?
But last night when I went to bed, it was high, and I wanted to call you and ask you if I should sell half of mine. And I thought, then I looked at the clock and I thought you would be asleep.
You wouldn't have wanted to talk to me last night. You would have gotten horrible advice. But so what's crazy is I did see lots of people this weekend, and and this was the discussion. Hold on, you're gonna like this. And I can't. XRP.
That's what everyone's talking about. So
yeah.
Okay, so Tom and Tony had a question on Confirm and Send this morning about what % of their portfolio should be in crypto, and they said,
"Look at this! It was over 4,000. If you look at this chart, not the big chart, but this did gap up over 4,000."
Well, what the heck? Why isn't it on the other chart?
I don't know. I have no idea.
Because don't you remember last week I said when ETH hits 4,000, I'm gonna sell half of and I didn't sell any of it. I didn't sell any of it because you weren't awake to talk to me, and so they had a question on Confirm and Send. What % of my portfolio should be in crypto? And Tom and Tony were saying, like, we used to say a higher percentage, but at these levels they cut their percentage down to like 2 or 3% of your portfolio.
2 or 3%. So they don't. 2 or 3% of their entire portfolio is in the cryptos. So that's, I think, part of the problem is when you say cryptos, because there's everything cryptos. Coinbase is a crypto. You know what I mean?
No,
these MSTRs are a crypto.
What 4 to 6 or what? But I think they read an article. One of our researchers were talking about an article, and they saw somewhere like 4 to 5% or something like that. But Tom was saying at these levels, maybe less, 2 to 3%.
Everything is getting frothy. I feel like we are in some type of weird crypto environment.
So I don't know. Like if I look at my, times 0.02%. Or I've got a lot more than 2% in crypto right now.
So you're saying 30% is too much?
So I think we've got to get rid of some.
Yeah, I mean, it's crypto to me, and I was saying this yesterday. It's just a very bizarre asset because not a lot of people can go out and short it. You have to own it to sell it, right?
Well, Tom's shorting Coinbase now.
Right, so you can use other things to short it.
But you can use IBIT. You could short IBIT. It's the same thing. I mean,
you can. Okay, so Coinbase is, look at this. This is up 3% again today too. This is just going up and up and up. When are their earnings? Hold on, table.
If I would have held on to my Coinbase.
I know, right? So take a look at this. Coinbase, all the cryptos are having a decent move today with Ethereum. And then also, I want to show you this, and then we'll go back to it. Take a look at this move in natural gas, down 7%.
I know. Let's get in on the downside.
I jumped back in today too.
So I know you do the downside ratio spreads, and we can't afford a naked position here. Let's just do a sell put spread in natural gas.
Yeah.
And then I've got to tell you another story that you're going to die about.
Talk to me.
It's not. You're not going to feel good about it.
Okay, so just going put spread, we can walk through all of this. I just grabbed at the expected move or near the expected move. We're getting, this is a $5 wide, even though it looks like it's 5 cents wide. $5 wide. We're getting 130 and 370 is our max loss. Now, sometimes I like to see here you're getting one. It's just taking it down by. It's taking it down by $10. I'm sending this one.
Yeah, just that's something to get into natural gas.
Okay, what's your story?
Okay, so go to PSIX.
Oh yeah.
And then go to the chart. And we got into PSIX around like, you know, around 20. No, around 20. Like I got into PSIX in the 20s.
Let me see where I got into PSIX. Wait 2 seconds. I'm sorry. I'm just perusing my own thing. I got in at 50.
I got in the 20s. I got out around 50. Okay. Maybe I got out.
I just took your shares.
I think when we were on the train one day, I was like, look at this PSIX. And I think I was selling it and you were buying it. Anyway, I never had much because I didn't trust the source. I never had, this comes from, you know.
I know where it comes from.
Okay. So I didn't trust the source. I didn't have much, bought a little bit. And when I say trust the source, this is just like a friend of ours who says like, oh, my friends are all buying PSIX. So bought a little bit. And when I say a little bit, a very little bit, like I barely made any money on here, considering I got in at 20 and got out at 50. I was talking to, his wife was at our condo this weekend. His one friend got in, early on. Yesterday, she said to me, she's like, Ben's friend Dave made $3 million on his long ass PSIX.
How much PSIX did he buy? So here's my question, and we're just making fun of our friends on camera, but you don't make anything until you close it.
Well, I get that. Okay, so if you want to have, I'm just going to do the math, and I got to turn my calculator sideways, I think, for the 3 million. So 3 million, oh, hold on, I'm at 30 million. Okay, 3 million divided by 96. Divided by 96, you're 31,000 shares. So he bought 31,000 shares, let's say. Let's say about 50,000. Well, I don't know. That would be if he bought it at 0. So let's say he bought 40,000 shares. 40,000 shares when it was 20. Well, it used to be like 0. I mean, they were getting, look, it used to be like change.
Isn't this a SPAC?
$7.
Okay.
So I don't know. Let's say he put $50,000 into it and he made $3 million.
Yeah, that seems like a big gamble. But yes. If you know the players involved, that seems a little excessive.
It seems like a big gamble. Like when he told me, like, oh yeah, my friends are buying PSIX, I was like, I guess I'll put $1,000 into this. I'm not going to put $50,000 into that.
Correct.
Yeah.
But it is those same people who are buying XRP. By the bucket loads. So
I don't know what to say about that.
I know. It's pretty interesting. Okay. That was pretty.
Where is it? But can you believe that $3 million?
No, that's great. Well, like I said, I've seen these people, these same said friends, made so much money in GameStop and then went right back. Do you know what I mean?
Oh, and they made so much money in Neo.
Yeah. And then if you don't close it, let's take a walk down memory lane.
Yeah. So this one guy had so much Neo. He bought so much Neo, and Neo went from like $3 to $100. And I mean, how far do you have to go back to see like Neo in the heyday? It was. You got to go way back.
Yeah. So it's not that bad. It was in 2020. So they bought it right around here. It went all the way up to 65, but they didn't sell it.
And I said, if you don't sell it, they kept saying like, I have made this much in Neo. I made this much in Neo. And I said, you didn't make that much unless you sell it. And he said, well, I'm not going to sell it because I don't want to give half to my ex-wife.
And he didn't sell it. And he didn't sell it and it went right back down.
Now you could collar it. Like stocks that I have that are up high, I've started collaring them. Like capping my upside, protect my downside. Just if you don't want to get rid of your stock, collar it.
Yeah, that's not a bad thing. And I'm going to show what that is. Do we have any stock positions in here?
Here, like, what do I have that's high that I collared? Well, I just collared my Oklo, which is.
We don't have anything in Oklo. So I'm just going to show what a collar is. So if you're long 100 shares of stock, and then what you're going to do. September. Then you sell a call again. Can I add all these in? I think so. Then I
sold that, like you could sell the 90 and buy the 55.
That is what is called a zero cost collar, meaning you're washing extrinsic value. You're selling the 90, you're buying the 55. What this does, here, let me see if I can show it on here.
But you get the stock. You could get the stock out of there. I mean, this doesn't cost you anything.
No, I know, but this is exactly what a collar is. You have profit potential to the upside, but you are capping your gain here, meaning you'll only make money in this at 90 and then it's capped out. But what it also does is it limits your losses. So this is kind of the OG trading way, is a zero cost collar, where people will say, I will protect your stock for you. You can only lose on paper. It's like, okay, you can only lose down to 55 or whatever percentage that would be. 12 to 15%, in order to give up some of your upside. And most people are like, okay, that's a great deal. This is what a zero cost collar is.
And people will say, like, you could close the whole position, or you could just close your stock and put on something else. Like, you can close your stock and put on a zebra, you can close your stock and put on a buffer trade, or you can close your stock and put on something that's going to use less capital. And yes, that's true, but if you don't want to pay short term, if you haven't had it long enough and you don't want to pay short term gains and you want to hold the stock longer, then that's a way to, keep it for longer. So you're in that long term gain category instead of a short term gain.
That is if you go down the stock route. But it does, it also does technically, and Tom and I actually had an argument where he sent me out into the pit. Do you remember this? He sent me out to go talk.
It does release the buying power. It does
release, but it depends on the stock. It depends on the stock, right? That was kind of the argument I got into with them, because we were doing it with them. If it's in very liquid products, it will release if you're buying the stock and if you're long the stock and you buy a 55 and sell an 85, it should release all the capital from 55 underneath in most stocks. That is a function of the margining job. It depends on which product. It definitely happens in SPY and IWM and all of those, but it depends on the product. If it's very risky, sometimes it doesn't.
I'm gonna get really mad if I lose $1,200 on my SPX Iron Condor today, and it's just $1,200. I'm not like Jack Tucker, which would be like times 10, or more.
But you're not through your strikes yet, are you?
Yeah, I think I'm right at it. I think I'm right at my strike.
You're at
maybe
your long,
through it.
Are you at your long? Through your long or your short?
I'm gonna tell you. I'm looking at my strikes right now. So my short call in SPX is the 63.30.
Your short call is
63.34.
That's your short call?
Yeah.
You're fine. I mean, I thought it was going to be at your long. This is what's your long? 33.50?
It's only $15 wide. 63.45.
Okay. Yeah. I mean, honestly, unless there's a wild gap up, you'll be fine.
But I guess I'll take my put spread off for a dime right now.
Yeah. Take your put spread off for a dime for sure. We're working on Lockheed Martin, but that is interesting about and in this up market, I kind of agree with you, Jenny. When things are up so high, I wish we could collar Bitcoin.
Well, if you have IBIT, you can. I have.
No, but what about Ethereum? Like, how could you collar Ethereum?
You can't. You can't. But if you can use IBIT, in place of, you can sell calls and buy puts in IBIT against your Bitcoin position. You can.
You can. There's no margining relief. Zero.
There's no margining relief. But I don't know right or wrong. I don't know. Like, my Bitcoin position is now in IBIT because I have like shares of IBIT. I sell puts in IBIT. I'll sell calls in IBIT. I'll buy put. Like, I do everything I do in Bitcoin. I use IBIT for instead because
Look at the buying power effect on buying this long option. The cost of the option, riddle me this. The cost of the option is $176, but it's only holding up $75.
We must have another IBIT position.
We do have another IBIT position.
Yeah, so that's like creating like a spread or something.
This is all in the
I know, but it's almost treating it like a calendar or something, because it's using. So, okay, should we take that off 61%? We could put something on.
I say we go one more week out. Yeah.
Yeah. I moved my IBIT from 4-day to 11-day today.
So we're trying to close this. And there is that, and thank you very much, Rick. The ETHA is the Ethereum IBIT, not IBIT, Ethereum ETF. But it's pretty.
I didn't even know this existed.
I did know it existed, and they were saying it was illiquid. This doesn't look that bad to me.
No, look at the volume.
Yeah. This doesn't look that bad to me. Now, it is very capital intensive, very similar to IBIT. IBIT's capital intensive too.
Right. Like you're saying, if you're going to create try to create a collar and use ETH against your ETH, it's not giving you, you're buying a put and selling a call. It's going to use a lot of buying power.
Yeah.
But you could do what you could do. So it depends on the product. There's some products where I kind of want to protect it, but I'm not afraid of it. So I'll do just a wide downside ratio spread. And then, worst case scenario, if it drops, you get more. But a wide downside ratio spread will give you some type of protection to a certain point, right? So to a certain point. But then you get extra long if it goes down even further.
Yeah, right.
But if I'm not afraid of it, I've got stock in Dow, and that's what I did in Dow. I knew that, so they have earnings this week. I did downside ratio spreads in Dow against my stock, just thinking because it's already at the very bottom of its range. And I thought if it goes down on earnings, well, I had to do August. I did August because you're not getting, I guess you're getting a little bit here.
August is 25 days. You could do this, but it's a long-term protection anyway, right? So if you're doing downside ratio spreads, I'm going to assume you might pay a little bit for it.
26. Sure. So that way it's okay, if the stock falls, well, I can make some of my money back, but if it falls too much, then I'm doubly long.
Then you're doubly long, but you don't mind being doubly long. So a lot of times if I'm long something through earnings, I will put the downside ratio spread in.
Because Dow, okay, take a look at Dow, and I don't know why I'm in it, but if you pop out the side, it probably pays a pretty good dividend.
That's what I was going to say. You love your dividend stocks.
Oops, so if you go to overview up on the top.
10% dividend.
10% dividend, and if you start with at the money puts, just look at August selling the at the money put, it's not a lot of buying power.
Yeah. Oh my goodness.
Yeah. So you're getting $135 using $550, and if you get long it pays a 10% dividend.
And if you don't get long, you just get the $100.
Yeah.
Interesting.
And then if you get long it and it pays a 10% dividend, and then you're selling calls against it, you're making more than that 10% dividend if the stock doesn't plummet. There's risk in the trade, of course.
Yeah. There is risk in the trade. No, okay, let's get back into our. I don't mind. Do you want to sell those puts and Dow?
Yeah. I know they have earnings.
This is through earnings, but we're actually getting the inflated premium because of earnings. You could, if you're starting with the at the money puts, you could go closer. I could go to the 11-day.
You could just go to the 4-day. If you're selling the at the money, just go to the 4-day.
I saw you could at 28.5. I mean, yeah, you're getting 90 cents. But for us, why don't we just go to the expected move? Why don't we just get 50 cents overnight? If not, we're long the stock.
Sure.
So Dow is in there. That's good. I wanted to make sure we put something back in an IBIT because Jenny Andrews, where's our activity? We got out of this one. So I know I did TLT, but those three are going to go out. Okay. And then...
So today in IBIT, I rolled my 4-day to the 11-day. I sold the 66 puts in the 11-day today. 66 puts got $1.
That's not bad. Now we had in what we just took off was Jade Lizard-esque because we needed the call to give us something to buy.
Oh, we needed that 30 cents to be able to buy something.
Which I'm okay with. This is very similar to what we just had on, and that's all I was doing. So I'm just grabbing a call spread, getting some extra premium so I can go down and buy something where we still are keeping the same price of that 66 put. That's all I was doing.
And we're getting $1 and we're only risking 300.
Yeah, that's not bad.
No.
In 11 days.
No, not at all.
So hopefully we can get filled on that.
Honestly, before the show started, I thought, what are we going to talk about for an hour? But it's already 10:40.
Jenny, you and I could talk for hours about everything. Here's the one thing I wanted to do too. I will go back to Twitter, but I was very interested in the this list today because take a look at this. You've got 44,000 already. Here 55,000 at the 6340.
6340.
Yeah,
of today's
0 DTE 6340 6333. So let's take a look at that.
Well, and then the next strike too, 50,000 of every line. Those 0 DTEs are crazy. The volume.
They are crazy. And here's what we have. So this could be, what was it? What were the strikes? I can't remember.
63.30, 63.35, 63.4, you could see 63.30, 63.35, 63.40, all three of those lines.
But look at this. It even goes down. Then you've got 50, 25, 55. It's all of them.
But that's not like one person coming in with the trade. That's just everyone. That's all of us. Like everyone's trading these 0DTs. That's everyone out there. You know, you add up yours, mine, and Jack Tucker's, and Alex, and everybody out there.
But take a look at this. So it's kind of what Frank was alerting us to the other day. Here's the open interest. So the open interest is coming in today. There was only 1.65K, and here you've got 54K that are trading. That is you add up Jake Tucker's and Annabelle and Jenny's, and this is where you get to 54,000.
Because it's everyone's trading the 0DTs. So I think it's the same. Like every day you come in, the 0DTs don't have much open interest, but the volume happens that day. Everyone's trading up that day.
Yeah, let's take a look. I want to see if SPY is the same way like it was the other day. Yeah, take a look at this. 6,000 to 176,000.
Yeah.
It's a lot. That is a lot.
The world loves instant gratification.
I love instant gratification. I totally do. Okay. I just went top down because I want to see if we got to anybody, right? So if you are long crypto, as the price has gone up, your crypto as a percentage of your total portfolio goes up too. Yes. So you need to get out of some of your crypto to maintain the desired percentage. That is 100% correct, Florida 7.
Okay, so then you see Alan Miller coming in. So Liz lives across the street from Cog Hill, pretty much. Good morning, ladies. Liz, I would love to play Cog Hill with you and Dan. So you and your husband for a round of golf at Cog Hill.
Oh, I would love to. My son is there right now. He works there. So if you see the 6'6" kid wandering around, say hello to him, Alan.
Yeah, you can't miss him. You can't miss him. So yeah, that would be so much fun to go golf with Alan.
That would. Alan, I'm not that good. Do I do it? Do I do it? Yes. Am I that good? No. My husband's actually really good, though. He had, Alan, you would like this. So we had a crazy weekend with all the plays and everything like that. And then my husband decides that it's not enough that she produces a play and that we have to be there from sun up to sundown. He decides to throw a beer breakfast for the golf tournament tomorrow. So all of his friends that he went to Ireland with showed up at my house between 7:30 and 8 a.m. yesterday morning.
Did he make eggs?
Everybody we had it was bagels and donuts and egg bakes, and I made those sausage things so all the stuff that could be just like made pretty easy. Bacon and.
I only ask because, all through college, this did not happen at U of I. I was at University of Illinois. Liz was like 40 minutes down the road. And when you guys had Saturday, Sunday morning, you had kegs and eggs. Like that was a thing at your school.
No, it was just called beer breakfast. There was no food involved.
Oh, I thought I remembered kegs and eggs. For someone to be making eggs, someone would have a keg. Maybe that was at my brother's house. Because my brother.
That must have been. So we would go to the bars. And when this is not, I am not a role model here, Ellen, but we would go to the bar at 6 a.m. for beer breakfast.
It opened at 6 a.m.?
6 a.m. If there's a beer breakfast, the bar would open at 6 a.m. That's how college was. And I'm so scared to send my son to college now next year thinking about these things. But yeah, so we did that yesterday. Everybody was watching the golf tournament on the same course that they all played last year.
So fun.
Yeah, it was fun.
Now, okay, I will say, like, every college is different. So you don't know what goes on at Kentucky might not be what went on at EIU. You just know, you don't know, because honestly, like, your beer breakfast and the kegs and eggs at my brother's house, like, at U of I don't think anyone ever hosted anything like that. We were lucky to start at noon. We'd get up at noon, and our first trip would be to McDonald's for the number 2.
Number 2, 2 cheeseburgers and a Diet Coke. The Diet Coke was key, and I don't know why you get the Diet Coke, right? Yeah, it is different, I guess. Well, you know what? Eastern shut down, and U of I stayed open late, right? So all of our bars closed. All of our bars closed. Okay, we're filled. I'm gonna push these out.
That's the difference.
Yeah, they would always shut down. So here, I want to make sure we're getting these out. So all of that stuff is pushed.
I wonder, too, John's on, our producer. Too bad we don't ever get to hear John chiming in with his Madtown stories.
I know. With his Madtown stories. John would like this, because we have friends that come from Madison, and they know that my husband loves spotted cow. We can't stop getting kegs of spotted cow delivered to our house. I don't even know what to do with them.
Well,
I think we have 3 kegs of spotted cow in my utility room.
And is that a heavy beer? Did they drink that at beer breakfast, or is that too heavy?
No, they would drink it. It was in our keg. It's not that heavy.
Okay. I've never had it.
It's not heavy. Okay. Kind of back into this. Here we go. Thank you very much, Florida 7. Ellen Miller, I would love to.
And you read Florida 7s already. As the price goes up, your crypto as a percentage of your total portfolio goes up too. Yes, so you need to get out of some of your crypto to maintain the desired percentage. Yeah, I mean, that is an issue with everything, right? Everything. If you, let's say you have a $100,000 portfolio and you allocate 10,000 to 10 different positions. Like, let's say you do that. And that's, and then your position in one thing gets really big and it becomes a much bigger percentage. That's a question. Then do you downsize that position? Do you change it? Do you keep everything in your portfolio equal? I think that's a tough call.
It is a tough call. But I think crypto, so it's pretty interesting because I think crypto, I look at it differently than a stock that's had a run. Because crypto, I want a percentage of my account to be a certain thing, where if a stock's on a run, I don't know that I'm going to pare it down yet. You know what I mean? Say I've got 100 shares of NVIDIA and it's gone up. Yeah, it's kind of like the S&P 500. When NVIDIA goes up, it's a bigger percentage of the S&P 500 because of the nature of the way that it is. If it was X amount of percentage in there, as it rises, it becomes a bigger percentage of the S&P 500. So if you look at your portfolio like an index, that's the same thing. And they don't sell out of that. So in an index, they don't
rebalance it. It gets rebalanced every so often.
Every so often, but not on a micromanaging basis.
No, and I think when something becomes like a much bigger percent of my portfolio than I want it to be, that's when I throw a collar around it.
Oh yeah, when things grow teeth, for sure.
Yeah.
Sure.
Yeah.
Okay, I wanted to make sure that we get to this. What do you think of a Jade Lizard in AI for September? Let's go to that.
I haven't looked at AI in a while.
You know what? I used to be in this all the time, and then it just tapped out. Let's see where it's been, if that's okay. Here's the chart. Yeah, not bad. So Jade Lizard in AI for September. 10 rank, but I'm okay with that. September, you're going through earnings. I don't necessarily mind.
Why not August?
He said September. I mean, I'm just saying in September. I kind of agree with you. Let's take a look at August first.
If we could get anything in August.
Ooh, I like the strike selection better.
Sure. The 27 put. 31.32 call spread.
31.32 for 27 cents. Yeah, 27 put. I might actually go to 27.5 because we have less days. I'm bringing it up a little bit.
Sure.
Yeah,
okay, and then I'll show you something else I added. And I don't know, it could be turned into a loser, but I added more puts in Webull. I don't know if we have Webull anymore, but it was down today.
We used to have Webull, which is BULL, right?
I think it's.
Yeah.
Yeah. Okay. So it's down today. I don't know how low it got today. We don't have anything in there now. But I did sell.
The low was 13.92 and it's trading 16. Oh, sorry. That was the wrong day.
No, you're not.
No, the low is 15.
Okay. So yeah, this morning it looked kind of ugly. And so I just sold some, I know it's going through earnings. Well, yeah, may go earlier. Maybe I didn't. Maybe I went earlier. I think I did go before earnings because you go before earnings, get $78 on the 15.
Take a look at the earnings volatility.
Oh, I don't know.
I don't know either. That's the one thing we're looking at this, and I talked about this with TP, Jenny, and I talk about it all the time. The options are pretty smart, so this will tell us where the earnings are, and I don't see this being inflated.
Yeah, I don't know. I don't know.
But if you're just selling puts, it doesn't matter where earnings are.
What was it? BULL? I'm going to see what I sold. I did the 4-day. Oh, I just did the 4-day. No, and you know what? It was down more. I did it this morning. So it was probably trading 15 when I did the 4-day. So that doesn't make sense anymore.
Yeah, no.
But
we have not downticked since we've been on the show.
No, but we haven't really moved.
No,
we had a range of 35 to 37.
I keep checking to make sure my internet is working because it's not moving at all.
Huh. Yeah. Do we have anything to take off?
We have done quite a bit already, but let's take a look. 40% in our Campbell soup, which we just rolled. Yeah. We'll leave that in.
Well, why? What's it worth right now? Just 45 cents? Yeah, take it off.
Well, don't we want to roll it out?
No, take it off. We can get bacon on a down day. Trust me, Campbell's Soup will have a down day.
Already close. Okay, there we go. I didn't see how much buying power we got back.
I don't know, but 40%. We haven't been in it that long.
Yeah, we haven't been in it that long.
In a firm, what do we have in a firm?
You know who's calling me right now? Oh, I'm totally calling him back immediately after this. The head spot place. Okay, a firm, we have 27% profit. We have just a put spread. Let's take a look at it.
I mean, you could go to the head spa place. There's this head spa place where they give you a head massage, wash your hair, condition your hair. But then their blow dry is like they can blow dry your hair because your hair is straight.
I went there you walk out with just your hair's just dried. It's not a blow dry.
Yeah, I can't go to a place like that. My hair would be so big if I came out of there.
Oh, it is. My hair's big and it's straight. But do we want to take off our firm? So we've got 25 days. Yeah.
No, I just put in a GTC. I mean, we're getting close to that 21-day mark.
Yeah, I'm putting in a GTC. I'll take it off probably in the next couple days because then, and I'll probably take it off with TP just because then we'll push some things through. It's easy to manage things with him.
So by the time I return, if I'm leaving, by the time I return, like when I come back on Monday, the 28th, we'll have just a few days of July. And I know you heard something like July is usually bullish, but then like watch out for August.
Yes, I did. And it was Chris Vecchio. So, I mean, I'm not putting words in his mouth, but I heard him once say that July is notoriously bullish, but August and September are like 50-50. And so far, let's take a look because July has been pretty bullish.
July has been bullish, but I keep going through every one of my positions trying to scale back somehow and maybe protect it for that's July 1st.
Mm-hmm.
That's 1 month.
Mm-hmm. But 1 month isn't that bad. So 1 month went from, we went from 6:15 to 6:30.
Oh, I thought where you had it below was July 1st.
This is July 1st. I was on the date, not the.
I thought you had the.
You thought it was like here?
No, I thought you had it right. Like at that big green bar. See that big green bar to the left, to the left, to the left, to the left.
Oh,
to the right, to the right, to the right. No. Right.
You thought this was the month. I know what you're saying, but this is July 1st, right there. Right there. There's my crosshair.
Yeah, so that doesn't look crazy. That honestly doesn't look crazy.
No, it doesn't.
I mean, we had June was.
I say from the low, April 7th was the.
And so the down move started in February, right? Started in February. So we had a friend here. We had a friend here who has this, a very large, a very expensive rental home that maybe would appeal to the wealthier people because it's too expensive for normal people to rent.
Or big groups, how big it is.
Or big groups or large groups. So she said it was so interesting. She said that this year, like February, March, April, like she had like no bookings for the summer. She was getting no bookings. And all of a sudden, just in the last month, the entire summer booked. So I think like people were afraid when the market was falling, and now that it's bounced back up and people aren't as afraid anymore, or people have more money now, that it booked. But she said she was so nervous because it wasn't booking at all. And just recently, everything booked the rest of the summer.
I know, but it's a very expensive property. So the cancellation policy, sometimes people don't know what they're doing that far in advance in the summer. So,
but usually, I mean, she's had this place for years. So usually it's booked. It's booked enough where she was getting scared that it wasn't booking at all.
Oh, wow.
And then out of nowhere, everything got booked. But wow. I just think a lot of people have made a lot of money back in the market with this crazy up move.
A lot of people have made a lot of money back, but I know a lot of people that haven't made a lot of money back. Because if you got out when you were scared and stayed in cash and you didn't participate in the up move, and it is hard. I get it. I get when the sky is falling, it's hard to jump back in.
Right.
Guys, can we talk about how Alo thinks you invented this saying? You can't pay the insurance when the house is on fire. Thought that was hysterical. Okay. I want to make sure it's 54. I want to make sure we get to everybody because we didn't hear. Mr. G, good morning. Until I learn how to paper trade in Tasty platform, AI is suggesting strategy type. Bull call spread, debit spread, strike selection and expiration. Buy the 630 call, sell the 635 call, August 15th. It stated risk 250 to make 250. Is this close to being correct? It is. So if AI is correct, and if you want to wrap around the at the money call spread, it should be it should be 50% the width of strikes. And if you have the 630, 635, you should be paying 250-ish, right? Wrapped around. So it's a risk one to make one. You're risking 250 to make 250 on a bull move.
Okay, but what AI is not telling you is that's August 15th and this is July 21st. So you're not going to make 250 until August 15th if that's all in the money. What I would do with the trade like that, if I'm taking a bullish stance for a period of time, put in a GTC. If you're paying 250 to make 250, I guess look for 50%. So if you're paying 250 to make 250, then 50, you're looking to make like $125 out of that trade. And I'd put a GTC to take $125 out of that trade.
Right. And
I'm going to make money if we keep going up.
It's a bullish play, right?
It's
so
a bullish trade.
He's asking AI for a bullish play. And so August, it's accurate. That's exactly what we would be doing if you were doing a debit spread. If you're selling a put spread, I think it's different. Even if you say in the August, we choose different strikes. Now I know there's synthetics, yada, 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 the whole thing. So if you go over and sell this put spread, it's the same thing as buying the call spread on the other side. But if I'm selling a put spread, you're going down a little bit and you're going to get a little bit less profit potential, but a lot more room to be wrong. So kind of going out in time, selling 62.10, 62.05. So yeah, AI was accurate on that one. Just wanted to give AI a prop.
Shout out to AI.
Shout out to AI. I'm going to refresh, go top down. Good morning, ladies. Gold has shot up a lot today, but don't see a lot of upside yet. How about a downside put crab? Okay.
Okay. So he's giving the strikes. He's giving his strikes. I will tell you the strikes if you go to the platform.
Okay. And then you've got it up.
1 by 2 by 1. How about a downside put crab?
He's in GC because it's expensive.
Yeah. So he's in August 8th and July 31st.
So August 8th, what am I doing in August 8th?
So in August 8th, you're going to buy the 34.35.
The 34.35?
If I'm putting this crab on right. So you're going to buy that. Okay.
Okay.
If I'm putting this crab on right, I think so. Okay. Then in July 31st is where you put on that ratio spread. July 31st is where you do the ratio spread, the 33.95, 33.50. So you buy one 33.95 put and sell two 33.50s. Right? Is that how a crab works?
That's how it would be doing. It's very bizarre for me doing it in the puts. I know that sounds weird. So you're selling the nearer term. You're buying the farther out in time. This will make money if it goes down. This has a short delta and a decent theta premium.
So I don't know if I'm doing it right because usually, so what do we do?
He's got the strikes in there, what he wants. Yeah, that's right.
I know, but is that how we do a crab? Because usually we put on a ratio spread and collect money on that ratio spread to help cover the cost of that longer term option. But I don't think that ratio spread is collecting any money. It's $20 and $8. It's not.
But it's closed. You bring it up. You want to put the ratio spread on for even. You don't need to collect any money. You could do it for even.
But this is bearish. Well, this is kind of this isn't.
Yeah, this is bearish.
This is bearish.
That's what he wants. A put ratio spread crab. This is a bearish crab.
Yeah.
But I think he set it up right.
Yeah, I guess so. It's $50, so $5,130, and you just have to. Yeah, I mean, there's not the risk in it is what you're paying for it because you've got 2 long options and 2 short. So.
Yeah, that's your risk is $5,000. But this is big. You can do a bearish crab in GC. Let me do that.
But that's big, but you're only paying $5,000. So if you're bearish, like I really don't mind it. Maybe I'll try.
Oh, I didn't mind it either, but I'm just going to do it in a nearer term. So August 15th, and then I'm going to go to July 30th, for lack of a better term, and I'm going to buy one, and I'm trying to cover this. So sell two. So here, what you're basically
doing.
doing.
Move it down to the 56 because he was actually paying a little for it. He wasn't collecting anything. Like you can move your 306 down. Yeah.
Yeah, this is a tenth of it, right? If you're spending $5,000, this is close.
Yeah, 450.
So you make money if GLD goes from the long option, which is the 312 to 308. So you can make $400 here if it stays right there before that. Am I doing this backwards?
No. Okay, so you've got that ratio spread 308 to 305, and that ratio spread can make $300 in 9 days if we're at 305. Then you've got that long, but the one problem with that long is you're paying a lot of extrinsic value for it because your long's at the money. You're paying that extrinsic value for it. So what you're hoping is that the money you make on that ratio spread covers some of the extrinsic value you're paying for that long put.
Yes. And then,
so basically if you can make $300 on that long ratio spread, that will cover your extrinsic value here. And then you don't want it to like blow through before that other one comes off. And then you can maybe throw another downside ratio spread on against your long in the 25-day.
Yes, it is a bearish trade. I like the what else had earnings today? And we're out of time. It's 11. I was going to say I kind of like the crabs for earnings, but we'll take a look at that tomorrow.
Yeah. All right, we're out of time. We will see you everybody live from the SIBO tomorrow.
Yes, we will. Everybody remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We'll see you tomorrow.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he got. If that's you, join us on Tastytrade, named best online broker for options trading. Genius loves company.
Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
Global markets never sleep. Explore them with Forex, now available on Tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tastytrade.
Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batista, got my man Mikey Butler, and of course, Mr. Ryan Grace in the house with us today. And if you want to come join us, hop over to YouTube, type in Tasty Live, come to our channel, give us a like, and subscribe to our videos because it helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show. Whatever you got questions on, from strategies, concepts, trade ideas, trade management, anything crypto, come hang out with us for the next hour of the day. My favorite hour of the day. I get to spend it with my buddies, Mike and Ryan. Ryan, good morning, sir. Are we there?
Good morning. We're getting closer. We're not there yet, but we're getting closer. Ascension, my friends, is underway. A lot to talk about today. Obviously, big moves in crypto outside of Bitcoin. We've been waiting for this for some time now. Everyone's asking when alt season. Again, I think you're starting to see some signs. We had talked about alts, everything outside of Bitcoin when we say alts. Talked about these tokens likely having found a bottom a couple of months ago. You know, when you look at some of this stuff, and we'll get into the details in just a second, a lot of it is having a huge move over the last week, really over the last month, but a lot still underperforming Bitcoin. So I think that you're likely to see some pullback. I would look to take advantage of that personally. I think this is the beginning of a larger move, but this is no longer Bitcoin over everything. We've got some clear signs that that's starting to shift within the market.
Yeah, I mean
Ethereum specifically.
Yes,
hasn't had a red day since I don't know.
Straight line up.
So big moves here, which I think you look for a pullback. Naturally, you're going to get something short term, probably a little overbought. Maybe you run to 4. We can talk specific prices, but it's trading that way. You get to 4, pull back real quick to 3,500. That's what I'd look for personally. But again, this is one where I think you start to look outside of Bitcoin now. Does not mean at all that Bitcoin has seen the all-time high. I think you still move higher there, but versus everything else, kind of just trading really poorly on a relative basis. You might be able to pick some spots for outperformance now.
Are we getting to the point in the timeline where, like you start considering maybe naming the firstborn child after some of these things?
A Bitcoin tattoo or an ETH tattoo now?
Yeah, exactly. Are we getting there? Are we there?
I don't think we're there yet. No, I really don't.
The Doge guy isn't on CNBC talking about, remember the Doge millionaire guy? When it got, during the first, the original pump, when Doge got to like 50 cents or 60, whatever it was, and he was on like CNBC talking about it going to $1 or something like that.
Haven't seen that yet.
I haven't seen it either, which is shocking to me.
Exciting. Means
It
it's
is
early, maybe.
It is exciting. It is exciting. We were talking because I've been getting the texts, the stock texts, which always start to get my little ears ringing a little bit, The
antenna go up?
The antenna going up. I haven't had the mom text yet, so.
Okay, is that the clear signal?
That's usually the one. My friends are in the know, so they like to dabble in, some of the memes and the stuff that's flying around. And I'm getting those texts. I talked about last week that I had my sister, who usually texts me every day that her account is down $50 or $100. Like anytime it's down a small amount, I get that text like, you stink. Why do you do this to me? She gave me the, I'm up a lot text message. So I feel
So do you sell on that? If you're helping to manage this portfolio, are we taking a little bit off at the table, or we're just riding higher?
Listen, in the heat of COVID, I did great things for her portfolio. I was trading options in it. I was trading options in mine, a multiple of what she had in what was this very small amount. And the up numbers are a given, right? Those are expected. She expects these to go up. And so, let's just say it was about a 2 or 3x of her portfolio in a very short period of time, months, okay? Like exceptional returns. When that high water mark, let's call it $10,000, which is a double of what her account was, goes to $9,000, I have lost her $1,000. It's a double.
It's not I'm up 4K.
It's not I'm up 4K. Why did you lose $1,000? So I no longer manage any money for any relative or friend anymore. I have.
You've retired.
Yes. So
one and done.
So Gina asked me, can you just put this into market ETFs for me? I said, no problem. This will be the only adjustment I do for you. Set up a drip.
There you go.
Yeah. So no, I will not be trading in our portfolio anymore. It's the number one rule, I think.
Yeah.
Tom even told me, and my dad told me too. It's like you can't.
No friends, no family.
No. Unless you're like doing
Unless
a
they
fund or
they tell
something.
you what they want to do and you're just executing it.
Yeah.
And that's different. But yeah.
You can't be.
There's no separation of the brain.
Yeah. But I did get her into IBIT and ETH, and that was very early. So that was good for her. That was earlier this year. So that was good.
Beautiful.
So she's in. She might not know that she's in, but
that's the other question. Do I own any of this Bitcoin stuff?
Yeah. Is this somewhere, like what's my Coinbase password?
Right.
That's the next part here. A quick little market update because the market itself is doing the same thing. I mean, it's been risk on for the last 6 months, but specifically in the last, month or so, it's been kind of a straight line up. E-minis are up 32 right now, near the higher end of the session. It's been a grind fest to the upside. I mean, you have volatility down 30 ticks here, 1878. The VIX itself at 1640. The NASDAQ up 153, the Dow up 241, and the Russell up 13. It's been just a buy and close your eyes. Yesterday's prices were the lowest, were the lows, that sort of thing. That's kind of been the market here. Oil, who cares about that when everything's moving 2, 3, 4% a day? It's down 24 cents, 65.81. It's been chopping between, mid 60s to high 60s for the better part of the last month or so. Bonds up over a full point, so huge move in bonds here. They were really weak last week. I know we have JPOW tomorrow. Maybe that's kind of a reason for the bonds getting bid a little bit. Maybe JPOW kind of walks back his sentiment. Too late, Mr. Powell. Too late. Gold and silver both moving higher. Gold's up $52. Silver up 83 cents. Silver's been the outperformer of the group recently. Gold now getting out of this kind of coiled range that it's had. And then Bitcoin, we got into the 121 overnight? No, that was middle of last week.
Yeah, last week we were a bit higher, so we're kind of flat week to week. But yeah, hanging out at all-time highs.
Doing another little chop fest here around 118. You got ETH at 3,800. I think it's $1,200? Yeah, $1,400 in the last, since the start of July.
Well, when I put this together this morning, just referencing our performance dashboard from last Monday when we did the show together, ETH was up about $800 from that point in time. So just week over week, $800 move, 30% or so.
Yeah,
pretty good.
And that's some realized volatility that we've been looking for, which implied still has not caught up.
It's popped up a little bit, but it's not, it's not jumping off the screen. I think it's back, it gives you an IV rank of maybe 30.
Yeah. Because IBIT is, an IV rank of 24. I know we were talking about
Bitcoin vol is absolutely still on the floor.
Yeah, it hasn't moved at all. I mean, we've been looking at it at a single digit number, 3, 4, 5 for most of the year, and now you get in this kind of blast off mode, and volatility not expanding is kind of a rare occurrence in the Bitcoin space.
Ethereum, though, kind of behaving as we would expect into this multi-week green-only environment. Ethereum volatility up 12.6% in the last 5 days, based on what I'm seeing from just the ETH futures.
Yeah.
So
ETH.
When it's up only in a big way, you're going to see volatility expand, which is why we've been talking about leap call options, why they're potentially a nice vehicle if you're playing for that move.
Yes. I think this is the type of price action you want to see in vol terms as well, given the up move. To me, it's another bullish signal or confirms what we're seeing.
Does it indicate more of a chop and for lack of better words, acceptance of the price rather than the blast off mode?
I think it indicates that you now have attention on this more so. There's upside speculation. There could also be downside opportunities too. But I think when you get the big move to the upside, you want to see that resulting realized in implied volatility, or more so implied volatility following the move.
Mm-hmm.
Whether it's expensive or not, I guess is what we can kind of trade around or gauge, but I don't think it is when you look at it from an IV rank perspective. But you want to see, in my opinion, that somewhat short-term positive correlation between price and vol when you start to see these run higher.
Mm-hmm.
In the same way that you want to see this on big volume too, right?
Yeah.
So you start to get those signals and you feel pretty comfortable or pretty confident in the upside move still.
Volume's been off the charts. So, I mean, like people are trading this. I know the IBIT ETF is the flows there have surpassed like SPY in some ways, and even the options too. There were a couple headlines of some big movements in the Bitcoin space. I mean, obviously MicroStrategy is in there. You have all sorts of treasury companies in the ETH space. I saw some whales moving Bitcoin. Does that spook you at all? It's just normal thing. I mean, like at some point you have to take profits, right?
Yeah, I think so. I mean, look, if you followed any of my trades on the follow page, this isn't everything, but if you were buying at 2,500, 2,600, or back in April, you were buying sub 2,000 and you're at near an all-time high, I do think it goes higher. But if you're looking to take some off the table, you had 3,800 or you have 3,800 right now. So I don't think you have to sell everything, but I like to just trim the position a little bit.
Ring the register.
Yeah, if we
feel good about it.
Add to it on a pullback here.
Yeah.
You know, a lot of times there's a knock on kind of the crypto space when you think about the spot offering because you don't have leverage. Now you can get that through some of the futures products, but the way that some of these move, you don't necessarily need a lot of leverage or any leverage to still be pretty active in here when you've got something that now swings around 30% on a weekly basis. If that's the environment that we continue to trade within, then you're going to have some spots where you can buy some dips and then sell those rips again, you know, if we start to find new ranges. So that's what I'm looking for here. But again, at the top of, you know, if we call the range roughly 2,000 to 4,000 in ETH, well, just taking a little bit off the table that I bought closer to 2, selling a little bit closer to 4.
Yeah, and all these posts you can get on the follow page. If you don't have an account enabled for futures, you can do that through the platform, or just if you go to tastytrade.com, not tastylive. Tastylive is us. Tastytrade, the brokerage side, so you can enable crypto there. Are there any new cryptos coming to the platform in the near future?
There's a handful that we're looking to launch through Zero Hash in their central limit order book. I don't have them off the top of my head. I know it's a handful of memes, some layer 2s, things like Optimism, Arbitrum. I think we've asked for Uniswap. If anyone has a suggestion for a token they'd like to see, as long as there's liquidity behind it, then we look to launch these as quickly as we can. That said, and we can talk about this in more detail, quietly on Thursday, and a press release went out this morning, but in terms of adding new services or support for more tokens, you can now fund your Tastytrade account with stablecoins. 4 different US dollar peg stablecoins. The ones that people are probably most familiar with are USDC from Circle, USDT from Tether, and then PayPal stablecoin PYUSD, and the Ripple Ledger US dollar RLUSD. So 4 different stablecoins. I believe it's across 8 or 9 different blockchain networks. So if you have USDC on base and you want to use that to fund your account, you can now do that in addition to your traditional funding methods, such as a wire transfer or an ACH payment. Stablecoin, instant 24/7. It's pretty cool to see it work that way in the wild. But that launched on Thursday. Press release went out. So you'll start to see some messaging around the platform. An email will be going out to customers. But again, whether you're a US user or a customer outside the US with Tastytrade, as long as you have crypto enabled or crypto trading turned on your account through Zero Hash, you can deposit stablecoins to fund your account.
It's awesome.
This is going to be huge because I think, sometimes you run into the issue like the Japanese yen unwind. It lasted like 3 days. If you don't have the capital available and you didn't deposit the same day it started happening, and you can't, it's the ability to have instant funds right now is so powerful for these markets specifically that are moving so quickly. Like getting rid of the, couple day, especially on a weekend or a holiday, that's going to be super powerful where you have the ability to get it as fast as you can, and then you can trade the markets that are moving.
Well, I think in a world where markets are moving closer and closer to
24/7.
24/7 trading, exactly. Whether it's tokenized equities or it's just stock trading that's around the clock here in the US. It could be futures that trade 24/7. You're starting to see some firms launch perpetual futures. Presumably, we get kind of an evolving regulatory landscape. You get more of that. But in a world that's going 24/7, you need a funding source that's 24/7. And I believe that this will become commonplace. We just had the Genius Act passed into law, signed into law last week. That's huge. The big banks are going to participate. And I don't think that in many ways, when we use this technology, while yes, you might be going to your self-custody wallet or your exchange account and instructing a transaction in USDC there, I also think that it'll just be the pipes that you transfer through and it's instant.
Yeah.
And it's not so much thinking about, oh, do I have to have this already or do a conversion? That'll all be done behind the scenes by the service providers.
Yeah. Are you guys going to demo that too at some point soon?
Yeah. I mean, we can even today, if you guys would like to take a look at where this is, you can find it on the deposits page. So if you're on the Tastytrade web trading platform and you go over to manage your account and you go to My Money, go to deposits, you'll see that now you have the option to deposit stablecoin. And if you guys are in there and have crypto trading enabled, I can walk you through it. But we've got some great resources that are available through the Help Center too. Christian Molmat on the desk put together a fantastic article, put together a demo video. So if anyone wants any resources, they can take a look at that. But just here live on the show, My Money.
I won't be able to do it on here because I don't have.
Okay, yeah, that's
because these are entity accounts. But when you go to the My Money page, you'll be able to select this as an option here.
That's right. Yeah, and then it pops up a little modal. You basically say, look, I want to transfer USDC on this network. You confirm that that's what you're doing. And then you'll get a QR code or you'll get the address for the deposit wallet. And then very quickly, you can scan that QR code. Let's say you have a Tasty Crypto wallet, you have a MetaMask wallet, you're at Coinbase, wherever.
Yeah.
You want to deposit USDC, USDT, or the others on any one of those networks that you select. Boom, within 30 seconds in most cases, it's in your account and it's available to trade with.
Awesome.
Love it.
Yeah, it's a huge step, I think, for for Tastytrade in this direction. And I do again believe that this is going to become commonplace and exciting to be spearheading some of it here in the broker space. But yeah, you're going to see this everywhere, and I think people are going to really start to adopt this in the next 6 to 12 months.
Sure. Love it.
Fantastic.
Would you say, so like since between Ethereum and Bitcoin, since early April, Ethereum's price has basically doubled. Bitcoin's up a handful of percentage points, nice chunk. Would you say the rise in Ethereum or the recovery in Ethereum is related to what happened last week and maybe the front running of it?
Yeah, I think to some extent, once you have a clear framework for larger institutions to kind of participate within, when you look at stable coins, you look at real world assets, you look at stable coins and the tokenization of the dollar here driving a lot of that. I think it makes Ethereum and other layer one blockchains, it makes these networks outside of Bitcoin more, I don't want to say more legitimate for a lot of these financial institutions and other participants, those that have maybe been on the sidelines. But it gives you a real fundamental reason to start to explore this technology a little bit more. Then you start to realize that there's a lot that's being built on this. There's a lot of value that the chain secures when we think about Ethereum. There's a lot you can do with Solana, et cetera. And I think it just kind of sets a lot of investors down that path if they're not in this or familiar with it already. I think for many large institutions, investment advisors, and a lot of high net worth individuals that come to the space, they probably start with, as most people do, Bitcoin.
Yeah.
But then very quickly, that's the gateway, and you start to realize there's other opportunities. There's a lot that is tangible in a sense that's being built. There's a lot of use cases, applications, and now you have, a legal framework to operate within. Absolutely. But I think at the same time, you're seeing this violent move to the upside in ETH because it had been left for dead. If you follow the conversation on Twitter at all, people making fun of ETH, and it's been dead for like the third or fourth time. You see this narrative emerge in every single one of these cycles. Bitcoin outperforms for some time. The Bitcoin maxis are all pumped up.
Yeah.
ETH is dead. You look at the ETH BTC ratio, and then all of a sudden, that narrative shifts, those flows shift. But to your point, Mike, when you look at the ETF flows, ETH is really starting to rack up some pretty big weekly numbers. And we'll talk about that in a second. But absolutely, you are seeing that this news and what's coming soon as well with the Clarity Act, but with the Genius Act, I think that's certainly driving flows into ETH, driving attention more than anything towards ETH. And you're also seeing these treasury companies spin up. We can talk about that as well today. You have these Bitcoin treasury companies that are businesses that are looking to generate yield using Bitcoin, or just businesses that are focused on Bitcoin. You're seeing the same thing with ETH, seeing the same thing in some ways with BitTensor as well. The symbol is Tau. It's not available through Tastytrade yet. But I do think that that's driving it.
Yeah, they've had a handful over the last 2 weeks. You had the SBET, which we traded, which was what is the name of that company? Sharp Link Gaming. You had Tom Lee with Bitmine, BMNR. This is another one in there. I mean, it's natural to see this start to happen given MicroStrategy's success and just the space moving. Doesn't seem like a top for you though.
No, I don't think so. I think these are the signs that, well, in the very short term, absolutely you could get a pullback, right? And let's just say that pullback is even mid-range. If our range is 2 to 4, you could pull back to 3. I don't think so. But I think you get 3,500 maybe. And again, I'm just throwing out arbitrary price levels. But a lot of the signals that I look at and kind of how I measure all of this, I would argue it's a little overbought in the short term. So I would be expecting some sort of exhaustion here. And just given that natural chop, that natural implied volatility, those 1 standard deviation ranges, can we get back down to the low end of that range with the expected move? Takes you closer to 3,500, maybe even below it. So that's what I would look for to just kind of naturally play out given the random walk at times. But no, I don't think that this is reflective of the top or an extreme bubble or anything like that. I just think that we went through a period of very low volatility, and a lot of these tokens outside of Bitcoin that have been really poor performers and have underperformed here, in some cases we're down, not anymore, but we're down 60, 70, and maybe even in some cases 80%, depending on the token. You're seeing massive moves off of those bottoms, but there's few tokens really that have outperformed Bitcoin and that are outperforming here year to date. XRP is one of them. Stellar Lumens, XLM, I believe, is another. We can go through the list, but you're not seeing, I don't think, anything excessive just yet in terms of risk taking, and you're nowhere near all-time highs for most tokens.
Before we get in the slide, somebody asked about withdrawals too, and
coming soon. Yeah, so
that's the next step.
We were able to launch deposits first. The team is hard at work on getting withdrawals out the door. Hope to have withdrawals out the door sometime in the next few weeks. So I think early August. But as of today, deposits only. Eventually, you will be able to withdraw via stablecoin, which makes sense when you want to stay on chain. You're using your stablecoins over here in DeFi. You want to bring it over here, do something with it, et cetera. You don't have to go back to the kind of traditional rails.
Yeah, and you can withdraw crypto as well.
You can withdraw crypto
that's
too.
like if you are purchasing spot Bitcoin or Ethereum or anything like that, you can move it from the brokerage firm as well. And so
yes,
very nice, cool.
Beautiful. Why don't we pop over the slides, get a full market rundown, and then we can get back to the YouTube chat. If you want to join us on YouTube, we're streaming live on Tasty Live. You can throw in your trade ideas, questions along the right-hand side chat. But yeah, let's dive in. July 21st.
Awesome. Yeah, I'll run you guys through what we've put together here. A lot of green on the screen, as you can see. 119 for Bitcoin, chopping around there. ETH pushing towards 4,000. I mean, everywhere we look, there's been a big move, right? And this is typically what you see. Most of these, if not all of them, are positively correlated. Very infrequently do you see one or two tokens are blasting off and everything else is going in the opposite direction. This tends to trade one way, up or down. So we saw Bitcoin lead, and now we've got a bit of catch up that's being played by the rest of the market, with ETH probably at the forefront of people's minds. That said, it's definitely not the best performer over the last week. And I could make an argument here that I think you probably see something similar with Solana. It's underperformed ETH to some extent, but is starting to trade a little bit better, a lot better actually, versus Bitcoin. So you can see here our 3-month move for ETH's 143%, monster move off of those lows. Again, is a good reminder of how volatile this can get. And this isn't really even all that volatile.
Yeah.
I think it can go much higher in volatility terms in that sense, right? So implied for Bitcoin, as you mentioned earlier in the show, Nick, it's low. This is a very low IV rank, which we'll see in a second, but a 39% implied volatility. ETH is at 71. I will mention, though, there is still some premium in these, like 30% premium when you look at Bitcoin implied versus Bitcoin realized on a 30-day basis. So can always change, but you have been able to sell options in there and you've been collecting those premiums.
And that's because of the chop, not necessarily the move that we've had. Like we've had some big moves, but there's been a lot of chop in between.
Yeah, it's been like a grind higher, really.
Yeah, it's kind of been a stair step higher, and that's why, the even though the moves are very big, the implied is still higher than the realized, and implied being low doesn't necessarily mean that you're not having those big moves higher. It means they're happening like kind of slowly.
Yeah,
is what's going down.
So cheap vol, but 30% premium in there versus realized.
Mm-hmm.
Solana, XRP, a handful of others. I mean, we've seen volatility pick up, but it's really not ripping higher in some cases. There'll be a couple that we can point out that have jumped off the page, but a slow grind higher in a lot of this stuff, not at all-time highs in much of it, but volatility picking up a little bit, and you can see it's been a great month of July with markets now trading near all-time highs with equities, with Bitcoin. A lot of these alts are starting to play catch up, and you can see price momentum for now across the board without ETH going into that bullish territory or giving us that signal yet on the monthly basis, given how bad the breakdown had been in there previously. Everything here is pretty green. So I think that this is an environment in which you can feel very confident for now, and we'll call out if anything changes. But given the 1 week expected moves, the 1 standard deviation moves, the kind of natural order of how these are trading, I think you can feel pretty comfortable in buying, short-term pullbacks, corrections, buying the dip in that sense in this market environment. And doing that a lot more so now outside of Bitcoin, where Bitcoin was a very consistent performer. When you got those pullbacks, there was a quick bid. You didn't always see that with everything else. Sometimes there were some head fakes in there. I think that you're starting to see more constructive price action for sure outside of Bitcoin.
Totally.
Same thing when we go through the next one here. XTZ, XLM up 100% in the last month. Again, these are ones where, yes, the volatility has gone up obviously quite a bit.
Aave 134% in 3 months.
Yeah, and these are ones too, which I will call out. We did signal on the follow page when we get these price momentum shifts, when we get the volatility shifts, when you start to check the box on your dashboards and you feel confident going into a trade. Have gone into these. What you'll also see is they're very early to exit them, taking very quick profits where had you stayed in that, they continued to run quite a bit. So early in, and then
It's okay. The wins are never big enough. The losses are always.
But hopefully it helps to surface different things for people. We had Hedera, H-bar on there, did some trading in Aave, at times signaled Doge, Sui, Solana, and taking some profits in ETH at the moment.
Beautiful.
Same thing though. I mean, as you just continue to go through these dashboards, you'll see that the smaller market cap tokens are having larger moves, as you would expect. On the price momentum perspective, though, not as bullish as the larger cap stuff that we saw at the beginning there. Volatility picking up here across the board, but still on a year-to-date basis, everything is down a lot versus Bitcoin. Maybe that changes, but I think there's some room to run.
You think the move is via Bitcoin staying kind of flat and the alts catching up, or Bitcoin like coming down and the alts kind of staying?
I think Bitcoin
flat?
continues to grind higher here. But I think your opportunities for outperformance have increased outside of Bitcoin. Whereas before, there really wasn't anything that was set up to outperform. The charts look like crap. Nothing was trading very well versus Bitcoin. You're starting to see some clear shifts, and we can go through those signals on the next slide here.
Cool.
This is one of my favorite slides, just given how we use this as kind of an indicator of when you want to get out of certain things or maybe consider putting on risk in other positions. So Bitcoin market cap dominance has been stuck at 65, 66%. And basically we had said, I think in the last 2 weeks or so, that if you get a breakdown below 63%, that would be the signal. You're going to start to see the momentum shift, and you could feel a little bit more confident, I think, in that there's a bit of a rotation underway. And that's exactly what we're seeing. So we saw a quick move from 65, 66% Bitcoin market cap dominance down to about 60%. You can see that reflected in our 1 week, 1 month, and 3 month price performance. And then those momentum signals, the exponential moving averages that would like to overlay on top of this to kind of derive a signal, starting to break down when you look at Bitcoin market cap dominance. So it would be a sell in that case, right? You can't sell Bitcoin market cap dominance or trade it necessarily. But this is one signal that I want to see if I'm now considering rotating out of Bitcoin, or if I have $100, $1,000, whatever it might be that I'm putting into my account each week and investing in crypto or each month or whatever. I'm now looking at opportunities outside of Bitcoin versus before maybe thinking, hey, 75% of this is going to be allocated to Bitcoin. Maybe now we're shifting those allocations around a little bit because you're starting to see that outperformance. So we want to price everything in Bitcoin. And that's been a theme on this show for quite some time. That's going to help us with understanding when we should go long ETH versus Bitcoin or any other token. ETH versus Bitcoin is trading a lot better. You can see that we've got that positive price momentum on a daily time frame, has shifted from bearish to neutral on the weekly. You want to see that sequentially. It's doing what we want it to do if we're bullish ETH versus Bitcoin. And this isn't anything where you have to have that Bitcoin short against it. We're just pricing ETH in Bitcoin 1 week, 30%. Maybe you get a little bit of a pullback first, 3 months, almost 80%. If you look at the ETH BTC chart on Google that or whatever, you're going to see that, clearly we've bottomed here, and it's starting to, again, trade a lot better than it has really in years, which is encouraging. The other thing that I want to point out here is Solana priced in Bitcoin is doing the same thing. Doge priced in Bitcoin is doing the same thing. So ETH BTC moving higher on its own, okay, maybe a positive signal, a good thing that we want to see for ETH. But when I start to see this, when I'm pricing all these other tokens and using Doge as a proxy for memes priced in Bitcoin, that gives me, a stronger signal, let's say, right? There's a higher probability that I can assign to, let's rotate out of Bitcoin, let's allocate net new capital to something else. And then when I think about what that might be, well, let's look at Solana versus ETH, two very large market cap tokens, front and center, have a lot of attention on them. Well, Solana definitely is not outperforming ETH. It might, but it's continuing to break down. And it gets oversold at certain points too. I think you came off of that. And so you get a little bit of the bounce in Solana eventually, but ETH is still outperforming it pretty handsomely. And you can see that here when we look at that price momentum on a short-term time frame. So all of that to say that, yes, you're seeing a lot of signals that you want to maybe look at opportunities outside of Bitcoin as well.
Got the Ryan official alt season declaration.
Some signs, yeah.
It's here. It's here.
The alt season that people have come to expect is when stuff just does absurd things, right? Like XRP goes to $10 versus it's at $360 or so, or whatever, Solana's at 1,000. I think that's like your full-blown altcoin season, and I'm just making up arbitrary numbers here. But look, ETH's not even at an all-time high. We're talking about its relative outperformance recently. We're very positive on the price recently, but it's not anywhere near an all-time high. It's getting closer. So I don't think you've really seen, you haven't seen it really play out just yet.
I think of alt season as like the
crazy shit.
Yeah, the streamers coming on and launching some token and just like dumping on people live and like like that. We've had
like
those
child.
Yeah, like the child that's like You know, like he made like 20 grand in like 5 minutes.
Well, SPX 6900's at all-time highs right now.
There you go.
It's just
I
off
mean,
of it. We're almost at $2.
I think of those as like, you know, the Trump coins and the, you know, like I'm surprised there's not one for the Coldplay. I'm sure there is one for the Coldplay.
Oh my God, yes.
You know, the Coldplay like cheater.
I saw a cake that was made with them. It's just like silhouettes, but they're holding each other.
That's what I think of alt season. Like is like that just silly season, JPEGs, you know, the NFTs go. I saw that in my Twitter feed, you know, the punks getting bought up, like some sweep of 40 of them or something like that. That's what I kind of equate to the alt season.
Yeah, I don't disagree. I think in many ways then you've seen these kind of mini alt seasons here when you had Pump.Fun, you had all these tokens that were launching on Solana. You had exactly what you guys are describing, people that were just launching coins and instantly rugging people. So we want to see less of that, clearly. But that's been going on for some time. I think in this cycle, you probably see large flows into many tokens that have very legitimate use cases. When we think about DeFi, we think about tokens or companies that can accrue value to the token holder, given on-chain revenues, given that there's, again, tangible, fundamental value associated with, you know, what these protocols do and what these tokens represent. So I think that you could see that in DeFi. There will be the speculation that occurs, but I don't know if every cycle will look exactly like the last. You know, when we go back to your point on NFTs, yes, you saw a ton of, let's call it waste, fraud in some cases, capital that was destroyed in the same way that that's happened at other points in history and certainly in financial markets via the NFT kind of craze. But what came from that was digital art, on-chain art, and you have these blue chips, and CryptoPunks are one of them. And so in another way, when most of these things are also priced in ETH, I look at that as, I don't want to necessarily say it's a smart money flow, but you have investors that are in the know that are starting to purchase digital artwork and maybe in anticipation of kind of that greater fool theory as we move farther out on the curve. At some point in the cycle, people look to move their gains as they do with fine art today. You make a ton of money in Bitcoin or ETH. Now I might bid up something in that space staying on chain. I don't think it's going to be a ton of random profile picture NFT projects with an associated roadmap that launch. But I do think some of these very legitimate digital artists that have become famous or were famous previously, but have really adopted this space. You think of Beeple, for example. You have CryptoPunks. You have some other big names out there. One that I like personally is the artist Xcopy. But I think that you'll start to see some of that more blue chip digital art do well for real legitimate reasons, at least in terms of, you know, how people view it from a kind of speculative perspective, but less around what we saw with NFTs previously. But what's fascinating to me, guys, is exactly what you brought up about the Coldplay concert and the tokenization of culture and memes and how this technology has led to it. And maybe it's destructive, maybe it's constructive, but you can participate in new ways and things might last for a minute, an hour, or years, but it's all possible on chain.
Yeah, it's a speed thing. I mean, it's just like
you instantly went to like, oh, the token for that event, like it kind of memorializes it, and maybe you invest in it, but I don't think people are even investing in it. It's just a way that you're participating.
Yeah. It's so quick.
Yeah.
So quick. You blink and you miss it.
There's a handful of them that are on CoinMarketCap.
Are you looking at some of them? Are
they were like, a lot of them were made like last week, obviously.
Yeah. Well, yeah. Well, I mean, you got to have the event first. You can't front run the event.
But one of them will pop off, I'm sure.
Yeah.
Yeah, it is. It's fascinating. Got a couple more slides for you guys very quickly, and we can go wherever you want. But here are your updated expected moves. Again, small move for Bitcoin at 120. Looking for a $6,500 1 week, one standard deviation move.
It's like one afternoon. Come on.
Yeah, I think that the vol could pick up in there, of course. ETH, very bullish with what we're seeing with this range here. You want to see the low end of that 1 week, one standard deviation move higher. Obviously, it reflects the higher underlying spot price, reflects the increase in implied volatility as well. So nice to see that the top of that one standard deviation move puts you well above 4K at 4,200. Solana grinding higher here. Not really anywhere near an all-time high either, but you're back to a 2 handle at the top of your range. Sui, maybe we get to 5, 460 top of range, 350 is the bottom. XRP has been super bullish as well. People probably have some big number like $5, $10.
Yeah, 100. I see 100.
100 would be quite sizable. I think given the total market or the
it would put it
supply,
like in the multiple,
like 10 trillion.
Yeah,
I think. Well, what is it? If I look at CoinMarketCap really quickly, I look at XRP. Circulating supply right now is 59 billion. I think total supply is 100 billion. Yeah, so max supply of XRP is 100 billion. If it were $100, that's 10 trillion.
Hey, don't rain on my parade, okay? Come on.
I'm sorry. But for context, Bitcoin's market cap is 2.3 trillion today.
Well, hey, things get bigger. Up only, okay? Come on. Come on.
I mean, hey, anything is possible.
The printer goes burr. Yeah. All right? It doesn't.
In that world and on a long enough timeline, anything.
Yeah.
Possible.
Yeah.
Well, what's kind of crazy is we're looking at, obviously Coinbase had a huge rip the last couple of weeks.
Robinhood, Circle.
Coinbase is only 100 billion market cap.
Yeah.
Like you look at this $400 stock price and all of a sudden it means nothing. It's like when they do a split, eventually it'll be a $42 stock price. Then we get it back up to 400. Okay, now we're talking about 100 billion. Like 100 billion is nothing
now.
Right now.
Now.
Yeah.
Which is a shock to say.
Yeah.
Right? It's like 100 billion here, 100 billion there.
Yeah.
It's just
when Apple was first rising higher and higher, prior to it being bigger than what Microsoft or ExxonMobil, I was remembering in my mind, it was like people would quote the ExxonMobil market cap like 400 billion or something like that, and you're thinking, okay, oil company, obviously it's going to be the most valuable company in the world. And that was a long time ago.
Yeah. We've seen some of those switch. I mean, I was talking about that with Gus too. Like, you obviously the Mag 7 have remained in kind of the focus for the better part of like 20 years. But there's been some new names. The NVIDIA just bounced in there. I mean, in the last handful of years, Tesla was kind of one that was on the lower end and now is up there. So, things do change. They rotate through those.
They always will. It feels like they won't.
I think they say every
do.
10 years there's a different top 5
in
the market, something like that.
But I think the core investment theme has remained, though, which has been investing in U.S. technology and innovation.
Yeah. And that's where crypto is going.
Yeah, absolutely. I mean, now finally,
yes,
we have the U.S. government leading the charge around some of that adoption and creating a framework for the industry, which is super exciting, in my opinion.
Yes.
But those were your expected moves. A couple more for you guys here. We can kind of jump wherever. We've got just quick correlations, come down quite a bit. So if you remember when we had a bit more volatility in the stock market, and we do see a pretty strong inverse correlation between the VIX and Bitcoin at those points in time, as you would expect. We also saw stronger correlations, as you would also expect, between risk assets. I think there was a comment in the YouTube chat earlier asking about whether we've done any study to show, the impact on crypto when you get a 2%, 5%, 10% drawdown in the S&P. And absolutely what you see is that crypto is not immune from that downside volatility. But in this environment here, where, the S&P is also, at an all-time high, near an all-time high, when we look at many different components of the index, it's not that correlated or hasn't been recently in the last month versus where we came out of. So that's one point to call out. Still positively correlated to risk assets, as you would expect, to equities, S&P, the NASDAQ, the Russell, but not really much of a correlation elsewhere. Do have an inverse correlation with the VIX. So if the VIX goes up, you get a lot of volatility, get some selling pressure in the market. You probably see Bitcoin a little bit lower, but it's been resilient as well, as we've remarked. So quick look at correlations. Let's just jump to the 9th slide in the deck, and then we'll go back to our headlines slide. So if we can just jump 2 ahead, I want to show you guys one other quick data point that I don't think anyone has missed. But this is the spot ETF flows for Ethereum. And if you look all the way to the right, that's your prior week. So these launched about a year ago. So we've got 1 year of data here. We had a decent move post-election with some inflows there, but you can see it's been pretty quiet. Have some outflows at times as well. And then recently, boom, big ass flows.
All at once. Here we go. It's the tape.
So you're getting the, the $1 billion inflow kind of headline numbers, which obviously is what you want to see if you're bullish ETH.
Mm-hmm.
Right. And there could be a situation too where you get a little bit of a squeeze. So we have these treasury companies that are spinning up, going public. We've got big flows into the ETFs on chain. You're seeing stablecoin adoption. You're seeing just a lot of growth. And there is this burn mechanism with ETH. So while technically there's no cap on supply, there are disinflationary, deflationary periods with the ETH supply at times. And you certainly can get into an environment where the demand is much greater than the supply and the issuance, and you could see an impact on the price. So maybe some early signs of
and
that
fees
setup.
too.
Yes.
And like the transaction costs.
Absolutely.
Yeah.
So quick look at Ethereum ETF total net flows going back since launch. So all time here, that chart's from the block.
That's only 750 million. That's a drop in the bucket.
It's small relative to what we see in Bitcoin at times.
Yeah, but there's a lot of room for that to move, and that's natural liquidity. That's a natural place for liquidity coming to the market.
Absolutely.
It's just right there.
And I suspect we get staking here soon. So these ETFs can stake their ETH and then they can pass that on in the form of a dividend or a yield to the underlying investors. And that should further catalyze flows into this.
Does it get added to the dividend aristocrat list?
Maybe one day. Yeah.
Maybe one day. 20, what is it? 20 years of continuing?
Yeah, 25 years.
Yeah, 20.
Continuous.
We have a ways to go.
Yeah, so you got some time, but maybe one day we'll be talking about telling our kids, when we first bought our ETH ETF.
Right.
Yes.
Happy to go wherever you guys want here, whether it's back to the chat or we talk about some other headlines, but whatever you guys want to do.
Yeah, I got some couple in the chat here. Yeah. Some people asking about Chainlink. Do you have any insight into
the Link Army?
The Link Army.
Yeah, nothing fundamental to add here. I mean, just looking at Chainlink's price action, this is one that has not outperformed Bitcoin yet necessarily, up 40% in the last 3 months. Vol picking up a little bit. We got the the short-term daily price momentum kind of indicator that I use with the exponential moving average crossover. Just a mouthful of words there. But when I look at this, is it trading well? Yeah, it's absolutely doing the same thing that everything else is. So like, pick your spot. I don't know. Does it trade? Where are we at? 19. Okay, I put this together earlier. I think it was 1761. So now we're at.
Things are moving, Ryan. It does no big deal.
Yeah, I mean, it's doing what everything else is doing. When you think about what its role is in terms of an oracle and the interoperability of blockchain networks and how data is needed to reference or be stored at times, I think it plays a role, but I don't have any kind of specific view on Chainlink, like, it's going to 30 because of X, Y, Z.
Yeah.
It's one that I've owned at times. I don't own it right now. I've traded it. It's a token that trades from, you can see it here. It's traded down to about 10, call it $12 and $20 right now. So probably goes higher if the rest of this stuff goes higher.
We've talked about before of kind of the sprinkling. It's hard to just pick a winner like you were just talking about, or just pick one. What are if you had 5 that are available on the Tasty platform, what would you go into? What would you like? Which would be your picks?
Yeah, I'll just give you a breakdown of how I'm invested currently, and some rhyme or reason behind it. But my biggest position's in Bitcoin.
Of course, the non-Bitcoin.
Yeah. Okay. So outside
no Bitcoin, no ETH, no Sol.
Oh, okay.
We're going like the smaller ones because we've talked about how alt season, you kind of have everything move, and it's hard to pick the ones that are going to be the biggest movers. It's just all of them kind of go in one direction. What are 3 or 5 that you kind of like?
Yeah.
For whatever reason.
Kind of walk through what I think are probably giving us the strongest signals right now.
Okay.
And maybe we've missed some of the move already. So this is not me saying I'd buy them at these prices. I might look for a pullback. But so I own Bitcoin, ETH, Solana. Outside of that, XRP I've owned once in a while. I don't have a position right now, but that one is trading really well. Right now, I'm looking at what's outperforming Bitcoin. It's got some momentum for whatever reason. Doesn't exactly matter. It's just up 40% or so versus Bitcoin. So XRP would be on my radar. A couple others here that I like in terms of like SUI, like SUI, however you want to pronounce it, SUI. That's one where you're seeing constructive price action, you're seeing volatility pick up, like the use cases of the chain, you're seeing growth in stablecoin market cap on chain. So there's some signs of adoption there. That's one that's on my radar. Something I don't own, but it's absolutely ripping and is another one of the few that's outperforming Bitcoin right now is XLM. Made a launch higher up towards about 40 cents or so. It's kind of chopping there now, I think. Yeah, you got it on the chart
that's
here.
100%.
But 115% realized vol on a 30-day basis. So that one kind of gets your attention, up 92% in the last 3 months. In addition to that, Hedera H-bar is another one that north of 100% vol. Price action has just been blasting higher, 60% in the last 3 months. Is not outperforming Bitcoin, but it's one that's kind of on the radar. Pepe, a meme coin. That's kind of the one way that people might think about this is like what's ETH's Doge. On Solana, you have Bonk, you've got Dog with Hat.
Yeah.
On ETH, you got Pepe.
Okay.
And then you have Dogecoin. Not on ETH, it's its own chain. And so I kind of think people look at it that way, right? And it's like a community, it's a cartoon. It's fun for people. It's had positive and negative associations at times over like the last some decade or so. But, I just look at this as one that I've watched all these momentum signals go from very bearish to very quickly looking bullish, a lot better, up 77% in the last 3 months, 96% vol. Like if I'm really bullish on something, give me that north of 100% implied or realized volatility, realized in this case. So that's another one that's on. I don't own it, but just like if I'm going through my signals here and going through what's on these dashboards, those are ones that start to get my attention. Anything that's all green, outperforming Bitcoin and vol is going up, I might look to, as a trade to buy any pullback.
And you could own 1 billion of them.
You can own a lot of those ones if you're looking at it from that perspective. Just quantity, like how many do you have?
Yeah,
I got 1 billion.
It
doesn't matter if they're like
enticing.
Pepe billionaire,
sub penny, but yeah. So those are a few. I mean, outside of that though, BitTensor is something that I've been telling a lot of people about, just more so to like try to learn a little bit about this. It's decentralized like competition marketplaces on these subnets, but largely is being leveraged for decentralized AI, all sorts of different services. And you're starting to see some companies that are being spun up behind it. You've got the DCG, Digital Currency Group, and their kind of BitTensor focused arm as well. So interesting, early days. But that's something that I think people can start to understand. Okay, is there a use case or a reason for decentralized AI? Yes. Does it mean BitTensor is going to be the platform for that or the network for that? I don't know, but it's compelling to me. So that's one. I like a lot of the DeFi tokens too, given that I think you see continued adoption and growth of
talking
DeFi.
like Uniswap.
Yeah. Aave is one that you can see the token price here is very quickly just ripped higher. 316, you could have bought it at 250 a little while ago, if not a lot lower. 200 almost. So that's up 129% in 3 months. I don't think it stays there and obviously doesn't on a rolling basis, but those are the kind of signals that I look for. And if you have that fundamental kind of backdrop of you've got a regulatory environment that's more conducive to value add with these companies, they might be able to in some way return the revenue from the protocols to the token holders. You can start to model that. You can kind of come up with different ratios for whether it's undervalued or overvalued in the same way that you look at like price to earnings or price to revenue or whatever. Those are the ones that are probably on my radar more so.
Beautiful. Yeah, that's good.
A couple of quick ones here. Neri, are there telltale signs that some crypto shouldn't be touched, or is it a coin flip sometimes? I think it's more about, like, if you're trying to avoid getting rug pulled, I think it's more about market cap, sticking with some bigger names that are more liquid, just like we talk about with equities and trading options on products. Like the more people and participants are involved in it, the less likely you are to.
You're buying Coldplay cheater. You should probably expect that to not be around forever. You know, that's not going to be a scalable economy. In that,
Absolutely.
You know, like
I'd look at supply dynamics too. So typically on CoinMarketCap or any of these websites where you can get a bit more, we're going to bring this data to the Tastytrade platform too.
Sweet.
But you can see the fully diluted value if you take into consideration all of the tokens that can ever exist, technically speaking, versus those that are within the circulating supply. So you think about this in the same way that you might think about an equity where it's recently gone public and the float is going to grow post an unlock period. Same thing here. You have token issuances, you have unlocks, and so there could be 10 billion supply, but only 2 billion is in the circulating supply, which could be a headwind or kind of put a ceiling on prices if you have sell pressure from unlocks and these investors are just dumping it in the market. You see that at times. So I would definitely be aware of that. And then concentrated holdings, when you look at that supply as well, is it held by a large, decentralized, in some cases distributed number of wallets, or is it like 5 people that are behind the company that hold 80% of the supply and are just waiting for unlocks? Something to consider. But you're aware of this at least, and that can go into your decision making.
How are you deriving implied moves for something like XRP?
So nothing implied there. That's all realized. You're seeing in Volmex, we've had on the Tasty Crypto Show, is doing a great job of this, but they've got some indices for implied volatility across different tokens that largely come from the Deribit data, where you do have more options that trade on a lot of these different underlyings. But for what we're showing here, we're just using a 30-day realized vol as a proxy. It's not the best measure, but you could use a 10% or a 10-day, excuse me. You could use a 30-day. We look at a 30-day implied where we do get that data. So that's things like Bitcoin and ETH. And I think probably you can do a better job of putting that around Solana. There's probably enough data now. But the rest of this stuff in here is just looking at the realized price movement in the last 30 days. So it's not perfect at all, but we're using that as the input into the one standard deviation calculation versus typically where you would just use an implied vol input into that equation.
Nice. Last one here. A lot of people talking about how funding with stablecoin is great for instant funding capability, but also international, because we're domestic, so we don't have, so like we're not paying international wire fees, all these things. So can you speak about that real quick?
Yeah, absolutely. As long as you have an account that is approved for crypto, which then means you're a customer and you reside in a jurisdiction where you can enable cryptocurrency trading. And on the Help Center article on the Tastytrade website, you'll see there's a few countries that are not yet available. It doesn't mean that they will be forever, but you look at kind of evolving regulations in the EU, for example, there's a handful of European countries that, while there is a framework in the EU, are also working on their own rules, I suppose. And so there's a handful of countries that aren't available yet for crypto-enabled accounts. But if you have an eligible cash or margin account with Tastytrade, and by eligible I mean it can be enabled for cryptocurrency trading depending on where you reside. Just one button. You get some agreements. You get the zero hash disclosures. You get the licensing agreement, et cetera, privacy policy. You can see all that. You just click accept, and then you're enabled for crypto. You have to enable transfers as well. So you have to re-verify your identity. Make sure you have 2FA turned on for your account. Just some security measures here. But this is all for any account that is eligible. And then once you have that on and you have access to stablecoins, maybe you have stablecoins through PayPal in the US or Binance outside the US, Coinbase maybe, wherever, you can use that then as your deposit vehicle or your mechanism.
Sweet.
Beautiful.
Love it. Well, thank you so much. Thanks for tuning in. Give us a shout on Twitter. I'm a Trader Mikey B. Nick's a Trader Nicky Bat. Ryan's at Ryan Fred Grace, and give Tasty Crypto a follow as well. I got the newsletter pinned to the top of the YouTube chat, so click that, subscribe for free. All amazing stuff in the crypto world. We'll see what happens over the next 7 days. We'll recap it on Monday again. But stay tuned. We got plenty more content coming your way on the YouTube channel as well as tastylive.com. We'll see you same time, same place tomorrow. Peace.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tastytrade. Download today.
Look who's back testing. Tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tastytrade.
Hello, my name is Tim Knight. I'm on a daily show where I talk about what's happening in the stock market by way of charts, and I've produced a few.
Got the need for speed? No problem! At Tastytrade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tastytrade, make your move.
It's Monday, July 21st, 2025. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Thomas Westwater. Thomas, it's another Monday melt-up.
And it is, yeah. We are, earnings optimism.
Earnings optimism. Verizon really kicked this market in the pants today, gave it a leg up this morning. I don't know if that's the cause. Maybe it was Treasury Secretary Scott Bessent saying that the August 1st deadline doesn't really matter. Either way, low volume, low volatility, positive technical drift. It's that kind of Monday here, Thomas. NASDAQ's flirting with the highs. We're playing with fire because we've been riding long some S&P 500 call spreads here in the Tasty follow account, Thomas, 23,500. Short that, long the 23,350. So we're right on the nose. We'll have to find out how that plays out over the next few minutes. Beyond there, though, it's a day where the dollar's down and yields are down, and that's really good news for the metals. So, Josh, we can get right into it. There's a lot of ground to cover today. It is a Monday melt-up. Last week, I was out on Friday celebrating the 36th turn around this sun, Mr. Westwater, so we didn't have a chance to cover the typical macro week ahead, and I figured we could spend some time on that first before we move into the charts. It's actually a busy week. The market is, technically speaking, we are in a communications blackout window for the Federal Reserve. And so while Fed Chair Powell is speaking tomorrow, the odds that he opines on monetary policy in a manner with which proves influential to the markets, I find myself taking that down a peg. The Fed meeting is next week, of course. And so the Fed, they're not allowed to comment on monetary policy matters at this point in time. First things first, Thomas, are you expecting anything from Powell tomorrow, given that backdrop?
No, like you said, and he's spoken before Fed events before when there's a blackout, and like you said, he really doesn't get into the weeds on anything monetary policy related. So not expecting much there, but there's a pretty much 0% chance that we cut it next week's meeting. So I mean, he'd have to say a lot for that to change anything.
You say pretty much 0%. Odds are, Friday, 93.8% chance of a hold, now 95.3% chance of a hold. For September, those cut odds, they've been oscillating here as well. We've seen over the past week, they've gone from a 37.4% chance of a hold in September to 41.3%, which market thinking that the data is good enough that the Fed won't need to cut. So we get through Powell, and then okay, the week does kind of peter out thereafter. The only important U.S. data release on the other side of all of this, as it pertains to tracking what's happening with GDP in a specific manner as we get ready for the GDP report next week, that would be the durable goods orders report coming up on Friday. Durable goods are items with lifespans of 3 years or longer, things like airplane parts, automobiles, refrigerators, dryers, what have you. And so those are the kinds of purchases that Americans make when they're feeling really confident about their finances in the future. Obviously, durable goods are the kind of items that are tariffed, which is why we've seen some really outlandish data in recent weeks and months, Thomas. A 16.4% month-over-month gain, then a 10.5% drop. I think some stability here would help keep this rally going because good news is good news right now. We want to see that the economy is, trudging through it all. And as you said, there's earnings optimism here, and earnings optimism is derived from strong consumers. Outside of that, I don't know if there's much to pay attention to from the U.S. side of things this week. There's an ECB rate decision as well on Thursday, but beyond there, I'm looking at a macro calendar that doesn't have that much to offer when you really dig through the actual releases.
Yeah, there's not too much. I mean, it's still big, yet you really don't get that much. It's going to change these rate cut expectations. Today was a light day too. I mean, we had the leading index. It dipped a little bit more than expected. I think a 0.3% decline for June versus 0.2% expected. Market obviously not caring about that print, so it's just all is on earnings.
All focus is on the earnings. All focus is on what's happening in Washington, D.C., and that yields this market where stocks just claw higher. It's not even the Russell that's leading today, even though yields at the long end of the curve are down. Bonds are up over more than a point right now, but stocks seem to be taking it in stride, at least the NASDAQ here, up by 0.8%. Thomas, we're playing, as we said last week, a game of Icarus flying close to the sun. Today's 0 DTE on the NASDAQ call spread that was purchased a while back. We're currently riding this into the sun right now. So we're going to have to take care of this moving forward. I guess the question is, now that we're breaking out, my own view, has that changed? Because the idea here is that this market would rally up until the end of last week, maybe squeeze out a little bit more. And volatility is already so low, it's a sub 10 IVR. We're heading into a period of time when volatility tends to spike and markets have historically been a little bit slippery. So I don't know if I'm going to keep this bull train moving forward myself. I think I may miss some of the rally to the upside still. But at this point in time, what more should I be looking for? It feels like I'm picking up pennies in front of a steamroller by laying on new longs at this juncture.
Yeah, I got in a little short-dated put spread for the S&P 500 last week. I took it off a day after, caught a nice little move up. I'm doing that again this week, just a 3-day put spread or a 2-day put spread for the S&P 500, just expecting these earnings to come in above expectations, for the ES to stay above 63.60. So keeping my exposure light there still, but I'm just trying to get a little bit of this enthusiasm, this complacent enthusiasm in the market.
Well, I see this complacent enthusiasm in the market on one hand, and the other, I look at the technicals here, and this is a market that's clearly just breaking out. The S&P today, where does it pivot against? Right near the highs in that 63.30 to 63.40 neighborhood that have been capping off the market since the middle of, rather the early part of July 3rd. We bounce off of there now and we rally up into new highs. The NASDAQ setup isn't all that different, where we do have our breakout and when we pull back, we're pulling back into an area where the market previously found some resistance, at least we did back on July 15th, and then we rally up some more. So this is a bullish breakout. The question is, how far is too far? I'm looking at a range here in the NASDAQ, 22,800 up to about 22,000, we'll call it 100, to keep it to an even 300 points. 300 points from there is 23,000, 400. Okay, so this bullish breakout here looks like it may be achieving its upside targets. Thomas, I'm going to feel terrible to do this because I think the market still has a chance to rally a little bit more today, but I'm not going to look a gift horse in the mouth. This has been a pretty good trade here. Not going to be upset the way that it worked out, the way that it worked out. But, right now, we just got to take it off the books. We got to move forward here. So playing long stocks here in July has worked out really well. Buy through July is what I say. because of the seasonals. We haven't seen a red July in how long? But now that we're getting into this latter part of the month and volatility's on the floor, feels like it's a good time to start getting some powder dry, Mr. Westwater.
Yeah, and you could always squeeze out a few more percent out of a trade, but why risk it? I mean, I used to make that mistake. You figure you could squeeze out just a little bit more from a trade, but if you're up, you're up. And I think now, if you were long, is a good place to kind of take some of your cards off the table, chips off the table.
Yeah, and it's usually not my forte to do short-term swings like this, but when it appeared like we were getting ready to break out earlier this month, it made sense to try to get something with a little bit of upside exposure on, consistent with my own view that during the summer months of low volume, low volatility, and you have the 5-day moving average above the 21, markets just tend to drift up. So I'm happy with how this all played out over the last few weeks. I'm now feeling less comfortable being long, though, in all facets of the word here. It feels like this has been a nice little bounce. Is this going to be buy the rumor, sell the news with August 1st tariff deadlines? The market seems pretty convinced that they're not happening already. So what does that news flow yield to us if it officially comes down the pipeline in a few weeks? Or worse yet, Thomas, what if Trump is serious and we get those headlines on August 1st that the tariffs have been implemented? The market could be caught completely flat-footed, and rolling that dice to me isn't a good risk to reward right now.
Yeah, the August one, the closer we get to it, the more risk you're taking on from these headlines. Even though the market's kind of calling the bluff right now, if this is priced in on that premise, and then you do get Trump coming out and some escalations on August 1st or even before that, then you're going to see this rolled out of the prices, and we could return back to the range we were at previously. We could get a volatility expansion and go under it. I mean, I'm feeling less and less convicted as well. I've been staying light. I'm going to continue to do that on the long side and just not overextend myself. That way, if there is a pullback, I lose a little bit on one trade, but then the capital is still there for when volatility expands and you could get those better trades.
We are not there yet, but one of the reasons why I'm thinking that we might be getting a little bit of heavy up here, we're currently 2% away from our 1-month moving average here in ES over the past several years, really going back to the 2022 low, when you've seen the S&P 500 get into the territory of about 3% or so, and the NASDAQ 4.5% above its 1-month moving average. It's typically coincides with the period where the market rally stalls, not stops, but at least cools off for a few days, maybe a week. And we're getting into the teeth of that here. So is chasing ES up another 60 handles worth it? Is chasing the NASDAQ up another 200 points really worth it right now for my, I don't know. I don't think it is. So my focus now, Thomas, is on thinking about that downside protection, which I have at 39 days to expiration. The position is slowly losing money, obviously, as the market's moving up. I think the prudent thing for me to do would be to make an adjustment and use the rally here and take a small loss on the other side of this trade and use it to recenter or move up my strikes, if you will, a little bit closer to in the money, so that if there is a pullback in that neighborhood of 3 to 5% from this point moving forward, I'm not hoping that the market has to go down 7% for me to make money in that scenario.
Yeah, and I mean, this point in July, we're coming up to 7 months over in the year. Last year, the S&P 500, 26%. The year before that, 25 or 26%. So, a lot of the enthusiasm that we started the year with that was immediately taken out by tariffs is this tax and spending bill. It's came and gone, but it hasn't really, amped up the market as much as we were looking at the beginning of the year. Now it's more about the tariff uncertainty has to come off. So I think August 1st, and what we see around that, the reaction from the administration, what they do is going to set the calculus for the rest of the year.
Putting tariffs back on would certainly start a new news cycle. That might be interesting for the administration, given what's going on right now. I think the volatility is what informs us here, though. I mean, I'm looking out and I'm seeing not really 16.35. I mean, it's not the picture perfect momentum scenario where you get a VIX that's printing a 15 handle, but it's pretty darn close. And we're petering around effectively near cycle lows post Liberation Day. Do you feel like everything's priced to perfection right now? I keep seeing that in financial media. I hear it on the radio that with price to earnings ratios stretched, AI, seeing what NVIDIA is doing, right? 4 trillion market cap. What isn't being priced in right now for the bull case?
I mean, I think we have a little more upside to go if we continue to get a good earnings momentum. So we have like 20% of the market cap for the S&P 500 reporting this week, some big tech names. I think there's a little bit more juice to be squeezed here. I also feel like this market is on a thin line where risk and volatility come back in pretty quickly. Especially with where prices are, how far we've gone up the past couple months. So I think you need to be cautious if you're playing the long side and really have your capital allocated to where if you get this big pullback, you're going to be able to, you're not going to be managing all your losers and trying to recalibrate. You're going to already be ready to take advantage of it.
We talk about this earnings season. Coming into this week, only 12% of companies in the S&P 500 have reported so far. Of these companies, 83% have reported actual EPS above estimates, which is above the 5-year average of 78% and the 10-year average of 75%. So that's the good news. Here's the not so good news. The blended, which is the combined actual results for companies that have reported and estimated results for companies that have yet to report. So that blended earnings growth rate for the second quarter is 5.6% entering this week, which if we think about where we were historically, this would actually be the slowest or lowest earnings growth rate reported by companies in the S&P 500 since Q4 2023, according to FactSet. So yes, companies are clearing the bar. The bar appears to have been lowered because of the tariff talk in April and May. And when you actually look and see how our earnings doing, the growth rate is there, but it's just not as fast as it has been. And it's the slowest in a year and a half. So when we talk about a market that may be complacent, pricing everything for perfection, as we continue to push up here into the highs for the day for the NASDAQ and for the S&P, it's why I think the market may be a little bit fragile. Because if you get that piece of bad news and a reality check comes in, what if it's next week, Thomas? What if Powell refusing to get the FOMC on board with a rate cut for Trump triggers Trump trying to fire him? What would that do for the market? I mean, it feels like we're skating past every single risk right now. 23,420 here. NASDAQ, the Russell we haven't touched on today. I'm a bit surprised that it's holding back, given how yields are moving. What do you make of this?
Yeah, I mean, it's definitely a good day for the bonds, kind of a continuation from the second half of last week. And like you said, it's provided some upside for the metals. The Russell, yeah, you would expect a little more here. You would expect, to see what you're seeing in the S&P 500, the NASDAQ, clearing out of its recent range. It's just not doing that. So is it reflecting some of the fear in the market? There's a couple risk of things that could happen. What if prices start going up and now all of a sudden those rate cuts are pushed back even further into next year? Does firing Powell come back in a couple of weeks? Even if he did fire Powell, does that mean that, the FOMC board would actually lower rates? Probably not. So, I mean, it's the Russell is definitely, that's concerning. You would want to see the Russell joining to broaden out this rally a little bit. So is it telling us something? Is it flashing a cautionary sign?
Part of me thinks that this has to do with the sector weightings for the Russell. Energy is over 15. So energy is just basically 4.5%. Healthcare is over 15%. Between the two of them, you're looking at 20.15% of the entire index. So let's contextualize that. How's energy doing today? Well, crude oil's in the tank. Well, not in the tank. It's off by 0.3%. Natural gas is in the tank, down 7.1%. So not the best day for energy. And healthcare as a sector, XLV is down by 0.09%. It's in the red. So the energy ETFs are in the red. The healthcare ETFs are in the red. That's 20% of the Russell. That perhaps explains some of the drag. Whereas on the upside, you see some more of the consumer-friendly names that are doing well. Your XRT for the retail ETF, the XLY for consumer discretionary. Even semiconductors are poking up to new highs here, Thomas. So I think that's the explanation, right? You have this idiosyncratic issue with the Russell construction, but it doesn't give you confidence because this could be a left shoulder head, maybe right shoulder. Maybe that was aborted last week when we bounced off the trend line from the lows that we had in April and here in June. But it's still just a range. If you bought the dip near 2,200, good on you. But getting in long right now, you're in the middle of a range. Not great risk to reward. You're either waiting for 2,300 to add into longs or dropping to 22. And if you're going to get short, you want a little bit more of a rally to sell or wait for a break because we have not seen a significant break below the 1 month moving average since the end of April. I think you're just kind of stuck here. It's a 17.6 IVR. I understand the appeal of looking to this more than ES or NQ, but technically speaking, this is kind of a dud spot.
Yeah, you're right in the middle of that range, and you know, it's hard to play this one.
It's not easy. Hasn't been easy. I don't think I've made any Russell trades in a few months. Just haven't had a good read on it. Earnings this week, Thomas. Verizon was today. We have Coca-Cola, Philip Morris, RTX tomorrow. Wednesday, Google. TSM, IBM Thursday. Honeywell, Union Pacific, and Blackstone. Any of these tickle your fancy? I'm assuming it's going to be the Wednesday ones.
Yeah, I think Tesla, I still have a short put spread on Tesla. I think I'm going to keep that on through earnings. You know, their vehicle deliveries haven't been great. The political stuff with Elon Musk has kind of put a political branding on the company that has seemed to not shake off completely yet. So I think a lot of their conference call is going to be focusing on things like the robotaxi and things like that. The super value model car that's been promised for quite a while now. More details on that. But, you know, Tesla has lagged the S&P 500. It's lagged the NASDAQ. It's definitely has not joined the rally in any significant way this year. So, you know, could that be a sign that, you know, it needs its time to catch up? Is a good earnings report going to do that for it? Or is, you know, you get a bad earnings report and it's already, you know, kind of suppressed versus other stocks? Is there going to be a lot of selling in there? So I'm going to keep my put spread on and ride it through earnings, see what happens.
I think that makes a good deal of sense. Last earnings report was terrible and the stock rallied.
Yeah.
In part because we knew it was going to be terrible and it wasn't as terrible could have been. So this is a game of expectations. And I think the sentiment around Tesla is still pretty bad. I think you have a really interesting case here for maybe we're looking at a triangle that's getting ready to break out, which could go either way. But given the disposition of the market right now, one might surmise it could be an upside attempt. But if Tesla goes, then you're going to see XLY go. And if XLY goes, which, you know, we did clear out that pivot point. We've been trying to churn through for so many weeks now. We call it 218, 220. Low that you have here in January, highs throughout May. Pivot point last week. Kind of beautiful how that all worked out technically, Thomas. But in any event, XLY goes, then you're going to have the S&P go. You're going to have your NASDAQ go. So Tesla is an important building block for this rally, maybe going up another 100 points, another 150 points before things teeter out. Maybe it never teeters out, Thomas. Maybe it's 1998 all over again, and we're due just for a period of consolidation. And then S&P 6,700, 7,000. Why not? Why not? Got to get there eventually. Let's move on to bonds here, which are looking much better today. Interesting, as the Treasury Secretary tells us that the August 1st deadline doesn't matter, the bond market perks up. Maybe those two things are connected, Thomas. But for people who have been directionally neutral or taking on some long delta view vis-a-vis a short put spread, today's a good day. That's working out for me, both in notes and bonds, Thomas. What's your take here on this segment of the market as we start this week?
Yeah, I'm long both ZB and ZN, so today is definitely welcome. Still a little bit right on my positions, but a much different perspective on the trade than last week. So I'm going to be keeping those positions on, especially now since they're back near their purchase prices, and hoping that the yields continue to drift down a little bit lower here.
Tom and I were talking about this yesterday on First Call. It's not the best looking trade in the world right now because of the volatility. But when you take a step back here and you just consider the fact that we're going to have to change some of these colors. This is one of the reasons why I like nuking my platform every now and again. And then it's like, oh, I got to rebuild everything. C'est la vie. Okay, so we have our midpoint here. We're going to go yellow, 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 and then one more adjustment. And we're good. There we go. Okay. So we talk about notes and bonds, how being directional obviously is the more appealing move. I'm buying something, it's going up. I'm selling something, it's going down. Betting on nothing happening is not exciting. But that's been the best trade here in notes this year, because if you think about where the yearly high-low have been carved out in recent months, trading around 111.5 as a midpoint, it's been really neat. And I think that's the case here still. We're right back there. I'm at 32 days to expiration, so I have no reason to roll my position right now. But the question I always ask myself is, if I didn't have this on, would I put it back on today? And for notes, that's probably the clearest answer of yes, simply because of the setup that we have. And so consistent with that, if we went to 67 days, we look near the yearly lows, and we look near the yearly highs, we're still able to size up something in the neighborhood of a greater than 50% probability of profit, risking 2+ to make 1. If you want to go a little bit wider, you can do so. Maybe go to a 3-to-1 risk to reward, something in that neighborhood. But Thomas, the point is that this has been working, and until it stops working, I don't think there's a reason to get off that train. Got to keep it going.
Yeah, and I mean, the Treasury had a report last week. Foreign holdings for Treasury are back about 9 trillion for May. So we've kind of reversed a lot of those the preceding 2 months from before it, showing that foreign demand, especially in Canada. Canada now is a record amount of U.S. Treasuries. So, we've had the concerns around the new bill, the tax and spending bill, the deficit, everything like that. But all in all, it looks like, investors get a little spooked on Treasuries year, and now that demand is kind of normalizing to the trend that it was before that.
So notes still have something viable on the board. Bonds still potentially have something viable on the board. If we go out to 67 DTE, I'm looking at, again, the short iron condor here, in part because do I think we're going to break 109 anytime soon? No. We're going to get up towards 121, the panic lows that we had in April? We could. I don't think we will anytime soon. So thinking about that. That gives you a trade around here. If we were to do the same exact position that I have on right now at 67 days, it's right around 50%. You're looking at risking 1.6 to make 1. It's not a bad setup. And it's something to do where if the market ultimately does bounce back a little bit, right? Let's say we go into classic risk aversion, Thomas, stocks off, bonds up. You'd really have to get to a place where the market's pricing in like 8 rate cuts over the next 2 years to get a bond that's trading closer to 120. And I just have a hard time conceptualizing that right now while we have this tariff talk ongoing and this clear friction between the president and the Fed chair.
Yeah, this is The treasuries are going to be really interesting all the way through next week with the FOMC meeting. Earnings too impacts, good earnings. It could also support some demand for treasuries. But at the same time, you get some of the haven flows perhaps coming in before this August 1 deadline. So maybe we see treasuries rally up until August and then recalibrate. But that high from late June, early July is going to be the level that really gives us a signal if we're going to clear that or, falter before it.
Thinking about the range in bonds before we move over to metals, if we were to break through here, we're back above our 50-day moving average today, which is exactly where ZB is pinned, the midway point of the post-Liberation Day high to post-Liberation Day low. That's going to come closer to 115.5. So for me, as someone who is directionally neutral, if we get a rally into 115.5, I might use that as a chance to reset my strikes, roll out the position, depending upon how quickly we get there. It's a 19 IVR. I don't want to ignore it. The only quip is, of course, that tick size in ZB is twice the size of that in ZN, and ZN's already a fairly large product for retail traders. So if you're interested in ZB and you're trading on a smaller account, this is a future show, but we're also thinking about effective uses of capital. TLT might be the better product to execute something in the ZB realm, given it's a little bit more manageable, I should say. Thomas, let's go over to a part of the world that's also working out well for us today, which is silver. Silver just, if that keeps on giving. 39.33.5. Oh no, that's 39.35 now, excuse me. 2.3% rally on the day so far, Mr. Westwater. What a beautiful, could I say picture perfect lesson in technical analysis here, where we had this series of former highs, right? You go back to October last year, you have March of this year, we break through, we then carve out a new range, we break through, we go to former resistance turn support, and then rip. Couldn't have drawn it up better myself. So I suppose the rationale here, seeing as how last week we were saying, well, long silver until we break below 37.75 or so, this market's moving up in pretty clear technical steps. And so then I would posit once we get through 39.57, that becomes the new support level. And thinking about this measured move, we're talking about a target that could extend over 40 within the next few weeks.
Yeah, I really like the long on silver here. I got out of my long on silver last week, wanted to get back in. So I'm going to look at this recent swing high. If we break it, get long. If we don't, wait for it to maybe settle back more towards 38, then take a long position. But, if you're expecting yields to eventually come down, silver has lagged gold. Is it going to have its catch-up time? I think it's looking at a pretty good rest of the year. Today, definitely a yield-driven move, allowing some upside, not only in silver, but the rest of the metals, easier dollar. So, it's challenging these highs. I see the same thing. I see us getting to 40 and continuing to go higher.
So silver's working well. Like we saw when the market broke out in July, you get that bump in volatility. Okay, IVRs went from a low of 13 up to a high of 52.95. We've seen today volatility go from a low of 23.69 up to a high of 36.12. So you're getting that reliable rhythm in the metals market. Volatility pushing up as prices go up. It's one of the reasons why, if we're going to take structurally bullish outlooks on silver, Thomas, buying those out of the money calls, if the market does rally, you typically see not only price go up, but then the volatility expansion helps you as well. So it's a nice little 1-2 punch. Gold as well, bouncing off of its 50-day, off of its 1 month, off of its 1 week, and turning higher into the downturn, the descending trend line from the April and June swing highs. That's going to come closer to 34.25 over the next few days, and we're only $18 off that, so about 0.5% away. Is gold's multi-month period of consolidation finally ending? Has my multi-month period of buying out of the money calls and watching them expire worthless, is that finished? Give me good news.
I mean, yeah, that's what the technicals are showing us, some of this, coiling into a tighter range over time. But I don't know. I'm not as convinced on gold anymore as I am on silver. I just don't like the technicals as much. Undoubtedly, I think, if we do go into an environment where you're getting lower rates, you're fighting a recession in the economy, I think it can go higher, but I think silver is just the better right now if you're taking a long view on the precious metals.
You mentioned that silver is catching up to gold. Do you have any opinions on the gold-silver ratio at these levels? It's obviously no longer stretched above 100 like it was just a few weeks ago.
Yeah, we're around 91, 92, somewhere around there. Yeah, I mean the long-term trend, we're still elevated, to a lot of periods where we've been in the past. So yeah, I think if you're looking at the gold-silver ratio, it still has silver still to the upside, and gold could still do that. If you're expecting ratio to come down, you're seeing silver do it at a faster pace than gold.
Yeah, I think, I mean, silver's working. Can't hate on silver for working the way that it is. So we'll remain constructive there. Copper here is finally joining into the fray, and I can't help but notice that as copper is moving up on the day, crude oil is making a little bit of progress off of its lows there, Thomas. It feels like there's some growth flavor in the commodity market, if you will. Has the world fundamentally changed since Trump announced those copper tariffs, or do you think there are people who are still operating under the impression that those won't go into effect themselves?
Yeah, I mean, the thing is, a lot of people already made the movements in anticipation for those tariffs, right? A lot of stocks came out in the LME into the U.S. Some came out of Shanghai and went into the U.S., but there's a lot of in the U.S. right now compared to where we've been over the past couple of years. I'm long copper myself. I sold a put spread last week. I think it kind of looks like a little bit of a bull flag pattern. The thing is, you have to be cautious after these really big moves. It was like 11 or 12% move in copper last week or 2 weeks ago. And, there's some profit taking. You got a range started. Now it looks like we're starting to kind of edge a little higher. So with these flag patterns, you get a big move higher, you get some consolidation, and then you get a prior trend. So I'm playing. Of course, a weaker dollar, lower yields is going to help a copper trade.
Weaker dollar, lower yields helping the copper trade. I mean, it helps the metals in general. The dollar denomination going down makes the numerator go up. Can be that simple sometimes, Thomas. Energy, at least not smoked anymore. I suppose that was an exaggeration if you're thinking about the way crude oil is performing today. But we're not just focusing on crude. We are talking natural gas momentarily. Before we get there, though, Thomas, it feels like it's another day where we've touched our 1 month moving average in crude oil, which for the sake of this conversation, we've done so 1, 2, 3, 4, 5, 6, 7. 7 of the past 8 days, we've touched our 1 month. There's obviously a lot of items in the news about the Middle East right now, particularly what's happening in South Syria. But this doesn't seem to be pieces of information. These don't appear to be pieces of information that are ultimately going to accumulate into a new geopolitical flare-up that could potentially threaten global oil supplies, like an Israel-Iran conflict did. Do you find oil to be underpricing geopolitical risk here, or with volatility continuing to slowly burn off, we're now sub 20 IVR, is that to be expected?
Yeah, I mean, I think between 65 and 70 makes sense here. We've had things like, the European Union put on a new sanctions package towards Russia. You got Trump saying 50 days from a couple weeks ago. So, 4 or 5 weeks, whatever that is, for Russia to, the terms weren't that clear on what Trump actually meant. Do they end the war? Do they actually come to the negotiating table with a serious offer? it's kind of weird because you're getting, Middle Eastern countries, OPEC raising production, taking off those voluntary production cuts that were in place for the previous few years. The EIA, the crude numbers have been pretty good up until the last couple weeks. So it's the summer driving demand is over. I think a lot of this is going to go back to fundamentals, where the stocks are, seaborne crude flows, things like that, how much China is importing. I don't think crude has much of a reason to really rally from here without, something else happening. It's really kind of a range trade for me, anywhere from 60 to 70. I don't think we're going to move out of that anytime soon.
I don't think so either. This is another one of those positions, Thomas, where not a lot of convexity to it, but being short, directionally neutral, it's worked. The setup here is now a little bit different. We're looking at, say, 58 days to expiration at this point in time. But if we were to go wide to the 1 standard deviation move and think about a short iron condor where the strikes are 1 point wide, guts from the wings, you're still looking at a 64% probability of profit. The difference this time around, though, is instead of it being risking 2 to make 1, it's closer to risking 4 to make 1. Yeah. So the risk reward's a little skewed. It's off, right? If you go wide enough, you're going to get a trade where, yeah, it's probably going to work. Is this the best use of your capital? I usually use something like, is the max profit greater than the buying power that I'm trying to use to be the determining factor? And this is close enough where I guess I'll have to do it again. I'm not enthused by it, but it's one of those things where if it's working, I'm not going to stop. Kind of like in notes. Beyond that, I don't think you can take a directional swing from here. It's meandering. There's not much momentum or vigor.
Yeah, that's why I'm not in a crude trade right now. It's just really there's not a lot of setups that really great right now.
Natural gas. Last week I was kicking myself all week long that I shouldn't have abandoned my natural gas positions because it's 45 in, 21 day out, Thomas. And I just got cold feet. And then today happened, so I'm feeling a little bit less worse. I think that you've still been on the long side here, though. I switched to directionally neutral at the end of last week, and it's okay for now. I'm not thrilled with a 7% drop in one session. Do you find yourself looking at natural gas a little bit differently these days? Is it because of the weather? Is it because of tariffs and trade? What's the state of play in this market?
Yeah, so I was in the micro contract last week. I got out, so I did catch most of the move before this. I still have a short put spread. I think that's on at 3.2, so I have like 9 cents or something to play with. I don't know. I think I'm going to leave that on. The thing is, over the weekend, production figures went up. The weather models, they're still quite warm. They're supportive, but they eased up a little bit, especially in the Northeast for the U.S., where a lot of demand is concentrated. So that took a lot of, the bullish activity from last week out going into this week. So we need that support to come back from the weather models. Wind activity has been pretty strong lately, so that's displacing some of the demand for natural gas. The thing is, do we break the lows from earlier this month? That would be, that would put us in an area where we haven't traded at in quite a while. So, the move earlier in July was pretty all the way from June. And, it was kind of, there's profit taking down at that level. Down 3.2, you saw some buying 3.1. So this is a risky area. If you were trying to get long, I would probably wait for us to get more towards that spot that we were at, 3.15, 3.20, somewhere around there. But right now, with these big one-day moves, sometimes you see, or a lot of times lately, you see an extension after that. So I'm going to sit on my hands before getting long again, but I do want to get long once we get down at that between 3.1 and 3.2. I'll probably put back on a a long micro contract, that MNG.
One thing that's throwing me for a loop with natural gas right now is the fact that we're seeing this pullback when we get this aggressively warm forecast for most of the country. Most of the country may be a little bit of a misnomer here. Geographically, it's most of the country. Most of the country lives over here. So temperatures are going up for America, but not necessarily for the major population centers like DC, Philadelphia, New York, Boston. Those are all outside of the thrall of this gigantic heat wave coming in. And so temperatures are up, but not in the places that would stoke this pull forward in demand for natural gas. That might be in play right now. And if this can't produce it, right, then what will? So we're off 7.5% here. I don't know where this cheapness is coming from in prices. We just got our electric bill more than twice it usually is, thanks to the temperatures around here, which is just great. Love that. Fantastic.
Yeah, it's always nice to see the electric bill when it's on.
Yeah, and like I'm now doing things like, okay, no lights on during the day. Oh my God, I'm becoming my father. Oh my God. Okay.
Yeah, you'll save a few quarters there.
Yeah, right. Like, good job. We saved 84 cents this month by not having the lights on during the day. Here's a bad position. The yen. The yen isn't working out well today at all for us, in part because we have a Japanese election over the weekend where the ruling majority party, LDP, loses its control on the upper house. LDP and Komito have a coalition, but they're not losing power. So Ishiba remains as prime minister. The electoral wipeout that was feared never transpires. The yen's getting some relief out of today's session. What was driving the yen to this point in time, though? It was an understanding that maybe LDP gets completely wiped out, and then political parties who are pushing for deficit expansion and debt expansion in Japan, they want to cut consumption taxes. That has garnered some sway. And for a country with a debt to GDP ratio, 250%, Thomas, give or take a few percent, increasing your deficit and debt, it just raises the eyebrows of the market. And so over the past few weeks, we've seen Japanese long end yields really rally. They really moved up very quickly. And that's hurt the yen. So Japanese long end yields are coming in today, even though yield differential's closing. You're seeing that the yen is making its way to the top side. It's at 0068 here. Okay, so we get a little bit of a bounce near the swing low in March. We're rallying back up into an area where the market has found resistance previously. I think this is probably it. I'm going to remain short deltas in 6J. This is obviously not what I wanted to happen. It erases last week's progress. But nothing's really changed here. And the LDP is probably going to cave on some of these taxes now. So if we want to do a game of who's going to finance Japan's debts, and the bond market in Japan still wants to act like it's an albatross around the yen's neck, I don't think that's evolved. This is just a counter-trend relief. Do you agree, or am I just talking my book? Am I just talking my book to make myself feel better?
Yeah, no, you got me out of my long yen position 2 weeks ago, and it was good because I eventually would have been down on it. I think I'm going to buy a put spread here because I think you're right. I think this is somewhat of a relief rally. The political news, just avoiding the wipeout, gives it some, the bears some opportunity to recalibrate. But I think this is technically also a good point to get short because we're up against those support levels from May and June.
You talk about that being a good place for the yen. I think the dollar, broadly speaking, there's a case to be made that if the dollar rally is going to continue, it needs to stop falling right here. The swing lows that we have in April, they've been lining up very neatly here with this 1 month moving average. It produced support last week on July 16th. It's holding up thus far today. We haven't been able to crack through that 50-day moving average, a 50-day moving average that we couldn't crack through in May, or really late February when we fell below it. We haven't seen much elevation through there since then, if fleeting on May 12th, just that. So if the dollar is going to continue this move up, let's not fall back into the downtrend that defined us with the February, the March, the June swing highs. And if we fall back into that, then you say this is a false breakout to the upside. And all of a sudden, the best laid plans of a tactical dollar bounce, which it has bounced over the past 2 weeks, but that bounce probably done. Because if the yen is making its way up where it is, and you think about DXY, the constituents, the euro being 57.6, the pound being 11.9, and the yen being 13.1, we are talking most of the index, right? 83%. So we just got to be careful right now. As people who've been swinging the dollar long off the lows earlier in July, this is the test. This is kind of the final. And if we can't go from here, then maybe we're going to retest the lows in the US dollar for the year.
Yeah, I'm pound short. I'm probably going to get yen short. So I think, when you're talking about DXY, this is a level we need to hold. And I don't know if any economic news this week is really going to change the calculus for the dollar. I think it's going to be driven more on sentiment.
If we think about where the pound is, uptrend off the lows, January, February, April. Resistance last week on July 16th. We're running into the 1 month today and the backside of that trend line. The euro, very similar situation with that 117 level. There's a lot of items that look like they try to cross the barrier, try to cross the threshold. The euro's looking a little bit healthier than the pound or the yen. But when you see the euro leading like this, dollar doesn't feel so good again. It feels different today. And it's kind of feeling different in the way where it's good for the broader market. Dollar down, stocks up. Isn't that what we love? We want that. That's normal, I think. Well, anyway, dollars down and stocks are up today, so that's working for some.
Yeah, the euro, I don't know how the tariff deadlines is going to impact it. I mean, if anything, the August 1 deadline, the euro is perhaps more susceptible to that versus other currencies, but I think it's looking like a chart where it is staying relatively healthy. It's looking a few points, you were expecting a breakdown that didn't come, and now it's you start doubting if it is going to come. There has to be some kind of event that's going to maybe change this chart.
Yeah, well, Lutnick said yesterday that August 1st is a hard deadline. His exact quote was, so on August 1st, the new tariff rates will come in, but nothing stops countries from talking to us after August 1st, but they're going to start paying. So then Bessett comes out today and says, August, we're not just going to get deals done for the sake of getting deals done, folks. August 1st deadline, that's taco again, I guess. I don't know. I don't like that phrase. Either way, we're at the end of the show. What's next on the calendar? Calendar for tomorrow, Powell speaking. And again, if you missed the start of the program, we're in the Federal Reserve's communications blackout window in the 2 Saturdays beforehand from that Fed meeting. So July 30th, the 1 Saturday beforehand would be the 26th. And so then we have the 19th as when the communications blackout window starts. Fed officials are allowed to speak publicly, but they're not allowed to opine on current monetary policy or decisions that go into it. So if Powell wants to talk the profession of economics or talk about the state of the U.S. economy writ large, things that he's made public commentary about, fine. But if he says that the unemployment rate's 4.1%, so we're not going to cut in July, that's not allowed. I'd be very hard-pressed to think that we're going to get something market moving out of Powell's speech tomorrow. I know it's rated a high event because it's the Fed chair. Grain of salt. Otherwise, Bowman speaking, that's not Powell, and Bowman is still bound by the communications blackout window. Then we turn our attention to Lagarde. Maybe that's the one that gets the ball rolling for the currency markets, Thomas. We look to the euro there and the DXY. Beyond there, though, we still have an exciting day of programming coming up here on Tasty Live. You and I are out. Dr. Jim Schultz is in. We'll be back later today as well. Ilya's out this week, so you're going to be helping fill in here on Futures Power Hour and Overtime in his stead. I appreciate that. So I'll see you later on. But until then, Good luck trading, folks. Take a quick break. Grab some lunch, grab a coffee, do what you got to do. Come back. Dr. Jim Schultz with From Theory to Practice. Up next here on Tasty Live.
You can get up to $4,000 when you open and fund a new account with Tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tastytrade. Make your move.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Tastytrade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
I've been trading for 15 years now, and more than anything, what got me interested was just this kind of need to learn, really. You know, I started off as a chemist and engineer, and I love those fields, but you know, sometimes when you're doing an experiment, you can go months without anything changing, and you know, materially, I should say. Whereas with trading, every day is different. My favorite strategy really has become selling put spreads. Now that works in a market where we're continually going up, of course, but I love trading everything, and that's sort of a result of trading at a prop firm. We looked at the entire universe, as we say. So, no, I love to trade it all.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tastytrade. Download today.
Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. Welcome to the Monday edition of what it is that we are trying to do. And man, I do not have a clue what that might be. And I have a very, very low level of confidence that we will figure it out today. But we are here together. So thank you guys so much for being here with me. It is really only because of you all that we can do what we do. So thank you guys so much. If you're watching over on the Tasty Live Network, and it is live, it is real time, it is July 21st, right around 2 o'clock Eastern, give or take, then I would actually pop on over to YouTube, because you can join the conversation, you can join the discussion, you can communicate with your brethren who are also watching the show. Of course, you can celebrate if you're a bull, you can commiserate if you are a bear for the 29th day in a row. And if you have any questions for me, you can drop them in the chat box. And guys, I mentioned this last week, for better or worse, this could be a gimme in your eyes. It very well could be a gotcha. We are extra long today. We're going to be extra long all week. So we're going all the way to 3:15 Eastern, 2:15 Central, today, tomorrow, Thursday, Friday. Of course, on Wednesdays, I'm with Errol for today's assignment. There is no From Theory to Practice, because you guys get to enjoy the uptick that is Tom and Dylan for From Truth to Skepticism? No. That sounds pretty good, though. I think it's Truth or Skepticism is actually the title of the show. So Monday, Tuesday, Thursday, Friday, we'll be long to 3:15 Eastern, 2:15 Central. And guys, look, so we didn't go ghost today, because we're highly caffeinated. Don't worry about that. But we went LMNT today. So are you guys familiar with these LMNT drinks? I know they've had the sticks for a while. They've had the powder for a while. But we decided to find ourselves an uptick here at the Schultz household with the LMNT cans. And let me tell you guys something. It is like straight up drinking a salt block. It is like, it's got 1,000 milligrams of sodium in there. And so it's some good stuff, man. That is a black cherry lime. It's not as good as the citrus. The citrus is probably number one. I think there's only 4 flavors. I think there is citrus, there's black cherry lime, there's grapefruit, and then there's watermelon. They're all really, really good, honestly. The citrus is number one. The black cherry lime is probably number 2, and then grapefruit and then watermelon is probably going to be number 4. But they're all absolutely amazing. And since I haven't been able to lock down the Ghost sponsorship just yet, I think we're going to take a crack at the LMNT guys. So spread the word. It's some really, really good stuff. And since we are extra long today, we are going to need our electrolyte. So Josh, bring us into the market, though. Let's take a look here. Obviously went with the green polo today because why wouldn't I go with the green polo today? Even the S&P is up 35 on the day. Risk-free instrument doing risk-free things, up 187. That would be the NASDAQ futures. Extremely high-risk product. It is an extraordinarily high-risk product in theory. I must say that because that is my official stance. But practically speaking, man, it is printing like a US T-bill. Got the boomers up 235. Got the Russell 2000 futures index up 8 and almost 9 points on the day. Got bonds up a point. Man, everything is so good today. Bonds are even up a point. That's how you know it is some crazy stuff out there in the markets. Got notes up a little bit. Got oil down 11 cents. Got UB40. Look at UB40. Man, people queuing up the oldie playlists on Spotify and YouTube Music, kind of pushing those royalties into the UB40 estate. Got UB40 up over a point today. And then, of course, you got the shifties up another 49, almost 50 points. You got silver up 86 cents on the day. So silver looking good, gold looking good, you're looking good, I'm looking good. Man, everybody's looking good. Red Sox looking like they've got a little bit of life after yesterday's win, which was super, super nice. Got the British pound up, got the euro up, got volatility down, of course, because it's going to usually move inversely with the overall market. So that's what we would expect. Volatility futures down 20 cents. And then the spot volatility, VIX, is going to be down 4 cents on the day. So not quite as weak as volatility futures, but volatility across the board is contracting ever so slightly. And, you know, I talked about this a little bit this morning on the Skinny on Options Abstract Applications with Tom and Tony. That's every Monday morning at 8:40 Central, 9:40 Eastern. I do a show with Tom and Tony where we kind of try to push the boundaries a little bit. We try to push the boundaries in terms of, you know, abstract applications. I mean, it's right there in the title. We do it mathematically. We do it intuitively. We do it kind of, you know, just through using some critical thinking skills or whatever it might be. And today we talked about how, you know, volatility or the sensitivity to volatility decays over the course of a position's life. And so this is something that, in my opinion, really kind of supports and lends a lot of credence, lends a lot of weight to the first half of the cycle being so powerful when it comes to, you know, being a premium seller. The 8 of 45 out of 21, which is where we generally make our bones. That's essentially going to be the foundation of all the other things that we might be doing. 0 DTs, you know, 1 DTs, you know, trading Powell's testimony tomorrow morning at 8:30, which of course we're going to do. Which is he going to give the testimony from prison? Like I just caught something that just came across the wire like maybe 45 minutes ago. He's getting rung up on charges. And it's not like it has nothing to do with like his job. It has to do with like I think he put like some terrazzo in the, you know, the Federal Reserve HQ, and he's getting rung up by the administration. Like that is some crazy stuff, man. Is that real? Like I don't know what to believe. I mean, obviously I was knee deep in some subreddits. I mean, that's where I got my information because that's where everybody goes for quality information. So you guys need to let me know. Was Johnny Pools 47? Was he kind of leading me astray? Or is Powell seriously about to have to do the testimony tomorrow morning at 8:30 from a jail cell? So guys, let me know what's going on. Maybe we'll trade that tomorrow. We got so much time today. We got the extra wide lanes. You know, we might as well just utilize that time. But right around the halfway mark of the show, so probably around 2:30 or so, I'll probably go ahead and get to the questions, get to the YouTube chat. We may go ahead and, you know, call for the pen early, depending on how the rest of the wind blows us here in the portfolio. But, man, I see you guys in the chat, though. Man, look at you guys. You guys came to play. You've obviously got your own LMNTs. Daniel Perkins, Sam L, Scramble Everything, Daniel Rooney. Man, look at Luke. Look at Kiosh in the house. Joel James in the house. Man, Emmett Morrison in the house. Man, look at you guys, man. Jackie W's in the house. Arjun Purr, Dad, Grumpy Mike's even here. right? Wow, good stuff. Brian Dowdy's in the house, man. Trouble T. Roy's in the house. Man, good stuff. I'm going to get to as many of you guys as I can here in the next couple of minutes. All right, let's take a look at a few things going on in the portfolio. Let's just go top down. Let's just kind of work through what's going on in the portfolio. We don't have that many positions. We only have 1, 2, 3, 4, 5, 6, 7, so it's not too many. So this should take us, we'll have you guys out the door in no more than 51 minutes. And by no more, I mean no less than 51 minutes. All right, let's talk about Best Buy. So this was a busted earnings trade that is becoming more and more busted by the day. You've got Best Buy at 66 and some change. We have 100 shares left over. This was from, man, I can't even remember. I think it was like a ratio spread for Best Buy earnings, and it just got busted. It just got completely kind of blown to smithereens, and we just hung on. Like, we hung on to the trade, and, sometimes you do that. Sometimes you decide to inventory a position. Sometimes you decide to cut it loose. I mean, it's kind of, when it comes to earnings trades, in my opinion, it's going to be your call at the end of the day. It's very much a gray area. One of the things about a put ratio spread, a short put, a strangle that gets tested on the downside, these are all going to essentially fall into the same category, is you have, in my opinion, one of the biggest advantages that you have as a premium seller, which is if you have a long-term bullish view on the market, which I think most people have. You might have a short-term bearish view. You might even have a medium-term bearish view. But I think most people that have been trading for a while recognize the power of, economic growth. They recognize, the power of economic innovation. They recognize, the power of Uncle Jay's printing press. Like, these are powerful things that will oftentimes, kind of propel the market higher. And so it makes a lot of sense to have a long-term bullish view on the market. So if that's the case, then if you run into an index or you run into a stock on a strategy like a short put, and the short put goes in the money, you always have in your back pocket, hey, I'll just take the shares. I'll just take the shares and hold the shares and play this thing to the upside and just inventory that position. And I think that's an incredibly advantageous thing that you don't always have with every other strategy, especially not with bearish strategies where you're kind of playing short calls or short call spreads or whatever. That's a much harder trade to inventory for a long time because, again, these bull markets, this is an incredibly resilient bull market. This is an incredibly strong market right now that it doesn't seem to matter what happens. It doesn't seem to matter, what the market what the world, what the economy throws at the market just takes it in stride. And so that's, obviously one sign of incredible strength kind of, underneath the hood. Now, of course, a lot of people are saying, Josh and I were kind of talking about this before the show, and we both kind of feel the same way. It's like, it's any day now. It's any minute now. Like, they're going to pull the rug out from underneath this whole thing. And so that means if Josh and I are on the same side, we got at least 6 months of additional upticks in the market. So, all right, so Best Buy, I don't want to wave the white flag just yet. Let's sit tight and let's kind of see if we can't get a little bit of upside movement. But again, yeah, that's good stuff. The blockchain line is some good stuff. But again, remember, if you want to hold, a short put, an in-the-money short put, let it get assigned into long shares. That's totally fine, especially if you're talking about a stock that you like, or you're talking about an index where you're just going to play this thing to the upside over the long haul. So that's Best Buy. Going to DIA, just going down the list here. Oh man, the boomers. Have they ever let you down? They've never let me down. Like, has a single boomer ever let you down? I don't think so. Look at this, man. A long call spread, boomers up another 234 and, 440, 445, bought the spread for 304. It's marking for 343. This is it, man. The boomers, they just find a way to get it done. Like, they don't say very much. They're not big talkers. But they're just all about the results, man. They're just all about production, right? And so with DIA here, it's looking good. I'm not going to take it off yet. Let's let it continue to cook on the back burner there and see if we can't squeeze out just a wee little more profitability on the strategy. So ETHA, this is our Ethereum ETH, or ETF, I should say, that we put on. I think we just did this on Friday. I think y'all kind of you guys persuaded me into this position. And so far, so good. Obviously, Ethereum up $1.80 today, or at least ETHA is up $1.80. Ethereum itself is, how's Ethereum doing? Okay, so Ethereum's up. Yeah, it's up $12 on the, the straight, I don't even know what you would call that. The asset? Yeah, I guess it would be the asset. Wait a minute, crypto, are those liabilities? I don't even know. But anyway, ETH. I just upset a lot of crypto bros and bro sets with that comment. But I don't know, man. It could be an A. It could be an L. Could even be an E on the balance sheet. I mean, who really knows? But ETH up $11 on the day. And so ETHA, the ETF that we're using to sell puts and kind of take the upside so we can kind of be one of the crypto bros for a short period of time. It's good stuff. We're up about 45 cents on the trade, so we'll sit tight and we won't do anything just yet, but we're off to a really, really good start on the position. And then GDXJ. This was a straddle that we put on. So we don't do too many straddles. Normally, straddles become something that we end up adjusting into after a strangle doesn't work. I don't usually start positions in the straddle position too often, but that's not necessarily because it's a bad strategy. I think it's just, you don't have as many outs. It's not as clear what the pathway forward through the forest looks like when it comes to a straddle because you have that shared strike. I mean, you can see it right here. We've got the 69 strike where it's like there's no wiggle room, man. Like one of these sides is always going to be in the money. And so that can be a little bit more problematic, a bit more challenging to adjust over time. It doesn't mean it can't be done. It just means there's a few more challenges and maybe a few fewer adjustment opportunities relative to what you would have with a short strangle. And so for us right now, it's working out quite well. We're up about 70 cents on the trade. I'm not going to take it off yet. I'm going to be looking for 588. I'm going to be looking for about 25% of max profit. So what is 25% of 588? Can I text Julia really quick? Maybe we can figure this out. That looks like about, what is that? I'm going to say it's about $1.30 maybe. That feels a little bit low. Maybe $1.45. Yeah, it's somewhere between here or around here with some live on the spot math in front of you all. So we're somewhere around there, $1.30, $1.45, give or take. And so we're not quite there yet, obviously. We're only about halfway there. And so I'm going to sit tight. Let's kind of hang, just hang tight on this position and not do anything. So that's GDXJ. IWM, this trade is working quite well. We haven't taken any heat on this trade. I mean, this is how you draw up a short strangle. If you're brand new to the show, if you're brand new to selling premium, hey, welcome aboard. I'm really glad that you're here. You're in a really, really good spot when it comes to active traders that are trying to find a way to, put yourself in a favorable position when it comes to risk return. That's essentially what we're doing. And we have different ways of doing that. Sometimes it's volatility. Sometimes it's time. Sometimes it's delta. Sometimes it's just a straight fade of whatever Tom's doing, which is probably the number one go-to strategy that we should all be utilizing on a daily basis. But whatever it looks like, we're all essentially trying to improve our risk return profiles. That's what we're trying to do. And so if you're brand new, when you sell a strangle, you can see right here my strikes are 199 and 235. You've got the index at 222. We have taken no heat on this position. Zero heat on this position. I mean, this thing is ice cold. If I go into, if I bring up my chains here really quick, you can see we did this trade. Yeah, it was a few weeks ago. I think 3 weeks ago to the day, actually, June 30th. We sold a strangle for 282. And so now if I go to the chart, then, and the strikes are 235 and 199. Let's just take a look at this. So 630 was when we put the trade on. So we did the trade right here. So right in this tiny little candle. So we did the trade right here. So let me go ahead and I'll circle with Diet Strawberry, the candle where we did the trade. The strikes are 199. So in fact, you can't even see them on the screen. Like it's not even like we have been, again, it's been ice cold. We have taken absolutely no heat. No heat. The strike is like 230 something on the upside and 199 on the downside. So it's even higher than this top line and lower than this lower line, this bottom line. And so you can see right here, all of this kind of back and forth, all of this chop. I mean, it's perfect. This chop suey is exactly what you want with a premium selling position. With a short premium position, you want back and forth. With a short premium position, like you want the thing to just kind of meander around and more or less exist without obviously getting close to the upside or close to the downside. And so for IWM, this has been perfect. There's really not much more to say about this. I mean, I can find a few more minutes if we try. It wouldn't even take that much effort. But I think we can move on. I think with IWM, we're in a pretty good spot. We're up about $1 on the trade. And, right now, too, another thing, and so here's an interesting point. So one of the things that a lot of people are asking me, I'm a little bit behind on email, so if I haven't gotten back to you, just give me like another day and I should get all cleaned up on the emails. But, one of the questions that comes up very often in markets like this, and it's come up a lot over the course of the last, 9.5 years I've been at Tasty, is what do you do when volatility is low? Like, what do you do when volatility is low? There's not much to do. Like, it's difficult to find opportunities, which is exactly the environment that we find ourselves in right now. Well, here's an idea, and I don't know how I feel about this. This is straight stream of consciousness that's just popped into the noggin. I'm giving you guys totally unfiltered thoughts. What if, when you're in low volatility, like we are right now, what if this doesn't lead you to holding on to your positions that are working at least until they hit the original profit target? Now, if you don't want to go beyond the profit target, I think that's probably wise. I think that's probably smart. I don't think we need to get carried away here. I don't think we need to start talking about, well, instead of going for 50%, let's go for 55 or 60 or 65. That's burned me more times than I can count. And so I would absolutely not encourage you to do that. I think 50%, if that's your original profit target, is a good marker. 25% on something like a straddle, I think that's totally fine. But oftentimes we're met with situations where I sell a strangle or some short premium position, and it starts working really, really quickly. Like within just a couple of days, 3 days, 5 days, whatever, it's already hit 30% of my max profit, or whatever the number may be, some impressive number. Should I stay or should I go? This is something that the research team has looked at many, many times. I don't think that there is necessarily a definitive answer. I do think that when it comes to, quote unquote, optimization of your portfolio, with just the X's and the O's, with like in a textbook, in a vacuum, whatever, taking it off early and redeploying the capital may have a slight edge over holding the trade. But if we think outside the box a little bit, right now it's very difficult to find opportunities to redeploy that capital that aren't associated with earnings. And that's totally fine. I mean, we've got so many earnings coming on down the chutes. We're going to talk about these in just the next couple of minutes. But it's like, man, I don't know. Maybe right now, like in a situation like IWM, this is a great example, right? You can see I'm up $1 on the trade. I'm close to my profit target. You could make the case, Jim, take it off. Jim, take it off, book the profits. You would hate to get tested at this point in the strategy, whatever. That's totally fine. But it's like, man, there aren't too many good opportunities to redeploy the capital right now. So I'm kind of thinking maybe we stay in the trade. I mean, I probably would have stayed in the trade anyway, because that's generally how I trade. If you follow me for any length of time, you know that I generally stick to my profit targets. I'm open-minded. I'm willing to change. I'm willing to adjust my position, and so take things off early when they're like really profitable after only a couple of days. That makes a lot of sense to me too. And so we're kind of, we're on this journey together. We're exploring together. But when it comes to a situation where volatility is so low, it's like, man, I'm already in a really good spot. I haven't been tested. I have moved a little further down the decay curve. I already have a little bit of cushion in terms of the profits I've built up. I don't know, man. It really makes sense to maybe put the should I stay or should I go type of mantra on the shelf and stick with the original profit targets a little bit more often and more consistently. Again, I hadn't thought about that until 3 seconds ago when it popped into my mind. But I'm like, that's not a half bad idea. Now, it's a little half baked, but it might not be half bad. And so for IWM, those are a few thoughts, a few unfiltered, authentic thoughts that may or may not serve you. SBUX. So Starbucks, let's look at Starbucks here. You've got our investment style covered call that we have on. We've got long 100 shares, and we're short the 105 call. And the 105 call, it's doing pretty well. I mean, we've picked up about 65 cents on the short call that we have sold against the shares. I'm going to leave it on for now because there's still so much room between where the stock is now and where the strike price is. And remember, and I've said this all along the way, we've had this position on since late December. And so this has been an incredible case study in kind of an investment style covered call, something that's intended to be longer term. This is not zigging and zagging. This is not in a 45 out of 21. This is a completely different kind of paradigm when it comes to what you're trying to accomplish. Because of that, I don't think you need to be as quick on the trigger with taking off the short calls when they start to produce some level of profitability. When you have just a short premium position in a 45 hour 21, whatever, that's a little bit different. Like you can be a bit quicker. Should I stay or should I go? 50% of max profit, all those things. When it comes to an investment style covered call, I kind of like to get most of the juice out of the short call. Doesn't mean I plan on staying all the way to zero because you'd have to go to expiration to do that. But man, I mean, we sold this thing for $1.90. If I can buy this thing back for 40 cents, I'm probably going to do that. If I can buy this thing back for, 48 cents, I'm probably going to do that. If we come on the show one day and it's marking at 35 cents, I'm probably going to buy it back. But at $1.25, $1.18, $1.06, it's like, all right, there's still a lot of juice left in that orange. And it's protecting my long shares to some degree. And so I'm not necessarily in a hurry to take that guy off. And then lastly, we've got TLT. You can see we have a short 86 put here. Obviously, the big rally in bonds has kind of breathed new life into this position. And so right now we're going to sit tight. We'll do nothing. We're at 21 days to go later this week. And so we'll deal with this at that time. But there you go. There's my portfolio. We basically just, that was 21 minutes. We haven't done a single thing. So let's change that. Let's change that with, guys, let's look on down the chutes here. So if you look at the earnings, we're just on the Tasty default watch list, although we should probably click on Tom's watch list. Just because, again, remember, guys, there's an 18-cent royalty that goes to Tom right in his pocket every time you click on Tom's watch list. And I've said it before. I'll say it again. The second Range Rover ain't going to buy itself. So the Tom's watch list click is helping to contribute. If I go to the earnings that are coming up, you can see that, Tom's got all the same guys that are on the Tasty default watch list with some additional little extras, a little Capital One Financial, a little COF, a little GM. GM, is that General Mills or General Motors? That's General Motors, right? Yeah, that's not General Mills. General Mills is also a stock. Is it part of a bigger company? I don't think so. Hold on. General Mills. Oh, wait. I don't think you can. I've never really. Hold on. Oh, there it is. Yeah. I got it. Look. Boom. There it is. GIS. That's what it is. Okay. GIS is General Mills. And so GM is obviously the car company. You've got GM has earnings tomorrow morning. I'm not going to mess with that. Capital One Financial has earnings tomorrow after but I'm not going to mess with that either. Because coming on down the chutes, look at this. We've got the four horsemen, most likely of the apocalypse. I could see that, man. I could see the NASDAQ down. Guys, it could get nasty. I could see the NASDAQ down 60 points this week. I could see it. I know it's low probability, but man, I could see 60, 70, maybe 82 points. That would be nasty. And so 723, you can see there's some earnings coming out. We've got Chipotle, Google with an L, which also means Google without the L. They kind of go together. IBM, and then Tesla. All of those guys are 723, which of course is Wednesday. So that means that I will be trading these tomorrow. I don't want to do them today because we've already gone through the portfolio. We'll earmark most of our time tomorrow to doing earnings trades, probably in at least 3 of these 4. I'm almost definitely going to be trading Google. I'm almost definitely going to be trading Tesla. And then IBM and Chipotle, maybe we'll do both. Maybe we'll do neither. We'll probably do one of the two. We'll see. We'll see where the wind blows us tomorrow. But we got the 4 horsemen of most likely the apocalypse. Again, 50, 60 points to the downside in the NASDAQ. That is going to scare the children. That is 100% going to scare the children. That would put you like 30 basis points off of all-time highs at that point. That would basically be similar to 2002, 1987, things of that nature. And so 723, Chipotle, Google, IBM, and Tesla. We're going to do all that stuff. But man, tomorrow morning again, could be from cell block C, right? We got Uncle J. And so, man, what if we go into SPX? Did he get rung up on charges? Help me out in the chat. Did you guys say anything? I can't scan through all of them. Man, you guys are talking about all kinds of crazy stuff in the chat, though. I don't see anything as far as the Uncle J charges or not charges. But let me know, because I'll look at it after the show, even if I don't get to you. Let's see. But I'm very curious where you guys are at, because I trust you guys. Well, I trust you guys about the same as a subreddit. Actually, it's pretty similar in the trust level that I have with your comments and your stories and jokes and questions. And so, but that's all in good love, of course, because you guys should trust me about the same as a subreddit. So if I go into SPX, so I'm not going to do 0 DT, of course, because that would be today. That wouldn't make any sense. We're going to do a 1 DT, but we're going to mix it up. So again, you got to shock the muscle, man, right? If you're looking for growth, if you're looking to make progress, you got to shock the muscle. Obviously, it's Monday, so it was chest and back day for everyone, including myself. You got to do some crazy stuff, right? Like you got to do some unilateral stuff. You got to get in there, and you can't let the muscles know what's coming. It's got to be a surprise. And by that, I mean that's probably the worst way that you could train. You got to have consistency with what you do. But if you go into SPX, you've got the stock at 63.30. So I really think we could do a butterfly, of course, right? And I mean, I can smell the smoke in the air already. But instead of doing that, because we're going to do a bunch of those for the individual stock earnings that are coming up on Wednesday, and then, of course, even after that, you've got Apple, Meta, Microsoft, whatever. Let's do just a straight, plain vanilla Betty Crocker vertical spread to the downside. So what if we just do overnight play? This is basically going to be based on Powell's testimony. Again, I mean, I don't know how else you could possibly look at this other than the four horsemen of the apocalypse are indeed on the way, and Uncle Jay is going to kick it all off. Especially if he comes out, again, it could be orange jumpsuit, so we may not even have a chance to debate tie colors. But if he goes with fire engine red, again, if he goes like neon green, if he breaks the purple tie cycle somehow, that's gonna be pretty wild stuff. Of course, he's gonna go purple tie, but man, if he really kind of, I mean, let me think here. We've got I'm pretty sure. In fact, I'm like almost 100% sure. We've got Powell tomorrow morning. I don't even know what he's going to say. It's whatever he's going to say. It's just on the calendar. So I'm like, okay, I kind of want to be aware of what's going on. But then next week, I think next Wednesday is FOMC, right? So we've got Uncle Jay tomorrow. We've got Uncle Jay next Wednesday. And so, man, there's a lot of Powell coming on down the chutes. But I think for tomorrow, I feel pretty good about this trade. So you guys know what to do. If I do a 63.40, 63.30, if you're brand new to the show, by the way, that means you should do the opposite of what I am queuing up right here on the show. Because my track record, it's not so great. Let's just put it that way. So 63.40, 63.30. I think I do okay with regular trades. I think I do okay with kind of in a 45 out of 21, kind of your meat and potatoes, your oatmeal and peanut butter. But when it comes to the binary events, I don't know. I don't know how we're doing. I think maybe we're doing okay because, I mean, we're having a decently profitable year. But yeah, I feel like we're on a bit of a cold streak with these binary moves. So 63.40, 63.30. Vertical spread to the downside. This is intended to be an Uncle Jay play. So, if it works in the morning, I will most likely manage this guy at some point before the show. If it doesn't work, then you guys will see this on the show, and we will all put it out to pasture together as it just kind of drips off into the sunset, and our 475 just goes along with it. And so I think, this is basically. This is a really nice trade, though, honestly. So let's talk about this for a couple of seconds. So again, I don't know what's going to happen. Nobody knows what's going to happen tomorrow. It could go up, it could go down, it could go sideways. Nobody has a clue. But I think, all right, we're obviously overstretched to the upside. Now, the momentum bros are like, hey, this is only the beginning. Like the next stop is 6,500, then 6,825, then obviously 7,000 and all those things. I understand that. But if you're kind of a short-term contrarian trader, it's like, well, you're certainly not selling the bottom if you get short right now. Even for a small play, a medium play, big play, whatever, you're not selling the low tick, that's for sure. And so when it comes to tomorrow, though, if you look at this actual trade and dissect it a little bit, number one, you can see that it's a $10 wide spread, right? So 63.40, 63.30. The index is at 63.32 and some change, of course. It's moving as the markets move. One thing to remember is this 63.40. Let me grab some Miami Dolphins teal here. This 63.40, this strike of the at the money vertical will already be in the money. And it's going to be in the money by whatever the amount is, the difference between the 63.40 and whatever the current stock price is of the index. And right now it's 63.32. So that's about $8. It's a little bit less than $8 because of 63.32 and some change. But let's just call it $8 to make it a bit simpler. I have $8 of intrinsic value already baked into the center of this spread. I'm only buying it for $4.80. And so that's a pretty nice trade from the standpoint of, kind of having things working in your favor in the short term potentially. Now, is it that simple? Is this always going to work? Sadly, no, especially given the fact that I'm on this trade. That docks the probabilities by about 3 to 5% in the official scorecard. But when you look at the pricing and you look at the intrinsic value It's a solid looking trade. It's a solid looking trade because it's like, man, I am getting into a position that has $8 worth of intrinsic value, and I'm only paying less than $5 for this position. That's a pretty solid setup. Now, what's the gotcha to this? Well, the gotcha is, don't forget, the markets want to go higher over time. So on any given day, right, any given Sunday, for my Willie Beeman fans that might be watching the show, it's 53.47. 53% to the upside, 47% to the downside. The research team has looked at this ad nauseum over and over and over again. And so that's part of the reason why you kind of have, the tide working against you. And so you kind of, are able to make up for that a little bit with some more favorable pricing. And I mean, now look at this. Now it's like $9 in the money. This is crazy. We should have put this on, 6 minutes ago when I started yammering on about it. But so let's get this guy. It looks like we're going to pay about $5 for it now. But again, now we're like $9 in the money. So the $8 is old news. We're $9 in the money. I will gladly pay $5 for this trade. $4.95, whatever. All right, so we got filled at $4.95. And so that's going to be our trade for tomorrow. And again, this is an overnight play. This is a binary event type of trade. You should find a way to do the opposite. All the things I've mentioned many times before on this very program. All right, so that's SPX. We talked about earnings. And, man, let's go to you guys. Man, where are you guys at? So let's see here. Let me go ahead and do – let's see here. Where are you guys at? You know what? I'm going to surprise and delight somebody. And it happens to be somebody closer to the end. And so usually if you're brand new to the show, hey, welcome aboard. I really hope you get value from my show. I hope maybe you crack a few smiles. I hope you get, all the things you're looking for out of this program. And I thank you guys so much for being a part of what we're doing. What I try to do is I move through the comments sequentially. I am notoriously long with my answers, but I try to be complete. I mean, you guys have come to me. You've come to know me for that. I'm somewhat known for that, so I'm not gonna stop doing that now. And so I go through fewer comments than maybe some of my own brethren might do. And also tangents very similar to this one don't necessarily help. But I usually like to start the show by surprising and delighting someone in the middle or maybe close to the end of the chat that may not otherwise get, reached if I move through it chronologically. And so today, and if I happen to see a name I don't recognize, sometimes I prioritize that name. So I see Rex Kramer is in the house. So Rex Kramer 22 is in the house. I appreciate you, Rex Kramer. So Rex Kramer says, hey, Doc, when you like a stock, what's your strategy on a covered call when it gets way ahead of you on a big move? Obviously, you mean to the upside. Just roll out as far as possible or something more creative? Okay. So this is a great question. So first of all, Rex, if you are brand new to the show, hey, thank you for being here. I would strongly encourage you. Let me go to the activity tab. For those of you that have followed the show for a regular period of time, please bear with me for a couple of minutes. I know I've looked at this recently, but Rex might be brand new, man. This might be his first time on the program. So I'm gonna pull up all the activity for my Starbucks investment style covered call. So while this is on the screen, Rex, take a screenshot of it. Take a quick screenshot so you have all the dates, because one of the things I do with this show is I do all of my trading live on the show. And so any trade entries will always happen on the show. Sometimes trade exits might happen earlier in the morning because of Uncle Jay, because of binary moves, whatever. And then if I do take it off before the show, I still try not to. But if I have to or feel like I want to, then we talk about it on the show. So don't worry about that. There'll still be plenty of time to go over what might have happened in that position. But right here, if you go back and you watch all of these shows, right? So, I mean, you just got to find an extra 8, maybe 12 hours. Right? If you watch all of these shows, then you will see all of my analysis around this investment style cover call. Now, the reason why this is important, and it's related to your question, is you were asking specifically about what do you do when the stock gets away from you to the upside, I assume, and the short call is getting kind of deep in the money. Well, that actually happened to us in Starbucks. It was early on. It was probably in one of these March or April shows. And so if you go back here, you're going to find some commentary. Now, it wasn't super crazy. I think the strike was like 110 and the stock got up to like 117 or something. So it wasn't like strike at 110, stock at 140 or something like that. So it maybe wasn't as, I don't even want to call that dire, because that's a pretty good spot to be in. Obviously, it's a high quality problem, but it wasn't that far stretched. So it kind of made the decision-making process a little bit easier, in my opinion. Okay. So go back and watch those shows, because it'll kind of build on what I'm going to say right now. So what do you do when the short call goes in the money? Well, first of all, it's important to remember this is a good situation to be in. And so a lot of people that trade covered calls and a lot of investors that use covered calls for whatever reason, there's a number of reasons you might use them. But, if you're selling a call against a stock that you like and the short call goes in the money, this is not a bad outcome for you. And so it's very important to even if it goes super deep in the money, right? Like I sell this 105 call in Starbucks. Starbucks has earnings in like a week or two. If I leave this on in its current form and Starbucks skyrockets to 130, that's not a bad outcome for me. Now, obviously you could make the case, hey, you should have just held the stock. The opportunity cost, the short call cost you. Okay, I suppose that's all true. But man, it's easy to say that now when it's super deep in the money and nobody knows what's going to happen, right? If Starbucks had crash, boom, bang down to 80, you'd be pretty glad that you've been selling calls against this guy, since December or whatever. And so it's always crystal clear in the rearview mirror. So keep that in mind. If the short call goes in the money, this is a good situation. So that's the first thing to understand. Okay, now let's go one step further. What if it goes slightly in the money, like you're going to see in Starbucks, slightly in the money or even a few points in the money? It's very important to remember that doing nothing is a strategy, that you are in a good spot to where there's still a good amount of extrinsic value in that short call. So just sitting tight and seeing if the stock doesn't cool off a little bit to where now the short call moves back out of the money, because that would, of course, be the best case scenario for you. The stock runs up to the short call and just sits there. I usually like to just sit tight and not do anything, understanding that A, there's still a lot of extrinsic value in the short call. So that means B, or I guess like B and C, number one, the short call still can provide a lot of value as time goes on, the extrinsic value goes down. But also, I guess that would be B. And then also C, because there's a lot of extrinsic value in the short call, I hope you can kind of follow me verbally through the forest here. That means that the likelihood that that short call gets assigned is very low. Because remember, the other side of the contract, the long call holder, if he or she chooses to exercise, then he or she loses the extrinsic value that is in the contract. And so this is why when it comes to assignment risk, one of the things we're always looking at is how much extrinsic value is left in that short call. Now, again, when there's dividends in the mix, it's a little bit different. It's the same basic idea, actually, but that's a separate thing. So let's not focus on that right now. So if it's just a little bit in the money or like modestly in the money, then doing nothing is usually my favorite go-to move. What if it's super deep in the money? Okay, now you have to kind of make a decision. And I'm just going to get you started on this because I want to make sure I get to other questions and comments. If it's super deep in the money, essentially, you're going to want to start rolling that call up and out. Now, you even mentioned kind of in your question stem there, do you just roll it like way out in time? You could do that. You could roll it way out in time to kind of, maybe not have to pay too much of a debit or even collect a credit. And you're like, hey, I'm just going to hold on to this position for a really, really long period of time. You could do that. Usually, I like to just slowly kind of ratchet up that short call. I'm not normally in a hurry to roll it up to where now it's at the money or out of the money. So, for example, let's take Starbucks since I had that position in the portfolio. Let's say Starbucks has earnings in the next week or two or whenever it's going to be, and it shoots up to 125, right? Just a crazy move higher. And I want to keep this position on. I sort of hope this happens because then the case study will take a brand new turn and we can do this together for the next 6 to 16 months. If that happens, normally I will not pay a huge debit to roll it all the way up to the at the money strike. I feel like you're chasing at that point. I feel like you're kind of, it's really not that different in my opinion than like, you're playing the market to the downside. The market goes up a bunch and you're like, I was wrong. I'm flipping over and I'm getting long. It's kind of like that where now you're buying tops and selling bottoms. And it's like, man, that is not what we're trying to do, at least not on this network. Again, the momentum bros and momentum bro sets are going to get upset with you and upset with me and whatever, but that's just not what we're generally doing here on the network. And so I don't like to do that. I would probably more slowly roll it up from like the 105 strike to like the 110 strike or the 115 strike and maybe pay a modest debit or maybe add enough time to where it's like a wash or something like that. Understanding that every time I roll the strike up, I'm not only collecting more extrinsic value because I'm closer to where the stock is, but also I'm buying back intrinsic value that I would otherwise lose out on, right? Because right now, if I'm short a 105 call in Starbucks and the stock goes to 125, I'm missing out, quote unquote, on the $20 of intrinsic value between 105 and 125. Well, if I roll up the short call from 105 to 115, I'm buying back $10 of that intrinsic value. Now, of course, that's not going to be free. It may cost me $8 to do that, but I'm still putting myself in a better position. And I still have downside protection all the way down to wherever the short call strike is, which in my opinion, after a huge run, especially in a stock like, Starbucks, that's essentially been around forever and likely will be around forever, that makes a lot of sense to me. So, Rex, hopefully that helps. A very long answer to a great question. And I wanted to spend a lot of time on that question because A, Rex is brand new, so maybe we can persuade him and kind of trick him into coming back. But also B, I know that question and hopefully my answer is valuable to a lot of you out there because you guys are trading covered calls. You're doing covered calls. It's a big part of what you're doing. Everything you do is not in the active space. Everything you do is not selling straddles in gold and selling straddles in Bitcoin or whatever. Probably shouldn't sell straddles in Bitcoin, but you guys know what I'm saying. Like it's a mix. Like it's a mix of, some kind of passive and some kind of more active. All right. So where are you guys? Let's go all the way back to the beginning. Remember, we're like almost done with the show. That's crazy. That's really crazy. You know what's funny? So if it was a regular show right now, we would be done. I would be starting my outro to get you guys to Jamal. But because we are extra long today, I should be able to get to one, maybe two more questions as I go all the way back to the beginning. But I appreciate you guys. And you guys, I mean, this is just, I don't want to do shotgun style. I don't want to just kind of, just burn through a bunch of questions and not give you guys my full thoughts because I just know as an educator, when one person asks a question, there's a really good chance, especially we've got, however many hundred people watching the show right now, 500-600 people, whatever. I can't see it on my screen, actually. There's a good chance that another handful of people, half a dozen people have the same question or something similar enough to where a longer discussion around that question is worthwhile. So those are my thoughts. But let's see. Daniel Rooney's in the house. What's going on there, Daniel Rooney? Hey, Dr. Jim. What are your thoughts on zero DTE spreads, man? Let's go. Seen lots of tasty research recently, but I'm wondering why you don't put on zero DTE SPX trades. If you had to choose a zero DTE strategy, what would it be? Okay, so I actually do a good bit of zero DTE. I mean, what we just did in SPX is from my vantage point, that is a zero DTE trade. It's a 1 DTE, of course, but it's, we're basically at the end of today. We're going into tomorrow. And it's too valuable to me to do all my live trading, to do all my trading live on the show, especially with trade entry, that I think we'll lose out on so much if I start trading the open and whatnot just to do zero DTE trades, which I think can be valuable. And I think they can have some merit in, an otherwise well-rounded portfolio. But I think that it's more valuable to me to do our version of zero DTE, which ends up being a 1 DTE because it's later in the day. So I am doing them. What are my thoughts? My thoughts are there's some promise there. My thoughts are as an addendum, as a supplement to, what you are doing with the rest of your portfolio with selling premium and, in 45 and theta decay and volatility decay, like we talked about this morning with Tom and Tony. I think it can work. I think it can absolutely work. As like the foundation of what you're doing, I'm not quite sold on that just yet. And I don't really like selling premium in a zero DTE world. I much prefer to take a shot directionally and buy premium when it comes to, butterflies, when it comes to vertical spreads, like we just did in SPX, whatever. The reason why is now I know that the Tasty Research is doing some incredible research to kind of open all of our eyes, to both sides of the market, buying premium, selling premium, the best way to do it, this, that, and the other. Still, though, the first half of the expiration cycle is so valuable. It's so valuable. So when I start thinking about one of the most powerful merits, one of the most powerful benefits of selling premium, it's that theta reliability in the first half of the cycle. And I think that theta reliability, it's because of theta itself, but it's also because of the sensitivity to volatility changes, like I talked about this morning with Tom and Tony. All of that stuff matters. And you start talking about charm, and you're talking about out of the money strikes and things I've talked about on this show many, many times before. I just think the first half of the cycle is so valuable. I'm not willing to get rid of that. I'm not willing to throw that baby out with the bathwater just yet. I still don't exactly know what that phrase means, but it felt right to say it right there. And so, Daniel, those are my thoughts on zero DTE, or I guess you could say 1 DTE for what we are doing. Scramble Everything is in the house. Hey, Dr. Jim. Congrats on your Cubs fandom. You definitely have a collection of teams to support. Yeah, actually, I don't like the Cubs at all. In fact, like Pete Crow Armstrong, man, I don't know if I dislike a player more than PCA. Like PCA, obviously on steroids. So let's get that thing out of the way. But then number two, like your boy's Bush League, man. He's so Bush League. He's dancing around on the bases. He's doing things that you do in travel ball when you're like 11, right? And of course he got picked off as he should get picked off because he's playing against professionals. He's playing against pros, right? And again, I mean, all the stolen bases, all the home runs, whatever. It's all roids, man. It's all the same stuff that Barry Bonds was taking. I mean, look at PCA's neck. It's so obvious. But anyway, no, we're Red Sox till we die, baby. But I have to trick Tom and Tony. Right, I gotta kind of, we gotta kind of grease the wheels on the mornings with Tom and Tony. But I appreciate you there, Scramble Everything. Sam L's in the house. What's going on there, Sam L? You know I appreciate you, my friend. You are part of the core position, along with Scramble Everything and Daniel Rooney. So I appreciate you very much, my friend. Brian Dowdy's in the house. Let's go. Hey, Dr. J, the expected move in Google is getting smaller as we are approaching earnings. That's very strange. That doesn't usually happen. I thought it would increase with vol expansion. Me too. The Ivy rank is 36. I don't think I'm going to play Google anymore. That's crazy. That is super crazy. If you've been monitoring the expected move in Google and it's been shrinking going into earnings, when are earnings? July 23rd. Google's in 2 days. We're gonna trade Google tomorrow, of course. That's pretty wild. Look at the market. Market's down 25 points. Again, guys, I told y'all, man. The crash is on, baby. The crash is on. And so, wow, that's really, that's very unusual for the expected moves and implied volatility to decrease going into earnings. I mean, if that doesn't say complacency, then I don't know what does. If that doesn't say like everybody's about to get gorilla smacked, then I don't know what does. Like, I don't know if I can help you at that point. And so, but there, Brian, you could still do something directional. I mean, we could still do some expected move butterflies. Could still do some vertical spreads. I mean, we'll have to take a look at Google tomorrow a bit more in earnest. I'm not going to look at it right now because I want to do that tomorrow. Since we'll do Google, like I said, we'll do Tesla tomorrow, and then we'll take a look at IBM and Chipotle as well. But let's see. Daniel Perkins in the house. Daniel Perkins says A+ humor in the house. Man, I appreciate you. You and I both know that that's misinformation. But I'm going to send you that cash that we talked about for you planting that comment in the stream at this very time. So thank you, my friend. I appreciate you so much. Kiosh says, is it time for Dr. Jim yet? Man, I'm here. I am here. And then Kiosh goes on to say, Dr. J, second time for the day. Might buy a lottery ticket. That's too much, Dr. J. I'm going to say Dr. J for one time. One session of Dr. J for 43 minutes is about 20% too much. And so you start getting into 2 sessions, you start getting into extra long time windows. That's definitely not going to help you as a trader, I don't think. Unless, of course, you do the opposite, then you should be able to reach your financial goals a bit earlier. But let's see. Joe's in the house. What's going on there, Joe? Appreciate you, my friend. Subscribe everything. Dr. J, are you going to burn some stacks of money and dabble in the FX trades now that they're integrated into the Tasty platform? Yes, I am. Yes, I am. And we are not going to burn any stacks of cash. We're going to burn some Danish kroner stacks of cash. I don't even know if that's still cash at that point. I don't even know what you call that. Maybe just call it kroner. I'm not sure. But I'm going to have Glenn on I think he might be on vacation right now. And so I'm going to reach out to him maybe sometime this week to set something up for sometime in the next couple of weeks. I'm going to have him come on the show and show me how to do it. Because, guys, it's no different than when you guys give me a trade. When you guys give me a trade and it doesn't work, it's not my fault. It's your fault. When you guys give me a trade and it works, I can take all the credit and you can't stop me. Glenn comes on the show. He's got us trading euro. He's got us trading kroner. He's got us doing some New Zealand dollars, whatever. It doesn't work. It's Glenn's fault. It's 100% Glenn's fault. It works. We take all the credit. Right? This is just basic strategy. And so, man, it's going to be awesome. I can't wait. Glenn's a good guy, man. I'm excited to have him back on the show. And so Luke Cameron's in the house. What's going on there, Luke Cameron? Appreciate you, my friend. Joel James, Dr. Jim, vol is so low. I need to put some trades on. But where can we find some decent premium? Yes. And this is kind of the problem I alluded to earlier, right? It's like, man, what am I going to do? Like, what's the move here? Again, I kind of got into like hanging on to your trades that are working, continue to stick to the profit target, whatever. I think that makes some sense, at least. Earnings season, I mean, this might be the time. I mean, the next couple of weeks, you're going to have plenty of opportunities to sell volatility. I mean, the Google IV rank right now is 36. I mean, I would wait and see where it is on Wednesday. Right now, Brian according to Brian, it's the expected move is shrinking. The IVR is going down. In fact, we could even look at I can look at a chart of the IVR at least. Google.ivr. Has it been shrinking? Wow, look at that. It has. That's some crazy stuff, man. That is some crazy stuff. And so, this is really going to be a product of just the overall market strength, right? Just the overall NASDAQ strength, of course. That's just dragging. It's suppressing the overall volatility and even the individual tech names that have earnings coming up. Now, if we get a little something from Powell tomorrow morning, if we get a little downside movement in the market, whatever, you could start. I mean, this thing could be a 60, 65 IV rank going into Wednesday's close in a heartbeat. That would not surprise me at all. And so we still have almost 2 full trading days left before, we put on our earnings trades. Now, again, I'm going to do mine tomorrow because I'm with Arrow for today's assignment on Wednesday. But for you guys, I mean, I would wait until Wednesday to do something to the downside. And so, but those are my thoughts on Google. And so, yeah, that's some crazy stuff. So, Joel, I mean, I think earnings right now is going to be the move for trying to find some volatility. And also, well, hold on a second. Let's click on Tom's watch list again. I mean, that's 36 cents. That just went to the second range payment. I mean, right there, baby. If I go to IV rank and I sort from high to low, you can see that while Beyond Meat is still in business, there's no way. There's absolutely no way. There's still, I mean, they are hanging on. Wow, they're up 84 cents today. Look at that. I bet you they came out and finally said, listen, we're going to start using the real stuff. Like, that's the move now. They've got earnings on August 6th, whenever it's going to be, before the market, after the market. It's still a little bit of a mystery, not unlike what's actually in their product. But Beyond Meat, Beyond Meat up 84 cents. That's crazy. So I wouldn't trade that. I wouldn't trade that, just like I wouldn't touch that. But you can do whatever you want to do. So if you look at the rest of the stocks, though, you see a lot of individual stocks, right, that have earnings coming up. Gilead, Shopify, John Deere, and so on and so forth, right? But if you go to just the indexes, so I think that there's like liquid ETFs. So if I go to liquid ETFs and I still sort by IV rank high to low, you can see that there's a couple things cooking right there. I mean, you could do SLV. You could do some SLV. You could do some international stuff, EWW, EWZ. You could do GLD. You can do GDXJ, right? You can do GDX. So there's some options there, Joel. I mean, you could do the individual stocks, of course, but if you want to stay focused and concentrate on the indexes to kind of smooth out the exposure and not have the idiosyncratic risk that you would have with an individual stock, then this is what I would go to right now. And we've seen this before, right? I mean, it's over and over and over again, guys. It's always the same thing. I promise you, it's always the same thing. If you go to a chart of the VIX and you just zoom out, right? This is what the chart always looks like of the VIX. It always looks like this, where it wants to go down. It wants to live lower. It spikes up and then it wants to get back down. It spikes up. I mean, this obviously, rustled a whole bunch of jimmies that were out there, but then wants to go back down and it contracted. This was a little bit different. Liberation Day back in April type stuff. This was a little bit different just because, it stayed elevated for several weeks. That's a bit more unusual. Usually after the volatility spikes, it tracks a little bit more quickly than that. But this is not that unusual. This is not that uncommon. But again, it's coming, guys. I promise. Now, when is it coming? I don't know. Nobody knows. It could be today. It could be tomorrow. It could be a week from now. It could be a month from now. It could be a year from now. And so sadly, nobody knows, but it is coming. There will be more bountiful times on the horizon to sell premium. So just, if you want to do some things to keep things moving forward, I 100% understand that. And I agree, but just don't go hog wild with, all the things that you could possibly do. And so let's see. Brian Dowdy says, I also joined you for the ETHA. I won't go against you. Look at your realized P&L. You can't fool me, man. Well, this wasn't my trade. That's why it's working. And so, Brian, I know you like to tail my trade sometimes, man. That's dangerous ground. That is some dangerous ground, Coolio style. Yeah, that's, man, I don't know, dude. But selling the 26 put, and ETHA is working out right now, but that's because of y'all. So I'm not going to take credit for that. And so Tony Brandt's in the house. What's going on there, Tony Brandt? I bought a long call Open Door. Open Door, Luke. You're talking about the stock. Oh, okay. Is the ticker symbol open? I think it is, right? Yeah. Wow. Look at that, man. Y'all are in the dumpster, man. Y'all are just Tell me the VIX is at 16 without telling me the VIX is at 16. Let's do some open door stuff. Stock up 240, up 100%. And so, but I guess the joke's on me because, I mean, I've got Tony Brandt saying I bought a long call option in open door this morning when it was 270. I mean, man, ring the register, my friend. I mean, that's a great trade, Tony Brandt. And again, I mean, you know, we sell premium here. Like, we're selling options, we're selling spreads, whatever. We're not typically buying calls. We're not typically buying puts. That's a little bit counter to what we generally do. But hey, if you want to take a shot every once in a while, like all kidding aside, take your shots in open. Take your shots in wolf, right? Take your shots in whatever. And just, you know, take a small shot and it's fun. Like, I 100% understand it. So I would just hate to see you. I mean, you've got a really nice trade on your hands right now. I mean, I don't know what you're targeting on the trade, but you've got a nice profit right now. I probably wouldn't stick around too much longer going for the home run when you've already got the Jaron Duran single stretched into a double that's in your back pocket. And so let's see. Kia says, I remember Tom making fun of someone who suggested open door when the stock was close to $2. Yeah, now it's like $4.60. And so I think the joke is on us there, Kiash. Paul Heyman, what is it like to lose power when it is 100 degrees outside? Yes, that happens here often, especially in like rainy season, which is now. It's not raining today, thankfully, and so I think we'll be okay. But every once in a while, we have lost power on the show, and if you've seen the show for any length of time, you know that to be the case. Paul says, Autumn's fault for moving to Florida. Yes, Autumn is the reason we are in Florida, by the way. I will completely throw her under the bus in that regard. Well, she told me, if you guys want to know the whole history, so I'm from Detroit originally. Autumn is from Memphis. We met when I was in grad school at the University of Memphis when I was working on my doctoral degree that I finally graduated in 2009. And I always tell everybody I left Memphis with two things in my back pocket. PhD in finance and the most wonderful woman in the world, I should say, as my wife. And that is 100% true. And so we went from Memphis, went to Charlotte. I took my first job at a small university in South Carolina, teaching undergrad and graduate level classes. I thought I would be a finance professor for my whole life. But then, you know, I met Tom and I was like, man, what he's doing is changing the world of finance forever. I can always go back and teach, you know, whatever. So Tom and I kind of got to know each other. And then the next thing you know, I joined the team full time in 2016. Well, to convince Autumn to move to Chicago, she had never lived in the North, never lived in the Midwest. I'm from Detroit, so I mean, it was like, you know, muscle memory for me. Very nostalgic to drive back into Chicago in January of 2016. It was very difficult for Autumn to drive into Chicago in January of 2016, but she did it. She did it for me. She is the most supportive woman in the world. I cannot tell you all how amazing Autumn is. There are not enough words in the dictionary to describe how amazing my wife is. She did tell me, though, actually long before this, she did tell me, hey, I want to ultimately be in Florida with my mom, with our kids and whatever. And so I knew that, like, basically as soon as we got married, like that's where we were always trying to get. I love living in the North. I love living in the cold. It's very fun for me. That I would probably choose extreme cold over extreme hot. But so we moved to Chicago, and it looked like we were going to be in Chicago forever, which would have been totally fine with me because I really, really love that city. I just love the atmosphere, and I love all that kind of stuff. But, you know, when COVID hit and we all went remote and whatever, I was like, I don't know, man. We don't know if we're ever going to get back. Like, we don't know if we're ever going to go back into the studio. And so I had some conversations with Tom, and Autumn had some conversations with me. And then the next thing you know, we're in Florida. So that's the whole backstory behind our getting to Florida, which you probably didn't even want to know. But this is what you get, man. I mean, you get this on a regular show. You get me on an extra long show, man, you better look out below. And so Tony Brandt says, Tony Brandt's digging in. I appreciate you, Tony Brandt. Emmett Morrison's in the house. What's up, Dr. Jim? Rough weekend for the Bo Sox. Actually, we're doing just fine, Emmett. So thank you for asking. But I would be very, very careful with what you say next because I do have the block button at the ready. And so, yes, Luke Cameron says it's open. Yes, it is $ open. Correct. Jackie W in the house. Man, let's go. Hello, Dr. Jim. Don't you think it would be helpful for the platform to quantify and show an underlying skew in a single metric, just like IVR and IVP? Yes, potentially. I do think that could be an area of improvement. I do think that could be more information that could be helpful for us. I also think, though, to kind of push back against that a little bit, not that it wouldn't be useful and helpful. I think it would be useful and helpful. But at a certain point, and this is what I'm going to say next doesn't just apply to IVR and IVP and skew and whatever. It applies to all the metrics that we use. At a certain point, there's too many cooks in the kitchen. Like at a certain point, you've just gotta move forward. Like at a certain point, you've got to have kind of your core, I don't know, foundation, your core principles of what you think are the metrics and the variables that you use on a daily basis that you think are important and you think are valuable. And then you lean on those, and then you have to be decisive. You have to move forward because there's always another metric that you could look at. And there's always another variable that you could study. And the reality is, Jackie W. and everybody else, you're never going to find a situation where every single variable lines up in the same direction for a given trade. Now, you want to make sure the main blocks are in place: liquidity, volatility, right? Whatever deltas you might be targeting, things like that, of course. But when you start getting into like, you're kind of on the outskirts now, man. You're kind of on the, the tertiary when it comes to, IVR and IVP and the differences and the this and the that. Now, again, some of you might be thinking, Jim, this is what I'm waiting for. This is the thing that I think will really be, what can really move the needle forward for me. Of course, that may very well be the case for you, Jackie W., or anyone else. And I think that's totally fine. But I just want to encourage all of you at a certain point. There's too many cooks in the kitchen. At a certain point, you've got to just go forward with your handful, half a dozen core things that you look at. Case, let me give you a great practical example of what I'm talking about. So when it comes to, look at Open getting halted. Wow, this stock just got totally blasted. All right, so I haven't seen a halt, man. We're getting back to the GameStop days. Seeing some halts on the show. Wow, look at the NASDAQ, only up 155. It's basically unched on the day. But let me give you all a practical example of what I'm talking about. So when I roll a strategy, so if I have a strategy that it's time to roll, and it might be because of 21 days to go, it might be because the strike is tested. There's obviously a couple different reasons why you might roll a strategy. When I go to roll a strategy, I rarely look at the implied volatility rank at the time that I'm rolling the strategy. And many of you have asked me about this, and many of you have kind of said, hey, why don't you look at this? And, don't you think that there's some value here from the standpoint of if the IVR has collapsed, maybe you don't roll and you just take the position off and just take your lumps or take the profits or whatever. And I think that's totally fine. But for me, that's an extra cook in the kitchen. For me, it's kind of like, man, I would much rather look at the P&L. I would much rather look at the overall risk on the trade. I would much rather look at my overall deltas, my overall thetas, things like that. That's already enough things to monitor to where I don't need something else in there too that I think is going to be significant enough in the end to warrant it's now being in the kitchen, if you will. And so that's kind of how I look at this. And something like an IVR, IVP, I don't know. I don't know if there's going to be enough there to kind of warrant its inclusion in the kitchen. But anyway, I digress. Scramble Everything says, Dr. J going full influencer with the LMNT. Man, I'm doing something. I need something. Right? I mean, we're doing what we can for the range, but it's like, man, the LMNTs. I mean, so LMNT people, if you're out there, my email is jschultz@tastylive.com. Right? Like, let's make this happen. Like 100%. If you want to give me a 3% lifetime discount, sold. I'll take it. Like I will 100% take it. That would be amazing. And so LMNTs, ghosts, y'all are my people. And so hook it up. Arjun Purr says, oh, the black cherry. Just tried some straight off my trees yesterday. Oh, yeah, you're talking about something totally different. This is black cherry lime, and it's some pretty good stuff. It does kind of make you more thirsty, though, which would sort of make sense because, again, you're kind of like, I mean, if you've never had one, you kind of have to experience it. But if you've had one, you know what I'm talking about. You're drinking a salt block, man. It's a pretty interesting experience. So Adam Armfield says the other wild card with Google is this antitrust suit. The verdict is expected in August. With any luck, it'll drop the price. And I feel like they've always got some antitrust something or other, one thing or another going on in that stock. So is that really new news? Maybe it is. I don't know. But I feel like there's always something coming out with Google and antitrust and whatever. Dav Nico's in the house. What's going on there, Dav Nico? Appreciate you. Grumpy Mike. LMNT is Dr. Jim's new show sponsor. They seem to Spencer everyone on YouTube sponsor. Well, no, again, what can I say, man? Money talks. What can I say, man? Dollar bills are my language, right? And you don't need too many. A couple should get the job done. LMNT or Ghost. I mean, let's go. Let's make it happen. And so Away from the Numbers says, good evening from the UK. What's going on there, Away from the Numbers? Wasn't the best day for me to enter a 0DT iron fly on the SPX. Was it tough? I mean, SPX, because it flew away on the upside, I'm imagining. And so you probably, if you still have the trade on, you need this thing down. you're getting a little bit of something now. I mean, look at our SPX trade. Whoa, whoa, whoa. Look at this. Well, wait a second. We are already up $100 on this SPX trade. Well, I'll be, I mean, I feel like okay, now it's only 75. Now it's 115. Okay, so the markets are somewhat wide in SPX. Should we take this off or should we roll the dice? So I need something to talk about tomorrow, especially for the extra long show. I mean, the content's not going to make itself, so we're going to leave it on. But wow. So how about that? Already up a decent little profit on the trade. If you followed this trade, I would consider taking this off. I'm going to leave it on just because I feel like this could be the start of something. I mean, again, guys, the NASDAQ just dropped like 30 points. You know, I don't know if you checked the lock limit levels today, but I would probably give them a quick peek because they're going to be here before you know it. That's a joke, by the way, if you're brand new to the show. Not a very good one, but it's an attempt nonetheless. And so, wow, that's interesting. So away from the numbers, I hope you get enough of a move lower to bring that thing back. You still got a little bit of time left. Ranchers in the house says black cherry lime sounds like a suspicious flavor. I agree. I didn't love it. It's Autumn's favorite. The citrus is my favorite. The citrus is her number 2. And so, you know, it makes sense. It's actually quite good. It is quite good. I was extremely skeptical myself, but I would give it a look. It basically tastes like, you know, black cherry lime salt. Like if you had a big pile of salt and you just put like some black cherry and then squeeze some lime juice on it and then took a spoonful of it, that's exactly what it tastes like. And so Arjun Purse says buy everything and the yen. I like it. Let's go. Trouble T-Roy says love the green. Since we can't get long Publix, your thoughts on some prime Lakeland real estate? My man's talking about Lakeland. Man, Lakeland is that's kind of the boonies in Florida. Like you're getting in like the middle of the state at that point. That's like Ocala. That's where dreams go to die. Lakeland and Ocala. And yeah, can't get long Publix, I guess. But I'm since I have a shift at Publix later today, I'm kind of inherently long Publix. And so obviously playing Publix to the upside. You know, I learned something recently. A buddy of mine told me this. He actually works for a nursery farm. He's actually their VP of finance, so he's pretty high up in the nursery farm world. But he's a great guy. My boy Drew, really great guy. We have a great relationship. He was telling me the other day that Publix actually, so most grocery chains have a markup of, you know, the margins on grocers, I should say, is historically very low because there's so much competition, right? So the markup on grocers is typically, let's say 2%. Like the margins are just not very high. Publix, apparently, they're operating at like a 7% margin. That's crazy. That's crazy. Now, I'm not seeing that in my personal paycheck, but man, I'm like, that's incredible stuff that they're running that high of a margin in a very, very competitive space. And so crazy stuff. But yeah. Let's just scramble everything. Says yes. The sponsorship money has invaded Dr. Jim's household. No, it has evaded our household, just to be clear. And so Jackie W says FINRA is finalizing a proposal to loosen day trading account minimum from 25 to 2,000. Man, that would be great. Wow, that would be a real change. If that actually happened, it would be like, man, the regulators are finally getting up to the times. That would be great. Another thing that would be amazing is if the regulators could finally, you know, come together in like an IRA. For those of you that are trading in an IRA, you're going to know exactly what I'm talking about. Okay, if you don't want to give me margin on a short put, okay, that's fine. Okay, no problem. But if you're in like, you know, if you're in like futures and you're using like futures options or like a futures position, let's say, you buy a NASDAQ or MNQ, whatever. You buy a future, right, and it doesn't work, or it works. It doesn't make a difference. You go in and you sell a call against that long future. You're margined on both. You have to put up margin on both. It doesn't make any sense. It doesn't make any sense at all. You should only be margin. Your margin relief should go down, which is no different than if I bought stock in Starbucks or the QQQ index or whatever, and then I sold a call against that stock, my margin goes down. Or at least I don't pay additional margin. At least I get, the margin relief of getting to have both positions on with no additional capital required. That is not the case in an IRA. And so for those of you that might be in an IRA, you know how problematic that can be and troublesome that can be. But let's see. Brian Dowdy says, look at all that green unrealized P&L besides Best Buy. Yes, the P&L open bros, man, they're going to have a day today, right? They're going to have a day today. Look at that. Look at that. Again, it doesn't matter, guys. Does not matter. And I'm not even going to explain myself again today because we've already talked about this at least 6 times in the last 3.5 weeks. And so let's see. Sergio, Dr. Jim in the house. This is the extended tangent edition, right? Yes. Which you've gotten to enjoy, which you probably put that comment in right when the show began. And now the show is almost over. We have about 2 minutes left. And then you guys are going to get to enjoy Tim Knight right after me. And so, yes, it is the extended tangent edition of the program. And so let's see, Grumpy Mike, Dr. Jim, brought to you by NordVPN and Factory Food Delivery. Yeah, I don't know what that is, but I mean, I'm open to them too. Again, they just send them my email and we can talk. Rancher says I bought some open just for some entertainment. Hey, I understand. I totally understand. Scramble Everything, next episode brought to you by AG1. All right, if it gets that bad, somebody stop me. If it gets to that point, somebody come get your boy, which would be me. And that will be, okay, we've gone a little bit too far. We've gone a little bit too far. And so, yeah, if you guys start seeing some AG1 like apparel and hats and stuff, that's going to be a problem. Let's see. That's pretty good. That's pretty good. Cause that's what all the fitness influencers are. That's what they're all shilling these days is 100% AG1. And so Ruben C says, Dr. Jim, I was wondering if you can shed some light on the gotcha of selling a covered call on a leveraged ETF like Boyle. Yeah, I've only got like a minute left. Okay, so, okay, Ruben, great question. And if I didn't get to you today, please come back tomorrow. Again, if you put it in early, the delta that I get to is much, much higher. Okay, don't do a covered call in a leveraged ETF because I wouldn't even do a leveraged ETF, especially with a strategy like a covered call, which is kind of intended to be something you hold for more than a couple of days. Because of the way the leveraged ETFs are set up, your 2Xs, your 3X, your Boyles, you know, your SPOXs or whatever else, they're reset every day, which means if the stock just chops around, you actually get chewed up. The price actually gets chewed up because of the volatility resets that's baked into these products. If you actually search, so Ruben, I've done several segments on this before with Tom and Tony, even by myself. If you search skinny abstract, you know, taxed by volatility or leveraged to volatility or something like that, you will find a segment that I've done recently with Tom and Tony where I actually work out the numbers and I show you exactly what I mean when I just said a couple of minutes ago, you get chewed up by the volatility. So I would go to one of those pieces and it will give you more thoughts. But honestly, I would look elsewhere. The leveraged ETFs, in my opinion, are kind of a scam. Like they're kind of, they're not all they're cracked up to be. I think you can get all the leverage you would want and more just doing all the things that we normally do. So I got to run though, guys. I got to get you guys to Tim Knight. Man, I appreciate you guys. We made it through the extra long tangential edition of the Monday edition of the program. So thank you guys so much. If I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter or X, whatever it's called. I'm at jschultz_F3. I would love to hear from you guys on there as well. But stay tuned. We do have Tim Knight coming up next with Engineering the Trade. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
Global markets never sleep. Explore them with Forex, now available on Tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tastytrade.
Look who's back testing. Tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tastytrade.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tastytrade. Genius loves company.
Hello, everybody. Happy New Week to you. Tim Knight here, and we're here to look at some charts together. As is the custom, we're at lifetime highs across the board. And as is also is the custom for the past 15 years or whatever it's been, whenever Tasty was born, I'm here to show you some charts and talk about them. Some general, some specific. Just kind of give you a taste of what's going on out there. This is one of the big earnings weeks. Lots of big earnings coming out this week and next week. And of course, next Friday, I think, is it? Yes, next Friday, August 1st, the deadline. We'll see. Bessent's already starting to use weasel words like, well, it's not the date that's so important, but the quality of the deal. So it's sort of it's like in the kitchen preparing for Taco Tuesday, you know? So, yeah, they'll chicken out. Just you wait. But yeah, Bessent's laying the groundwork. Anywho, let's look at some charts together because that's what I do with my life. We begin with Spider. Spider's up, just like always, as required by federal statute. Lifetime high on this, maybe a lifetime high close. It's looking like that. We've softened up a little bit over the past hour or so, but you know, it's just kind of boring. You know, add 0.5% every day until the end of time to where 900,000 on the S&P, something like that. So yeah. Up we go. Hang Seng Index, even China is showing strength. It's got miles to go before it challenges its own lifetime highs, but it has broken above the high that it is set back on mid-March, March 19. So yeah, even China is pushing higher. Semiconductors, strong. SMH, the AI mania still continues apace. Although we're probably not going to get a lifetime high, even though we had an intraday lifetime high. This is looking relatively weak here. We're basically doing what we were doing last week on the 15th. Not a lot cooking there, and I'm quite short right now. I've got about like 120% commitment or so on the short side. Glancing over at my positions. All of them are red except for 4 of them, which are down about 0.5%. We can live with that. So those are doing okay. The cubes are up stronger than just about everything. Like the small caps are actually down a little bitty bit. The cubes are up, lifetime high, 2 words I really thought I was done saying, but yeah, that's not the case. Lifetime high again, both on an intraday basis and almost certainly on a closing basis. And old Kathy D. Wood, on a recovery high she made today, although it's the quote's a little bit in the red right now. Miss Wood has had an extraordinary few weeks here from April 7 to present. This has burst forward almost double in price, way below her lifetime high. We're about half of that. But so long story short, it lost 75% and then it's doubled, which means now it's down 50% instead of 75%. So yay, Kathy. Over in crypto land, little bit of softness there. We had a big burst last week, of course, with the flood of legislation tended to help the crypto bros out. We peaked right here on the 14th. That was at $123,000 and change. We've shaved off about $6,000 from that, a very modest diminishment. And like I've said, until and unless this cracks under 109,000, this bullish breakout is fully intact. In fact, this is being red. Let's change that to green like so. That's really a support line right now. Ethereum has been especially strong. Now, a few weeks ago, let's just dial this back a bit. We've been talking about this trend line right here. So we broke it back in February, fell hard, recovered, respected that line as resistance now instead of support. However, here, it was like resistance here, and then down and up, 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 up. Resistance, 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 then finally bang. It cleared that trend line on the 15th, and it was just green, 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 green. What's next? Green. Yeah. So up here like so. And so we've, once we broke through that line, changing it again from resistance to support. Now the next technical event to watch is this line up here. This is around 4,100. We peaked on it back last March. So what, 17 months ago or whatever it is. Then again last December, and then getting close to it again now. So that was an exhaustion point for it over the past year and a half. And its own lifetime high was way back in the Pleistocene of November 2021. So that's the next thing to keep an eye on, because crypto has been very strong. I mean, good Lord, even the Trump coin has been having a good time the past few days. So everything's up. There was a firm, SharpLink Gaming, SBET, which the time was kind of interesting because here, I believe after the close, they announced that we're going to be the Ethereum of what is it? No, we're going to be the MicroStrategy of Ethereum. So Michael Saylor's Strategy Corporation is all about Bitcoin. These guys said, all right, we'll take number 2. We'll be Ethereum. And the stock collapsed after that news. But interestingly, after kind of gathering itself up, it started to rally. And it peaked last week like so and starting to burn some of that off. So for the immediate moment, that bet seems to have paid off, but it's definitely on the fade right now. And also just anecdotally, CoreWeave, which is a very young stock, as you can see, this had around the top, started to snap it, got some strength, but it's burning it off again too. And Friday it slipped below this low right here. So this is not looking so healthy, considering the political environment, the legislative environment really couldn't be more positive for CoreWeave. I believe I mentioned on Friday how some of these frothy stocks were just playing hot potato or musical chairs or whatever metaphor you want to use. QuantumScape, definitely one of those. And sure enough, here we go. We've burned off Friday's gains and a lot of Thursday's gains, down about 15.2%. You see a lot of these meme stocks are definitely a thing again. You go over to Wall Street Bets, there'll be 3 or 4 really hot ones. Open, I think, is a big one right now. We'll look at that in a little bit. But yeah, they'll have these explosions higher. It's just sort of like, who's going to be the last guy holding the bag before things reverse. So that's QuantumScape. But I say again, it has nothing to do with quantum computing. They're actually a battery company. There are a couple of quantum stocks to peek at. One is D-Wave, which, as I've said, I think quantum is obviously very, very unproven. If I were forced to buy a quantum stock, I still think it would be this one. As a chartist, I really like the look of it. It's down not even 0.5% right now. And the one I said I would avoid, which is QUBT, is down about 8 times that much, about 9 or 10 times that much, actually. So this is down really hard, over 8%. It's 20 times that much. Yeah, we'll have to work on the old arithmetic. But in any case, given the choice of the two, and I've said this a number of times, QBTS I like a lot more than QUBT. But I ain't buying either of them because I think people are getting a little early on that one. I did mention Open Door, OPEN. This was an interesting creature because until just last month, this was a slaughterhouse right here. This had fallen about 99%. It had lost almost its entire market cap. Then for whatever reason, it has gone ripping higher on big volume. Today alone, it's up over 54%. And there's the volume. It'll kind of blow off ETU. But here again, one could have said on this there, this there, this there, this there, this there. I mean, that's it. It's too late, and it just keeps going higher. There will be one day that it's too late, probably today. But everyone who says it's too late keeps getting wrong, and they reach a point where it's like, I give in. I'm just gonna buy it. Hence, you get this stock that's really nobody's heard of, having 1 billion shares a day trade. at this point. So that's a very interesting explosion. Let's see what it's doing tomorrow. I'm guessing it'll be red. Just a dumb guess. I don't trade it. It's just my opinion. This is another good example of something that just went berserk. I think these guys it's very cool. It's like a flying car. It's basically, imagine a giant drone that you can sit in. I think that's their product. Very, very sweet stuff. The stuff of childhood dreams. And this has gone from $5 back on that fateful April 7 day to almost 20. So about a 300% gain in just a few months' time. Again, looking a little bit on the frothy side. Over in Metal Land, XME, lifetime high. It finally did it. It beat its lifetime high from way, way, way back in 2008. So that took a while, but it's mission accomplished on XME. Gold is having a great day. The front month of gold is up $52.30 right now. Terrific chart. Yay, gold. Always a fan. Here's GLD itself up about 1.5%. Starting to kind of tease the idea of maybe even breaking out again. It reached a peak here, matched it here, gets given it another go. As the Federal Reserve pounds the dollar into one-ply toilet tissue, precious metals keep doing better and better. Silver, fantastic day, 2.5%. The target I placed on it was like so. We're getting not really close, but we're getting there. We're working our way there. PSLV, I also had a target, which we're getting kind of in the same zip code at least of that. So silver doing terrific. Platinum, kind of tired after this tremendous run. You can see this reflected too in the PPLT, the platinum ETF. If precious metals start to sell off at all, I suspect platinum and palladium would sell off very swiftly because they have ascended tremendously fast. And, easy come, easy go. Things that rush up very quickly don't have a lot of support beneath them. A couple of minutes left. Good. Oil, USO. Crude oil itself is down about 0.4%. Likewise, USO. Zooming in. We had this big rally, a plunge, partial recovery, and down just a bit right now. XLE, which is one of the big energy ETFs, is down about 1%. I'm in the XOP myself, which is down about 2.5%. So that's good. So that's my energy position. IEF, which is kind of a more conservative idea and pretty important from a macro perspective. This is the 7 to 10 year Treasury bond ETF, continuing to slowly finish its base. Maybe it'll get there, maybe it won't. If it does, that's a pretty slick looking pattern on the long side. And finally, be very respectful of the next show after this one because I don't want to step on their time like I sometimes do. IWM, the small caps, in spite of a green ES, a green NQ, RTY is red, IWM is red, and this is definitely where my shorts are concentrated. That really sounds bad, but you know what I'm saying. So that's it from me. I will see you tomorrow. Thanks as always for joining me, and I hope you're doing all right. See you Tuesday. Bye-bye.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tastytrade, named best online broker for options trading. Genius loves company.
If you missed the live show, here's our cherry on top weekly recap.
But I'm doing 2 talks in Mexico City, and then I'm doing 2 talks in Guadalajara.
I mean, all it's going to take is for this administration to read just one of your past cherry bombs, and you're not coming back into this country.
I hope they don't subscribe to this. Oh, no.
You better scrub your phone, honey.
Oh, no.
You better wipe it clean.
This is the same kind of group. We've been friends for, I don't know, like 30, 40 years.
Yeah, that's a long time.
I know.
Because it takes work to maintain friendships. Because life gets in the way.
Guys, with women it does.
Well,
It takes work.
men don't ask questions. Men are the worst. You're like, oh man, my buddy's getting a divorce, and everyone's like, oh my God, why? What happened? You're like, I don't know, I didn't ask. And you're like, what is wrong?
If we have a friend and they're getting divorced, we already know why.
Oh, just pure chaos already this morning. They dress alike, they act alike, they talk alike.
Well, my producer said we all look like seamen, is what he said. Yes, the sailors of yesterday. It's lighter than it looks. I will give you that. I mean, it's.
So is Tom.
I just thought it was unusual that Tom would wear like a long sleeve hoodie in the middle of summer. Why don't you give away that hooded sweatshirt in the middle of summer? Why don't you give that away?
It's actually a summer outfit.
It's a summer outfit.
You would not know.
So I said, I have to see what this is like. And it is a boat-worthy apparel, so I'll ship it down to Florida. But I just wanted to be like my man Tom, see what it feels like to be a big shot and stuff like that.
Will you guys please wear them matching on the flight to Denver next Friday?
What's going on? What the hell am I looking at? What the hell's going on here? What is this?
I'm twinning.
Join us. You got to go white then. You got to get something. Yeah.
No, I don't want to mess this thing up. This is too perfect.
Be like Tom Day here at Tasty Live. That's right. You too could dress like an overlord or just look like one.
Get the full scoop by checking out the archives at tastylive.com.
You can get up to $4,000 when you open and fund a new account with Tastytrade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tastytrade. Make your move. The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tastytrade. Download today.
Tastytrade has crypto, and you can trade with 0 commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto. We got it. We get it.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live. That's right, with the closing bell. Sadnov, I have one question for you.
Yeah.
Did you buy this dip? Even the S&Ps trade up to 74. They're down to around 54. They've dipped by about 20.
Not only did I not buy the dip, this is, as we say in the business, the gravestone doji that you're looking for, according to.
Oh, you took that from an email. I read that same email.
I was gonna give Ron credit for that, because I don't ever talk like that.
No, you were not. You're lying. You're lying.
No. I was coming out of my mouth because it harkens me back to the Slimmy days of, hey Slimmy, is this a gravestone doji?
Well,
I don't think I've mentioned that. I don't think I've mentioned that once on the show in 14 years, but
I have a few times.
It looked like today there was no stopping them. They had no downtick all morning. I didn't panic once. I got a little bit short near the top. I'm going to say at the top. And I just sold some more futures, and
At 54, about 2 handles higher.
I just sold some more RBLX. I had the right call today in the wrong call in RBLX and the right call in Hood. Hood's down $4. We sold it when it was up on the day. And then the wrong call in RBLX, it's unchanged now. I take it back. We didn't lose any money there. But it was up $2.50.
Yep.
And I sold more deltas in there. And I sold some deltas in Coinbase. And I think I think they hooked them today. Coin was up what?
Coin traded all the way up to 436 or something. It's 418 right now, about a dollar off of its lows.
Yep. I think they hooked them. Coinbase, a lot of underlyings. I don't know. Not for sure. I think they hooked them.
Well,
the big hook is out.
The NASDAQ would say you're wrong. It's up 142. The Russell would say you're right. It's down 5. And the Dow is only up 70. Volatility down by 14 cents off of its lows by about 30 cents. Bonds have stayed strong all day. 113.11. They did get up to 113.25, the more mid-range, high end of mid-range for the day, up 29 ticks. Notes are up 12. They kind of gave it back a little bit also, but still higher. Bitcoin under 18,000. Remember, it was closer to 19,000 this morning. Ethereum.
Bitcoin's actually down on the day now.
Yeah, down closer to 18,000. It was 19,000 earlier today, down by about 500. And really, the big move today. Ethereum also is another one that moved big. It's still up 180 and change, but it's off of its highs by $110 or so. Oil down 26, and gold with a big move higher, up 52. With silver, a big move higher, up 85 cents. I got a lot of emails about Open today. Did you get anything about that today, Saz?
I don't trade. Isn't that like a $2 stock or something?
It was a $2 stock, traded up to be a $5 stock this morning, Saz. Enough 1.7 billion shares. 1.7 billion shares have traded today. That's a lot of billion shares today, Saz.
That's a lot of billions. 1.7. What is that company again? I forgot what they are.
Open Door Technologies.
Okay, so it's a meme stock, sure.
Yeah.
No, I did not trade it. I didn't look at it. Did you?
I did look at it only because I got the emails, not because I was looking at it at myself. Markets were 10 cents or more wide for most of the day. I mean, it was trading like water. It was very liquid. When you look here, I'll just give you the volume for the day. Every line has, 60,000, 40,000. I mean, I think a billion options traded in there too, Thomas.
Go for it.
Yeah, I mean, you can do it. You can do what you want. 2.7 million options have traded in Open today.
Wow, never even looked at it.
That's a lot.
What is the new subscriber? OPEN?
OPEN, that's correct.
I haven't looked at it.
Open and Netflix were my two biggest emails of the day. Netflix up $25.
I have no Netflix, but Open, let's see here. $3. It's $3.
Now it is. It was $5 an hour ago.
Okay, so what are you going to sell here?
A guy like you with earnings coming August 5th.
Guy like you.
4 days to go. Oh my God, free money selling these 2.5 puts. For 4 days? Come on.
Oh, 4 days. Hold on. All expirations, 4 days. What do you want to sell? The 2 puts? The 2.5 puts?
2.5 puts. That's got your name all over it. Guy like you.
Guy like you? There's no calls to sell against it in the 2.5 days.
The 4 days, you mean? You can only sell the 4.5 is all there are.
Yeah, no. I don't love it.
Only 7.5 million SPY options traded today, my Taiwanese sources tell me. More than 900,000 Tesla options, which is really low for Tesla.
What about the 4? Wow, there's a lot of call skew in here.
Duh. I mean, stock can only go to zero. It's $3 stock. I mean, what do you want how much do you want the 1.5 puts to be worth? I mean, they can only be worth 1.5. I mean, you can't have a lot of put skew there. Do I have to explain to you, how stupid a statement that was at this point in your career?
All right. I need to do something in here just because I can't listen to you.
I mean, the stock's $3 and it was just $5 an hour ago. And you say to me, boy, there sure is a lot of call skew here. I go, okay, well, he's been making content. But did you think there was going to be put skew?
Hold on a second. I did the wrong thing. You're messing me up now, okay?
I messed you up.
4.5.
You didn't get filled on anything. You're fine.
I know. 4.5, 2.5. Where's this thing trading?
4.5, 2. You're selling calls? What are you, nuts?
No, I think I'm normal, but it can't even get filled in between the markets.
Abby normal.
Abby normal, 4.5, 2.5. Yeah, you got to hit bids.
You
Can't
do
even
this
hit bids.
in the 4 days?
I hate the stock.
Knowing you, you're probably in the wrong day, wrong month.
I can't even hit bids. I got to leg this sucker. All right, let's do this. Cancel this. Cancel this. Simon says do this. Simon says do this. Simon says do this. Got to do this. If I'm going to fill this crap, I got to do it on my pace. Done. Did a penny better. You're legging fool. Just have
73 cents you got filled at.
I couldn't
You
sell
did the
those
2.5, 4.5. Man, baby cheeses, if you could make this stock go to 14 tomorrow, I'd be so happy with you. I'm just asking. I'm not asking for a lot.
I just wanted a little trade. At least we got a bunch of trades on today. We did 70 trades. It's more than we've traded in a while.
Mhm.
Yeah. I sold some S&Ps here. I sold some spreads in the net. I'm a little short here, Bat.
I think you got him, Saz. You got him this time.
Yeah, I got him right where I want him.
You got
NASDAQ
him
up
right
150.
Right where you wanted. You got him. 728,000 E-mini S&Ps have traded, and you're taking a stance.
It's unbelievable. Nobody's trading S&Ps right now. If I was the Merc, I'd be
Close up shop.
Close up shop.
Close up shop. No need to be there.
Yeah, close up shop.
Netflix and Meta up $9 are your big leaders in the clubhouse. ARM up $5 or $6. Netflix up 28 or so. AVGO up 5. The Goog up 5. You got GM for earnings. I saw you did a little bit of something in there. GM.
I did a tiny GM trade. If you look at the premium in GM, there's nothing in there.
IB rank a 28, dude.
I know, but there's nothing in there premium wise.
I know. A mechanical trader would say, why?
I did a ratio spread 5/9 is my ratio.
Oh my God. I'm getting so sick of you sometimes. 5/9. I got it. Okay. All right. That's a good idea, Tom.
5/9.
5/9.
Yeah.
Good idea. All right.
5/9 is my ratio. I'm going to do more.
I know.
Yeah. So anyway, that's where I'm stand. That's where I stand. Let's see. 5/9. What did I say? GM.
Yes.
Yep. I'm unchanged on it.
Nice.
But I'm hoping for a nothing move. I think the expected move is like $2-3 or something.
In GM, the expected move is $2.50 or so over the next 4 days.
Yeah.
Probably going to get two of that.
It's a horrible
today.
It's a horrible earnings play.
Right.
But no, we for a day the market made new highs. Bond saved me today. I was never in trouble. So
we're not closed yet, Sadnoff. Even the S&P's up 12.5. You never know.
Yeah. Down on the day, dude. I'm ready. I'm ready.
Could happen.
Coinbase is down $2 now. Nice. Our Roblex is almost unchanged. Nice. Those are up 12, and I'm acting like my shorts are coming in.
30 handles off of their highs, Sadnoff. Haven't been able to say that all week.
30 handles off their all-time highs. I remember once in my entire life, the biggest short position I ever took compared to how much money I had, so give it some context. But the biggest short position I ever had.
Yeah, sure. Your piles were a little smaller back then. Yes, I remember.
I'm just saying, given the context, the biggest short position I ever had was on a day that we were up like at record highs. But I mean, the market was probably 1,200 at the time or 13, who knows? But record highs in the morning on a Monday after an expiration that they were up. So it's perfect. Everything's
like
perfect. Just like today, making record highs. We ended up closing unchanged or down on the day. I thought it was the greatest. This is. I'm gonna go home.
I got.
I'm going home. balls out short, and I got them for the opening tomorrow. And what do? We opened up back up at all-time highs. And I'm like, oh, great. I blamed it on Jules, but I don't think it was his fault.
And not this time. Most of the time it was, but not this time.
Not 100% his fault.
This time it was self-inflicted.
Yeah. Yeah,
Volatility flirting with the unchanged now, Sadnov. Even the S&P is only up single digits, up 9.
Yeah, they're going to close down on the day. What time is it here? Oh,
yeah,
yeah.
About 14 minutes.
Oh, down on the day is a given.
Ladies and gentlemen, he has no clue on what the spoof's going to do for the end of the day. I don't want anybody to take this to the bank today.
Down on the day? It's a given. Come on, Bat. Where have you been? This is the kind of stuff I train you for.
I understand. I didn't you?
No, I'm just making some. The last thing I want to be do. The last thing I want to be do. The last thing I want to have done to me.
Last thing I want to be do.
The last thing I want to have done to me is be trapped long Coinbase at an all-time high.
Not you, not a guy like you.
Not me. I absolutely refuse to be caught long this stock. I don't care about any other stock.
You know how many times I've heard you say this going into another opening that's higher? Countless.
Yeah. I don't want to be long Coinbase. Don't get me long Coinbase. Bitcoin down 700.
No, that would have been horrible this last month.
I know. Well, I missed that. But there were a few stocks that, I don't know. I mean, I shouldn't say it's not even relevant, but Tesla was up this morning, I think. I kind of remember it being higher. PLTR was higher this morning. It's down now. Costco was higher this morning.
Bitcoin sold off too, and for PLTR, yes. And Tesla was higher, yes. You got your Apple up $1.
Apple was up like $4 earlier.
It was traded all the way up to 215. It's 212.
Yeah, correct. Unfortunately, in Apple, they this sell-off. I was pretty aggressive adjusting this morning, so the sell-off is not perfect for the good kids. I got to tell you the truth, not perfect. I'm going to roll down some calls in Apple as well. Keep my short deltas intact. Can't hurt me.
Oh, they're not going to catch you.
They are not going to catch me.
Not at all. Costco, not like this.
Costco's a pig. We are.
Costco's an absolute pig. It's one of my few longs that I was really counting on. Southbluff. I was really counting on Costco to be 1,000 by now.
It is a PIG pig.
It is a PIG pig.
Mm-hmm.
Down $3.
Yep.
Trading 947.
I know. Yep. Well, anyway, it's not the disaster that it was earlier today. Let's put it that way. It's a good close for the good kids. So,
you've been up money all day long. Bonds have treated you well. You've traded good. Don't be trying to show some like, oh, look at me, woe is me. Somebody have sympathy for me. No,
I don't want sympathy.
No sympathy for you. Zero.
No sympathy for the devil. Just remember that.
It's a great song. Are we humbly stumbling into the close here, up 10?
What was the high today? Up 30.
Even the S&P 74, 63, 74, about 30 handles higher, 28 handles higher.
Yeah, so they were up 40 at one point. Yeah, a little bit of a stumble.
Okay.
I mean, it's not blowing the doors off. Let's put it that way.
Okay, well, we haven't done that all week as we've gone through newer highs, just kind of stair-stepping higher. What do you think about this volatility hanging out at 19 now, just doing absolutely nothing? It was down around 1860 earlier. First down tick, volatility kind of behaved nicely to that.
I mean, what I think is interesting about volatility here is that, I said it all last week. Market's making new highs, but volatility's not making new lows. It's a different kind of environment. And the relationship between volatility and the stock market is really strong. I mean, the inverse relationship between those two.
It's well documented.
It's well documented. It's in the high 90s. And it's not playing out right now. Can you imagine if you were short vol instead of long S&Ps? You'd be sitting going, damn, what the hell, dude?
Man, I stink. Man,
Yeah, right. I had the market called perfect, and I didn't get paid because I traded the wrong product.
Right.
Yeah, I don't think people that are trying to get back their short vol are getting it back.
Yeah, I would say you're right. I would say you're right. And the way
our theta numbers are almost double what they were 2 weeks ago, just because A, volatility hasn't gone down, and B, we're getting a little bit closer to expiration. But this Friday, when we roll forward, it will take a lot of our short premium off.
Sure.
And we'll roll it. But let's see how they close today. I don't know.
Understood.
Yeah, I mean, we got a few minutes left here to play a few games. I thought, the move in gold and silver today was pretty significant. The move in natural gas was also a huge move. The move in bonds was a big move today, and the move in the S&Ps was a big move. For stocks, other than Coinbase reversing and Tesla, there wasn't a lot of reversals this week. It's so hard to play, like, thinking about earnings, because Netflix was down 65, now it's up 25. Google opened up and kept going higher. Tesla opened up and went down. Like, there's no way hey, you know what, I'm fading this or whatever it is.
No, of course not. Of course not. Yeah, you can see Tesla was up to 338. The low is 226. It's only $2 off of that.
I just wanted to fade digital assets.
And Google's making new highs, or on its highs for the day, I meant. Yeah.
Right. I thought the whole trade today was to fade anything that was up on all this crypto stuff. And, I know ETH sold off a lot, but I thought Robinhood was the most overpriced stock, and Coinbase was the second most.
You said that pretty early on. I got to give you that.
And I thought Coinbase was the second most overpriced stock, and those stocks had huge turnarounds. But we still got some work to do in a few of these other stocks. I mean, I think Meta's crazy priced right now, but it won't turn around. Roblox still crazy priced.
Yeah, but they haven't had any downticks either one of them.
Nope, not even one.
All right.
Not even a freaking one lot.
No.
We did get a nice up move in Nike today. I don't know if you still have a Nike position on, but finally.
I do not.
For all those Nike longs like myself, we needed it.
IB rank at 19. I got out over the last couple of weeks, but yeah. It's had a nice rally, up to 74 and change now.
Yeah. It's back in play. All right, I'm good it's Monday. Don't forget, this Friday, the Bat and I will be in Denver. And if you want to sign up, tastylive.com/events, tastylive.com/events. This afternoon, we got the Overtime Boys. We got Dylan and Chris, and sitting in for Ilya, who's on vacation this week or on holiday, is Nikki Bat. So,
that's right. Hardest working man in showbiz right there. Nick Batista. Yeah, there's some similarities to my last name. He gets his work from his dad.
I don't know if you want to brag about that if I was him.
Oh, speaking of them, there they are.
Hello, boys.
Hello, hello.
Hello, hello. Welcome.
Are you gonna take that, Nikki? You can't let this guy stay. You can't let this guy take credit for you.
Which one, my dad? I'll give him the credit, but
No, you can't do that. He doesn't deserve it.
Oh, come on. I mean, he's old and decrepit. I let him have his couple wins. Come on. What do you want? Yeah,
Dylan, come on.
Tom,
you're your own, Nikki. You're your own man, Nikki. You're your own man.
He barely knows where he is right now. Come on. I mean, look at this guy.
Dylan, he's just trying to pay his mortgage. He shot an 81 this weekend. He's trying to get Sazonov on the golf course. That's all he's trying to do.
You kidding me with that beard? He looks like the Turkish king. He could do anything he wants with facial hair like that. Well, you don't worry about. I'm not worried about him for nothing.
You make a good point.
He's got a little Turkish king in him. I kind of like that.
He's like a commanding Turkish. He's like the king of Topkapi Palace in Istanbul. This guy.
Well, the Batista lineage over there isn't as Italian as we once thought. So there's a whole lot of things in there.
Oh, 73%. 73%. We were conquerors, son. I wasn't hanging out in a kibbutz just like doing nothing. My family was out there. conquering things.
Tony, are you Albanian pretending to be Italian?
I'm a lot of things, pretending to be a lot of things.
Yeah.
Just one of the long lines. Have you ever done your 23andMe over there, Mr. Allegedly Vecchio?
You think that I'm giving my blood to some private company that could go into bankruptcy and?
No, it's the government now. Now the government has it. It's fine.
I've seen my family's records at Ellis Island. I can guess that.
Big deal. I got my family's records from Ellis Island too. Yeah, I got my mom's marriage certificate right here. I mean, come on.
Okay.
What do you mean?
This guy. He's got the paperwork on standby. This guy.
Hey, there's 3 of my grandpas at Ellis Island. They've all got different socials too. I mean, you never know.
How do you get 3
names,
How do you get
socials?
How do you get 3 grandpas?
Well, that's a good question, Dylan. I wonder that too. The paperwork wasn't as secure that time in history.
Apparently not. Apparently not.
All right, I hate to break up this little immigration fest, but let's talk about kind of this
this major sell-off in the market.
This huge intraday reversal from record highs. The beginning of what I, as foretold,
God. Oh no. Oh no.
The top on Monday, down on Tuesday and Wednesday.
You are flying on Friday, or are you leaving Thursday? You're leaving Thursday.
Thursday, but usually it's the next day that we have the big down opening.
No, you usually get some of that on the flight. Vecchio knows. I've texted him every single time.
I've never taken the trade, and it's like he's 4 for 4.
It's unbelievable. It's unbelievable. So maybe a little.
Yeah, I think you could have. I think you could get a little bit of nasty for the rest of the week. You could. I don't know. You could.
Well, thanks. I'll take that to the bank. I really appreciate the defense. That is a reason to open up, to take a loan and get a bigger position, because it could get. Sosnoff says it could get nasty.
Mortgage could get nasty again. He said that last week too.
I'm gonna non-recourse.
If you had watched the Sunday night show with Chris and I, we kind of outlined this whole thing up today after the expiration, and then sell off.
Who's to say I don't watch the Sunday night show? Who's to say I don't?
That's because you have a life, Dylan. You have a life.
Do I? Where is it? I can't find it, so I don't know. I had to give up all romance and sports. All I'm left with is stock trading and hotel rooms at this point. Yeah, I'm a working man.
Dylan's been doing the rounds, man. You've been on every network. You've been on every network in the last week.
It's the global domination tour the last 2 weeks, and there's more to come.
Spreading Dylanism.
Dylan found out the secret to success is working hard. He's figured that out.
I get there eventually. I'll get there. I got there eventually. But anyway, can we talk about my long dollar position and how I'm going to get rich long the U.S. dollar? It's going to be one. Sure. What do you say? Nikki likes it. Nikki's with it. The bearded king.
Well, you didn't get rich. You didn't get rich the U.S. being long the U.S. dollar today. That's for sure.
Not today. Yeah, well, but it's had a nice little run.
I don't know. It's kind of questionable.
Yeah, but today was not a day for U.S. dollar fans, but the yen was up big.
It's terrible.
I am going to Japan in the fall.
Really? Nice.
Yeah. We got big. We're going to spread the gospel of Tastytrade and sell a couple of sneakers on the sides. So.
It's
I love it.
Japan's still cheap. The yen's only 68. It's cheap.
I don't know. I mean, we came into this a couple years ago when I first started at Overtime, and Vecchio and Ilya, all they would talk about is the yen, the yen, the yen. They're like, oh, it was like New Year's 23 or 4 or something. Their number one trade was yen, yen, yen. Next thing you know, broke.
Well, it's been a favorite trade of mine all year, so I'm not going to complain. Wow, a little sell off in the bonds here on the close. Don't like that. All right, last words, Vecchio. Go ahead.
This market's probably priced for perfection, and the Nasdaq hit its upside technical target today, so I'm out of my longs. Are you?
Nikki, last words.
Inside up for the earnings this week. and then it's over. Then it's done.
Okay, I completely disagree. Dylan?
Listen, this thing's going to rip like there's nobody's business.
Oh my God.
It's detached from reality. So just stop thinking and enjoy the ride.
Bat? Last words, Bat.
I don't see anything different here than any other day the last couple of weeks. It's more of the same. Wait for volatility to uptick. It's not upticking. This is just a momentary stop up 12 handles on the E-mini S&Ps.
You heard it there, boys. Only earnings play we did today was GM, and it was really small. So we'll see.
Let's take a quick 90-second break and come back. We got the Overtime Boys next. Peace.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tastytrade. Download today.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Look who's back testing. Tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tastytrade.
You can get up to $4,000 when you open and fund a new account with Tastytrade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tastytrade. Make your move.
Stocks don't stop going up, or do they? It's Monday, July 21st, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Dylan Radigan in Milan, and Nick Batista in Chicago. Ilya Spivak's out this week, so we'll have a rotating cast of guests here to fill the third spot. Welcome to the show. Thanks for joining us. If you're on the platform, Tastytrade, if you're on the website, tastylive.com, come over to YouTube. Tell us what you think of this action. This late day sell-off in stocks, in bonds, it was all working out a little too easy and well this morning when the NASDAQ ripped to a new high. Treasury Secretary Scott Bessent told us that the August 1st deadline doesn't really matter. But the market today is, well, the day where we have low volume, low volatility, positive technical drift. We do poke up to a new fresh all-time high in ES and NQ before a late day sell-off reels things back in. Bonds do settle to the upside after, again, a late day sell-off peels us back from the highs, I should say. Gold and silver hold on to their strength. Silver up a healthy 2% right now, up over $39 once again. Gold likewise potentially breaking out. Nat gas collapses today, and we have a slew of movements in the FX market, which are really grinding my gears. But before we get there, Nick, you're new to the show. Welcome for this week. Talk to me about this market here, my friend. You and I were both playing for the upside. I got out a little bit earlier. You think this thing's going to run still? Why do I have paper hands and you don't?
I don't know if we have the same sort of velocity to the upside that we've seen. I think, I think it's hard just generally to be short into the Mag 7 tech earnings. I just don't see a realm where there's anything to be concerned about with those earnings. And so, I think that a lot of them have had their run up when you look at a Microsoft or NVIDIA, obviously, where you've had these just, V bottoms totally to the top, if not beyond previous highs. It feels like, at least for the next couple weeks as we digest these earnings, the downside is kind of capped. And I think the upside is capped a little bit too. And that's why I think I lean inside up on these earnings. And once we get through this earnings, I think the catalysts for more upside become lesser and lesser. And that's when we could see a little bit of weakness. So maybe a couple weeks, that's when we can get some sort of pullback. But I just don't see the markets rolling over with all these big name tech earnings. And I just don't see them coming in, with any sort of surprise.
Dylan, it's another day and another few dollars to the upside while we don't close at the exact highs. Still another 0.5% for the NASDAQ, 23,342. Does this thing still have legs?
Yeah, I mean, I think that it does. I agree with Nick. I think that basically, we kind of took the inflation scare in the beak last week, I guess it was it last week with the CPI or 2 weeks ago, CPI, PPI,
sure,
and sort of dealt with that. And then, the market sort of has no short-term memory. I totally agree with Nick that the earnings are going to drive the sort of short-term action, and that the earnings are going to be great, relatively speaking. I think the economy is remarkably strong. I do think inflation is a real risk, just to put in my 2 cents on Ilya's behalf. So I don't think that inflation is a non-factor, but I do think that that it is not a relevant factor to the price action right now. I think that the earnings momentum is the relevant factor. And I do also think, I joke about the dollar, but I think that the dollar weakness is actually an asset as well, both in terms of some of the export drive on these U.S. multinationals, and then also on, sort of the crypto front and all the rest of that. So, I mean, obviously we came off of the dollar lows there, but not by much, and it's already kind of started to roll over a little bit. So I just think that between the momentum that the weak dollar provides for things like Bitcoin, combined with the earnings that the weaker dollar drives in terms of the export for some of these big multinationals, and I think that the fact that the inflation numbers are considered to be immaterial at this point, at least for the week or two, is all reasons why equities go higher, crypto goes higher, and having a good idea about why things shouldn't be the way they are is the surest way to lose money.
You guys mentioned these tech earnings. I think providing some context around the earnings picture thus far would be useful. I don't have this information as of today, but coming into this week, we did have, according to FactSet, 12% of the companies in the S&P 500 having reported their actual results for Q2 2025 to date. Of those companies, here's the silver lining. 83% have reported actual EPS above estimates, which is above the 5-year average of 78%. This is where the cloud gets a little bit darker. Companies are reporting earnings that are 7.9% above estimates, which is below the 5-year average of 9.1%. And further to this point, the blended earnings growth rate, which is combining the actual results for companies that have reported and estimated results for companies that have yet to report, that's currently sitting at 5.6%, which it seems good, it's positive. But if 5.6% is the actual growth rate for the quarter, it will mark the lowest earnings growth rate reported by the S&P 500 since Q4 2023. So things are good, maybe decelerating in a certain sense. And this is also Q2. This is the tariff quarter, right? Like April and May. I don't know if the market's going to penalize companies for having some volatility in their Q2 figures, given what was injected into the market, broadly speaking.
Yeah.
Right. But
and those stocks don't matter either. It's not the Mag 7s. Come on. I don't care about those other 10, 20, 30 names. It's the It's Apple. It's Microsoft.
Well, these companies are making money. They're making a ton of money right now. 83% of the companies that have reported actual revenues above estimates, which is above the 5-year average of 70%. So there's some things to like. There's some things to raise your eyebrow about. Verizon gave us some decent numbers today, which helped get the market going this morning. Dylan, I suppose in fairness to our fair Soviet friend who is not with us at this time, he's alive still. I just realized how that sounded, which actually... I burn sensitive documents now and again, like old medical bills and whatnot, I don't trust the shredding. And so I described it yesterday to someone as burning trash. And that got a lot, that was like, that's not what I was doing. I was not burning trash in my yard. Okay. I was destroying sensitive documents in my fireplace. So wording matters. Words have meaning. Okay. So in fairness to Ilya, this is what he might say for the bears out there who don't think that I give bears a fair shot. We had a relative local high near 63.55.
Are there any left, by the way? I mean, I'm sorry to cut you off. Are there bears left? Have they survived this?
Ilya claims he's comfortably short, which I don't know what it means. That means at all-time highs. He would say here, which to his credit, right, you had a market that tried to break out above 63.55 or so, immediately rejected and pulled back in. Breakout failed. You see this in the NASDAQ as well, where we try to break out to a new swing high, although the NASDAQ doesn't quite give it up. So I would contend with him that this market still looks pretty good after this engulfing bar. Either way, though, it's a low volume, low start to the week. Nick, before we go deeper into other issues, I do want to touch on the earnings that are due out. I flagged a few that I think are interesting in terms of companies with large market caps. Mm-hmm. Maybe you have a better perspective on this, but for Tuesday, coming up tomorrow, Coca-Cola, Philip Morris, Raytheon, Wednesday, Google, Tesla, IBM, Thursday, Honeywell, Union Pacific, and Blackstone. You've been talking a lot about these tech earnings here, so I'm assuming you're laser focused on Google, Tesla, and to a lesser extent, IBM for their AI products later this week.
Yeah, I mean, I think Google has been kind of my catch-up trade. It's been an absolute pig for the better part of, the rally that we've had and is now kind of catching up. I think there's more upside in a Google/Apple in just the news not being as bad as what has been priced into the stock. So I think there's more upside in those sort of names relative to a Microsoft or an NVIDIA, where I think, as you said, they're kind of priced for perfection, or at least it seems like they are, or at least priced for as good a earnings report as you could get. So these are the names I'm looking at. I think Tesla is a goofy one. I mean, it's obviously just moving on, or has been moving back and forth on whatever is happening with Elon. And I think that, the fundamentals of it obviously don't matter. So that one's the one that I have the most uncertainty of. But I think generally playing it to the upside is the asymmetric bet. I mean, that's just how Tesla trades. And that's how I typically trade it, is upside.
Put spreads?
You could sell put spreads. You could do diagonal spreads, even like trading calendar spreads or stuff like that, where you kind of play into the upside call skew that you typically have here. I mean, that's the sort of trade that I play here. But put spreads are definitely the more conservative way to play for it.
I like the tech. I mean, I like being long the tech names going into earnings, honestly. I mean, I guess the Tastytrade thing, the Tastytrade way would really be obviously to do a condor or something before the earnings and then just let the vol come out. But directionally, I like the put spread as a sort of halfway between a condor and a naked call, I guess.
Mm-hmm. You bring up Google, if only to wave a flag here a little bit. Dylan, back in April, a little over 3 months ago, we were given an assignment by our editors here on the desk, and we were asked to, what did you like before the market sell-off? What do you still like now, right? And we on April 9th and April 10th talked a little bit about Google and Meta, the clear-eyed case for Meta and Alphabet, given some of their cash flows and the way that their earnings have shaped up. I don't know if we can make that case anymore for Meta. Meta right now has a forward PE ratio of 27. That's very different than the 20.4. It's no longer below the 23.5 5-year average. Google's a different story. Google's forward PE is now north of 19, and that's still below the forward PE ratio of 21.5 over the last few years. So if I'm thinking about this market now and how it's behaving, I mean, Nick, Google would probably be the one company that I feel like has some catch up still to go, considering it really has not had the year that a Microsoft has had or a Meta has had. And, you know, it didn't have the AI rollout that many people thought it would, and its business model, Google Search, being pressured by all these new chat tools. I'll be honest, I don't ever use Google Search anymore.
Really?
I only use ChatGPT now. And
same for me. GPT is the new Google.
There's no.
It really is. The kids call it prompting. That's what I've been heard. That's what I've been told.
We do call it prompting. I'm still not.
You're part of that, Vecchio. You are.
Yeah.
Okay.
Yeah. 30. You know, again, my daughter's like, "Oh, you're so old now. I see all this gray." She keeps pointing out gray hairs on me and saying that like you're gonna die. It's like I got it. Right. I don't need that. Don't need that stress. Live. Thank you.
Our new intern has been just dogging me for the last like 2 or 3 weeks about how old I am. He was like, "Man, I thought you guys were like young. Come on, man. Respect your elders here, all right? Don't just straight up call me old."
So you have a Google that's like really like, you know, there was the threat. These GPTs, LLMs are going to displace Google search, but Google's been able to reinvent itself, and it's AI now, as we've looked on Polymarket previously, with you know, the AI analytics platform that we found on Twitter, artificial analysis. They rank Google's AI very, very high right now, Gemini. So it has a nice bit of a pop here going into the earnings, 2.72%. Do you guys kind of feel about Google the way that I feel about silver, which is to say that the other tech names had a big run earlier this year, like gold did, and now it's really these laggards. It's their turn to play catch up. Dylan?
Yeah, I do. I absolutely think that the tech names are set up for a mad dog run. I think that, you know, that everything that's happened in the first half of this year was greatly disruptive to a lot of perspective for very good reasons. But I think that a mad dog run is teeing up here, and I think that kind of right about now is the time. Of all the names, I mean, I still always kind of come back to Meta because I like Meta as an AI play, as well as also a sort of the dominant advertising play. I don't Google as well, but Meta always ends up being kind of my default favorite, as well as I tend to be more comfortable with the Tesla situation, even though it trades based on the abstraction of Elon Musk and the promise of an uncertain future and all those things. But I just think that that's actually sometimes the less information you have, the more valuable something becomes. Like the details of information actually can frequently reduce the value because it becomes so concrete. And so for me, yes, I like the overall situation, but more than that, I really like Meta and Tesla of the Mag 7. I wish I could say I liked Apple, because I really do think Apple should be more dominant than they are, but I feel like they've had a hard time kind of really getting into gear in a way that is consequential.
I saw some headline today the flip, the sandwich phone is the next big idea for Apple.
I mean, like, back to 1999, Back to the Future.
Like Samsung has the or is it the one of the Google?
Oh, the folding screen. You're saying
the folding screen? Yeah. I mean, if that's the best they got, that's a tough.
I mean, that's a sad state of affairs, in my opinion. If the best they've got is a folding screen.
Apple's still being punished for not having AI. They don't have functional AI.
I was just going to say they should have a dominant. They should be. Siri should have put them in the driver's seat for AI, in my opinion.
Mm-hmm.
Skype losing out to Zoom and Siri losing out to ChatGPT are probably two of the bigger fumbles in terms of having lead time within a particular industry, having like a dominant, you know, frontier market position, and then just absolutely losing it through sheer mismanagement and poor decision making. Skype doesn't even exist anymore, which is wild.
Yeah. Didn't they
Right.
just shut it down like a month ago or something? Was it
Which is-
Microsoft that bought it? Who bought
it's
it?
so crazy. So LeBron James gets drafted and starts playing, and then Skype premieres. And Skype is now shut down while LeBron James is still playing. Like he outlived that entire service, which is like, I didn't think I'd outlive an internet technology, which is a fun transition because we're going to talk about an internet technology. Do you like buying homes algorithmically? Do you like having a team of human meat bags go in there and fix them up and then sell them to someone else at a profit? Apparently a lot of other people do too. Open Door Technologies, based out of San Francisco, came into this week with a short float of 22%. So there's a retail trader gamma squeeze going on here, led by someone who I actually like and follow on Twitter and have for years, Eric Jackson. He was a guy who called out Carvana a while back before it had its big run up. So he has some accolades. If he's not a kitty, he does certainly make the market purr. Okay, we're not going to go into that direction, Nick, but we are going to say that this feels a lot like GME and AMC from years yonder, January 21. Can you talk through what's happening here? Like what a gamma squeeze is, remind people. This really feels like a topic we haven't had to cover in some time.
Yeah, it's underneath the surface, basically the amount of options that get bought, particularly to the upside, causes a squeeze because there's a shortage of shares, or the shares are hard to borrow, or there's a cost to borrow those shares. And so it's kind of like a cascading event of, the more option flow comes in, which means that, the stock moves higher and the borrow rate relative to the price of the stock gets more expensive, and whoever is short the stock is typically having to buy back those shares. And when you're buying, obviously price goes up. It's kind of a everything upside type flow, and it comes furiously within days, hours, minutes, whatever it is. Today, I mean, if you look at open interest or volume on the options, I mean, they're astronomical, which is
1.84 billion.
Yeah, is it just, and that's all like changing hands, and, that's not just one side. So, that's obviously just trading back and forth. But yeah, I mean, these things, they capture our imagination, and they just it's almost deja vu, right? I mean, they're not unique. They happen from time to time, and they're usually short-lived. The GME and AMC have been far longer time horizons, but yeah, it's crazy. I mean, it's fun to watch.
Dylan, is this the future? Tariffs on everything, labor being removed from the country, so there's going to be no supply of homes ever again moving forward. So those who own the homes now, they've won the game of capitalism. Might as well build a service around trading those homes.
No. This is just this chart is nothing more than a specific structural situation in a publicly traded security with a reversal of fortune, with a limited float and a big short interest. It happens from time to time. Everybody takes it straight in the beak, but it's not an indication of anything other than a small float, a short interest, and some good news at the wrong time for the shorts, so they just get face jammed. But it doesn't have anything to do with tariffs or the future of housing or any of that nonsense. It's just an unfortunate situation for the shorts, and a lucky and a lottery day for a handful of party boys that were in there in the right time on the right day.
Well, then, a modest proposal, Mr. Radigan.
Lay it on me, pal.
Here's rocket companies. Let me give you a profile of what just happened with Open Door. Open Door has a float of just short of 640 million shares, and the short float was about 22% coming into this week. Here you have rocket companies with a float of about 143 million shares and short interest of 51%. If Open is a powder keg with its short interest in the 20s, then what's Rocket? Rocket was up 7.5% today. I think other people are sniffing this out too at this juncture. I could make a hell of a technical case for this as well, because we do see a move here off the high. And what's this? You have your breakout, you pull back to the trend line, and we catch our 50 in 1 month, and we now move up to a new high. So clearing out 16. Who's to say this can't go back to 21? I mean, if there's going to be, Nick, you've pointed this out to me almost every day for the past 2 weeks. All of the no, that's not the word you use. All of the crap is rallying.
Right. That's a nicer way to say it, but yes.
Dylan, you say
flying.
Yeah, right. And Dylan, you're saying that this thing's just going to run right now. Why not?
Yeah, no, I like this. I mean,
trading?
you have my attention. I don't know as much about the situation as you do, but the situation you're describing in the context of the other situation is awfully appealing. I mean, I'd be interested in sort of how you structure this.
If we're going into if a retail frenzy, as social media and meme stocks, as it were, as it's now been dubbed, I will disagree. I think these are smart market participants who are seeking out and profiting from inefficiencies in the market. And while a lot of people could get run over if they join late, the folks who caught this early are obviously feeling pretty good about themselves today. So tip of the hat to them. Yeah. But Open Door really is the first one to get the attention right now. So maybe it spills over into some other things. I'm going to take a flyer tomorrow morning.
It's also such Open Door is was a sub $1 billion company. Rocket is a much bigger company, so it's a lot harder.
It is.
I get that you can definitely see that sympathy type move, but we're not. GME was moved when it was a $1 billion company or less. Sub $1 billion was when it started.
Yeah, like 800, I think, million market cap.
It was something around that. I mean, it's now a $10 billion company, which is obviously quite the valuation for it. But Rocket being at a $30 billion company, it's hard to move $30 billion to $100 billion unless you're Palantir.
I mean, the problem with that, is it also, I just don't know how much depth there is. I don't know how deep into something like this you can really go, just because of the float being what it is, Mm-hmm. I mean, because you're going to want to get extremely deep, but I just don't know if it's going to be available.
Oh, not extremely deep, like long the 17, short the 18 call spread. Maybe not at 25 days, but that's like a 4-to-1 reward to risk, right? Looking for another $2 it went up $1 today. Looking for another $2 here. You're talking in the neighborhood of 12.5%, which again, sympathy trades. This is not like this is not a way that we reliably make money around here on overtime, Dylan. But with that madman ethos, if we're at the part of the cycle, where we were in 2021, think about the timing of this. We get the retail meme stock, all of the, Nick, as you said, direct quote, shit flying, end quote. The market then tops out later that year, right? When the companies that really don't make any money and have no substantial reason to be rallying or going up.
I mean, all goes hand in hand. You got markets are at highs, so everything looks expensive. Volatility is near the lower end of where it's been trading. People look for this sort of stuff. Like, you're looking for something that's moving a lot, that's cheap, that is moving. That's it. That has some volatility. And that's usually, when my interest gets peaked to be, playing a little bit of downside in the market as a whole, when you have this sort of stuff. And we've had multiple of them over the last couple months. We've had, the quantum computing stocks. We have the, treasury companies now. We have the, the healthcare stocks are kind of the other direction, but it's been kind of we're getting to the point where it's just goofiness in the markets. And that's usually when I get a little cautious.
Yeah, yes. It feels like it's a good time to start getting some powder dry. The seasonal tendency for August, for volatility at least, at NASDAQ, the S&P 500 may chop around in August, but volatility starts to expand and historically spans a lot between August and September. And it just feels like everything, Dylan, everything right now is, I don't want to say price for perfection, but nothing's really dragging us down. It feels like a market that if something legitimate does happen, where a lot of people are going to be caught flat-footed. So getting a little bit more defensive here, particularly if you're planning on stepping back from trading. This is also on my mind. Like, I'm taking off the last week of August around Jackson Hole. And so do I want to have to be on vacation worrying about significant risk in the book? I want to be delta neutral, if not slightly short during that window. For my trading book, I'll keep obviously my long-term holdings. Those don't get touched. We accumulate there. But for the trading side of things, yeah, I mean, I think right now I have short deltas on in stocks in the tastylive follow account, just plainly. I'm long a put spread in ES now, which I guess is the best part of today. Dylan, we were talking last week about expecting one more little squeeze to the upside. It worked out pretty well. I was able to get out of the market at 23,410 today in a zero DTE NASDAQ call spread, 23,350, 23,500, and then the market keeled over about 20 minutes later, and that would have expired worthless. So I'm very content with how that. Let's be like Icarus and try to fly as close to the sun before our wings melt. Maybe they started melting today, but I'm free and clear. I got my parachute on. I'm coming back down to earth. And it just feels like it's a prudent thing for most people. This is not the time to get levered up when volatility is really low, when you have IVRs under 10 in NQ and an ES, Nick. That's not what the data suggests.
Yeah, I agree.
Okay, let's talk bonds. Let's go over to rates a little bit here. We're at the halfway portion of the show. We do need to talk something related to the Fed, even if Ilya's not here, Dylan, because Fed Chair Powell is speaking tomorrow. I guess there's a caveat to that, because Powell and Bowman, one of the Fed governors who will also be speaking tomorrow, are currently in the Fed's communication blackout window, whereby if they do speak to the public in a professional capacity, they're not explicitly allowed to discuss monetary policy or things even related to monetary policy. So Powell can't say, oh, yeah, I think inflation's heading in the right direction. And thank goodness the unemployment rate is going up, because low inflation and high unemployment could lead us into certain outcomes. He's not going to talk like that. He never does. So I don't think we should be paying much attention to Powell's speech tomorrow. That said here, though, Dylan, I couldn't help but notice that when Besant mentions that no tariffs may be coming on August 1st, the long end of the Treasury curve gets its lift. Is that the entire game for us right now as bond traders, this on again, off again?
Yeah, well, because the bond market is just pricing inflation at this point. The bond market is pricing inflation, and it's pricing, time to rate cuts. And so as long as the more tariffs there are, the more inflation there is, and the longer the time is to rate cuts, and the less tariffs there are, the less inflation there is, and the less time there is to rate cuts. And so the tariff thing is really the lever that controls the bond market right now, although the bond market also controls tariffs, because when the tariffs become out of whack with whatever the bond market deems tolerable, you can see what the chart does when it jacks up as it did in April and all the rest of it. And so there's sort of this two-step going on between the political piece of the economy and the president and the Trump administration and the tariff talk, and then the bond market's calibration of whatever their perception of the realistic probability of that action actually is, and its implications for inflation and timing to rate cuts. I tend to be, as you know, somebody who looks at any sort of tariff-driven sell-offs, whether it's in stocks or bonds, as a buying opportunity, because I tend to be pretty confident that we're not going to see material tariffs, that tariffs will end up being some version of 5 to 10% reciprocal in most places. It'll be modestly inflationary, but anything sort of above and beyond that, with probably a few exceptions, maybe American steel and stuff like that. I just think that the numbers are going to be actually pretty benign relative to expectations. And so when you get a sell-off, wherever it may be, that sell-off tends to be an opportunity, not a liability.
Opportunity, not a liability. Nick, have you had better luck than I have in bonds recently? I suppose it's been okay, but my directional shots to the upside haven't worked. It's only been the neutral trading strategy, short iron condors, that have given me anything worth writing home about.
Yeah, I've been sitting here. I'm long around like the 112 handle. So, I mean, I've been playing for bonds to go up, rates come down. It obviously has not worked over the last 2 weeks, but this is a nice little move higher. I think trading in a range and playing with iron condors or strangles, if you can hold that sort of position, is kind of where you're at. I don't think rates are going anywhere significant. Like, I don't think there's a big change in rates on the horizon anytime soon.
No, and the market's been pricing in a reduced risk probability of that coming into this week. We see that Fed cut odds for both July and September are now at cycle lows. So I don't think that's going to be much of an issue here. No one's going to talk about it. No one's going to complain about the fact that rate cuts aren't coming because rate cuts are medicine, right?
I know one guy that's going to complain about them not coming.
Won't be me. No, rate cuts are a good thing for the stock market. Things are holding up. Right, Dylan? Hasn't that been the mantra for the past few years around here? We don't need rate cuts. Stocks are at highs. Good news.
I know, but we have this new situation where there's one particular individual that my friend Nicholas has just referred to, who believes that he has a very specific vision of where rates need to be, and the longer the rates don't go to that location, the more boisterous that individual is likely to become. Although I do think that the bond market is more powerful than that individual, and I think that the people around that individual are pretty. Even when that individual floated the termination of the Fed chief in recent days, it lasted, I think, an hour and a half or something before it was tabled.
Less than that. I think it was like 30 minutes. That
30 minutes
was maybe 30 minutes before somebody came on and said, no, that was just a thought.
Well, they got the preview of it, right? That little hour or so window. Yeah. You had stocks down, bonds down, dollar down, gold up. And it was just like flashes of early April across our screens again. And that's the reality. Powell gets fired. Gold's at $4,000, right? I mean, I hope so. I don't own nearly enough gold. Powell's getting fired. My goodness. But rates here are a stick in the mud. I do want to go over to the world of currency because, Dylan, you made a bodacious claim before that the dollar is going to make us all rich. I feel 11% poorer on the year thanks to the dollar's performance, but perk up my spirits. Why is today's price action make you nonplussed?
Me?
Yeah, you're Dylan.
My comment is not a reaction to today's price action. I continue just to hold. I mean, look at that chart, bro. I mean, look at the last 6 months. And so I just think that the absence of an alternative in general and the severity of the sell-off give me more confidence in that little sort of uptick sequence you're seeing in the days, before the last three candles there than these three candles offer us. And so I just think that based on price extreme alone, that the asymmetrical probability, to use my friend Nick's phrase earlier today, is still dollar positive more than it is dollar negative. But has nothing to do with today's price action.
Okay. Nick, do you have any currency exposure going on?
I do. For the last couple of weeks, I've been getting along the dollar in various ways. So I am in total agreement with everything Dylan said. It hasn't been a fun trade to be in, but I am nonetheless in it. I got some call spreads in the euro here. I put some on today. I'm long a couple of different currencies, or I'm long the dollar against a couple different currencies in my TastyFX platform. I am short the Aussie dollar against the US dollar. I'm short. I'm long against the franc. I'm long against the shekels. So I got a couple different positions that have not been fruitful for me. But I agree with Dylan. I think and at some point I feel like that's going to come into play for the big man. You can't have the dollar continue to be weaker, purchasing power being weaker. I feel like that's a bad story. I feel like that story is going to have to be talked about. Real returns with, against stocks is basically zero. So,
well, yeah, right. If you're a foreign investor right now and you've been investing in the U.S., you are negative year to date still.
So that's a story.
That is something to consider. Yeah, dollar Swiss today. Interesting move here to the downside. not a huge move, but many of these currencies are trying to cross a threshold where the dollar previously, was living, and it doesn't look like we're able to get through there right now. I point that out for the British pound, for example, which we are trying to get back above the uptrend that we have from the January, the April swing lows here. We run into the backside of that, plus the 1 month moving average today and stall. You can see that in the euro, where we've actually already overtaken a former swing level. We fell below it last week, and we're now back above the 1 week and the 1 month, coupled with the earlier year-to-date high in April. That's not looking fantastic. The yen here, this is the real sand in my gears today. I had a great day otherwise trading. The yen decided to bounce because the Japanese elections weren't as bad as the market feared. Bad being that the current ruling LDP party with its coalition partner Komeito doesn't want to roll back the consumption tax because they already run gigantic deficits and debts. Debt to GDP ratio in Japan is near 250%. And so with these other parties making inroads, the odds that this consumption tax would be axed completely, we have to unroll that a little bit here, because LDP and Komeito, they lose the upper house, but they still, the prime minister is still going to stay in his job. So we're off of those extremes. What does that mean to anyone here? I don't know, Nick. What I do care about is the fact that this is a politically driven bounce to the upside, and it doesn't change the fact that regardless of these election results, the reasons why I was short the yen still persist, because we take a look at the CFTC COT report and the Z-score for yen positioning held by speculators, rolling 20-year basis, still north of 2. It's an extremely crowded trade right now still. So I'm going to continue to lean long the yen. One day does not make a trend, Dylan. I think that the dollar has a chance here still, and so I'm going to keep pushing on with that. The 0067, 0068 call spread, I know that's a place where people were shifting, as we've been discussing here on Overtime. I think going even further out of the money is a lot more fun because we have more convexity, and if the dollar is really going to rebound, the two prime places would be the currencies that have suffered with their own higher yields, the British pound and the Japanese yen. So my heart's still in this trade. This is the blemish on my blotter for today's session. And there is a rational explanation for why it turned out the way that it did. Fade the rally is basically what I'm saying.
Fade the rallies in
6J, 6B, 6J, and 6B. British pound, Japanese yen. Dylan, we've been metals people for a long time. Nick, we haven't heard you opine on this in a little bit. Quietly, gold is putting in one of its highest closes ever today. This is the 1, 2, 3, 4, 5, 6th, 7th highest close just by eyeballing it right now. What's your take on this metals market? There's no longer the volatility that we had in here the last time we sniffed 3,400 an ounce.
Need to be long assets. I think that's the sentiment across the board. I mean, I think the move today is helped by the move in bonds, obviously. But I think in general, it's just, you see the movement in Bitcoin and you say, you know what, maybe there's something of a catch-up trade in gold there. I just think it's, risk on, just trying to buy assets. I guess gold's not really a risk on asset, but I think it's own assets is the fact here.
But I just wonder, do you think that the own assets move if you're a dollar bull, do you have to be cautious on gold and silver and Bitcoin and all those sort of dollar alternative things? Or can the dollar rally and you can still have the metal strong, crypto strong?
It's a good question. It's a good question. I don't know. I think it's it's an interesting point. I think it's just kind of a own everything. I mean, we've watched everything go higher. So
it's just a risk on party boy party.
Exactly. And I think this
don't
was
overthink
kind of stuck in the mud for the last,
months.
2-3 months. And, it's having its moment. I think it's just a risk on catch up.
I mean, if we're going to flood the system with more stimulus, I know it's unpopular. We are, right? But I know it's a weird way to conceptualize it, but what's a government deficit? Government deficit is a private sector surplus. And where is all the money going right now? The bottom 80% are getting a tax hike as a result of the Trump tax legislation. The top 20% are getting a tax cut. Where do wealthier individuals put their money? Do they spend it more on knickknacks and blue jeans, or do they save it? They're more likely to save. They have a higher propensity to save at the margin than lower income or middle income people. And when they save, do they just put it in the bank? No, they have a required rate of return, so they're not just going to clip CDs. They're probably going to put it into the market or real estate. They got to make it rain somewhere, and they're just not going to get the return they want in their savings account. So the tax cuts that are going to the top 20% probably flow back into assets, Dylan, which I think has been a consistent point of view of ours around here. And I think the price action is just vindicating it. So even if we have a pullback in the equity market, like give me a 5% down move over the span of 2 or 3 weeks, get a lot of people scared, absolutely got to buy that dip, given this backdrop of just liquidity and more deficit spending and a Fed that may cut. And let's just say the Fed cuts with all this deficit spending. What happened to stocks the last few years? They went up. We don't need to overthink that for now. Nick, let's go in a direction where you'd like to go after this, but I know, Dylan, yes. I want you to go out the door here because you have another engagement that you got to get out for. Give us a final closing word before you flip off and head off.
I just think don't overthink. I think it's a risk-on world. You got the earnings. I think that, you know, that overthinking it is where money goes to die.
Well said, Dylan. We'll see you tomorrow back here on Overtime. Thank you very much for coming here today. Folks, we'll see Dylan tomorrow. Nick, it's just you and me the rest of the way here as we wind up this show. Our very friendly friend here has another engagement at 5. He's very busy these days.
He's a popular guy. He's great on air. So, you know, we can't keep him all to ourselves.
That wouldn't be fair of us.
No.
Nick, let's go in a direction. What do you want to talk about here as we wind things up? I have a few other thoughts in my mind, but do we really want to talk about oil? Right. Okay.
Oil's been a great trade. I'm trading any sort of out of the money premium over the last, you know, really since obviously the 12-day war that ended, but for the last couple months has been a good trade, mostly for the year. I mean, you had their face ripper when we were in our little war, but other than that, it's been a nice vol contracting theta decay trade. It's not very sexy, I get it, but I give it its dues, Chris.
I asked Tom this often enough when volatility is this low. Do you see the 19.6 IBR in oil as still worthy with engaging? I know it's not 100 anymore like it was a few weeks ago, but it's still better than ES or NQ.
Yeah, I think there's still meat on that bone. I mean, obviously with anything, size is important, but I think to have just something a little bit more diversified from the rest of your trading, oil is something that, you know, you should have some positions on. Whether, you know, with the low volatility, if you just want to play one-sided here or just sell a put spread, just sell a call spread, as opposed to playing both sides and avoid some of the volatility one way, I respect that, but I still think it's tradable here.
I talk about this all the time. I'm writing this down actually right now. I got to share this on Twitter. Oil study. Okay, it's written down. I've read this study so many times in recent years, and I'm sure the authors have updated it again. I got it through one of these CFA emails that I have, but it was like, how do you predict oil prices in the market? And the data shows that if you're going to make a bet on where oil prices are going to be at any point within now and 364 days from now, you bet on the current price. You're more likely than not to be correct. Once you go past a year, you can start to look to the futures market, and the futures prices actually a pretty good forward indicator. But don't look to the futures market, right? I would never go to the trade tab here and say, like, where do I think oil is going to be, in November? Okay, 63.83. That's where oil is going to be. I mean, maybe, but I would rather bet on it being at $65.73, given the preponderance of history. So, according to that point of view, I've been doing directional neutral things in oil again post the 12-day war, and it's worked out just fine. Volatility's come in, the market's been pinned about $2 higher, so it's not the end of the world. It's not stocks, but it's working, And if it's not broken, don't fix it. I know that's not really fun to say. I'm looking at the trade ideas here, right? You know, we want to play something like Out of the Money, Madman, and Rocket. This is not one of those. This is a very like workman's type of trade, risking 4 to make 1, 65%. Like you just do this, 45 in, 21 out.
The bread and butter, baby.
It's a great phrasing. Bread and butter trade.
Sell an iron condor with, you know, you want to go 58 days out. I'm fine with that. Do a 1 or 2 point wide iron condor. You wrap around the 60 to 70 handle. It trades at 1/3 the width of strikes. It's a pretty cookie cutter trade. That's kind of been where the trade has been. We've bounced between 60 and 70 for the better part of, 6 months ish, pretty much the whole year. Besides our one, explosion to the upside, I think that's just how you do it in oil.
We need to talk about what's going on in natural gas. Sure. Is there a chance that you're doing anything in natural gas that's not as nerve-wracking as what I'm doing?
I do not currently have a position in natty gas. I actually played it to the long side, I believe was my last trade in there with Mr. Westwater. So we were selling put like at the money put spreads. I took them off early in July 2nd on the 14th, but I see I avoided some pain today. What is happening there?
I think it's just the fact that the weather forecast for the area, they're just not cold enough for the Northeast. I mean, the new NOAA forecast for the week ahead have a gigantic heat dome over the middle portion of the country, but by population, it's not like the heat dome that we saw earlier in June. So this demand for natural gas might not tick up from here. I'm directionally neutral now. I got out short last week at the low on July 9th. And so when it rallied back, it felt like a slap across the face. So I'm a little less bothered by getting out, but I did switch to directionally neutral. And so this movement isn't exactly crazy for me here. Where are we? NQ. Do we move out into the next? Where are we over here? NGU5. Yeah. Okay, so 36 days to expiration, 2934243. I can hold on to that for a little while. But the volatility is what draws me in because it's a 45.9, and we just don't see that much of anywhere else right now in this market.
Mm-hmm.
Do you have any tips for trading natural gas? Because I think this is an animal where we like to joke about it being a honey badger, but it's really not like other futures products.
Yeah, my tip for trading natty gas is just don't trade natty gas. It's one of those underlyings that has just it's always had my number. I've never been directionally correct. Anytime I'm short premium, I'm getting my face ripped off. It's just one of those that is really, really hard to trade. And there's all sorts of seasonality to it and, roles of the different futures because you have, you have the Widowmaker spread, there's contango and backwardation at different times. It's just one of those, like, I feel like you gotta be a natty gas trader to trade natty gas.
Got to be a natty gas trader to trade natty gas. Yeah.
You don't have to be a bond trader to trade bonds. You can kind of, you know what I'm saying? Or stocks. Like you don't have to look at, you can sell put spreads and not have to know everything about the stock. Natty gas, like you kind of got to do some digging, and that, it's tough.
It's tough. Okay. Let's end this on crypto. Bitcoin here pulls back in today. By my little eye, I spy the fact that this is now 2 days in a row where we've closed below our 1 week moving average. I would also note that the low from Thursday, 17,720, is eclipsed on Friday. Friday produces a bearish outside engulfing bar at what would have been a new all-time closing high. That's raising my eyebrow here. The pullback today, fade intraday, raises my eyebrow here. I think you and I are in a similar boat where in recent weeks and months we've been looking at IBIT calls. Those here, I'm still sitting long the 75 short 85 with with 60 days to go to expiration on the follow account. Mm-hmm. But you mentioned that some of your crypto positions in the short term at least are getting a little big.
Yeah.
I want to separate this into two quick thoughts. And actually, I think the more important one is less the market commentary and more about the position management. You have trades that are going really well for you. You've allocated 1, 2, 3, 4% of your portfolio to them, and now they're 5, 10, 15%. And you obviously don't want to have that much risk into one position. So what do you do? Because you obviously don't want to get out of a trade that's working well, but you're now carrying something that you weren't expecting. How do you balance that out?
I mean, it's the hardest thing to do. The wins are never big enough, and the losses are always too big.
Right.
Like that's always how it is. You look at it and you're like, well, it could keep going. It can get even bigger. And then when you're losing, you're like, why didn't I just do 1 contract or 2 contracts or 5 contracts instead of 10 or 20 or whatever? So the trimming is always tough to do, but I think it's prudent. And we had, Mondays we have Ryan on for Option Trading Concepts Live, and he has been trading on the follow page through some of the crypto moves that we've had. And obviously he's not top ticking everything, but he's been kind of lightening up, and it's okay to take some chips off the table and lighten positions up. And I think that is my sentiment here. I mean, I was hoping to see volatility expand a little bit into this Bitcoin move. It has not expanded in the same fashion that it has in the past of, 10K bar and volatility explodes to 70, 80, 90%. We got the 10K bar and volatility went from 45% to 55%. It's a nice vol pop, but it's not the explosion in volatility. So, I think it tells you that this isn't like a, everybody rushing to buy type move. So I think you take a couple chips off the table. Don't have to, I'm not bearish on this stuff on a longer time horizon, but I'd love to buy a little dip here. And ETH is the same way. I mean, you look at this chart, and how do you not, if you've been sitting here waiting for this move and you finally got it, how do you not take some of the chips off the table?
Right. I mean, if you got in near the April lows, you've doubled your money.
Yes.
Right. And so how do you justify? I mean, it's up 5.71% today, but maybe an island reversal coming together, right? We gap open higher, and then we actually don't trade green during the actual session. We do close to the downside. There's some writing on the wall. I know that MicroStrategy is back in the world buying more crypto. I think they just announced
another treasury or like a sale of more. They have those 2 other stocks that they launched that are basically just more liquidity.
Yeah. DJT today as well. We saw that they announced, I think, a $2 billion purchase of Bitcoin. Not sure when that was actually made, but that was the headline. And so the stock was up, did come back in a little bit. But you're seeing these companies that, they have exposure directly, indirectly, taking it on their treasury. They're having quite the run. And now we're having the things like Open Door, maybe Rocket go next. Yeah. In any event, Nick, we're done here today. We'll be back tomorrow, same time, same place. Overtime's 4 p.m. Eastern, 3 Central, always after first call, Monday through Thursdays at least. So for Nick Batista, I've been Chris Vecchio. Good luck trading. After this, a brief break. More Tasty Live coming up after this.
Stock markets take a leg lower because we're apparently going to get a run of auto tariffs coming from the White House, but we don't have the announcement yet. And ultimately, the markets don't run too far away. So while we wait for fresh fodder, we'll take an opportunity to look at a bigger, maybe even a more impactful story here on Macro Money. I'm Ilya Spivak, head of Global Macro here at Tasty Live, and we are going to turn our focus to Europe because this has been a major part of what we've seen come out of the new Trump administration in the U.S. and the realignment of global relationships that it has engineered or is engineering. Of course, one of the biggest stories here has been the idea that Europe has become skeptical about the reliability of the U.S. military umbrella and wants to build out a massive rearmament effort so that it can take care of its own defenses without relying on the American backstop for the first time, really, since World War II. That has moved markets because, of course, such a thing would imply a tremendous amount of spending. And the real question is, well, we've heard this song and dance from Europe before. In fact, in the first Trump administration, there was an attempt to get NATO, that is to say mainly Europe, to build more guns for themselves and to shoulder more of the load for NATO and a more representative share to their actual membership. And so is this, in fact, different? Because the last time that this was attempted, Europe ultimately said all the right things and didn't do very much. Is this time different, and is the market reaction then going to actually be sticky? Can we trade on it? That's what we are going to focus on here today. So first, let's take a look at what the markets have done so far, and then we'll take a deep dive into why the markets will or won't believe, then come down to a trade idea on that basis. So, first and foremost, we can see the US dollar has been down since the beginning of the year, and the euro has led the way. Now, of course, we can see the dollar has pulled off a little bit of a recovery here in the wake of last week's Fed policy announcement, where the Fed basically said we don't need to rush to cut interest rates. But we can see from the beginning of the year, this is the start of 2025 right here, the euro has clearly been an outperformer, starting basically from late February going into March. So the yen here was outperforming, and then the euro from about late February into March rapidly surged ahead, at one point up as much as 7% year to date against the dollar. And of course, now we've seen this pullback, the euro still right on the leaderboard there with the yen, but a little bit of dollar strength here pulling the entire complex down. Nevertheless, we clearly see that something happened right here to dramatically catalyze the euro, and to a lesser degree the pound, but certainly the euro, to this dramatic outperformance. Of course, the first step in figuring out what all is going on here is to see what is the driver of the euro US dollar exchange rate. And we can see that here in clear representation. The purple line here, the spread between German and US 2-year bond yields, that is to say the front end of the yield curve in the US and in benchmark Germany, which is a stand-in for the Eurozone writ large, typically. It's the largest economy. And so we see here this very close relationship between where the euro goes relative to the dollar and this spread, which of course makes all the sense in the world. This is classic stuff for currency markets. The currency you want to own is the one that confers a higher yield. And we can see here that as the yield differential between Germany and the US moves, so too does the exchange rate, as the yield advantage or disadvantage of the given currency moves around relative to the other. So here, for example, we can see from January of 2021, we start to have, from about mid-year, a conversation at the Fed saying, okay, it's time to hike rates. The hikes, of course, don't start until well into the first quarter. In fact, toward the end of the first quarter of 2022. But of course, markets are forward-looking. They speculate. So once the Fed around June of 21 starts talking about, okay, maybe this inflation isn't, quote unquote, a transitory thing, and maybe what we need is to really go on a hiking cycle. You see yields shift against Germany. So as this yield narrows, that's U.S. yields going higher and German yields losing step, relatively speaking. You can, of course, see that this is reflective of the U.S. having a yield advantage compared to Germany. And so here you go from about a negative 1% disadvantage for Germany down ultimately as you get into 2022 of a disadvantage in excess of 2.5%. And the euro follows. Subsequently, you see things correct. Most recently, of course, from September of last year to the beginning of this year, the markets were thinking maybe the Fed is sounding too dovish and they're not going to do all the hikes or all the cuts, rather, that they are saying. So you get a shift, again, in the dollar's favor in the yield spread, and the dollar strengthens. And then, of course, since the beginning of this year, you go the other way again. And this is the most recent surge in the euro. And you can see that, right according to form, it matches with an upshift in relative yields, where Germany looks a bit better on the relative yield spectrum compared with the US than it did before. And that's how you get the move in the spread and in the currency as well. So what's going on here? Well, as with the exchange rate, so to the yield spread, there's a pair in this dance. On the US side of things, we can see from September through to the beginning of this year, inflation expectations implied in the bond market, that's these break-even rates up here, the 5 and 10 year, they're rising. The yield curve is steepening. The 2-year, the 10-year rates, they're going up. Bonds, of course, in parallel are falling. And the dollar here, the dollar index, it's up. That is this move right here. And what we see since then is inflation expectations start to roll the other way. The dollar starts to roll the other way. Yields start to roll the other way. We start to see the change in this yield spread. We start to see the euro perk up. So from the U.S. side of things, you have lower U.S. interest rates, of course, shifting the yield gap in the euro's favor in relative terms. And we know at this point how this is happening. The leading PMI data, essentially a measure of business confidence over the past 3 months, has screamed that the economy is threatened by uncertainty around tariffs and fiscal policy in general, and companies are pulling back on spending, and that's hit economic activity growth, including in the service sector, which of course isn't immediately hit by the tariffs, but is impacted by them tangentially and in sentiment terms. And that's exactly what we've been seeing. So the market has taken to expecting that this will mean a more dovish Fed. And last week, the Fed didn't take the leap, but certainly commiserated with markets and said if only we were to see this kind of weakness go from survey data like business and consumer confidence to hard data like jobs and inflation, well, then we'd have to act. As if to say, yes, markets, you're right that we've become a bit more dovish in our thinking, even if we haven't in our actions, and sort of endorsed this move. At the same time, on the German side of things, yields have surged. This is, of course, looking a whole lot like what you see both in the yield spread and in the euro. And you can see it happens in the transition from February to March. So if you were wondering how the euro was lagging here and then surged to outperformance, this is the move you're looking at. And this is the bond move behind it. So not only is the U.S. side of the yield spread moving such that you get more euro advantage, but you likewise see the same thing from the European side. That is to say, their yields are moving in a way that even further shifts the yield spread in the euro's favor relative to the dollar. Okay, so apparently the markets have heard the idea that in Europe you now have increasingly the president of the European sort of regional legislature, Ursula von der Leyen, saying that what we need is a big build out of defense spending. You're seeing Germany, forever the tightest purse strings in Europe, basically since they had the hyperinflation leading into World War II in the Weimar years. Germany has been incredibly suspicious of debt and of expansionary policy. You nevertheless have a situation where they've said that with the need for a military buildup, you now have a exemption for defense spending from the constitutional debt break that would cap that kind of spending in Germany. And of course, if you were to now have a huge amount of money pouring into defense contractors, that suggests a huge boost to economic growth. The numbers that we're talking about are astronomical from the lips of incoming German Chancellor Friedrich Merz and other leaders. Of course, France's Emmanuel Macron, the president there, he's argued for a more assertive European posture for a long time. He's talking about a European nuclear deterrence independent of the U.S., powered mainly by France and the UK, both nuclear powers. So there's clearly a level of spending that the markets are anticipating will come, and they think it's a lot, and they think it'll be a tailwind to growth, which of course then is a tailwind to inflation. It means fewer rate cuts from the ECB, so it means higher yields and higher euro. So far, so good, but do we trust it? Should the markets trust it? Or is this again a familiar song and dance? Well, certainly looking at German inflation expectations, they seem to have taken notice, and in the near term. So if we look at longer term inflation expectations, they jump on this news, but then they sort of settle to where they were before. And this is 20-year, 5-year, in this case, the 10-year with remaining 8 on it for the current bond. But near-term inflation expectations, they're still surging. They're still at some of the highest levels that we'd seen in 6 months. After this rebound, there was a pullback here, but now we're right back up here. And this seems to suggest that the inflation that the markets are anticipating is coming near term, that the spending is going to be front loaded, that the impact is not in some distant future. Moreover, ECB policy expectations have taken notice. Not only have we seen the stock of rate cuts for this year diminish a bit, but now, for the first time in really going back to the beginning of last year, the markets are actually anticipating about a 50-50 shot that the ECB will have to raise rates next year. 14 out of 25 basis points of a rate hike are now on the menu here. And that amounts to about a 56% chance that the ECB hikes rates. That obviously speaks to a significant inflationary impetus from stronger growth around this build-out. So again, the question becomes, well, the markets believe it now, but will they still believe it later? Or is this, again, another one of these rhetorical things that ultimately fades? And this is where a bit of theory helps. The great economist Robert Mundell came up with something called the optimum currency area theory that seeks to explain why a country would want to join a currency union. And this really tells you and illustrates very nicely how it is that the EU and indeed the Eurozone came to be, and explains all of the economic troubles, hiccups, and various crises along the way, and how what they've been in practice isn't so much an existential threat, though it feels like it at the time, but rather a forcing function for the project to advance. So consider this. If you're a country, some would-be country, that wants to join a currency block with some group of countries or one other country, but you want to consider whether you should have a joint currency and enter into a currency union, as the Eurozone is. You have a structure of costs and a structure of benefits. Over here, you have the degree of prior integration. So how close is your economy already with the block or the block of economies or the economy that you're seeking to join? And over here is just costs and benefits in some theoretical units. And the logic goes like this. If you join a currency union, you lose independence of monetary policy. In other words, you have a single currency, you have a single central bank. If you need interest rates to be lower because you're in economically dire straits, but the bloc needs them higher because they're doing well, then that's not advantageous for you. But if there's already a lot of economic integration, then chances are that you go through booms and busts at about the same time. And so you don't care about giving up some monetary policy independence for the benefits. And the benefits are, of course, the more trade you do, the more integrated you are, the more you extract from reducing friction, like borders, tariffs, quotas, all manner of rules getting a common denominator between you and the currency block. All of that makes doing business cheaper, easier, smoother. And of course, that is a tremendous economic benefit. So the more that the would-be joiner of a currency union is already integrated with the union it wants to form or join, the more it cares about the benefits. So as integration goes from 0 and up, the more the benefits matter and the less the costs matter. And there's a magical, obviously theoretical, equilibrium point here, beyond which the benefits outweigh the costs, and it makes sense to join the bloc. Let's follow this logic to look at the European Union, and if you look at it on purely economic grounds, even Robert Mundell himself would argue that the Eurozone is not an optimum currency area. That is to say, it is not economically sound. The level of integration is insufficient. Even things like the Maastricht Treaty, the Stability and Growth Pact, that mandates greater degree of symmetry and integration by saying members have to have certain budget thresholds. They can't run higher. They have to have certain common economic criteria, convergence criteria, they're called, so that there is symmetry in these business cycles. We, of course, find out in practice those things were not there, but integration happened all the same. So economically didn't make sense, and we have a litany of crises along the way to demonstrate that this integration ex ante was not sufficient. Certainly, the Eurozone debt crisis of the 2010s, 11s, and so forth, that makes the point loud and clear. But nevertheless, we have this thing created. How? Well, consider what mutual defense does to this calculus. And consider that the first European communities were European coal and steel, military industry, European atomic energy, military industry. That's in addition to the trading bloc or customs union. And so you immediately see that the goal starts being France, basically, saying we want to be integrated in German military industries such that German tanks don't roll into Paris again. And when you consider it in the context of this model, you would say, well, is it an economic benefit if there isn't war? If you reduce the chance of war? Of course, the answer is yes. If infrastructure isn't being destroyed, consumers aren't being conscripted, then the economy isn't being disrupted. So the avoidance of war is an economic good thing. How do you reflect that in this chart? Well, the area where benefits outweigh the costs should get bigger if the thing you're doing is good for the economy. What does that mean? Well, it would mean the benefits line shifts by a force other than the costs and benefits themselves and the degree of integration. Some outside force shifts the entire line such that this area grows by this right here. What does that tell us? It tells us that the acceptable level of integration goes down. And now the participants will accept less economic perfection in the structure because the military benefits outweigh. And this is the story of the southern expansion, where Greece, Portugal, and Spain are admitted, even though they don't have the economics for it. This is, of course, the initial conception of the entire thing, and France wanting veto power over German military might. On and on and on it goes. And every time that this thing hits a crisis, much as now, this logic is the forcing function for deeper integration and for the killing of sacred cows and for the breaking of things that were thought unbreakable and for the creation of something which maybe doesn't make initial sense. So the upshot seems to be that Europe should be believed. This fiscal tailwind really is coming because this is exactly the kind of forcing function that usually moves Europe to finally get to doing stuff. And so this pullback that we've seen in the euro here after this surge, resting now right around the 108 area, looks much more like a buying opportunity than it does the fizzling out of a move that isn't credible. And although we don't necessarily have confirmation to get long at the moment, the upshot seems to be that wherever this settles, here or perhaps a bit lower as we continue to probe down, the path of least resistance, perhaps structurally now for the euro, is higher. And this weakness is a chance to participate with a bit of a bargain price relative to what we saw even last week. And that is macro money for today. As ever, we are here Monday through Thursday, right after overtime, a show I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things may go therefrom. I'm also writing for the news and insights portion of tastylive.com and commenting at Ilya Spivak on the platform formerly known as Twitter and on Blue Sky. If you're watching on YouTube, like and subscribe. Happy trading. Macro Money's back tomorrow.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than Boom! Trade like a trader. Tastytrade. Make your move.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tastytrade. So spread the word and earn rewards. Terms and conditions apply.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Tastytrade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tastytrade's low commissions. Try it out and leave us a review.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tastytrade. Download today.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Look who's back testing. Tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tastytrade.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
So I've been trading for about 5 years, maybe 8 to 5 years, and I got in the options world because I wasn't making enough with just holding long equity. You know, there's not a lot of strategy. It's just sort of like buy it and then pray it goes up. I found Tastylive from my friend, and I started looking at the YouTube videos. My favorite part about it was just that there was math, there was probability, it was something you could consistently rely on. Once someone gets the right information, which they provide on Tastylive, they can really change their financial situation for the better. Consistently, not, oh, I bought a stock and it went way up one time, but how can you do it consistently, over and over? And with Tastylive, I was able to do that.
Calling all traders. Are you using Tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
If you missed the live show, here's our cherry on top weekly recap.
But I'm doing 2 talks in Mexico City, and then I'm doing 2 talks in Guadalajara.
I mean, all it's gonna take is for this administration to read just one of your past cherry bombs, and you're not coming back into this country.
I hope they don't subscribe to cherry bombs. Oh no!
You better scrub your phone, honey.
Oh no!
You better wipe it clean.
This is the same kind of group. We've been friends for, I don't know, like 30, 40 years.
Yeah, that's a long time.
I know.
Because it takes work to maintain friendships, because life gets in the way.
Guys, with women it does.
Well,
it takes work.
Men don't ask questions. Men are the worst. You're like, oh man, my buddy's getting a divorce, and everyone's like, oh my God, why? What happened? You're like, I don't know, I didn't ask. And you're like, what is wrong?
If we have a friend and they're getting divorced, we already know why.
Oh, just pure chaos already this morning. They dress alike, they act alike, they talk alike.
Well, my producer said we all look like seamen, is what he said. Yes, the sailors of yesterday. It's lighter than it looks. I will give you that. I mean, it's...
So is Tom.
I just thought it was unusual that Tom would wear like a long sleeve hoodie in the middle of summer. Why don't you give away that hooded sweatshirt in the middle of summer? Why don't you give that away?
It's actually a summer outfit.
It's a summer outfit?
You would not know.
So I said, I have to see what this is like. And it is a boat-worthy apparel, so I'll ship it down to Florida. But I just wanted to be like my man, Tom, see what it feels like to be a big shot and stuff like that.
Will you guys please wear them matching on the flight to Denver next Friday?
What's going on? What the hell am I looking at? What the hell's going on here? What is this?
I'm twinning.
Join us. You got to go white then. You got to get something. Yeah.
No, I don't want to mess this thing up. This is too perfect.
Be like Tom Day here at Tasty Live. That's right. You too could dress like an overlord or just look like one.
Get the full scoop by checking out the archives at tastylive.com.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events. Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle. Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tastytrade and Tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com.
grab some gear and help some pups. You get merch, they get a home.
All right, we're back. Tasty Crypto Show. I'm Ryan Grace, and with me today, of course, Katie McGarrigle. Katie, what's up?
How you doing?
Pretty good, I guess.
Doing
Excited
all
to
right?
be back.
Yeah.
Monday, another one in the books.
Yeah.
Yeah.
It's all right so far.
How you doing?
Doing okay. I've finished my.
You sure about that? You didn't sound very convincing there.
I'll fake it till we make it. Yeah. I finished my samurai arc.
Oh, yeah?
Yep. So I'm off the sauce until after the wedding. That was my rule. So no more games for Katie for now, but you guys can check back in 7 to 8 weeks. See what I'm doing. I did convince your brother to play, though, the game that I was playing.
Well, it doesn't take much to convince him to play video games, just not at work. So is it just eating into your productivity ahead of planning for the wedding, getting that all taken care of? Like,
Yeah.
I don't understand the connection here. No video games because of the wedding?
Yeah,
Okay.
yeah, exactly. Like, you know, when you have such a finite amount of time to do the tasks that require needing to be done for
Yeah.
the massive party that you're throwing. It's like, okay, do I spend 2.5 hours dissociating and running around killing Mongols, or do I actually buy shit that's really important for the actual wedding day?
Yeah, I think you could do a little bit of both, honestly. If you just kind of, box your time.
Don't tell my fiance that.
Schedule it.
No, I'm
Okay.
I'm setting boundaries. I have to, I need to like read books and or just do wedding planning stuff
Okay.
from here on out.
Fair enough. The
Yeah.
chat loves it. If you're not in the chat, get over to YouTube. Tasty Live is the channel. We're streaming over there, and we've got the live chat going. So if you want to type some crazy shit into the chat, well, you know what to do. Let's see who's in here. We got Mark, Katana.
Yeah,
Emmett.
Mike. What's up, peeps?
Oh, there's a few, Katie.
That's okay.
Yeah.
We'll take it.
Grumpy Mike, what's going on?
What's been going on in your world? Anything, have you been doing any new restaurants?
Just crypto prices going higher every day. I'm $1 closer to just riding my jet ski across the Gulf of Mexico.
Okay, like
into the
Kenny Powers
sunset.
style?
Yeah, something like that.
All
It's
right.
been a dream of mine for a couple of weeks now.
Are you a jet ski boy?
I could be.
Okay.
Yeah. We send out the Tasty Crypto midweek market update every Wednesday morning. And if you don't get that, sign up over at tastycrypto.com, hit that newsletter link. But the reason why I bring that up, it's a plug, of course, but we've got a little jet ski at the top. A little kind of nod to my fantasy.
Okay.
All right.
I respect it.
Yeah.
I like riding a jet ski. I've only done it a couple of times. I did do it down in Key West, which was pretty cool.
Hell yeah.
But we had some kind of choppy water that day, so I felt like I was just like breaking the
Then you can
fiberglass.
ramp it out of the water,
Yeah, no, I
Not your
don't.
thing.
I want to do like, I want to be like jet skiing on glass, like style. Like that's how smooth I
not
want
fun.
the water to be. I know. I guess I have like a little bit of a taste for the adrenaline, but not that much.
Okay.
I don't want to like ruin my
Yeah.
grip.
Well, I
my
mean, you can
nails.
only fall off if you fall into the water.
Yeah, and there hasn't been like tons of sharks in and around, Florida
That's true.
for quite a while. Thanks, climate change.
Well, maybe you you just jet ski in Lake Michigan eventually.
Yeah, there we go. Yeah,
Do a jet ski day.
I need to find some friends with some jet skis in Lake Michigan.
Oh, we get ETH up to like 5K. We'll just rent them.
Yeah, speaking of, I covered my ETH.
Hell yeah.
So
So
took some
presumably
winnings
that
off
means
the
you
table.
sold out of your position.
I did.
Okay.
Yes. I had been long since the low 2000s.
Nice.
So, with using like just dollar values of ETH. So I had been layering into that since probably when you and I started the show back in November.
Like a few thousand here, $250,000 there.
Yeah. Chump change.
But no, I hear you. So just buying a little bit here and there, and you get to a price where, we're not at all-time highs, but we've gone straight up for the majority of this month.
Yeah.
We can talk about whether or not we're overbought. I mean, I'm seeing some signs that, you maybe see a little bit of a short-term kind of exhaustion here.
Sure.
We'll see. But yeah, I think it's a great place to take some profits. If your range has been 2 to 4, you're pretty much at 4.
Right. Yeah. So felt good about that. You know, like I said, couple $100 in my pocket now, which feels great. But like you said, and looking at, the preview of the slides that you're going to go through, we've just got a sea of green.
We do. Let's jump into these slides here. It's stablecoin summer.
Hell yeah.
Stablecoins have been the theme. We're going to talk about the big release on the Tastytrade platform and give you a peek at that and a demo, I suppose. I mean, it's just transferring funds, depositing funds, but you can do that with a stablecoin now, Katie.
Yeah.
So we'll show everybody how to do that if they're not familiar with it. That was launched quietly, a little soft launch, I suppose, on Thursday. You'll start to get some of those customer emails, and you'll see it throughout the platform and on other spots on the website. But you can now deposit stablecoins if you want to fund your account 24/7, instantaneous.
Well, and that's what I think is so, like, when I sit back and, like, actually really think about it, how archaic, like, the traditional system is, and how we've all thought for a long time, oh, it's normal to have to wait, like, 2 business days for something to clear before you can actually, like, jump in the car and drive it. Like, and now we have just a way quicker means of doing that, right? So
yeah, it's
I think
pretty cool when you see
addition.
it live. You see it in person.
Yeah, and I'm happy. I'm looking forward to seeing it in person.
Well, we'll do that towards the end of the show. But before we do, let's just run through kind of what we're seeing in the market. Katie taking some profits with ETH north of 3,800. We've pulled back a little bit here intraday, but we've got Bitcoin near an all-time high. ETH's not quite there. Solana and the majority of the rest of these aren't really at all-time highs, though they're trading a hell of a lot better than they have been. And it's been pretty quiet in the market for some time, right? The volatility that we're used to in crypto hasn't necessarily materialized. You're starting to see a little bit of a pop there. We do have a few tokens that are now well over 100% vol, which you only really see in these big rip-roaring kind of bull markets. But yeah, a lot of green on the screen, as you mentioned. ETH up 143% in the last 3 months. Litecoin, XRP, Doge, you name it, it feels a lot better. That said, again, not many of these are at or near all-time highs, aside from Bitcoin. So what you are seeing is a bit more volatility come back into the market and a big bounce off of, in some cases, off of the lows, or that's been ongoing for a month or so. But we're looking at tokens that at one point, many of these were down 60, 70, in some cases 80%. So you are getting a big move off of the bottom. I do think that they've bottomed, but I don't think that this is it, or that it's the end of alt season and it was short-lived for a period of like 2 days.
Yeah. No, this is great. I mean, what have you been most surprised by? Any of it?
Yeah, honestly surprised that some of these tokens that were a little bit more prominent last cycle are just having a huge move here. Maybe I shouldn't be surprised, but I look at things like Bitcoin Cash, Litecoin, XRP continues to do well. It's one of the few that's actually outperforming Bitcoin. So up 47% year to date versus Bitcoin, quite the move. But, a little surprised that you're seeing some big moves here recently in things like Cardano. And again, maybe I shouldn't be. XTZ, Tezos, XLM, Stellar Lumens. Maybe they don't need a narrative. If they have a narrative, I'm not sure what it is, aside from just a massive move in price here. But this XLM move has just been absolutely monstrous, up 100% in the last month. And it's a good reminder of, just how quickly things can move both up and down in crypto. But a lot of times there's this knock on the space in terms of spot cryptocurrencies because you don't have the ability to trade with leverage. You can't go short. You can only buy it. And obviously you can trade the derivatives. You can trade listed futures. You can trade perps in some places now. But you really don't need that much leverage when you can move 100% in a matter of a week.
Right. Yeah. And especially when you're looking at the actual prices of some of these coins, like we've talked about how I've likened them to super cheap stocks or penny stocks even before.
I think that's fair.
And like you're saying, like, yeah, sure, maybe you're not getting like the leverage of what you could get if you were in like a portfolio margin account trading a certain type of future, but like you're saying, in 30 days, if I can double whatever my investment was in one of these coins. Like that's pretty, and granted, it has the opposite effect as well, but that's a pretty powerful thing to see.
Yeah, I mean, to your point, they can go down, obviously. They have. And we've experienced these boom-bust periods or cycles throughout time. And what we've seen is these massive upside moves, exponential upside moves, and then you get a 50 to, 70, 80% worst-case scenario drawdown. Sometimes things just go to zero and never come back. But Bitcoin isn't something that's gone to zero, It is volatile at times. But, again, crypto historically has been an asset class that has this asymmetric return profile, meaning there's a lot more upside than there is downside. Obviously, it can only go to zero. We're looking at tokens that in many cases historically, and it doesn't mean that it's going to happen in the future, but looking backwards, we're looking at returns hundreds of percentage points a year, thousands in some cases, versus, that downside volatility, which does exist. But, typically this is attractive as an asset class because there has been a lot more upside. And I think you could say that of a lot of equities as well, but a lot more upside than downside, at least historically.
Would you say that this is all, or a large contributing factor is just kind of this whole crypto week narrative that has been in the news the last few weeks, or?
Yeah, I think to some extent that definitely helps when you have an evolving and positive kind of regulatory environment or positive developments on that front. So you've got the Genius Act, which was passed into law. That's the stablecoin legislation. You've got the Clarity Act, which is going to look at, what role does the CFTC play in terms of regulation, and the SEC. How is that defined? You have the anti-CBDC, Central Bank Digital Currency, kind of Privacy Act as well. But, the big pieces to this are the Genius Act and then the Clarity Act and that market structure that we should get, or kind of the rules around that as a result. So I think that definitely helps, but you're seeing large institutional participation, big flows into Bitcoin ETFs, into Ethereum ETFs. Presumably, if you get other ETFs, Solana and a few other larger market cap tokens, I think you will see that. You probably see some flows into those over time. Mm-hmm. You likely get staking for the ETFs, so that should further kind of incite some capital inflows, I would imagine. But you're also seeing these treasury companies spin up, where now we have companies that are via SPAC, are going public, and their sole initiative is to make money through, I'll call it Ethereum-based on-chain activities.
Mm-hmm. What's the big one right now?
The big one that just launched on the Ethereum side is DYNX.
Okay.
So let me see if we have the, and I think it just went.
Because I know Nick Batista was talking to me about one on last Thursday's show with the boys, and I know you were on with them today.
Well, I believe there's SBET. There's a few other treasury companies around Bitcoin, around BitTensor. Tau is the symbol there. But Dynamics Corp, DYNX, I think if I can find the symbol, it should be trading, I want to say it was supposed to go live today, ETHM. This is the Ether machine.
Ether machine.
Yeah, so I don't have that symbol here when I'm looking at the Tastytrade platform, but I do have DYNX, Dynamics Corp, which I think was the SPAC, up 17% today. But you've got these companies that are just buying cryptocurrency, putting it on the balance sheet, looking to participate more in those respective ecosystems, on-chain, generate yield via activities. Maybe this is a big kind of red flag. I don't know. I think it's still pretty early, but this is driving activity.
Yeah, definitely.
In that sense. And, you're also in a market environment where, look, the S&P is at an all-time high. Yeah. The NASDAQ, tech stocks, things are trading very well in this environment. We've talked about how it's an environment where there's likely, an inflection higher in terms of the rate of change of inflation. Maybe you get the growth, maybe you don't, but you've seen a bid for energy. You've seen a bid for energy companies. You've seen a bid for, inflation-like proxies, gold, copper, Bitcoin falls into that category. So I don't think it's any surprise that in this macro environment, crypto is doing well. It's an environment in which you would suspect that it would. And you're now starting to see that flow into a lot of these other alts or smaller market cap tokens.
Speaking of the ETFs, have you been doing anything within them that you've been posting on the follow feed? I have not stalked anybody on the follow feed lately, but I know
haven't. Yeah, I haven't posted any options trades there. I've just been taking some flyers.
Sure.
Maybe I should post them, but just buying, the 30 strike calls in ETH with a couple days to go. At times I've been trying to run the wheel strategy in IBIT, but I've never been assigned the shares on the downside. We've been in a pretty bullish market environment. So you sell the puts, they expire worthless, or you take them off for a couple pennies. Haven't been in a situation, maybe once, where I've rolled, but haven't taken assignment of the stock. So haven't sold, or the ETF, haven't sold any calls against it. But those trades have worked, and even though, and I'll just jump over to our volatility dashboard really quickly, even though you have very low implied vol, right? Here's the Bitcoin DVOL. This is from the Deribit Options Exchange, but Bitcoin implied volatility 30-day basis. Let's say it's right around 40%.
Sure.
Still gives you an IV rank that's close to zero. But when you look at that against 30-day realized vol, you have a 40% premium in there. Relatively speaking, the options are cheap, but there is still risk premium. There's still volatility risk premium in there to the tune of about 40%. So you've been able to get paid as long as that volatility continues to trend lower. I think at some point it goes higher, but it's been working. ETH, on the other hand, still have a premium in there, but implied volatility is getting a little bit more expensive.
Yeah. What do you feel like would be, you don't have a crystal ball, but what do you think would be kind of the biggest catalysts for a shift in any of the performance? Let's just say by the end of summer, would it be just a change regulatorily?
In terms of accelerating us to the upside or downside risks?
Either one. Yeah. What are your kind of...
I think the downside, let's start with the downside risk. I mean, in my opinion here, the downside risk is the macro environment, the backdrop. We've definitely seen at times heightened geopolitical risk here over the spring and summer. We've seen correlations go to 1. We've seen kind of these volatility explosions that seemingly come out of nowhere. And crypto is not immune to that. Correlations go to 1. You see a very strong inverse correlation between, let's say, Bitcoin and the VIX. I think that's probably the biggest risk here right now in the short to intermediate term, is that you just get into a macro environment that slows down rate of change of growth, rate of change of inflation from a macro perspective, across the economy. You just start to see that slow down. That's where you get the recession fears, the calls for that. It could be coming at some point. I just don't see that, on the immediate kind of horizon.
Sure.
But you'd see that reflected in other parts of the market. You'd see that in equities. You'd see that on a sector basis, factor basis as well. So I think that's the kind of bigger downside risk just immediately.
Yeah. In which case, like you're saying, if you just have a portfolio in general, you got to stay small. You got to stay on top of it.
Yeah. I think the larger kind of upside catalyst, though, continue to just be the liquidity profile in the market. So you've got still about 4%. Presumably they come down over time. Now we have an upcoming FOMC meeting here, an announcement, and it looks like today there's no change expected in terms of the Fed funds rate. But I think if you see rates lower over time, you have looser kind of financial conditions or more conducive financial conditions. Global liquidity, if you track that, there's some charts going around on X, seems to imply that you're going to get higher crypto prices because the backdrop has been pretty positive from a liquidity perspective. And I think, in this market environment, as long as you've got that as your backdrop and you continue to get regulatory clarity, you get that FOMO bid, price kind of feeds on itself in this reflexive nature. So if you take out some levels, that's the catalyst itself. Let's say that ETH goes to a new all-time high, breaks above 445, and now, boom, you could see a short squeeze up into 5K, if not higher.
And I'll be like, damn it.
Yeah. 3.8 didn't look so expensive at that point. But yeah, I just think that this is something that, in terms of where we are in the cycle, it gets a little bit more attention. It plays out in a similar fashion to what we've seen previously. My advice to everybody is to just have a number in your head. If you own a lot of crypto or you were buying back in April, it's tough not to be greedy in a market that moves as quickly to the upside. But you just kind of look at it as if, hey, I made a bunch of money. This is a number where I can go and do this thing in the real world with it. Maybe that is how you approach it.
Yeah, I think we've all been, hypnotized by the parabolic behavior of any, whether it's crypto, whether it's the random thing Nick got me into the other day, the company that made the dire wolves. Like the chart's just going like
Is
this.
that Wolf? I see some mentions of that in the chat.
Oh, maybe. I don't know. CRSP, I think, is the CRISPR like lab.
CRISPR, that's the gene editing technology.
so, yeah.
Okay, that's back at the forefront. I remember back in like 2018, 2019.
Yeah.
ARK Invest, that was all front and center.
Right, exactly. But we've all been like, wooed by looking at those charts where you just see beautiful green candles every single day. But I think to your point, you need to kind of have a number and hopefully have a little bit of conviction that you stick to it and or at least soften your position and then kind of see how things go.
Yeah, absolutely. It's never a straight line. Sometimes we forget that, but it's important to remind yourself of it.
Well, say
the
that
market will.
Yeah. And okay, so we got 5 minutes left. So say that I do actually have some, I want to actually start to participate. Maybe I don't have any just
Maybe you have
regular
stable coins.
Maybe I have stable coins that
And you
I'm
want
ready
to
put
deposit
work.
them, maybe?
Yeah. How do I do it?
Let's take a look at that. New feature just launched last Thursday. I suppose officially launched here today. We are super excited about this. The development team and everybody at the business has been hard at work for the last couple of months to deliver, Katie, stablecoin funding. If we can jump into our platform.
Stablecoin summer, so hot right now.
That's
Brett,
right.
summer's so over.
Stablecoin summer,
Charlie XCX who?
right? If you have crypto enabled and you have crypto transfers enabled on your account, you can deposit 4 different stablecoins, one of 4 different stablecoins across, I believe, about 9 different blockchain networks. And you can do that by jumping over here to manage, go to my money, and then go to deposits. And when you do that, you'll see some of those old historic ways of moving money, such as a bank transfer, a check deposit. I wouldn't even know where to start there, so I can't help you.
Tin can with string?
We might have that if you scroll down. Wire transfer, and then here in 2025, what I think is going to ultimately win out, a superior funding mechanism, and just following the Genius Act being signed into law, stablecoin deposits. So if you click on this, I'll run you through it. You've got to have your margin account or your crypto enabled account that has transfers enabled on it.
Okay.
Then you click start deposit. You get this nice little modal that pops up. And I'm going to get my phone out too. You're not going to be able to see this, but this is where I'll do this off screen. And you get this deposit. You're going to be depositing through our cryptocurrency service provider. That's Zero Hash, as everybody knows. Click continue. Here are the 4 different stable coins that are supported. I would venture to say that we probably will support more over time. Sure. But USDC for US domiciled accounts is the most popular. PayPal has a stable coin. So if you have a PayPal account and you want to acquire PYUSD, you can use that as a funding source. So this is a little bit of a workaround, given that you can't fund yet with a debit card. And for a lot of people that are outside the US, this is a great way to fund your account using a stable coin, if you have access to it, whether that's through a crypto exchange or another financial service provider. Also have Ripple, Ripple Ledger, US dollar, and then US dollar Tether, which everybody's familiar with. That's about 60% of the total market cap of stablecoins, which is now up to 260 billion, Katie. We were quoting 250 billion just a week ago.
Jeez, Louie.
Or 2 weeks ago. So I've got USDC, and I have some USDC on Base. Base is an Ethereum L2. So is Arbitrum. Optimism, Polygon's a scaling solution. A lot of different blockchain networks here that support Base, Solana as well. Whatever network you have the stablecoin on, you need to select here. So I've got USDC. I've got to confirm I'm sending it on the Base network. Continue. Get a little disclaimer here. Minimum deposit amount of $1. Max right now is $500,000. I will be sending slightly more than $1 and less than $500,000. So I have my wallet open on my phone. I've got my USDC here. And in any wallet, it's all pretty much the same. You're going to go and you're going to get that address. And here you can either copy the address, so you got the deposit address at the bottom, or you can just scan it with your wallet. I have scanned it. And now I'm going to send $10 over here. $11. It'll be a minimum fee, I believe, of $1. It's 30 basis point fee on the notional with a minimum of $1.
Not too shabby.
Well, depending on where you're at and what you've used previously, certainly again with transfers outside the U.S., you got the currency conversion, you have a time frame associated with that as well, so it could be a little bit more expensive or some friction there. But let's do that, and I'm going to send it. I'm sending it right now through my wallet, and we should see this pop up here in just a second. We'll give it a moment. But what this is going to do is, as soon as it's registered at the address on chain, this will go and you can see it'll shift to change the view. So deposit successful, you receive an email confirming that, blah, blah, blah. And then I'm going to just jump out of here and close this modal. And then we'll be able to see this in a couple different places. If I just look at my one-time deposits, here we are, 721. There's my $10 that's made it in there. If I go back over to the platform, I look at the history here, and you can see, let me just refresh this so it just pulls in the new updated history data here. There's our digital asset fund conversion deposit, AKA stablecoin deposit, $10 immediately available. What I love about this, Katie, is if it's Saturday and I don't know, there's a big carry trade unwind or something of that nature, and there's going to be some volatility on Sunday night when the market opens, or really at any point in time, you don't want to wait for that ACH or even that wire transfer, which I think a lot of people do believe is like instant, and it's not. It also has a $35 charge for most banks associated with it, somewhere around there. But if you want to do that and you want those funds available immediately, this is 24/7. Obviously, you have to have stable coins, so you need to get those from someplace. We do have stablecoin withdrawals coming soon, hopefully in the next few weeks. But if you have stablecoin, you can deposit it now through Zero Hash at Tastytrade, and those funds are money good, ready to go, buying power available. You can trade on it as soon as it's deposited, which is 24/7 instant.
Sold. Love it.
Yeah, I've been using this more often. I have some stable coins, and it's a good way to fund.
Yeah. And like you're saying, I mean, not like I literally just watched you do that in like 3 minutes. So if we're talking like jumping and striking where the opportunities are and when they're hot, great way to do so.
Absolutely.
And maybe if you're not even ready to do that yet, you can still enable.
Yeah, that's a great point. And if we jump back over there really quickly before we wrap up, if you do not have cryptocurrency enabled on your account. Now, you have to have an eligible account, which means you need a individual cash or margin account. And we're working on adding this to more accounts soon, more account types. But if you have an individual cash or margin account, you can enable cryptocurrency trading on it depending on where you live. There are certain regions that Zero Hash is not yet registered to do business in, but maybe is working on it. That said, if you're in the US, for example, you can enable cryptocurrency trading on your account, enable crypto, and then you can enable crypto transfers, just re-verify your identity, add 2FA for security purposes on the account, and you can do that all here in trading preferences, and you'll see that I've already got that enabled. This is also where you go to enable futures intraday margin, all the great features you want to add to your account, all the enhancements, I suppose. You can do that right here. But again, enabling crypto through the trading preferences on the web, or you can do that on the mobile app. And you can also transfer stablecoins on mobile too. This is on both web and mobile trading platforms.
Beautiful. Love it.
Awesome.
Don't even have to leave your preferred device.
Yeah. Wherever trade on the go, as we like to say, right?
Yeah, I love it. I think this is great. Like you said, there's a lot more coming in the crypto space on Tastytrade. So this is just one of those other ways. Like you said, definitely a less friction-heavy process than some of the other funding rails that are out there.
It's pretty cool to see it almost instantly. You just pop up there, you have the buying power ready to go.
Yeah, love it. You heard it here first.
Well, Katie, thanks for coming on the show. That's going to do it for our show tonight. We will be back. I will be back. Well, actually, no, I won't be back on Wednesday. I'm out of the office. Dan and Shelly will be back here with you. So tune in and show them some love on Wednesday for the Tasty Crypto Show. But I'll be back next Monday.
Beautiful.
Until then, I'm Ryan.
I'm Katie.
Peace.
Peace.
these two. All right, come on. You're okay? Oh, what? Either they're having an affair or they're just very shy. I'm not quite sure.
Good morning, everybody. How are we doing? Now, good morning, Mr. Beecham.
You shouldn't take the mick out of people. It's so cruel, isn't it?
Isn't it so cruel? Because it's so undeserved. Welcome to Trade Live with IG. It is a very dreich Monday morning, Mr. Beecham.
You would have a word for that, wouldn't you? Yes.
It is, yeah, that is the perfect
word.
Scottish term, really, isn't it?
Really, yes. Yes.
So, how are we doing? Monday, the 21st of July.
21st of July, yes. Yeah.
Top of the market. I mean, top of the morning, sorry.
Top of the morning, nearly top of the market. It's not far off, are they? Yeah. How was your weekend?
It was uneventful.
Oh.
Because I got Pete Warded on Friday. So we went out to a client lunch and it was wonderful. Very good morning to the clients if they're tuning in this morning. Because
Where did you go?
A couple of them. Do you know my favourite reaction from clients?
Can you say that on air?
IG's got a TV show.
Yeah, exactly. Yeah.
What's the PCM doing? Why don't the clients know that we've got a show?
Well, it takes time to get this thing in. You have to repeat this stuff over and over again.
Yeah, very true. So, so he was very excited to find out we've got a show. So, good morning, sir. Won't say their names. It's always unfair, isn't it?
Their names, but get them watching, get them subscribing.
But I had a very easy cut at 4:30. We finished lunch.
Where were you? Which lunch were you?
Clap in Knightsbridge.
Oh, right.
Great restaurant, actually.
Yeah?
Beautiful. It's got a roof terrace, so you're looking at the whole of Knightsbridge.
It's around the corner for you, really, so you can just stagger home.
I could easily have, that was my boom, but they convinced me to come with them into basically Shepherd's Market.
Right.
And then we got a drink there, and next thing it's 9 p.m. It was awful.
One thing led to another. Yeah.
Well, there was a large Australian wedding group having their wedding reception